have to run straight into a commercial break. Your point is well made. We'll be back on the other side with all of the action, so do stay tuned.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Very good morning and welcome back. You're watching India Market Open. What a show we have lined up for you. And guys, we really put our minds to how to structure the show today because so much news. You have the GST rollout, the Bachat festival starting, the Swadeshi movement getting another leg up, H1B attacks to ward off, and so much more.
Yep, it's a packed morning of news flow and it's a packed show on NDTV Profit as well, simply because while there is so much of news flow, the overarching mood, guys, is very constructive for Indian markets. 3 weeks on a trot we've had gains. Let's see if this week gives an encore.
All but 3 sessions in September have been positive.
Nice
That's
statistic.
Incredible.
It's incredible.
For the benchmark Nifty 50.
I'll give you one more.
So for the broader markets.
9 straight days of uptick for the small cap 100.
Which is incredible.
All right, here's what's on the show this morning. We're going to be speaking in a minute or so to Edward Yardeni, president of Yardeni Research. He's going to be talking about the impact of H-1B visa attack by Trump and so much more. So will Trump's visa attack open more doors for opportunities in India? CP Gurnani, former CEO of Tech Mahindra, is going to join us on this. We'll be hearing from Ganesh Natarajan, executive and former CEO of Zenzar Tech. Don't miss that conversation. Will this new law turbocharge India's innovation? Sandeep Agarwal, Sovilo investment manager, will be with us on the show as well.
And next up, we have an update on the arm of Curatech, which has completed a phase 3 clinical study for denosumab. This is Satkarni Makapati in conversation with us, of course, of Aurobindo Pharma.
And the GST Bachat Utsav, double bonanza for Bharat. Ajay D.D. Singhania of EPAC Durables, Vishal Vittal Kamath of Kamath Hotels, Akash Agarwal of V2 Retail, and CS Vigneshwar, president of FADA.
Okay, we also hear from Bajaj Auto on what gets cheaper. Remember, all auto companies will be in focus today. Rakesh Sharma will be joining us this morning. And it does not end there. Then we get you the big market mood with Kenneth Andrade, founder and CI of Old Bridge Mutual Fund. So much more lined up, of course, with all of our insights, profit intelligence, and everything that we will put together for you. We're starting off in just a minute or so. Stay tuned. We're coming right back. All right, let's kick off straight with what the global cues are looking like. In the US, pretty decent close on Friday, momentum keeping up. And, we're going to start off with that because just to give you a sense of where we left off on Friday's trade. Pull up the key indices, and actually all three in the US, major indices closed at the day's high. The Fed momentum and what the Fed rate cut momentum is obviously following through. So you saw that tick of green on the Dow, Nasdaq, and S&P 500. Meanwhile, Treasury yields were up after last week's rate cuts. The 10-year at 4.13%. Oil prices have steadied as no real impact on Russian crude supplies. The Brent was below the $67 mark. Let's pull up Asia for you and give you a sense of what markets are doing over there. You're going to have important policy positions coming in from Shanghai, and you're seeing a bit of a dip there. It's India that is going to be seeing a slow start, about 80 points down, and that's expected after the kind of attack that we've seen from Trump on visa fees and so much more. And that's what's really happened. Trump has actually talked about and has signed an order increasing fees for new H-1B visas by 100 times to $100,000. The current fee, just by the way, is $1,000, and there's one version which is $2,000. But here's what's important. The new fees will apply from February 2026 lottery and does not apply to current visa holders. Trump has also announced a gold card visa for $1 million for high net worth individuals. Meanwhile, oil prices were steady as no impact on Russian crude supplies is being seen. Brent was below the $67 mark. So, in fact, you should listen in to what Trump has said, and then we'll get that conversation in with Edward Yardeni.
We need workers, we need great workers, and this pretty much ensures that that's what's going to happen. I think, Sean, you agree with that?
Well, they're $100,000 per year. So the whole idea is no more will these big tech companies or other big companies train foreign workers. They have to pay the government $100,000, then they have to pay the employee. So it's just not economic. If you're going to train somebody, you're going to train one of the recent graduates from one of the great universities across our land. Train Americans, stop bringing in people to take our jobs. That's the policy here, $100,000 a year for H-1B visas, and all of the big companies are on board. We've spoken to them about the gold card.
They love it. They love it. They really love it. They need it. The country would rather not have to pay $100,000, but And they'd rather, how do you do that? You hire American. So there's an incentive to hire American. But there may be instances where it's better off doing it through expertise or whatever it may be. But they're both unbelievable, whether it's a gold card or anything else that we talked about today.
Okay, Edward Yardeni with us this morning, President at Yardeni Research. Mr. Yardeni, thank you so much. Always a pleasure to speak with you here at NDTV Profit. Just your first sense of what exactly is the game here with H-1B visas. Of course, it's a bugbear for a while with the Trump administration, but coming down this hard, do you see it as a negotiating tactic which could then be reversed once challenged legally? Your thoughts here?
Well, with this administration, with President Donald Trump, everything is a negotiating tactic. You never really know. It could change, any day from one extreme to another extreme. So that's the predicament we're under. But if we just take the facts as is, well, we know if he's really serious about this, then I think what he's getting at is, we've got a lot of kids coming out of colleges with Bachelor of Arts, with degrees that aren't particularly useful, things that are degrees in business, communication, marketing, very vague, very non-specific skills that they learn, and there's a lot of them. And so I guess what he's trying to do is get companies to hire fewer, more advanced professionals from overseas and take the kids we got coming out of school here and train them. That's not so easy to do when we're talking about professionals like engineers and software programmers, doctors. So I think this is not a great idea. We don't really have an unemployment problem at all when it comes to professionals. Adult professionals have an unemployment rate of below 4%. So companies really don't have any Americans to hire when it comes to this level of professionalism, education, expertise.
Dr. Yardeni, thanks so much for joining us as always.
Sure.
My question, therefore, is how much of this affects the US as much or more in certain instances as it does everybody else, and how much will they be able to carry this on? Because even the tariffs,
right,
the implication is that ultimately, while the US government will collect a large amount of money, so much of this is going to be paid by the US consumer that hasn't yet showcased itself in the inflation picture, but at some point it will.
Well, as I just said, things are really quite unpredictable when it comes to Trump's policies. And the same thing goes for tariffs. The Supreme Court has yet to rule on Trump's tariffs, and it could very well rule that they are unconstitutional, and then it'll be kind of back to square one. Well, I mean, undoubtedly, companies will send a letter to the Treasury and say they want their money back. They want a refund. But meanwhile, the administration has said that they've got alternative ways of accomplishing the same thing, but they're messier and they're not so straightforward. Look, I think you were right in your conversation at the start of the show here that it could be very good for countries like India. Instead of your professionals coming to the United States, they might stay in India, and American companies that very much want to use these professionals will simply hire them at their subsidiaries in India. So I don't really get it. I think the United States should be continuing the program, and we should be offering citizenship to these people. If they're around for 3 to 6 years, why not? We want these professionals.
Dr. Yardeni, the other thing is the investing implication for all of these things, and there's a fair degree of thought that with the tech valuations the way they are, and rate cuts and possible de-dollarization moves, at some point of time money will move lock, stock, barrel away from US to hard assets, to emerging markets, etc. Do you see the start of that? Because hard assets have already shown that. Do you think it moves to emerging markets now?
Well, I think emerging markets are showing signs of outperforming. Some of the credit markets have actually done pretty well compared to what we're seeing in some of the developed countries. There's a debt crisis right now in France, possibly one in the United Kingdom, and possibly one in Japan. And so obviously global investors that invest in credit, invest in bonds, are going to be looking all around the world, and some of them may be concluding that there are better opportunities in emerging markets than in the credit markets. with regards to the stock markets, the Fed's cutting of interest rates has certainly put a fire under risk-on assets, and we've seen our small cap stocks doing very well. And from what I just heard from you folks, sounds like the same thing is happening in India. So I do think that this is kind of creating a broadening of the global stock market, maybe from large caps to mid caps and small caps.
It's an important point that you make. Dr. Yardeni, as always, thank you so much for taking the time and speaking to us. Pleasure speaking with you.
My pleasure.
All right, some of what Dr. Yardeni was saying is visible in what the markets did last week. Let's talk about that. You had equities that saw profit taking at the end of the week, but the Nifty 50 gaining in all but 3 sessions in September. It's been a great month so far. Maybe September is the new July, who knows? But Nifty 50 is gained for a 3rd week in a row. Take a look at those weekly gains. 0.8% for the Nifty 50, and if anything, the broader markets have done even better. 1.5% gains for the mid-cap index, 2.1% gains for the small-cap index as well, and they outperformed, obviously, the benchmarks quite a few of those sessions. PSU banks were the biggest gainer in the week gone by. That index up close to 5%. On the other hand, you had private banks that relatively underperformed because the Nifty Bank as a whole only gained about 1.2%. Defense stocks were the other big pocket of strength, with the index gaining 3.5% just last week. IT index saw a little bit of profit taking after the gains that they saw post the Fed rate cut, and they'll be in focus at the start today as well. Indications are that they might have a wobbly start. I don't know how that is going to continue through the day. It'll be important to track. On Friday, the benchmark lost ground. The broader markets ended flat, and the market breadth shifted to even Stevens to the end of the session. The stronger sectoral performers of the week continued to rule the roost. So you had PSU banks that were the biggest gainer, defense also up and about in that session. IT was a loser in trade. It might just start off, as I said, weak today.
Yeah, and entirely possible. Could we see some move up? Because we'll probably not have the 4.5% reaction the Infi ADR had, or the IT consulting stocks had, on IT at least. But yeah, start off lower, yes. But the good part is that the rally that we've seen, it's been 3 straight weeks, and the rally still seems intact, because in technical parlance, there is a higher low formation for 9 consecutive days, which is a big positive for our markets. It was followed by a higher high as well. But effectively, a higher low means that the markets are ending. The low point of the market every single day is much higher than the previous day's low point, which means that there is a trend building up in the markets, even if you look at the selling that happens in the market. So that's actually a very good thing. The FI positioning is interesting too, because the index shorts have moved from 2.05 lakh contracts short to 1.50 lakh contract short. So clearly FIs are covering their short positions, and they are seeing the proof of the pudding as well. We may not have seen very Herculean inflows on the cash market, but on the derivative side, the massive short positions are being covered. PSU banks, the best performer for 2 weeks consistently, you might maybe see that take a breather. But again, it's an assumption. Let's wait and watch. I think, frankly, with all the noise around IT, what will happen to banks, etc., and stuff like that, the one certainty seems to be that consumption will be front and center. Ground checks, festive data, sales, and I think we'll probably see data coming in every 2nd or 3rd week with GST 2.0 coming in. So possibly the consumption bucket remains front and center for everybody in terms of what individual brands are doing, and thereby the corresponding companies might do as well. Watch out for this bucket over the course of the next 8 to 9 days. It probably is the most predictable item currently in the markets.
I think just to recap some of those factors, and I agree with you entirely, I think the Bachat Utsav is not being completely factored in so far. The initial response has been a little lukewarm and tepid, because it's come with this very strong message from the government: you have to pass on everything. So it is only volume gain that you will see companies improve with. But for example, a Voltas, inventory levels piling up, that gets moved out. Same for, passenger vehicles, etc. So Bachat Utsav will see that consumption spike, and it's at the start of the festive season. Auto stocks could buzz as GST benefits kick in. They've been at the forefront of this. You could see a lot of deliveries taking place today as well, especially for smaller cars, etc. Watch out for Swadeshi stocks as the government focuses on the self-reliance theme, and we've been giving you ideas on that. We told you about Swadeshi stocks which are consumption facing. We'll also tell you about Swadeshi stocks which are import substitution plays. So watch out for those. IT stocks will see some pain as Trump cracks down on H-1B visa, but my sense is that it might not be long lasting, because at the end of the day, many of these companies have started reducing their dependence on H-1B visas for some time now. This is what Bank of America says. On a gross and pre-mitigations basis, estimate the cumulative impact to annual profit as ranging from 7 to 18%. You have Investec today, which is saying that the impact will be minimal. So wait and see what happens. But it's not seeming as bad as the first draft of this looked like when it was first announced. This also kicks in, remember, from FY27. Shipbuilders will be in focus today. Watch out for those clutcher stocks. Government has given industry infra status to some of these, to this entire sector. So watch out for a Cochin shipyard, a GRSE, Garden Reach, etc. You will see some action there. I would add maybe your shrimp exporters, because there is now a new bill which wants to restrict this for the state of Louisiana. As far as the index is concerned, failed to break the crucial resistance of 25,500 on Friday. So resistance levels at 25,400, 25,435, 25,490. Decisive breakout above 25,450 to 25,500 range could push the index towards 25,700. Key support levels for the index at 25,250, 25,200. Fall below this could trigger a bearish sentiment. Now, the suggestion is that the Nifty setup remains positive. Any dips could be a healthy consolidation before the next leg. For the bank, the Nifty Bank Index closed below the 55,500 mark. It's broken a 12-day winning streak. This level now becomes the resistance, and you need to cross it to resume an upward journey on the Bank Nifty towards 55,700, eventually 56,000. So look at the support levels: 55,375, 55,295, and 55,170. But let me go across to Puneet as we start off the week, and he has the derivative setup for us.
Well, thank you for that. So thankfully, we've seen the support levels also starting to inch up now, both for the Bank Nifty as well as for the Nifty as well. For Bank Nifty, we've now moved above 55,000 as a key support level, at least in the near term, and that's a key positive. While the implied open does see a 87-point downtick, that largely seems to be that at the start we could see some impact on IT companies might recover. That's what seems to be the consensus estimate as well. When you look at the Nifty 50, we've largely seen that, a slight dip in open interest. 25,411 is what the premium currently trades at. While for the Nifty Bank, as I mentioned, we have seen the support level starting to inch up now, and comfortably above that long-term support at 54,000, which got broken a couple of weeks ago. We seem to be starting to rebuild that as a key long-term support as well, and that'll be the other one to watch out for going into the RBI rate cut meet eventually over the next couple of weeks. When you look at key positions for foreign investors, we've seen some buying in index as well as Nifty options. Because of that, largely the index long position, which has been hovering around 8 to 11%, has started to inch up a bit. This also does increase, it also does mention essentially that there has been covering of shorts in the system by foreign investors, but it's still depressed compared to what we saw 2 to 3 months ago, where the average at the start of the month used to be between 25 to 30%, and then we used to start seeing that build up by foreign investors in their position. So that'll be the other one to watch out for. We're seeing a continuous increase in that going forward as well. In terms of both open interest distribution for calls and puts, you can see a healthy open interest increase from 25,400 all the way up to 25,800 for the calls, while for the puts, we've started to see 25,300 as a level that is likely to emerge now. So this does indicate that we could have a creation of a strong support at 25,100 to 25,200 levels, and that'll be something that the bulls will be hoping for, at least in the near term. Both in terms of gainers and losers for stocks, we've seen again that the OI change, the open interest change, essentially is not that much to indicate a trend. at least for the gainers and for the losers as well. We have seen that trend largely be playing out with the gainers. We saw some increase in open interest for Sammaan Capital, but not enough to kind of make off a trend. So while there's been short covering across a bunch of stocks, limited impact on that as well. So overall, a lot of themes that will be in focus. IT is definitely one of them, as I mentioned, but watch out for autos, because still 30th September, all car makers have actually doubled their offers. So for someone like a Mahindra, you could see 1.56 lakh rupee benefit on 3XO. They're giving roughly 90,000 additional benefit, both cash as well as more features, more premium products that they could sell to you in that aspect. So watch out for these ones, because these could be a big fillip in this last week for sales for the month of September, which has largely been depressed because of people delaying the purchases. So could see some action there as well going forward.
I wonder if people will go today to get their car deliveries early on, and we're going to have all of those ground reports for you as well. Thank you for that, Puneet. All right, let's start with what's on our watch list this morning. I'm starting off with NetWeb. Because in the middle of all of this big news, we need to give you all the stock-specific news as well. NetWeb is a thumbs up. This company has been on a red-hot streak. It's also received a 450 crore order for the supply of Tyrone AI GPU accelerated systems. In a market which has barely any AI plays, NetWeb is standing out. Was already 8% up in Friday's trade. In fact, I don't know if you can pull up the 1-month chart for NetWeb and just give you a sense of how this stock has just been moving about 41% up in the last 1 month alone. So watch out for that. Swan Defense is the other one that is on my watch list this morning, and we'll wait and see how that opens as well. The company has signed an MOU with the Gujarat Maritime Board for an investment of 4,250 crore rupees. This memorandum of understanding is to jointly explore and finance maritime projects, including new builds, ship repairs, and infrastructure through the maritime-focused equity fund. Now, we talked to you about how the entire shipbuilding space is going to be under focus today. They've got infrastructure classification from the government as an industry that comes with its own benefits for each of these companies, but Swan Defense is what's on my watch list. We've spoken a lot about IT. First Source Solutions is also something that I'm watching out for. They've confirmed that restrictions related to H-1B visa programs have no impact on its workforce or operations. They have zero dependency on H-1B program for operations. So the reason that I picked First Source, and a lot of companies have come and said there'll be minimum impact, because they're very clear that we have zero impact. It's not going to make any difference to us. So I thought that was an interesting pick.
And it's going to be interesting to find out from the people from the industry about how this is going to be navigated as well. I have on my list, and something that we've spoken about earlier on the show, but I'll just speak about it now. Shrimp exporters, they've had a torrid time of it. Some positive news, some not. The most recent, of course, before the one that I'm talking about right now, was the update from Europe, where a few more fisheries were added to the list of options for Europe to import. But the latest update is not positive. US Senators Bill Cassidy and Cindy Hyde-Smith have introduced an India Shrimp Tariff Act. The aim of that bill is to ostensibly to protect Louisiana's shrimp and catfish industries. However, the point is that those additional tariffs of 50% currently are in force. So how much worse can it get, hypothetically speaking, if this act does come through for one market in the United States? Sentimentally, it is a negative. PNC Infratech, this is an update that is positive. It's gotten a letter of acceptance from the Bihar State Development Corporation, and there's an order win here. The company will construct a highway in Bihar, 21.3 kilometers long, will be constructed on the EPC mode. So it's in fact a value of 495, close to 500 crore rupees. It will take as much as 3 years to complete. And finally, Ashoka Buildcon, the third stock on my list, it's a thumbs down. This is a partnership with an international company and a project in the Ivory Coast in Africa. They're going to foreclose that project. The project was for the construction of drinking water wells, as well as installation of supply units at some 35 villages in that country. And the order was worth close to 200 crore rupees. It's not the biggest stock, remember, so therefore 200 crore order being foreclosed may not be a positive.
Cannot be. And I believe you also had this piece on Coforge. So a lot of these IT stocks could be in focus for multiple reasons today. The shipyard companies or shipbuilding companies could be in focus as well, because large ships are getting an infrastructure status, and therefore all of the shipyard companies, Cochin Shipyard, Mazagon Dock, Garden Reach shipbuilders, would be in focus today. You keep in mind that a lot of these individual names will be in focus for other reasons too. So Shipping Corporation of India, for example, has signed the MOU with BP, HP and IOC to jointly own, acquire, operate and manage vessels. Garden Reach has signed a series of MOUs with strategic partners with shipbuilding, port and infrastructure sectors as well. So watch out for the shipbuilders. I think there'll be a key sector to focus on today. Seagull India has become an L1 for a 1700 crore photovoltaic project with battery energy storage systems in the state of Madhya Pradesh. Could be interesting. I tell you, the clutch of best projects being signed is literally unreal. So that's the second one to watch out for from my list. And Shakti Pumps has an order of about 702 crores. Not a very large one, but Shakti Pumps tends to move very, very significantly when it gets an order win. So keep an eye out for this one. If there is a positive uptick there, you would know why that is happening. But front and center, guys, would be IT. And frankly, I think Tamanna pointed First Source out, and Alex had this in his list, a set of stocks like Coforge, right?
Emphasis has said it as well, a whole host
Quite
of
a few of
them.
the smaller IT companies have.
Yeah, not quite from your big 3 or 4, but the mid-cap ones have come and said that's not going to make too much of
Yeah, 30 H1B applications or 2025, something like that.
Yeah, so it's not all too bad. Maybe ask somebody who's been there, done that in the past, and in the post of a company CEO as well as head of NASSCOM. And Ganesh Natarajan, like I said, executive and former CEO of Zensa Tech, comes in on the show. Thanks, Mr. Natarajan, for joining in. But there is uncertainty due to the new notification on visas. What do you think is the impact for Indian IT companies?
What it implies is that if you look at last year, for instance, close to 60,000 or thereabouts H1B visas were granted in the lottery. And assuming that, I mean, the $100,000 tax is valid and the 60,000 less day comes down substantially to maybe 10,000 or 12,000. So potentially there is a loss of 50,000 people multiplied by, let's assume they would have been billing at $200,000 a year. So there's a significant potential loss. Of course, you could replace that by doing work offshore. You could replace that by employing people locally and filling those positions there. But I'm just saying there is a certain amount of concern that companies will have, and they will have to scramble. They'll have to figure out how to, cope with that situation.
Okay, so what is it, do you think, that the Indian IT companies can do as an alternative for this? I mean, the onshore offshore makes. Do GCCs, Mr. Natarajan, come up as a big alternative? Because a lot of notes are talking about that as well.
Well, you're right. There are two mitigating opportunities. One is, of course, to hire locally or hire people who are already on H1B. The second is, as you rightly said, whether GCCs or our own offshore centers to do that. But it is a rebalancing of the model, and it needs the client's approval, first of all. It also needs a certain amount of rethinking on the strategy of how do you approach a client, what do you offer, etc. So it's not easy, but yes, if push comes to shove, I'm sure people will make it happen over the next 2 years. So the industry is very resilient. So I think there are many, many crises that we've been through in the last 40, 50 years. So we will figure out ways, but it is any kind of change in the circumstance will create some temporary dislocation.
Fair call, understandably. Okay, well, and you know, Ganesh Natarajan has been there, done that, right? Head of NASSCOM as well, so kind of knows the impact. I mean, there is a near-term impact for sure, but I think as most companies have said, and as he said as well, I think this is something that can be tided over. Maybe a top-line hit, because if the onshore work goes down, you get that top-line hit, but certainly not a very big margin hit.
The question is, does it impact? Of course, it impacts the larger companies more, and so therefore, do we see that playing out in trade today as well? It could be rotation, but rotation from large caps into the smaller and mid-cap companies, or mid-cap companies.
I think mid-cap companies will be hit more.
Really?
That's what a couple of notes stated.
But you have only like you have Coforge, you have Emphasis, you have all of these guys.
That, but I mean, I'm just citing a lot of the brokerage notes which have come in, and they say that the mid-cap companies are likely to be hit more in terms of how vulnerable they are on margins as well. Your bigger ones will find other ways quicker, and maybe you will have clients willing to share costs more with the big ones, if at all, if it comes to it.
Yeah, but the only thing is, so here's the dichotomy. In normal analysis, you would probably presume that this is how it could happen. Size gives you that advantage. But almost every company, and if you look at the applications as well that have been done, H1B, the last year, the non-Nifty companies, which is technically not small companies, they are also large, northwards of 50,000 crores of market cap and large employee base as well. They've not made too many applications. So
Yes.
I don't know.
That was my point.
The jury's out because they have not done the applications. A lot of their employees are actually onshore.
In any case.
In
fact, I want to
get impacted.
I want to take that question to CP Gurnani, former CEO of Tech Mahindra, who's joining us on the show as well, and obviously have a very exciting project on AI on this as well. Mr. Gurnani, thank you so much for speaking with us this morning. Always a pleasure to have you on. You know, I want to ask you actually not just about what is the impact on companies, what they're going to do. My first question to you is your reaction to some of the responses that we've been seeing across corporate India, across the entire weekend, of people saying, time to come home and do better things here. Do you think that that's just being overly optimistic, or is that a message you resonate with?
I think it's a, when you read the act, the first gut reaction is, hue and cry, people trying to take a next flight out, and the flight fares going through the roof. And I think some clarifications came over the weekend. I've been out in the woods, so I'm not the guy who's read every clarification. But I can only tell you, just, from the conversation you guys have been having, I'm just saying, take a pause. Ask your research team a few simple questions. Number one, haven't Indian companies not invested in development centers in US? That means if the STEM skills are available, Indian companies have the capability to hire locally. Number one. Number two is Indian companies delivered projects, and as a matter of fact, the IT boom was almost at its peak during the COVID, because most of us had to do bigger digital transformation projects during the COVID, and we delivered it without any on-site, off-site. I think we need to get out of this on-site, off-site equation completely. And number third, people who are saying their top line will be hurt, they're probably body shoppers. They're not doing projects. The guys who are doing projects now, like a company like Ionos, we do it because Ionos is enabling humans with AI to deliver better predictability, better efficiency, and better projects. So my point of view is very simple. 2 years of COVID we delivered. AI is helping me deliver. Number third, we have set up centers there. The American companies have set up GCCs here. I mean, I think we are now in a mature stage. And I do not think this act will impact. As a matter of fact, it will help. Where it will help is all of us in the IT industry will realize that we need to shift towards AI a little faster. Number two, we need to shift towards product and platforms. Like our Prime Minister says, we need to be self-reliant, chip to ship. I think we will get a little more, stronger in our delivery. The same way COVID made us stronger in delivering security, resilience, and work from home. I think this will only create better opportunities for us. And maybe we'll end up setting up centers near shore, which is, closer to the American shores to make it more time compatible. But I see only opportunities, and I don't see even temporary pain. And I think the researchers who are coming back and saying large cap, mid cap, they probably haven't understood that most of us have moved on from body shopping.
Point. Mr. Gurnani, I just want to understand, so that my viewers understand as well, The H1B issue is not a new one. It's a bugbear that has plagued the industry before, and so a lot of companies did move away from that. And you pointed out quite nicely how that transition is taking place. What are the ways beyond what you've suggested that has already taken place so far? And what about the applications that are currently going out for the large cap IT companies? They're still in the thousands. Do you see a dissipation of that?
Of course, yes. If my customer's cost of, taking an employee is, you add $100,000, I mean, nobody wants that kind of a hit on their bottom line. So I expect that to become zero. I honestly believe that unless we are able to apply in a specialist category, so there will be some level of shortages in US, which only means is that either there will be acceleration of training in US, number two, there will be nearshore centers, or number three, there will be more work done either through GCCs or Indian labs in India.
Mr. Gurnani, good morning, Neeraj here. And just one insight, sir. You reckon it won't be business as usual, but could it actually be not too much of a disruption with all of these changes as well, assuming companies don't do too much of H1B, do more offshoring, etc.? Could it still be business as usual kind of a scenario, let's say 12 months out for Indian IT, top line margin, bottom line impact?
So, Neeraj, with current administration, now with our Honorable Minister Piyush Goyal in US, I don't see this to be a permanent, because as I've always said, this hurts US more than it hurts Indian software companies. And go through the application list. I mean, your research team, Neeraj, has done a good job of pointing out that Indian companies have reduced their H1 dependence by 60% in the last 5 years. Whereas you look at the applications from other American companies, they seem to be going up. So I am not saying everything will remain the same, but I'm also saying is good sense will prevail, because it's in the interest of the American companies, it's in the interest of America. This talent migration has helped them more than anyone else. Indian industry is now capable of delivering complex projects from India. Again, repeating, we delivered it over 2 years, and you again get your research team to work on the data. Our quarter-on-quarter growth was the best during the COVID years.
Mr. Gurnani, thank you for those compliments to the NDTV Profit research team, and we definitely do try and put all of the data together in that space. I have a question for you, and you mentioned correctly that the Union Minister Piyush Goyal is in the United States today, so is External Affairs Minister S. Jaishankar. Maybe this is a negotiation tactic, it'll come back. But isn't this a bigger message that needs to go out clearly and will be heard clearly by aspiring students, aspiring engineers, H1B visa aspirants? That is it really all is cut out to be? Now I'm going from a company level to an individual aspiration level, and your sense there.
Well, listen, so look at it. As I said, Indian opportunity, and I love the statement by Prime Minister Modi saying that we need to be self-reliant, ship to ship. I'm involved with Mahindra University, I'm involved with Plaksha University. The number of students who would have otherwise gone for their undergrad or postgrad studies to US and who have applied to us at Mahindra University and Plaksha only gives me the satisfaction is that it's not only the IITs. Now, a lot of talent would choose to stay back. And number third, as far as the industry is concerned, I mean, we will clearly evolve. And that evolution to me is more automation, more products, more platforms. And so I do believe it is the scenario 12 months from now, if this kind of a trade policies remain, if this kind of H-1B policies remain, it will benefit India in the long run. There could be a short-term pain. I don't see it, the short-term pain. I mean, I'm very convinced that there is no short-term pain because we will be able to deliver all our commitments and projects without getting one new H1 for the next 1 year.
Okay, thank you so much, Mr. Gurnani, for speaking with us. And very, I think, clear words coming in there that Indian IT companies are not body shopping anymore. So this is not going to make too much of a difference. Very quick look at the implied before we take a small break. And this is a short one. We're coming back with all the top action of the day. You're going to start lower, nearly 80 points. What should be your top picks? What should be your strategy? All of that when we come back. Kush Bora, Parag Thakkar will be with us in the studio.
आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया है।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboard
All right, so 72 points down is what the implied open is showing you at this point. But are these opportunities to buy? That's the conversation that we're going to have. Also on the show, in just a bit, we're going to give you the view on IT stocks and so much more. Kush Bora and Parag Thakkar are joining in our dream team every Monday to give you the tech and funda view. Kush, you seem to have had a great weekend. So, and I know you're going to start with a recap of that. Good enough to be bullish at the start of the Navratras?
Oh yeah, good times.
Yeah, good times, definitely.
Yeah, I mean, we were there at the launch party of NDTV Good Times. Fabulous event. Absolutely loved it. But from good times to great. Happy Navratri, guys. We're kickstarting the Navratri festival. Just a quick question. Any one of you into Garba, Dandiya? Two left feet?
No, not me.
No?
Not me. I clap from the sidelines.
And I enjoy the music. It's very good music.
Oh, it is, right? But I think markets are going to be dancing to, their own tunes. Trump tantrums on one hand and the Indian resilience and reforms on the other. Today, I've got more positives than negatives from a technical standpoint, right? So let me just list out a couple of positives from the technical perspective. There is a breakout zone, a very strong one, at the 25,550 and 25,650 level from where the markets retraced this week after 3 weeks of gains, on Friday in particular. So you've got, from a weekly setup, the cup and the handle formation breakout that is coming up, falling trendline resistance that is coming up, and also there's a gap. And as I said, all of this revolves close to that 25,550, 25,650 levels. Maybe if I can push it to about 700. Once that is taken out, you could be looking at a zoom to about 26,000, 26,400 kind of levels, which would essentially mean new highs in the coming weeks, coming months' time. There will be a time for caution, and I will be here to give you a heads up around that as well, but that's not today. As far as today's opportunity goes, I think you should be looking at buying on dips. Remember Friday also we spoke that markets have had a good run around 25,200, give or take 50 points. You should be looking at adding longs. So this is the dip that we did speak of. Positional stop around the 25,000 mark. Go long from these levels again for levels of 25,600, and once that resistance is taken out, perhaps 26,000 as well.
Got it. Okay, let's talk about your individual stocks this morning, because are those the opportunities to buy on dips, if at all, or are they going to likely start with strength?
No. The ones that I have on my list most likely will not see the kind of cut that the market or the GIFT Nifty suggesting, not related to IT per se. But since it's Monday and we discuss weekly picks on Monday, well, let me start with that. For this week, the weekly pick is Sequent Scientific. Very interesting moves. 3 sessions of gains, 1 week, 3 weeks of gains rather. 1 week mild dip, but on the whole it was a consolidation week. Last week we've had a good run on the back of good volumes. The retracement also was close to that 38% mark, and the stock rebounded from there. All in all, on the cusp of a breakout, and the momentum and the volume suggest that could well happen. 210, 220 are your targets on the upside. 190 is where you place that stop loss. The second one has to be from the banking and the financial space, right? PSU banks did very well, top performing index for the week. On the way up, Canara Bank for targets of very near-term targets of 120 and 123 with a stop loss around the 115 mark. A quick word on Axis Cades. Last week's weekly pick, where our second target was 1750, the stock hit a high of 1740, close to a 9.5% gain in 3 to 4 sessions. So I think that's a good move. You could perhaps take money off the table and look to re-enter at lower levels.
Okay, so interesting ideas. Parag bhai, we'll come to you in just a bit, because we have to ask you about IT stocks, of course. But there are a few ideas that will come through from a regular segment on the show. This is all the chatter from the dealing room. Soumit Sarkar joining us this morning. Soumit, I'm most curious about what you're hearing on IT stocks, because I'm sure there's a lot of number crunching that's already gone on.
Well, when it comes to IT stocks, what dealers are indicating is that for large caps, we could see a 1 to 2% odd card, and for mid caps around 3 to 4%. And if any stock is falling more than 5%, then it will be a buy on dips, is what the strategy, what dealers are indicating when it comes to IT. But apart from that, multiple other stocks that remain in focus. Firstly, it's Bank of Baroda. There are buy flows on DIS. Dealers are expecting strong growth numbers, strong loan growth numbers, specifically in the second quarter of FY26. In fact, they're indicating that the growth number that Bank of Baroda could post on a sequential basis could be higher than private banks as well. When it comes to Glenmark Pharma, there are sell flows on large HNI desks. Dealers are indicating some negative news flow could come in regarding one of its plant in the United States. For Laurus Labs, there are buy flows on large HNI desks. Stock is gaining on anticipation of a large order win. For PNB Housing, there are buy flows on institutional desk, is what dealers are indicating. They're expecting the new CEO announcement to come in very soon. They're expecting an external guy from private sector to be appointed. So keep an eye out for PNB Housing as well. And for IIFL Finance, smart investors and PMS have started accumulating this counter. Dealers are indicating a 20-25% return over the next couple of months. One of the rationales given is the fact that the street is not still factoring in the growth that IIFL Finance could see when it comes to the gold lending business. When it comes to John Cockrell, the stock has been buzzing on of late, and this is on the back of a potential order win announcement that could come in. And lastly, when we talk about Paytm, we had seen a sudden fall in the share prices on Friday. Now, what dealers indicated on Friday was the fact that there was some commentary that had come in on the Morgan Stanley conference, which was taken negatively by the street. So that could be one of the reasons. And the second reason, what dealers pointed out, is that SAF partners are looking to completely exit from Paytm. So probably something around that block or some of that stake might have been offloaded in the market, is what dealers are indicating, which could have led to this sudden fall in the share prices of Paytm on Friday.
Sumit, naam bhi bata do. I'm sure you have the name of the PNB guy as well. but I'll be fair. I mean, it is good journalism, by the way, which makes him ensure that he's not mentioning things which are not confirmed. So a great practice. But Sumit,
all of this comes with disclaimers that this is nothing that we have confirmed journalistically. I just want to put that out there. This is what we are hearing from dealer rooms. We have not gone out and confirmed these stories. We are not ratifying these stories. We're not saying that this is happening. This is the buzz. So just want to make that very clear.
Great stuff, Sumit, and good journalism, by the way. Great stuff. Thank you, Sumit, for that. Parag bhai, come in on the big debate this morning, right? We've spoken to CP Gurnani, who said, that it'll not be an issue. Dealers are indicating dips could be bought into as well. Kush is of that opinion. But I'm talking about IT. You have a favored position in tech. Does this hit that thesis, or are you still constructive?
So basically, luckily what happened is that after GST cut, I got more bullish on domestic themes, and so I bought into PSU banks and financials and City Union Bank as we spoke. Then of course this Vodafone episode triggered buying in Indus Tower. So the overall weight of the IT is a little less now than we spoke last time. But I would say that yes, basically it looks like that it's a temporary fall, and which should be bought into. And specifically, some of the names which I am also hearing are not affected are Tech Mahindra, Coforge kind of names, which are not affected by this visa thing. So if they fall, say more than 3 to 4%, definitely I would also look to buy.
If I remember correctly, you had liked Wipro when we had spoken the last time. So therefore, speak about the larger IT companies. And
so I think it depends on company to company also. But generally, in my view, more than 2.5%, 3% fall can be, one can start gradually accumulating, because things are not very clear as of now. But definitely the dependence on H1B visa has reduced significantly. So 15 to 50 bips margin decline can be anticipated.
If there is a dip, will you buy today?
Yeah, definitely. I am looking to buy Tech Mahindra kind of name, where I am hearing that there is no big, there is no impact at all. Or Tech-M, yeah.
Okay.
And incidentally, you had Mr. Gurnani only.
Yeah. No, I mean, he's former Tech-M now.
Yeah,
but,
correct.
he was talking about what the, direction has been for a while.
Yeah.
And
but of course, my tilt still remains towards financials, especially PSU banks, because from Q2 perspective, as Sumit also highlighted, for example, BOB, one can expect a good growth. In PNB, I think in one of the channels, the chairman said that there will be no margin contraction at all in Q2, while all other banks will have margin contraction in Q2. So I have wanted to say, of course, with the disclaimer, I am saying, please take help of your financial advisor, and it is for long term only. But so we have what, apart from SBI, which we had as a big position, we have added to PNB, Canara and BOB in our portfolios.
Okay, we have done this segment this morning, and after Prime Minister's call yesterday for Swadeshi and buy Swadeshi, we thought we'll put together a list of Swadeshi stocks as well. And in fact, we have those graphics, if we can pull them up. I want to ask both of you, what do you think are the best Swadeshi bets? And it ties in well, Parag Bhai, with what you just said about domestic facing. If that's really going to be a movement, and it's the need of the hour, because it's not just the trade war, we're in a world where every nation needs to look out for themselves. What would be your top Swadeshi stocks?
So Swadeshi picks, I would say that, see, in steel, for example, we have JSW Steel. In cement, we have bought recently into Ambuja Cement. In FMCG, we have Dabur Marico kind of names. in our portfolio. So, and as such as PSU banks, as I told you, and of course, needless to say that this Vodafone idea, I think government changing up stance towards slightly positive stance, that they want to reduce the burden of Vodafone idea and they want to keep it alive and kicking. I think that augurs well for Indus Tower also. Indus Tower is a only 96,000 crore market cap company with 14,000 crore cash profit.
But very quickly, those
Vodafone, Vodafone can actually now be a Swadeshi stock because the parent has left.
And 49% is owned by government, right?
And 49% is owned by
You're
government.
not worried about the, the plans for capex abroad for Indus Tower?
No, that is in fact positive, right? Because that is that will provide growth also.
Sure.
And plus, remember one thing, Indus Tower trades at only 6 times EV/EBITDA versus American Tower which trades at 20 times EV/EBITDA. This much discount I am not seeing any sector in India which is trading at such cheap valuations compared to global peers. In India, everything is premised on that India, the growth will be higher, so PE multiples are higher. Here, the multiples are lower because of that Vodafone fear. Because 30 to 35% of revenue comes from Vodafone. So but if Vodafone is, if government is tilting positively towards Vodafone, I think Indus Tower can be a great opportunity.
Very quickly, Swadeshi stocks.
Financials and auto, Sammaan Capital, LTF from the NBFC space, and Maruti and Mahindra, and of course some of the other ancillaries in that space. Definitely my Swadeshi picks.
Okay, Swadeshi picks from both of them, and that's very interesting to hear. We'll take a very short break. We're coming back right with the pre-open session. The dip on the implied has shrunk since we started the show this morning. Let's see how it goes. We're right back after this break. Don't go anywhere.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Back with India Market Open right here on NDTV Profit. The implied open, as it suggests, much lower a gap down than what was believed, what was being shown maybe half an hour earlier. So that is part one. Maybe tech will not have as bad a start. So that's the one thing to focus on. The other thing to focus on, maybe tech has a bad start, but consumption stocks really make their presence count. Remember, I repeat, viewers, this next 9 days, a lot of consumption stocks will move based on ground reports about what sales are looking like, every single brand specific. So if Mahindra brands are doing very well, you might well see Mahindra stock do well. Same for Maruti, same for Hyundai, same for some of the consumer durable or the retail stores as well. So next 9 days, very, very crucial for figuring out the sentiment for some of the consumption names, and keep that at the back of your mind. Actually, Parag bhai, can I come in on that? We've seen a bit of a rally for some of these consumption names. There was a Voltas management meet on Friday, which my colleague Mahima put out the takeaways for, and they're talking about inventory being there, but demand looking robust for the festive season. What is your stance now that we've had a month and slightly over that to digest this GST news, and the stocks also have rallied a little bit?
Yeah, so basically I am continuing to hold Maruti in my portfolio. As I told you, Mahindra and Mahindra, although these are my favorite stocks ever, but I was compelled to book some profits because there was a huge rally. So even in auto components, I'll not take names because they are small cap teams, but I'm booking my profits a little bit. So I would say that yes, so I am thinking of second order impact now. Everybody in this world knows that Q2 will be bad for financials. Margins, NIM compression in banks, of course, not in NBFCs, and asset quality also, because all high yielding unsecured like credit card, personal loans will show some stress, or microfinance, for example. But this will be the end of it.
Exactly.
Already I am seeing the data improving. So my view is that you are absolutely right. One should keep ears on the ground and do channel checks in this festive period that which brand is doing well. I think so Maruti is going to do very well, but I would say that, and that's why Maruti is still there in the portfolio even after a rally, but I would say that I am thinking about now second order impact, because I feel that current valuations of financials will allow market participants to ignore weak Q2.
Okay.
Because H2 will be better.
We want to welcome all of NDTV 24/7 viewers as well to our broadcast this morning, and we're talking about how markets will be opening in a short while from now. What we're showing you on your screens are the pre-open rates. This is the 8 minutes of trade that takes place before markets actually open, and you have larger investors that come in and put in their bids, so to speak. It's interesting because, and these are very fluctuating levels that you're seeing on the screen, so they will keep changing second by second. But the one theme that you're seeing very clearly this morning is those companies that have order wins are doing well. You have a PNC Infra, for example, about 3% up. You have a Garden Reach, and we've been talking to you since this morning about how shipping stocks will be in focus. The government has given shipping industry infrastructure status, and that is going to be in focus as well. You're going to see the consumption boost coming into play. But remember, when Prime Minister spoke on Sunday evening, he emphasized Swadeshi products. India Inc. now has a huge opportunity to boost that measure and actually bring in more Swadeshi products, reduce import dependence. Mahima is joining in now with a list of stocks and companies that are actually in that Make in India race and right up front. Mahima.
Right, so what we've tried to do here is we've tried to divide it sector-wise as to where these companies are actually trying import substitution and what are these products or areas that they're trying to do import substitution in. The first one is medical devices, where around more than 80% of import dependence is there, but something like a Polymedicure is trying to import products like the infusion therapy devices, cardiac catheters and blood transfusion equipments as well. In the industrial machinery segment also, there is more than 80% dependence on imports. So companies like L&T, BHEL, Elecon Engineering, etc. are trying to be in that race of import substitution. For L&T, heavy machineries, infrastructure equipments. For BHEL, again, power plant machinery is something that they are focusing on. For Elecon Engineering, industrial gas and material handling equipments is where we are going to see import substitution, which is already happening and going to happen going forward as well. For rare earth, more than again 80% dependence is there. So GMDC is a counter where one needs to look at where products like rare earth oxides, lignite, bauxite as well as fluorspar is being tapped into for import substitution. Hindustan Zinc is other counter one needs to keep an eye out on. Then in terms of semiconductor chips, now here large dependence when it comes to imports of these chips, but we have counters like Keynes Tech, Dixon Tech, who are now planning into semiconductor assembly, testing, electronic manufacturing services to kind of substitute the dependence of import of semiconductor chips. Then in terms of solar cells, you have counters like Vari Energy, Adani Green, Tata Power, Premier Energies and Borosil Renewables. In terms of all of these counters, all of these companies, they're trying to tap into the solar PV module cells, inverters and focusing on scaling cell capacity as well and reducing China import dependence as well. So all of these companies are trying to find a solution in terms of where we are dependent on import and of course trying to find a substitution here on.
Got it. All right, Mahima, thanks so much for that. While we're speaking about the implications of the rollout of GST, which of course takes place today, we've seen a lot of the stocks that benefit from this likely consumption boost run up in the move to today. So you may not see too much of a reaction for the automotive companies or some of these FMCG names in trade today. What you're seeing today is the implication of the H1B announcement over the weekend. So pull up the IT companies and you've seen a bit of a reaction. Of course, this is still early minutes in today's trading session, but all of the constituents of the Nifty IT currently in the red, led by a cut of about 4.5% for Coforge. You have Persistent Systems that's down about 3.5% or so. HCL Tech also about 3%. TCS losing ground as well. So let's talk about this a little more. Ravi Menon, IT services analyst at Macquarie Capital, joining in. Ravi, thanks so much for taking the time. Your initial read on the implications, is there going to be a top-line impact? We spoke with Mr. C.P. Gurnani just a short while back. He says unlikely. Is there going to be a margin impact, and to what extent?
And so I don't believe there is going to be either a margin impact or a revenue impact. And the reason is actually this rule actually applies to all companies, right? It is indiscriminate. So theoretically, you can be say a small US supermarket chain looking to hire your first person, sponsor a visa, and you still have to pay this. So it doesn't matter whether you are Amazon or the supermarket chain or your TCS. You still have to pay the same amount. This is very unlike 2016, 2017 when there was talk about introducing a different wage level for companies which are deemed visa reliant, where if your current US workforce is more than 50% visa holders, then you would be subject to the minimum wage limit. That was talked about in 2016-17. And so that seemed to differentiate between, say, an Accenture or a Deloitte, which has a lot more local presence versus, Indian IT services firms. This time, there isn't anything like that. So I think this just raises the wage level across for some specialty patients. And at this rate, it's not a very material impact, right? You're looking at roughly like a $8.5 billing rate increase per hour that's required to compensate for this amount, which I think is not a large amount, especially considering that you have an on-site offshore mix in most cases, right? So you're looking probably at like a 2-3% billing increase that's required. And I think since it's applicable to all, whether you as a client choose to even go and directly do the sponsorship, the same costs apply to you. So I think, there is really not going to be any impact.
Ravi, good morning, Neeraj here. And this is good to hear per se, but so we were wondering in the morning that 4 or 5 IT companies have given out statements that it's not as big an impact on them. You kind of reaffirming that, not just for a particular set of companies, that by and large, IT services EBITDA numbers won't get too majorly impacted.
Correct, Neeraj. Exactly. Because I think in 2016 too, people had taken a rather simplistic approach and said, what if the wage level is taken to $125,000, or if the limit is 100,000? We are currently paying mostly 85 or something. I'm talking about 2016. Wage levels have significantly increased now. But so at that time, that was the kind of analysis that was done. Ignoring that, that the US is very heterogeneous as a country, you can't actually have the same wage level for, Iowa and New York City. right? So it's I think something similar is happening even now. People are looking at it and saying that, oh, the margins that you make, it's actually going to be completely washed away by this $16,000 fee. But that will be passed on, and this is only part of the mix, right? The on-site offshore model is successful because only a very small part of the cost is actually on-site. You have a significant mix of offshore labor as well. And that's that's why I think it can be easily offset. I don't think this is anything negative, and I think it might actually even be a little bit of a positive because H-1B visas are now become I'd say there is a shortage of that every year. You see this going into a lottery, and if you look at the filers, you have a long tail of filers. A lot of them are fly-by-night operators who just sponsor visas, for people with the bare minimum qualifications. I think that sort of thing will stop, and you would see more eligible candidates actually getting the visas.
In terms of the opportunity you spoke about, Ravi, just very quickly, which companies, if you see a dip today, this morning, sentimentally, which companies would you have on top of your list to pick up as an opportunity? Would you look at some of the mid-cap players? Would you look at the top three?
And so, we've got TCS as a top pick in the large cap, followed by HCL, then LTI, Mindtree, and Wipro. And the mid caps are top picks as Persistent Systems, followed by LTTS.
Okay, LTI, Mindtree, TCS, and LTTS. All three of them on Ravi Menon's list. Thank you so much, Ravi, for speaking to us. And let's get to the brokerage call of this morning. BOFA, and Morgan Stanley has initiated a buy on Knowledge REIT. Somit joins in with more details.
Well, there's a couple of bullish notes that have come in on this Knowledge Realty Trust. Bank of America has initiated buy rating with a target price of 119. They say that Knowledge REIT is India's most diversified and largest office real estate investment trust. They believe that there are multiple positive tailwinds for the company. They also say that the leasing environment and policies are quite favorable for REIT. And over the next 3 years, they're expecting the company's operating income to grow at a CAGR of nearly 14%, and the dividend yield to be around 6.4% in FY27 and 7% in FY28. When it comes to Morgan Stanley, they have initiated overweight rating with a target price of 122. They say that Knowledge REIT offers a defensive profile with steadily rising cash flows and an acquisition upside potential as well. They believe that strong GCC-led office demand and scale with highest tax-free yield will benefit Knowledge REIT the most among all the listed real estate investment trusts that we currently see. It also says that Knowledge REIT stands out for its geographic diversification and highest mark-to-market upside potential. They also say that the company has the lowest special economic zone area and highest tax-free dividend component among the listed real estate investment trusts currently. Now, the brokerage is expecting the company's operating income to grow at 24% in FY26, and they are looking the dividend yield to be around 6.2%.
Okay, thank you for that. I just want to look at some of the pre-open rates when it comes to IT stocks specifically. IT is going to be in focus, and two stories that are big today. One side you have this impact on IT companies, the other side you have this consumption boost. So let's see how that's panning out. Nearly 4% down after the pre-open session has ended. And remember, markets will open in less than 2 minutes when you will see the actual rates coming in where everyone can come in and buy or sell. 2.5% yearly down on TCS, Coforge, Emphasis, Persistent, all of these companies, HCL Tech, seeing some amount of pain. Paragba, is this the time to actually go out and pick up some stakes in IT companies?
Absolutely. Absolutely. If it is opening like say more than 3% for Infosys, or some other names which are opening, large cap names opening more than 3.5% down, I think one should, if you have an underweight position, then you can definitely increase the position, and if you are a normal investor also, from long term perspective, it makes sense to buy today.
What is interesting, I think, is beyond IT, and maybe Kush, you can come in on this, just about 0.4% or 0.3% of a cut for the benchmark Nifty 50. Of course, the IT index indicating that downtick of about 3%. That indicates that beyond IT, there is relative strength. Would you agree?
Excellent point, Alex. In fact, that's exactly what I was noticing. Look at Bank Nifty. It's about 30 points down, which is practically nothing, a flat opening. So I think beyond this, the sentiment is largely positive. I think you're going to see some recovery after this kind of a gap down opening as well. So I remain constructive on the markets today.
Kush, buying the dip in IT, very quickly, 20 seconds.
Yes, absolutely. And the stocks to focus on are Emphasis and Coforge.
Okay, Kush Bora saying that the stocks to focus on are Emphasis and Coforge. He hasn't given the levels at which he'll buy, but we'll save that question for when the market opens and ask him pinpoint, is he buying them at that point of time or no? 15 seconds left for the markets to kickstart trade. Keep in mind, the IT will start off lower, may see some buying from the lower levels. Viewers across the network, this is the big thing. Navratri starting, the festive cheer starting. Let's see if it shows in the markets. It is a start in the red, with banks not doing too badly. This is the index which represents all the banking stocks, and it is flat. But Nifty IT is starting off with a 3% cut. This is due to the H1B visa regulation change that the US administration ushered in Friday late evening, Saturday morning. And no surprise that they're starting off lower. I would have thought that the behavior would have been a bit better, but no, there is a gash and you have to accept it. Mid caps, 0.25% lower. Small caps will come up on your screen next. The index which represents the small cap stocks, 0.16% lower. Not too bad. The Sensex, which comprises mainly of the large caps, is down 0.5% because of IT. A lot of IT stocks, nearly 6 stocks in the Sensex currently. Let's get the Nifty 50 stocks on the screen and see what is moving and what is not. So as you can see at the bottom end, which represents the worst performing stocks this morning, it is IT all across. Tech Mahindra, which BofA Securities says was the most exposed, down 6%. Infi, Wipro, TCS, HCL Tech, all of them down in the red. Then there is an Apollo Hospitals, Bharti, Tata Motors, but few and far in between. But even when the index is down about 1/3%, even Stevens on the red and the green, which is a good thing. Just very quickly marking the winners. HDFC Life, 1.3%. Adani Enterprises, which went up 5% in Friday's session. And Jefferies has a positive note on it with a higher target price of 3,000, is up 1.4%. SBI Life, Eternal, Bajaj Finance are some of the other names doing well. So viewers, on the large caps, the verdict is that it is IT which is dragging the index lower. Otherwise, it is not too bad.
Adani Ent is seeing that big push because of Jefferies being very bullish on the airport opening, the Navi Mumbai airport, which will open soon, and that's why you're seeing Adani Enterprises doing this. So, okay, this is the top 50 stocks on the Nifty that we're talking about, but let's move broader and wider and just give you a sense of what's happening in the broader markets. The Nifty Midcap 150, which is the top mid-cap stocks, is also down nearly 0.5%. It's a dull morning. It's a dull Monday morning, and it shouldn't be coming as a surprise to anyone because we are under attack on various aspects. You have two union ministers in the United States right now. You have the Trump administration attacking H1B visas. There's a Louisiana senator who suddenly gets up and says that we should not import shrimp from India. So there is all of that brewing in the backdrop. I want to pull up the India VIX. The volatility index is a good gauge to see how worried the market is, to put it simply, and that is spiked up 5%. So that up in the green is actually telling you that the worry is spiking and the volatility that they're expecting is spiking. So that's not a very good sign, and it's actually explaining in a sense what you're seeing on the rest of the screen. Let's pull up the sectoral heat map and we'll give you a sense of how sectors are doing today. You have Nifty IT, no surprises there, about 3.5% down. Whatever these companies say, whatever all the brokerage notes say, the fact is that H1B visas have been hit. Is it just the first step that America is taking, or the Trump administration is taking, to target Indian IT companies? Perhaps is a question in the mind of investors today, because if you remove the Nifty IT out of the picture, there's a lot of red in the screen, but it's not such a huge hit. The Nifty Midcap Select, for example, just about 0.5% down. What's working this morning? India Defense. This is going to become a Swadeshi moment, not just for consumers who are going to go out and buy today as Navratri starts and the GST rollout starts of lower rates. It's also going to become a Swadeshi movement, maybe in terms of stocks. Look at India Defense, about 1% up. I wonder if we can pull up the components of the Nifty India Defense just quickly and see how many shipping stocks are there. Yes, you have Garden Reach, Cochin Shipyard, Mazgaon. Now, these are all companies that build ships and have been recently, just over the weekend, given infrastructure status. That's why you're seeing them up in the green, especially Garden Reach. This was all on our watch list this morning. So if you're tuned into NDTV Profit this morning, you would have been well prepared. Let me talk about specific stocks as well as we move forward. PNC Infra has received a 450 odd crore order win. And this was on our watch list, about 3% up this morning on what is a difficult morning. We'll just recap some of the IT names as well and the mid-cap IT names. Look at what's happening there. Coforge and HCL Tech quite hit badly. Coforge coming out and saying we just applied for 65 H1B visas, but the street still looking at this as a pain point. Emphasis about 4% down as well. Infosys, Wipro, Birla Soft are some of the other ones that we're looking at. Remember, our analysts in our studios this morning are saying that if you see this kind of a hit on stocks, it might be an opportunity to buy. Persistent seems worse hit, about 4% down at this point. Let's look at chip builders as well. We saw some of them there. Let's add a Swan Defense to that list. SCI, about 5% down. Cochin Shipyard, Swan Defense, 5% up. Sorry, all are Swan Defense possibly on an upper circuit. It has a huge order win as well. NetWeb is the other company that we've been tracking. They've got a 450 crore order to make AI GPUs. This is one of the few AI plays that we have in the listed space in India, and that is looking good this morning, 5% up. So yes, there are some winners, but the overall mood very cautious this morning, Alex.
You said it, Tamanna. In fact, you already kind of highlighted, so did Neeraj. But I want to drive home the point, right? So you have a cut of about 75 points, for 73 points or thereabouts for the Nifty 50. All of that being contributed, you can argue, by the IT sector, because as I look at the screen and I look at the sectoral contribution on the Nifty 50, 72.35 points at this point when I'm looking at the screen is just the Nifty IT, just IT rather, in that bucket, because there are so many listed companies, large ones at that. Infi, TCS, Tech Mahindra, HCL Tech, all of them in that list. But take a look at a few more stocks from the broader markets, and some of the shipbuilders were pointed out, but there's also Shipping Corporation of India that's up and about. I think Neeraj spoke about it before the start of trade. It's up about 5.6%. The update, of course, is that it signed an MOU with BP, HP and IOC to jointly acquire, own, operate and manage vessels. Anantraj is up about 5% or so. You have Adani Green that's up about 2.7%. Hind Copper also buzzing in trade up close to 3%. Among the losers beyond the IT, and it's actually, I have to look down the list quite far to find stocks outside of the IT pack that are doing badly this morning. You have Ipca Lab that is losing about 3.3%. Dr. Lal Path, which is down about 2.8%, 2.7% or thereabouts. But I want to ask Kush about some of these stocks, right? Kush, you've seen the open down about 0.25% for the benchmark Nifty 50 beyond IT. Would you say that there are a few opportunities maybe in the healthcare space and pharma, or beyond that? Anything that you're seeing that could be bought? Or would you just buy the IT companies looking for a pop?
So if your view is positional, and by that I mean a month or maybe 3, then this is a good time to buy IT names. Let me start with the positive first. Remember how we spoke that the dip could be a buying opportunity. At one point in time, Nifty was actually more than 100 points down, and you've seen that recovery with Nifty now just being about 68 points lower. In fact, Bank Nifty had just turned to green, flat now, but even that had turned to green. So this is suggesting that there is still inherent strength in the market. It's just the heavyweight IT sector, which is down today, that's dragging the markets a little lower. So I would still reiterate the calls that we discussed before the start of the show, which is Canara Bank. Look at that move. What a fantastic recovery, and holding and gaining ground. Sequent Scientific also doing the same. And the two names that we discussed, from the IT space, Emphasis and Coforge. Now, while on the face of it, it might look like, these stocks are down 3.5%. It's not such a bad thing if you consider the recovery. Emphasis actually went and hit a low of 28.17, and it's recovered almost about 70-80 rupees from there on. So that recovery that we spoke of is underway. So if you have a positional view, you should look at IT names, and by that I mean anywhere from 1 to 3 months or more. This would be a good time to buy IT names. And if you want to look at a very near-term trade, I think you should still look at financials. Canara Bank being one of our top picks in that segment.
One stock that has worked beautifully and something that was discussed here on this very table is Piramal Enterprises. It's up 1.5% today as well. And remember, it's ahead of a big event, but at 2.5% in fact, because I think it stops trading because there's a subsidiary share that comes into offering as well. But I think we discussed this at what, 950 or thereabouts?
1067.
1067, is it? Wow, you have the price known as well. Now it's 1149, 100 point uptick, but there is an event, Parag. I just explain what happens? Should people still log on to Piramal Enterprises? I can't ask Kush because it will stop trading tomorrow, right? So I have to ask a fundamental view.
Sure. So basically, I would definitely love to hold on because I know for sure that, see, Q1 PAT, as I told you last time, was already 275 crore. So this year, they will do 1300 to 1500 crore PAT. That is what they have said in their presentation. And market cap today also, after this rally, is also around 26,000 crores, which is still below book value. So I would say that I would not mind holding it for 1 month because I feel that from every quarter, you will see improved earnings. Because their productivity gains are phenomenal. They have 516 branches and the productivity gain itself is going to give them a big fillip. Plus fee income growth and plus of course the cost of fund will come down for all NBFCs as the banks will pass on the rate cuts. So I would say that I would repeat what I said on that day, that the loan book is going to grow at 30% and your ROA is going to actually 1.5 from 1.5% now to 2.5 or 3% by FY28, which will cause a significant earning improvement. Of course, one big caveat is economy has to hold on, which I feel that from second half economy will only recover, and so that helps my thesis.
Got it. Parag Bhai, on that note, thanks so much as always for taking the time. Kush, as always, thanks so much for joining us in studio. One of the stocks from the pharma pack or the healthcare space that has been in focus this morning on account of news flow is Oro Pharma. And this is on account of its subsidiary having completed a clinical trial for a drug that is used to treat osteoporosis, which essentially is the thinning of bones. We've got Dr. Satakarni Makapati, who is the Chief Executive Officer of the Biosimilar Peptides and Director of Board of Aurobindo Pharma, joining us this morning. Thanks so much, sir, for taking the time. What is the implication of this and what is the kind of market that you would have for this drug?
Denosumab is a monoclonal antibody that is used primarily to treat conditions such as osteoporosis and bone metastasis from cancer. So the drug has a market potential of around $7 billion globally, with entrants in biosimilars shaping the market probably from late 2025. It's a very important product in our portfolio. We just announced a strong phase 3 result for this biosimilar with regulatory filings planned for the US, EU, and other key markets beginning from January 2026.
Okay. Well, congratulations on that. Mr. Makapati, I hope I'm pronouncing your name correctly, but what happens next? I mean, as I learn, you are apparently, as you said, right, planning to file for regulatory approval in the EU and US in Jan 2026, but what's the timeline for something like this?
We are looking at around 9 months to 10-month window for approval in Europe with UK and Health Canada. So I expect the product to be approved by end 2026. US can take slightly longer. I expect the approval in US to be around 2027.
Sorry, and if the total market is 7 billion, what does Europe constitute as a part of the total market?
If I remember my numbers correctly, then Europe is around $2.2 billion right now for the innovator product, and about $5 billion come from the sales of this product in US. So with biosimilars, I believe starting from end 2025 to 2030, I expect biosimilars to take away anywhere between 30 to 50% of the innovator market. So we are looking at around 1.5 to 1.6 billion of biosimilar sales for 5 to 6 players in 26, 27, 28, all the way going up to probably around 3-4 billion by 2030. That's the prediction. But you need to understand, once biosimilars come in, the volumes would go up and there will be an acceleration of the price erosion. So we really need to see how many of these early entrants would be the last man standing, and so I expect some of them to also exit over a period of time and the price erosion.
No, but this is in Europe itself, you're saying, right? $3 to $4 billion scale up only in Europe. Mr. Makapati?
Okay.
Oh.
It's an important point to make, right?
Yeah.
So he was only talking about one market.
One market, $1.5 billion at the start, may scale up to 3 to 4 billion is what my understanding of what he said was.
Let's try and get him back on the phone line, but the point that you were making.
Yeah, and then the total market of 7 billion. So, which means 5.5 billion in the US, which doesn't come to him by FY27, presumably comes in FY28, major portion in FY29, but then that scale up too could help. And I think I heard him say that they will be one of the 6 players in this market.
Yeah, we'll get him back to get some clarity on that. The question is, are they going to go alone or are they going to have a partner? What he's also mentioned, Neeraj, is that some of the early entrants might actually, on account of price erosion, step out of the picture. So you could have a consolidation of the space as well. It is an important drug. If you're talking about $7 billion of global... and look, osteoporosis is a chronic condition. It's not something that goes away. And we've heard analysts in the pharmaceutical space talk about the preference for, unfortunately, chronic conditions because you cannot do anything about them.
Yeah.
You know, as we move towards, I'm just tying up the conversation you guys had with the broader theme that we're talking about self-reliance, etc. The number of Indian pharma companies which are coming up with novel solutions and novel molecules is really heartening. And this is a big one for Aurobindo as well.
Yeah.
All right.
I think it stems from the past conversations that we've had here on our channel, right? With Wokhard, with Suven, and I think one more company, I'm missing the name. Glenmark.
Not Biocon?
Biocon too, but I think Glenmark had that big milestone deal,
Glenmark had
right?
a big milestone as well. So a whole host of them getting into it. All right, we are, getting excited about the Bachat Utsav, which starts today, and let's get a sense of mood on the ground. Now, it might be early for people to line up in front of stores, but you never know. Rishabh Bhatnagar and Danish are joining us right now. Rishabh is at the Karol Bagh market in Delhi. Danish is also joining us live, and Agni has been tracking all night what we've been seeing since 12 o'clock, I think, when e-commerce players came in and started getting their sales up. But we'll go to the live reporters first and get a view from Rishabh. Rishabh, too early for the shutters to open up, but what is the sense on the ground?
Right, clearly this is one of the major markets here in Delhi. Buyers from all across North India come, apart from your retail end consumers. Though, like you said, it is a bit early, but the market is opening up. Shops and stalls are being set up as we speak. I'm also joined by a local trader. His name is Bachcha Jha. He basically deals with ready-made garments. Sir, GST कट आज से लागू हो रहा है सितंबर 22 से नवरात्रि भी शुरू हो रहे हैं शुभ मुहूर्त शुरू हो गया आप क्या देख रहे हैं कि फुटफॉल बढ़ेगा आगे जाके मार्केट में और लोग और खरीदारी करेंगे
सर देखिए क्या है जीएसटी तो कम हो रहा है सुनने में आया है तो उससे फ़र्क तो पड़ेगा सर क्योंकि लोग महंगाई से देख रहे हैं आप महंगाई से कितने लोग परेशान हैं और लोगों को पता लगा जीएसटी कम होगा तो फ़र्क तो एक्चुअली फ़र्क तो पड़ेगा ही पड़ेगा क्योंकि जैसे थोड़ा बहुत रेट में कम होगा तो आदमी आएंगे परचेज़ करेंगे जो भाई मार्केट में अब जीएसटी कम हुआ है तो सस्ता सामान मिलेगा तो परचेसिंग ऑटोमेटिक है बढ़ेगा थोड़ा सा काम बढ़ेगा
So like you heard from a local trader that there is a definite expectation of a rise in footfalls, a rise in sales, as this also coincides with, of course, the Navratras and the wedding season that is coming ahead. And Karol Bagh is, of course, known for its ready-made garments, electronics. You have all sorts of auto and auto parts. This is a major market for that as well. And all these three key sectors have seen large GST rate reductions. So you will see a massive sort of boost coming in for the local Karol Bagh market economy as well. Back to you.
Okay. All right. Danish also joining in. Danish looking glum this morning, but nothing's on your shopping list. What's on your shop? I'm sure you're zooming to the next auto showroom because that's the space you cover and getting ready to pick up something interesting.
Well, I have a very long shopping list, but that is not the area of focus for me right now. But right now I'm present at Barakhamba Road in New Delhi, and this is an office area, one of the most prominent office areas in the national capital. And as you can see behind me, there is a rush of office goers that are actually on their way to the office right now. But I'm joined by one of those office goers who I was very lucky to catch. Sir, please tell us your name first, and considering the new GST rates have kicked in from today, what are you buying first?
या माय नेम इज गौरव सिंह एंड करंटली गवर्नमेंट ने जीएसटी पे कटौती करके बहुत ही अच्छा करा है। जैसे कि दैनिक जीवन में जो हमारे खाद्य पदार्थ में रोटी से लेकर गाड़ी हो गया, आपका काफ़ी चीज़ें सस्ता हुआ है। इसके लिए गवर्नमेंट का बहुत बहुत धन्यवाद। और कहीं ना कहीं ये गवर्नमेंट की गलती थी कि इस चीज़ों में पहले संशोधन किया गया, तो अब ये चीज़ें बहुत ही अच्छा है। और इसमें आम जीवन पे, आम जो दैनिक जीवन है, मिडिल क्लास वाले लोगों पे काफ़ी फ़र्क पड़ेगा। ठीक है, तो इसके लिए काफ़ी थैंक यू। एंड हम चाहते हैं कि जैसे गाड़ियों पे दाम कमा है, तो जो गाड़ियों पे 28% था जैसे, तो उस पर अभी 18% हुआ है। तो जो मिडिल क्लास के लोग थे, जो मोदी जी का कहना था कि भाई हम चप्पल वाले भी हवाई जहाज़ में यात्रा कर पाए, बट चप्पल वाले हवाई जहाज़ में यात्रा कर पाए या नहीं कर पाए तो मुझे नहीं पता। लेकिन अब चप्पल वाले जो व्यक्ति है, जो मिडिल क्लास के लोग हैं, वो एक गाड़ी खरीदने का सपना कहीं ना कहीं पूरा हो सकता है, जो कि इसके लिए काफ़ी थैंक यू एंड थैंक यू फॉर मी।
Right. I'm also, so in this particular area, there is also a shopkeeper who is here, and as you can see, whatever big GST rate cuts are happened, everything is available here, right? As you can see, milk, chach, everything is being sold at a cheaper amount because of the GST rate cut. We'll just try speaking to the shopkeeper. Sir, आज नवरात्रि का भी पहला दिन है और GST के रेट भी कट हो गए हैं। किस तरह से आपको सरकार के कदम लगा और आपकी दुकानदारी में कितना ज़्यादा पैसा कमाते हुए अपने आपको देख रहे हैं?
सर, हम उसमें क्या कमाएंगे? दूध का तो रेट तो अभी तो यही है, अभी तो, और यहाँ तक तो काम अच्छा ही हो रहा है, काम में तो कोई बुरा तो है नहीं।
तो आपको लग रहा है कि आपको ज़्यादा डिमांड देखने को मिलेगी क्योंकि चीज़ें सस्ती हो गई हैं?
ये तो सर आज से कैसे बताओ, आज से तो शुरू हुआ, अब कल से उसका।
पर क्या आप खुश हैं कि सरकार ने रेट कट कर दिया है?
हम खुश हैं।
So this is what you have heard on ground. The common man is quite happy. The people who never thought that they could buy a car, but after the government has reduced GST on cars and bikes, people are now planning to buy a bike or a car. And as far as shopkeepers are concerned, they are also kind of excited because of the rate cut, and they're expecting more people to come around.
So the important thing is that I think people are waiting to see what happens. That's the sense I get from your conversation, and maybe we'll come back to you at about noon for another update and to all of you guys. Meanwhile, Agni, very, very quickly, because we have a whole host of companies lined up to speak with us. What is the kind of online shopping option, discounts, etc. that have been rolled out?
Right, Tamanna, so on the online front, there has been quite some amount of discounting that's going on. Electronics like TVs, fridge and washing machines are being sold at up to 65% discounts. Other electronics overall can see an 80% discount, and fashion and beauty products are also seeing a 50 to 60% discount. Now remember, discounts are piled on top of the GST rate cuts that kick in from today. So these are the usual suspects that saw the GST rate cut being announced on them, and now there's discount because of the Diwali sale going on. The GST rate cuts are live from today, and the sales for users who are not part of the loyalty programs will start from tomorrow. So there's a whole day of gap for the changes to being factored in. But remember, we got caught up with Flipkart earlier this month, who told us that there is some amount of mismatch happening on the inventory front, where they are looking at what products, older products with newer rates, newer products with older rates, that kind of a mismatch they're trying to deal with. Amazon meanwhile has gone on and told its sellers that despite they are in control of the final selling price, they have to factor in the GST cuts into their items. But that's not all. Remember, Tamanna, quickly let me take you through that this is not happening just on the e-commerce front. This is also happening on the quick commerce front. Players like Swiggy and Instamart, Swiggy's Instamart and as Zomato's Blinkit have taken a leaf out of the e-commerce book and are rolling out their own flagship sales. Instamart has rolled out the Quick India movement, a sale for 10 days, and this is going on. So avenues are merging and GST rate cuts are kicking in, but we'll have to wait and see what kind of a demand and uptick it goes.
Wow. Okay. Thanks all of you for bringing us these updates. Well, in fact, we've heard from them from 7:30 in the morning, and our team will be out there getting you exact sentiment check and the kind of numbers that might be clocking in from durable companies, car companies, FMCG companies, and more. But as we do that, we also do the other thing, which is get the CEOs of firms which will possibly have benefits from the Bachat Utsav. And in line with that, Mr. Ajay Singhania, MD and CEO of EPAC Durables, and Vishal Vittal Kamath, Executive Director of Kamath Hotels, also joins in Akash Agarwal, whole-time Director at V2 Retail, and CS Vigneshwar, who is the President of FADA, to talk about what's happening in the auto side. Gentlemen, you guys are at the center of this Maha Bachat Utsav and will likely see enhanced sales, enhanced consumer feedback over the course of the next 9 days, arguably over the course of this whole festive season and more. Ajay, can I start with you first? You would have, while this season starts off from today, you guys would have done some channel checks, you would have done some preparations for what's the kind of demand uptick that could come in, how would you cater to it, how would you do B2B, B2C, everything. Fill us in. What is the kind of uptick that you anticipate? How is the Josh out there?
So, first of all, happy Navratri to all. I mean, the Josh for the durable industry is extreme, and both air condition and larger TVs, which TV especially for the festive season, and AC because we have had a bad season, early rains and then disruption happening. So both for AC as well as TV, this is like the biggest news. I mean, the most joyous part is that the demand seems to be picking up. At least the channel which was carrying excess inventory is now very positive, and almost all the brands have already committed to passing on the GST benefit to the end consumer with an intention to at least liquidate the inventory and then also catch up on the upcoming season. So it's all positive tick box.
Okay, so what is the kind of volume increase? Let's come to that point, because the fact is that a lot of companies will see volume increase, but it will not necessarily be margin accretive immediately. You can't keep any of those GST gains. You have to pass it on, and that is the purpose. I want to get a view from Vishal Kamath actually on this. And this has been a big boost on the GST front to room rates below 7,500. Is there an uptick that you're expecting, and to what extent?
Namaskar. Definitely there will be an uptake because this is the season where the second quarter for the industry is very good. On top of that, the holidays are also coming. So we will see the demand was always high. The demand has been post-corona, the industry, the way that it has bounced and then recovered and then thrived. There is definitely going to be a lot of demand during the festive season. But the thing is that we have to see in terms of the 5% rate cut, that will just make staying cheaper. It won't necessarily lead to a spurt because there's already a demand. So considering that we have fixed inventory and unfortunately we cannot manufacture more ACs and TVs, we cannot manufacture more rooms. And what we have, we have. So I definitely think that the yield will improve. What you said for the other sectors may be the case, but may not be for the hospitality, where you'll find the margins can definitely improve because of the higher demand, leading to higher room tariffs, leading to a better yield overall.
Okay, what is the proportion, Vishal, of rooms under 7,500 you see, and the boost that you're expecting?
So definitely. The 12% bracket and the earlier 5% bracket, 12% bracket, and the 20%, that all will now kind of come into the 5%. So considering that because of a cap, because of the 7499 cap, this is definitely something to be seen. It is not something we can estimate because it's based on a demand supply. And because of that, it's about basically waiting and watching. But in terms of volume, in terms of demand, that where industry is very buoyant.
I'm sure Akash Agarwal is not waiting and watching because the feedback would have come in about what's the kind of anticipation, what's the kind of stocking that they've done at their stores. Akash, how do you anticipate the Navratras to be to kickstart this Bachat Utsav?
So yes, we've actually taken a delta of around 7-8% in our sales forecast, and we've bought our inventory according to that, and we're already seeing better numbers than we expected. But it's all theoretical. I think today is the judgment day, and in the next week we'll find out how much of it actually translates. And it's the best timing because the next 3 months are the most crucial months for us. It's the biggest quarter for us, so the timing couldn't be better. And hopefully, the sales are as good as we has planned.
No, and guys, all three of you, I can understand that it's kind of difficult to pin it down to what the demand could be like. But that's where I'm getting in CS Vigneshwar, who's the president of FADA, because a lot of auto demand would be pre-booked, right? Clients would have booked the cars for delivery day 1, day 10, somewhere in between, and for the future days as well. Mr. Vigneshwar, tell us, what is the demand situation looking like? Because we hear from on-ground reports that a lot of people naturally postpone their buying for post-Shraddh. Is it looking much better than what you would have otherwise thought?
First of all, thanks for having us over. At FADA, we're quite happy about the GST reforms because for long, at least in the entry-level segments of the two-wheelers and the four-wheelers, we've been having a lot of headwinds. And with this GST reform, I think there's going to be a sizable cut in terms of prices for the customer. And yes, there have been a lot of postponements, and we're going to see all those postponements and the deliveries come from today onwards. What is also happy to note is in the last 25 to 30 days, we've been having excellent inquiries and fantastic bookings. So I really wouldn't be able to put a number on it, but at least in my case, there has been about nearly a 20% hike in inquiries and about 10% hike in terms of bookings as such. So as mentioned before, this particular GST rate cut would not only help us in the festive season this month or probably this quarter, it's really going to help us in the next many years to come. These rate cuts have been long awaited. We've been requesting for this, and I'm very thankful. The industry is very thankful to the government for making it happen.
What is the kind of deliveries you're expecting, Mr. Vigneshwar, today? Because there was some pre-booking and some players had already announced that, just come and book your vehicle. You can take delivery at start of Navratra. No one wants to do that during the Shraddh period. Is that something that dealerships are preparing for?
Yes, we are already prepared to avoid the chaos because there's going to be a bulk of deliveries happening today.
Yeah.
But at the same time, we also understand that we need to spread out our resources. We can't hire them for a very small period. But we have seen these festive seasons come every year. So we've been prepared for it every year. It's probably going to be a little bit enhanced because of the concentrated deliveries in the last week, which we have been preparing for. We've also informed our customers. We've also prepped them for whether it's from the insurance, from the finance angle. And I don't think it should be too much of an issue. We are well placed to handle it.
Okay. I just want to get a sense from you, Mr. Singhania, in terms of let's talk about RACs, the AC segment. Let's talk about some of the consumer durable segment. What is the kind of demand pickup that you are hearing about? Because there has been some postponement of purchases. Logically, that postponement of purchases will get, consumed in the first few weeks or the first month or so. But is this going to lead to a more relevant increase in demand which sustains? You're on mute, Mr. Singhania.
Yeah. So again, from the consumer durable industry side, this has been a sustained demand over the last couple of years. We've been requesting the government, and now this move, one puts air condition away from being a luxury category to a necessity. So that recognizes the fact that AC today is a luxury. And with India at the lowest penetration level in terms of households having air condition, this not is just a welcome move, but this also creates the path for a long-term sustainable growth. So at 10% penetration today, we have been talking about air conditions increasing year on year, but then definitely India being a cost-sensitive thing with 28% GST, that was a roadblock. And now with that removed, we definitely see one growth in the overall volumes, and also then these certain energy efficient air conditioners like 5 stars and all the inverter ACs will see more growth. So definitely, this is going to be a sustainable growth for the long term.
Okay. No, so Mr. Singhania, coming back to that, what about the premiumization of customers? Do you think with GST rate cuts coming in, you're going to see customers moving upwards in what they want to buy? Perhaps Definitely. If someone was buying, a basic model, will want to buy a more expensive model. Is that kind of demand being penciled in?
Definitely, yes. So this is what I was saying. A 5-star or the inverter ACs will definitely grow more. So the customers who were earlier preferring the entry level 3 stars would now graduate to a 5-star, and those who are probably not just thinking about it will definitely buy the entry level. So overall, the pie is going to get bigger, and the premiumization also would happen definitely, both for air conditioners as well as TVs, where in 42-inch and higher had more GST than the 32-inch. So definitely on that side also we'll see the premiumization happening.
Okay, that premiumization point to Akash Agarwal as well, because your model is very clear and focused on what segment you're talking to and what price band that you're catering to. Does premiumization have any impact for you? What is the kind of consumer trend that you're expecting to see, Akash?
So, like the gentleman just said, hopefully what they save on the ACs, what they save on the hotels, and what they save on the automobiles, they spend more and buy more fashionable clothes, because already 93% of what we sell is at the lowest tax bracket. So we don't have a direct benefit in terms of price cuts, but definitely if our customers have more money left in their pocket, so they will buy more, the frequency of purchase will increase, and that should translate into better numbers.
Fair call. There is a Vishal. I'm sure both the gentlemen are not trying to say that don't spell on Kamath hotels. What they are saying is that they will save on the room rates, and therefore maybe those things get spent on ACs and on goods. The question, Vishal, is that independent of GST 2.0, the Indian consumers' behavior towards experiences has also changed dramatically post-COVID. Does this festive season look like enhancing that for you in particular because of the GST benefit that gets added on to some of your room inventory, if not all?
See, the economy has already been doing well. I was watching that fairly disinterested shopkeeper, the way he said, but what did he say? He said, "Dhanda to acha hai." That has been a fact for most of the industry as a whole, that the overall economy is doing well. Hospitality apart, all my colleagues also online have been doing well. It's just that this will basically have a long-term effect on the overall economy in terms of saving and spending, both. Because just as rightly said by my co-panelists, that if there is going to be more disposable income, people will use that disposable income on something. Now, what that need is, that might be better medical healthcare, that might be better a luxury lifestyle, that can be better necessities. So important is that India moves into a much higher gear of consumer consumption. And in a premium way, definitely I feel it will be, because now the need for a person to have something better, it can be fulfilled because of the huge drop. A 10% from 18 to 5%, let's appreciate, is a huge percentage drop. So if a person had a mental frame that this is what I was going to spend, then I will spend this similar kind of amount or same amount, then let me get something better. So I think overall in the long term, rather than look at it in a very myopic 8-day festive, we should see that India is going to be festive for the next few years to come. And along with that, the industry will still give a lot of representation to enhance this further. I mean, the fact that this 7499 slab that our industry has is quite absurd. But just as the government has taken step by step to remove it, it's only a matter of time. I can see that our industry prevails in terms of having these things also more streamlined, which will further improve the overall demand and overall consumption. So I think that we should look at this in the longevity side, and that's really buoyant overall for all industry and the economy as a whole. And the real winner is both consumer and of course the government, because they still earn money.
That disinterested shopkeeper you were talking about, poor guy was waiting for the shutters to open and setting up his stalls when our reporter caught him and he said, "Hone to do." But I think it's safe to say that this is going to be the change. CS Vigneshwar, I'm going to ask you this question before we wrap up this conversation. Do you think the kind of dull period for autos, especially small cars, can change after this big move? Because truly the price differential is quite large for the last mile consumer.
If I can pick up the word of premiumization, it's been happening across the world, and this GST is going to turbocharge that. People are going to go for higher variants of the same model, or they're going to probably perhaps go to a different segment, a higher segment by itself. So this is quite important because at the end of the day, a premium model probably gives you better features, better safety, and a lot of things get better. So it's very important from also the fact that the industry also gains, because a lot more components go into those premium models. And on a lighter vein, all of us are competing for the pocket of the customer, the retail industry. Here we have two people from representing, I think, the electronic side and also the clothing side and also from hospitality. I can tell you that if you buy a car, you get all three. You get great interiors, you get awesome air conditioning, and you also have a great time to spend your time in. So I wish to compete and tell the customer, come and pick up a car, and you get all three.
I don't know how it will compete with what Vishal Kamath is offering or with what V2 Retail is offering. But yeah, maybe.
Luckily, our economy is still not somewhere here to live in the car. So I think till then we'll all enjoy our AC at home, clothes while wearing it for party, hospitality to relax and unwind, and go to a hotel, good hotel with the car.
With the car. Okay, that's the aspirational India and the neo middle class that we're talking to today. Thank you to all of you for joining us in this very interesting conversation. You know, there are, I think, a push and pull in the markets today. That's why you're seeing markets down. But on the other hand, a bit of a boost coming up or mitigating factor coming up because of the expenditure that is expected. Look at the recovery in the Nifty. The other factor is, of course, what the United States and the Trump administration is trying to do. We've been talking about H-1B visa attack all morning. There's a shrimp attack also, which is possibly coming. It is a suggestion right now to protect the shrimp and catfish industry. It's not become law, but my colleague Varsha is joining us with more details.
Well, thank you so much for that. So yes, US Senator has actually imposed India Shrimp Tariff Act. Now this is in addition to the 50% tariff which has been levied by US to India. Now what they're saying that this Shrimp Act is, the goal is to protect Louisiana shrimp industries because they claim that India is exporting these shrimps into US at a very cheap prices, which is impacting their industries. And this bill will create a level playing field according to US. Now let's see how this tariff act will actually impact our Indian shrimp companies. So this will have a negative impact on the Indian shrimp companies, starting with Avanti Fees, which is a major player into this Indian shrimp. The North America FUC contributes almost 78% to the overall revenue for the company, and US is a major market for them. The next is Apex Frozen Foods, wherein again a major player when it comes to shrimp products. Almost 55% of the business comes from US. And lastly, Coastal Corporation, which is a seafood exporter mainly into the shrimps, will also be impacted. So all these three companies have a major revenue coming from the US, and because of this Shrimp Tariff Act, which may be imposed by the US, will have a negative impact on all these companies when it comes to Indian market.
Got it. Okay, thanks for that. Well, certainly a bit of a pullback today on those stocks, but Varsha, thanks for that. But overall, the mood is buoyant, and shipbuilder stocks are in focus in that buoyancy, as the Indian Navy has announced to issue a tender of nearly 80,000 crore rupees for 4 landing platform dock warships. Anushi Johnson with more details on this. Anushi, fill us in.
Thanks for that, Neeraj. So it's a very big order that we are looking at. 80,000 crore is roughly the estimated size that currently Indian Navy is coming out for. And we have quite a big list of contenders who are, bidding for these 4 landing platform dock warships that we are looking at. This includes the likes of Moscow Dock, Garden Reach and all. But overall cost of these projects, if we see, is expected at 80,000 crore. Now, this is in line with Indian Navy's boost to build about amphibious warfare capabilities. So let's understand what is Indian Navy actually aiming for with this particular issue size and focus. Now they are aiming to operate fixed wing naval drones as well. Now this is in line to boost their aerial defense system as well in terms of how the warships are considered. So aerial threats is one area that we should be focusing on. Other than that, they're also equipping their warships with long range anti-ship missiles and drones as well. Now key contenders in focus here include L&T Defense, Moscow Dock, Cochin Shipyard. Of course, these names would come considering they're the big PSUs in picture. Along with that, we are also seeing Hindustan Shipyard in the race for the same. Other than that, if we look at the design partners, we have these 3 in focus here. But that's not the only piece of information that we are seeing for these shipbuilders. In fact, if we talk about the other big update, it's that large ships above a specific size have also been granted the infrastructure status. Now, What does this mean exactly? This means better funding, better requirements in terms of how they could build the ships going forward. So it's an important development that we are taking place. Do note that India currently ranks 18th in ship ownership and 22nd in shipbuilding. The aim for the government is to be among the top 5 countries in terms of shipbuilding and ownership by 2047. So this is another important development that we are seeing. Of course, stocks in focus here is something like a Garden Reach, Muscat Dock, Cochin Shipyard, as well as Swan Defence and L&T as well. But just coming to specific key developments that have taken place in terms of the stocks as well. Swan Defence is in focus today after they've signed a MOU with Gujarat Maritime Board for investment of up to 4,250 crore. Along with that, Garden Reach has signed multiple MOUs. This is with strategic partners in terms of shipbuilding, ports and infrastructures as well, along with a $62.4 million of an order size that they've won. And Shipping Corp also is another stock in focus wherein they've signed a MOU as well. So this is the overall picture that we are seeing for these shipbuilding companies building on.
Much, Anushi, for that. Stay with us because we're talking about 3 aspects which are probably a driver when it comes to shipbuilding companies. But moving on, the primary markets are also going to be a buzz this week. We are talking about a little over 30 IPOs that will be coming in. Anushi is with us to tell us what's happening in the primary market this week.
Well, Hiral, it's a big list here that we are looking at. 31 IPOs debuting in this particular week itself is what we are seeing. And now this includes about 12 main board IPOs and the rest in the SME space that we are seeing. Overall, all these IPOs, they plan to raise about 8,300 crore with the main boards just targeting about 7,264 crore this week itself. Now, just to give you context in terms of which are the IPOs which are set to release this week, right at the top, we have something like a Altana Electricals as well as Ganesh Consumer Products, which are opening for subscription from September 22nd to 24th. This is with an issue size of 687 crore to 408.8 crore that we are looking at. Apart from that, Anand Rathi, Solar World Energy Solutions and Sesari Tech is something that we should be watching out from 23rd September as well. So multiple of IPOs are particularly seeing from the dates of September 23rd and September 24th. Along with this, 4 listings are also in focus here. This is with VMS TMT being the most interesting one, considering it has almost 102 times of a subscription figure that we are looking at. So these are the key IPOs in focus.
Well noted. Okay, thanks a lot for that, Anushi. We need to slip into a quick break on the note that the markets have done better than what they were at the start of the trading day. More on that on the other side of this very quick break. Stay tuned.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं, ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboard
Welcome back. You're watching India Market Open, and it is GST bonanza which trickles in from today. Though markets are slightly somber, you're seeing a mild bit of recovery that's coming in from the day's lowest levels. Whole host of industries that we've been speaking to right now. Let's talk about Bajaj Auto as well. You have the GST rate cut that has happened from a 28% to 18%. The stock also at the day's highest levels with gains of 1.5% coming in there. Let me get in Rakesh Sharma, ED at Bajaj Auto, to talk to us at NDTV Profit. Rakesh, good morning and welcome to the show, and always a pleasure to speak to you as well. Clearly a bonanza that kicks in today. Your initial comments as to what are you expecting from this festive season?
Good morning. Nice to be here. Indeed, it's a very important day. And I think since the last 1 week, when we've seen the news of GST percolate down to the customers in urban areas and rural areas, there has been a very positive response. There have been a lot of uptick in inquiries and people calling up showrooms, visiting showrooms for their eventual purchase during the auspicious period, which commences from today, the Navratris, and then of course goes on depending on the state into Diwali and slightly beyond Diwali. So it has had a very positive impact. And we are expecting this to be, a point of inflection. Because if I may remind you, the industry actually unexpectedly was not doing so well, the motorcycle industry, because its growth on year-to-date basis is actually tad negative, -1% or so if you look at the Vahan registration data. Last year it closed at about 6% growth, which is FY25 motorcycle industry grew at 6%. But there was a little bit of a tumble, particularly in June, July, and also in August, bringing the industry growth from April to August to -1. So a couple of growth inhibitors, which we felt were there, and these were, the inflation, which was reducing the disposable surplus to our kind of customers, and also a little bit of restraint on the side of retail finance companies in response to a disposable surplus getting weakened. Now, both these growth inhibitors, so to say, will get mitigated to a large extent by the GST cut. And therefore, hopefully this will take the industry from a negative zone into a positive zone going forward.
So Rakesh, we were just picking up the Vahan data right now as well, where they've clearly indicated today that the sales volumes have actually declined in the first 21 days of September. And this is on the back of the Shraddh period, which is between 7th to the 21st of September, whereas last year, Shraddh was 17th September to the 2nd of October. So there is that time shift that has happened there. Secondly, the GST reforms, which have led to the postponement of new buying by consumers, has happened, and due to which the two-wheeler sales have declined around 31%. That's the number that we're picking up from Vahan data. Taking this aspect into consideration, what's the significant uptick that you expect, taking Navratra into consideration now? And do you think it will be able to suffice for that downtick that has happened in these first 21 days?
Well, I'm not really concerned at all about, this downtick, because we're not comparing apples and oranges, and there is this very big discontinuity. Everyone will wait for the GST rates to kick in. Why would anyone buy before that? So that's not the issue. The larger issue is the industry was in negative territory from April to August. That's a long enough period, and hopefully with this action, the government would have strengthened the case for the industry going into a positive zone and at least equaling last year's growth rate, which is what was the expectation, that the industry should grow at 5 to 6%. So hopefully we can get back to that kind of growth rate in the coming period. I won't slice it to 8-9 days and then compare it with, because it's not comparable data. We don't compare it like that. If at all, we will do an equivalent date comparison.
Mr. Sharma, good morning. Neeraj here. And just trying to understand, dealer checks seem to suggest that I mean, there were dealers who said, "Ke itna demand hoga, we will not be able to meet." I mean, specific categories, specific models, specific companies. I'm just trying to understand. Do you get a sense that, I know you're not looking at 9 days, but do you get a sense that these 9 days could usher in demand which will be very, very or much higher than what otherwise would have been believed?
I think so, of course, that the new demand which will come in the festive season should be better than what it was before, because I told you that the industry was in negative territory over a really long April to August period. And this is the point of inflection. There is not only quantitatively, but I think even qualitatively, we will see some of the forces of uptrading getting even more strengthened. So definitely we see a change.
Are you seeing that, sir? I mean, I'm just trying to understand. When I think of it, I would not pre-book a TV, a AC, an apparel, but I would pre-book a vehicle, right? For getting delivery during these days. Are you sensing that the pre-bookings are strong enough already?
Yes, from the conversations, that's why I'm again saying that it's not... the news is just filtering in. It is, despite the best efforts of the media people, it's not as if, everyone is plugged in.
Okay.
And it takes time for it to be filtered into at least our kind of customers. These are very different from car customers. The average income is 40,000 to 50,000 per month. And the news is just filtered in. The conversations we are having with our dealerships and what they are having with their customers suggest that there is a very good positive response. Now that has to actualize itself in beginning today, going forward.
My question coming to you is, with all of that kicks in now, by the time people digest, the rate cuts that have come in, one, are you expecting any shift to happen to the premium segment because disposable income becomes higher? And if so, what is that segment that should work for a Bajaj Auto? And two, would you still anticipate a 6 to 8% growth in two-wheelers then for FY26?
Yeah, so certainly one qualitative impact of the rate cut in the GST would be to further strengthen the forces which are causing the customer to upgrade. This is the underlying trend. If you look at the year which was the peak year of the motorcycle industry, which was FY 18-19, almost 60% of the industry at that time was 100cc or below. And now, if you take the year-to-date numbers, that 60% has reduced to 45% over 6-7 years. So that is the shift. But these shifts occur steadily and slowly. This will certainly get more strengthened because as you move up the demand pyramid, the strength of the wallet is better. And that allows people to consider a higher end bike, which was not in their grasp earlier, but now which becomes in their grasp because of the reduction in the on-road price. So certainly we will see the 125cc plus segment growing faster than the bottom half, so to say. And that's also a very good qualitative, hopefully qualitative outcome of the GST cuts.
Mr. Sharma, just one final quick question. Just trying to understand, there is, of course, an MRP reduction because of GST, no impact per se, but there will also be a reduction in the cost of the inputs that all auto companies would take, right? I would suppose so. Is all of that margin neutral, or is there a margin difference to your mind?
No, the GST cut is to that extent margin neutral because, there are these set-offs which were available earlier and these set-offs are also available going forward. But it makes a big difference to the customer. It makes a difference to the customer in the on-road price, to some extent in the financing cost, and subsequently also in the maintenance cost, because the spare part prices would also see a reduction because they're going from, again, the GST has gone from 28 to 18%. So the substantive benefit, of course, is to the customers.
Okay. Mr. Sharma, we wish you all the best for this festive season and more. Happy Navratras to you and everybody at Bajaj Auto. Thanks for taking the time out.
Best wishes to all of you too.
Thank you, sir. All right. Well, that's one very important corporate voice to a very important market voice. Kenneth Andrade, founder and chief investment officer at Old Bridge Mutual Fund, joins in right now with his thoughts. Kenneth, so good talking to you, as you know, always. Thanks for taking the time out. How constructive / neutral / non-constructive are you at the current juncture, considering that a lot has happened in the last, 45 odd days, right? This GST 2.0, geopolitics, then the shifts thereof, maybe the thawing of the relationship as well between India and US, as well as the Fed rate cut that has come in.
Well, yes, everything seems to be falling in place. Let's put it this way, valuations are much better than they were last year. The second part of it is, I think whatever has to happen on the international front has happened. You can't get more uncompetitive than you already are, right? In the domestic environment, you got a liquidity push, plus you've got a GST rate cut that has happened. That will stimulate domestic demand and hold the economy for a while at this point in time. And as you know, we've been waiting for a market to consolidate itself, and it is consolidating. So I think the worst is already the worst is already out there. Within the prices, some element of stocks will correct themselves, but largely the time correction has begun, or we're somewhere through that process. And I think a lot of corporates in India will now try and figure out a way how to build their business models in the new regime of things. So this is a place to be. This is probably a right place to be, a right place to look for companies and business models that can take the new environment and actually build significantly on that right now.
Kenneth, would global flows, both FII and FDI investments, be a necessary condition for further upticks here from a market-wide perspective? Or do you reckon individual themes, etc., could continue doing well on the back of domestic flows?
Okay. So the latter is quite easy to answer, because when you talk about domestic thematics that are there, or if you talk about thematics in the market, we've seen some overriding structures over the last couple of decades that the market's been around. We had the tech boom and bust. We had the infrastructure cycle that went through a boom and bust cycle. You're seeing consumers struggling at this point in time, and the lending institutions haven't given you significant amount of returns on a 3 to 5 year standpoint. And that was after they had got a decade of outperformances over the market. So those are the three broad trends that were there. Where we stand at this point in time is also to pick up something which pick up an environment which will grow into a significantly large profit pool. I think that already exists somewhere, and we just have to recalibrate our entire investing style and pick those thematics that are there to build it out. Now, when talking about that, which part of the market is the cheapest, given the fact that the market trades somewhere around 20-21 times earnings forward. Okay, wherever there is negative news, or whether there is a slowdown of earnings growth, that's the place where where the growth valuations actually go out, they step out, and those businesses become reasonably valuable. Out there, you will get a bunch of entrepreneurs who are working with their costs and waiting for the cycle to kick back. So you gotta figure out where this opportunity lies, and allocate capital to this environment. Quite clearly, India is always going to be a growth market, at least for a while. You're going through a consolidation phase at this point in time. You've got to keep looking for an opportunity to find those companies that are generating cash flows, because generative cash flows becomes growth capital in the next cycle. Okay, so that's where we stand. So domestic cyclicals, domestic consumer businesses that have got the cash flows and are investing in new markets or in new products. That's essentially where you need to head towards. So optimistically, you've got a cash flow cycle in the commodity space, which is very robust. You've got a cash flow cycle that is running with the pharmaceutical business, which is very robust. IT is also there, which is a very robust cash flow cycle, but now you've got the investment opportunity out there. So there's a whole host of businesses out there that are putting money to work. I think we need to step out and find some of these.
Right. Kenneth, morning. Hiral on this side as well. Last time when we spoke to you as well, a couple of months ago, you had expected earnings growth to be in high single digits. Right now, we are talking about, GST cuts. You're talking about tariffs. You're talking about H1B because you're seeing that correction that's happening in IT right now. Everything said and done, are you seeing any shift happening with regards to where earnings estimates are concerned with the boost that could be coming in with regards to consumption? But on the other side, there is a possibility that your capex cycle would be slightly lower in case your collections are not at par with what is anticipated. The numbers are yet to come in. I think by December is when we should know. But how do you expect an investor to play this dichotomy right now?
I think from a macro standpoint or from a corporate sector standpoint, I mean, there will be push and pulls within the sector itself. So I don't really think that single-digit number on earnings growth is going to materially change. Okay, but while saying this, you will not see a significant sell down in equities despite the fact that you are at single-digit growth in earnings, simply because the underlying profitability matrix and the underlying corporate balance sheet is got enormous amount of strength. They can invest in growth, and they have the capability to invest in growth. It's just the fact that where is the growth opportunities that are visible, and I think that's what's holding corporate India back. Growth opportunities with pricing, with an element of capital efficiency, high capital efficiency, what India is looking at. So I think that's where we are stuck with. So growth will come back because you've got the cash flows. Markets won't sell down. I mean, you're not going to get a market which is like 17. Probably you won't get a market with 17 and 18 times in the current environment. But yes, we will struggle with a couple of sectors as they go through this transition. Obviously, IT in the medium term, right now it's sentimentally very negative. In the medium term, you could see a tick down in terms of margins, but they will find their way of building out of it, and we can see that happen with a lot of companies actually issuing statements, and the commentary is not very bearish. Consumers, this is a quarter that you will see a significant pickup of volumes. Pricing, I'm not too sure if there is going to be there, but that volumes itself should hold up numbers for the remainder part of this year. So there's a little bit of everything. We are sitting. I don't think it's a market to be very active at this point in time. You just have to digest the data that comes through and take a call as you come towards the end of the financial year.
Kenneth, Neeraj and I were just quickly discussing your strong views with regards to where IT as a sector. You are seeing a correction today. You mentioned about a lot of clarifications and commentary that has come in from corporates as well. What would you advise investors to do? Would you tell them this is an opportunity to look at IT if you're not seeing a major long-term impact, or would you say stay on the sidelines?
So, I mean, inaction is better than action at this point in time. Okay, and there are points in time in your investing journey where sitting quiet is the best thing that you should do. And I think that's the time now. Either which ways, it's left to businesses and business models to define as to how they want to build it forward. Capital with these companies are never an issue. So keep them in your portfolio because they got the financial strength to ride this out. Keep them in the portfolio because they've been through multiple cycles where they've come through stronger. I wouldn't want to rush just because there's a correction and build on it, simply because you can't build a business model with this kind of uncertainty. At least from an investor perspective, I can't see how individual companies will go out and build this business model. So there will be companies that will do it, but as an individual investor, I can't see which one is going to do it and build it out successfully. That will take a couple of quarters to figure it out. So I think that's where we are in our thought process on how to approach IT services companies.
Great. Okay, out of time on the show completely, but Kenneth Andrade, so good talking to you as always. Thank you very much for being with us today and giving us your thoughts.
Thank you very much.
That's the view from Kenneth Andrade. And well, on the note that the markets have recovered almost all of the lost ground. So it's not a bad start to the festive season from Hiral and me and the team that put this show together. Thanks so much for watching.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit, and my name is Alex Matthews. Soon, you'll also see Mahima Vashijani join me. Let's take a look at where the markets are right now. And this is, of course, as you know, the show that gets you answers to all of your stock-related questions. And today, of course, is the rollout of GST 2.0, and quite a bit of action on account of that. We've been getting you ground reports of what things look like on the ground, and we're expecting that the festive cheer that sets in from today as the start of Navratri also kicks in is going to do well for the Indian economy and the Indian markets as a whole. We're off the low point of the day, and I would hazard a guess that it's on account of the IT index that is also off the low point of the day. It is seeing cuts of about 2.7%, but it's better off than the 3.5% cuts that we started the day with. Let's pull up the constituents of the Nifty 50 to see where some of the strength, if at all, has come through on. And you still have Tech Mahindra, Infi, as well as TCS that are leading the declines. And in fact, as I look at the constituents and the entire pack, you have Tech Mahindra, which is the worst performer, down about 3.5%, Infi about 2.5%, TCS, Wipro, HCL Tech are the biggest losers. And then the others, on the other end of the spectrum, the gainers, Adani Enterprises doing particularly well, up about 3% or thereabouts. This is on account of various factors, not least of which the imminent launch of the Navi Mumbai International Airport, which takes place on the 30th of this month. Bajaj Auto is up in about 1.9%, nearly 2% higher. SBI Life, Bajaj Finance, Hero MotoCorp, a bunch of other stocks also trading with gains. But there are a few stocks, Mahima, that are also reacting to news flow and some order wins coming through. Small companies, but small stocks, but they're doing well.
Right, absolutely, Alex. So once again, very stock-specific market with regards to where all of these counters are concerned. In fact, if we can pull up the BSE 500, that will give us a picture as to what counters are moving in trade. You've got something like Page Industries that's seeing good gains in terms of where the company stands. In terms of counters that are facing some pressure today in the broader end of spectrum, that includes names like Sindoor Manganese, some JP Associate, Dreamfolks, yet again in the red and locked in lower circuit. Emphasis, Persistence, Signity Tech, Zensar Tech, Tech Mahindra, LTIM, all of these counters, of course, IT names under pressure on the back of the development that we saw over the weekend with regards to where H1B visa stands. But some counters on the other side, on the flip side, you're seeing good gains in terms of where Borosil Renewable stands, up 8%, MMTC, Netweb Tech, Hindustan Copper, Garden Reach, as well as Sarda Energies seeing gains of about 4 to 5% with Borosil Renewable seeing gains of about 8%. But with that, let's welcome in our guest for the day, Saurabh Jain, SMC Global Securities, and Brijesh here, who will be joining us in a short moment, Head Technical and Derivatives Retail Research at IDBI Capital. Saurabh, I'll take up the first question with you. Very good morning to you and very happy Navratri as well. The first question is from Mr. Ellen Ayer, who's asking about REDA. He's holding 400 shares at 199 and wants to know if he can continue to hold from a slightly short-term perspective, but wants a fundamental view. Your view on REDA?
Good morning. Happy Navratri. Very much. On the operational front, the company is doing good, but it is because of the stressed valuation. Many of the PSU stocks have came off. And IREDA, what has happened with IREDA is in line with the other PSU stocks also. So from the long-term perspective, yes, it is a good stock to hold. But from the short-term perspective, it is difficult to say whether the stock will give you return or not. But from the long-term perspective, yes, it is a hold.
Okay. All right. It's a hold on IREDA. We've also got Brijesh L joining in. Let me just check if he can hear me. Head of Technical and Derivatives Retail Research at IDBI Cap Securities. Brijesh, can you hear me?
Yeah, good afternoon.
Good morning.
Yeah,
good morning. Yeah. So the question to you, I'm just going to pull up the stock. What we're talking about is essentially GPPL, which is Gujarat Pipavav Port, trading at 157 or thereabouts, and very close to the current market prices. The buy price for Chandrabhushan Singh, who's writing in, 155 is where he's bought the share, and he's got 750 shares. He's wondering whether to hold for a period of 6 months, what the target would be, and where you would place the stop loss.
Alex, I think the stock is positively placed, and in a short term, this can go back to 180, 185 level. So if he's holding the position, I think he should hold on. On an immediate basis, the level of 150, 148 will be the stop loss, and he should look to stay long.
All right, so that's with regards to where Gujarat PPAV stands. We've got our next question on TCS, and this is from Habil, who's writing in. Wants to know if this is the right time to make an entry. I think, Saurabh, I'll take this up with you first. Considering the development that we've seen over the weekend with regards to where H1B visa stands, your view with regards to the entire IT pack, and then, of course, TCS from a fundamental perspective.
See, as far as all the results have concerned, the last quarter earnings were concerned, the IT companies guided with the single-digit kind of a growth, both in top line and bottom line. Now, what has happened in the last few weeks is that because there is now expectation that the interest rate cuts will be there, 3 interest rate cuts will be there in US, including the one they have gone already with. There is expectation, yes, that that may boost the economic growth there in US and may lead to more discretionary spending coming in, and would be beneficial for the Indian IT companies. Now, I think, in my opinion, I think all the IT companies may have been bottom out, but as of now, it is a contrarian or a tactical call. So from the long-term perspectives, yes, you can go ahead with the IT company like TCS, but in a staggered manner. But in the short term, it is very difficult to take a call.
Okay. All right. So as of now, wait and watch. Wait and watch is the right approach. Is that what you're saying?
Yes.
Okay. All right. We've got our next caller. Dheeraj is calling us from Hyderabad. Dheeraj, very good morning to you. How can we help you today?
Sir, good morning, sir. I purchased Landmark car shares, like 150 shares at 636 rupees, sir.
Okay.
So, should I stay invested in it for a short-term trade, or should I shift to something like Emphasis or Blue Jet Healthcare, sir?
Okay. All right. And what is the definition of short-term in your perspective?
Like 1 month to 45 days, sir.
Okay. Brijesh, I'm coming to you on this one. Landmark Cars bought it very close to the current market price. 636 is the buy price. Would you hold for a period of a month to 45 days?
Yeah, I think the structure is positive, and recently there was a very good buying which was observed from the level of 600. So I think this is going to stay positive, and 720, 750 is my short-term target. So I think you should stay invested. Maximum correction would be close to 610, 615. That should be the stop loss, and 720, 750 would be the upside.
Okay, all right. So that's with regards to where Landmark car stands. We've got our next question from Ramana Reddy, who's writing us from Hyderabad. He's holding Dishman Carbogen, 1,000 odd shares purchased at the levels of 180. So sitting on significant amount of profits right now, around 1.3 lakh, over 1.3 lakh. He says he's a long-term investor and wants to know if he can hold or sell from a longer-term perspective. Saurabh, any view on this counter?
It's a small size pharmaceutical company. Yes, on the operational front, the company is doing good. On the valuation, it is less than 1 time to book value. And in my opinion, yes, it is a good hold.
All right. We've got the next question from Dallas, Texas, and Sai Karthik is writing in. Incidentally, I took the time to ask him what he thinks about this H1B issue because he's sitting there. He's got PNB Housing at an average price of 756.34, and he's planning to hold for the next 3 to 6 months. He's wondering whether to stay invested for an upside from this point. It's above his buy price, considerably so. What's the view on the charts, Brijesh?
Slightly, I would be a little bit cautious because the undertone for the PNB Housing Finance is slightly negative. There can be a pullback till 900, 935 level. So I would be viewing that level 2 as a exit. So from the current level of this, 900 is a resistance. So I think whether he can take a call at 900 or he can review the position. But I would like to exit on a bounce.
All right, so that's with regards to where PNB Housing stands. We've got our next caller. Surya is calling us from Karnataka. Surya, hi, very good morning to you. How can we help you today?
Yeah, hi, good morning to you. I have a query on Electronics Mart India.
Okay.
I hold a share from 125 price point.
Okay.
Holding some stock of it. So my query is like, what is the long-term view on this? Like, is it still the time to accumulate on the basis of the rise that it had in the past month?
Okay, all right. Surya, just to clarify, this is from a short-term perspective, or are you looking at it from a longer-term perspective?
From a long-term perspective.
From a long-term
at least,
perspective.
2+ years, yeah.
Okay, Surya, I got your question. I'll take this up with Saurabh. Then Saurabh, considering the GST 2.0 that has come in, something like an Electronic Smart India will set to benefit from that. Plus, there's festive season kicking in. So, we'll see a lot of demand going up, buying interest coming in for Electronic Smart India. Your view with regards to this counter from a longer-term perspective?
You're absolutely right, Mahima. In the second half of the financial year, when all the festival season comes, these companies tend to achieve tend to record higher sales in the compared to the first half of the fiscal. So yes, I think previous quarters was not that good for all the companies in the domain. But yes, after the GST cut, it is expected that it may give fillip to the retail.
Okay, we're having a bit of an issue with his line. We'll come back to that in just a bit. Electronic Smart is the counter that we're talking about. But we've got a question on a really tiny company. I'm hoping that Brijesh will still be able to give us a view. And generally, viewers, if you can avoid asking us about these counters, it would be better. Because really, the tracking of these counters on fundamentals is not taking place. And even on the technical front, it's difficult to get you a view. The name of the counter is Syncom Formulations, SYNCOM Formulations. It is 1,665 crore market capitalization, currently trading below 18 rupees a share. And the question is from Fatima Azim, who's writing in from Nagpur. Brijesh, any view on this? If she's bought at these levels, at levels of 12 rather, she's in the green right now. Should she book out?
One second, yeah.
SYNCOM, Syncom. Let's pull up the year-to-date performance of this just to establish at what point it went above her buy price. It's not done too much. In fact, it's just about unchanged. Okay, it's 11% lower, but it's come off quite significantly from the high point of the year. Seems like a bit of a volatile stock. What's the view?
1 second. one second.
Okay, we'll have to circle back to this one. Let's move to the next one. Adani Green Energy is the name of the counter that we're talking about, and Adani Power. Do we have Saurabh back? Okay, we're still waiting for Saurabh to come back. So let me ask about Adani Green Energy. And this is a question coming from Mohammed, who's writing in from Dubai. Brijesh, I'm going to come to you on this one. He's asking whether it's a good option to consider starting to accumulate at these levels. We saw quite a few of the Adani Group counters move higher at the end of last week. Is there more upside from these levels?
Alex, I think, see, the level of 1300 was something from where the selling came. So one has to be little cautious. I'm not saying that it is weak on charts, but then even though if there is any pullback is that it will get resisted at 1300. So from the current level till 1300, there is an opportunity. Maybe in the near future, if it sustains about 1300, then the undertone from the bearish will turn into bullish, and then from the longer time frame, I think we can bet on the Adani Green. But then from the current point, yes, 1300 can be the short-term target for the counter.
Okay, all right. We've got our next question from Narsima Reddy, who's writing us from Hyderabad and asking about the other IT company, Persistent Systems. He's got around 30 odd shares bought at the levels of 5289 and wants a slightly longer term perspective on this particular counter. Saurabh, we talked about the IT names in specific, but Persistent Systems specifically, what's your view?
I think it is quite difficult to take a call on the mid-sized companies. Yesterday also, the visa fees was has now become at around $1 lakh, which will be very difficult for mid-sized companies. I think it would put a definitely kind of a pressure on the margins also. So I think it is better to initiate investment with the IT biggies rather than jumping into the mid-sized companies, because the conditions are not that great for the Indian IT companies.
And you were making a point on Electronic Smart early on in the show where we lost you. What was the point that you were making? Should you go out and buy, or if you're holding, should you continue to hold?
I think at least it is good to hold because during the second half of the fiscal, normally we see demand increasing for these types of companies, and even after the GST cut, it is expected that it will boost the retail demand. It is yet to see whether it will be happening anytime soon or not. But yes, I think from the tactical point of view, it makes sense to hold.
It must be pointed out that we spoke about Adani Green earlier on in the program, and the standard disclaimer holds. This is NDTV Profit that you're watching right now. It is also part of the Adani Group. Shankar is calling us from Chennai. Shankar, hi, thanks so much for calling us. How can we help you today?
Thank you, sir. Very good morning. I want to know about Laurus Labs' short-term outlook, sir, technical outlook.
Okay.
I want to buy at current levels.
Okay. Brijesh,
Is it correct?
yeah, got it. And when you say short-term, how many months is this or how many days?
1 to 3 months, sir.
1 to 3 months. Brijesh, I'm coming to you on the charts. Sub 1,000 levels. Good time to buy?
Yeah, I think it is a pretty decent level. It is likely to see a very strong bounce from the current level, and maybe 1,050, 1,100 is a short-term target. So if he's willing to take a fresh long buy, it is advisable.
Okay, all right. So that's with regards to where Laurus Labs stands. We've got the next question, and this is on Schaeffler India, is it?
Schaeffler India.
Schaeffler India, okay. And this is from, do we have the name of this? Okay, Satyan is asking this question, and he's bought at the levels of 4,000 last month, considering the momentum that he's tracked. He's asking the next support levels and resistance to exit, considering, okay, so this is the counter that he's talking about. Brijesh, your view with regards to where the charts are concerned?
The medium to long-term charts are in the buy mode. So I think 3,800 is a very decent support. And in the near future, I think this 4,300 will be taken out. And so as and when we see a move above 4,300, this is going to see a new high. So I think he should remain long in this position. And the immediate stop loss would be 39, 39.50, and in long-term perspective, 3,800.
Right. We've got our next caller then. Devendra is calling us from Bengaluru. Devendra, hi, a very good morning to you. How can we help you today?
Hello. So there's this one stock which I want to know, like, what do I do with this? It's protein. So I want to know, like, what do I do with this? Because I'm having a loss of 53,000 or something.
Got it. And Devendra, when you bought this, did you see the charts of the company or did you see the fundamentals while buying it?
I just felt that this would be a good because our Prime Minister is like focusing more of Indian, So that's why.
Okay. All right. And if you were to hold this, will you hold this from a longer term perspective or would you want to book your losses right now? What's the view like?
No, I can hold it. No issue.
You can hold it. Okay, then I'll take this up with Saurabh. Saurabh, your view with regards to where Protein eGov stands. I think the loss that he's incurring is probably because of the PAN 2.0 project that they lost. But considering there have been developments post that and the stock has recovered, from a longer term perspective, what are the fundamentals saying?
I think the company need a real catalyst for the stock to come to the to reach previous levels. It is just because of you have mentioned that they lost business for the Indian IT 2.0 business, and that is why the stock has been hammered down. It is difficult to say whether the whole matrices for the growth prospects or the forecast with respect to its earnings and revenue growth has been now changed, and that is the reason stock got hammered down. Difficult to take a call whether the company will be able to make up the lost business or not. So in my opinion, I think it is better to wait for a quarter or two and see what the management says.
Okay. So therefore, just to be clear, you're suggesting that he hold on?
Yes.
Okay. All right, so hold on is a view. Where would you put the stop loss though? I'm curious about that because it's important even if you have long-term holding to at some point put a stop loss. Brijesh, for Protein eGov, where would you place that?
Alex, first thing, I'm not very sure on the counter. It looks like it is in the sell mode, and whenever there is a bounce, it is an exit. And on an immediate basis, 850, 845 would be the stop loss. He should be holding on below 840, 850 levels. He should look to exit the stock.
Okay, so there you go. On the technicals, it's looking like it's on a little bit of shaky footing. So bear that in mind, Devendra. though on the fundamentals it's a wait and watch that has been suggested. We've got a next question on ITC, and this is a question from Dylan, who's writing in from Mumbai. And he's bought at levels of 375, he's got 550 quantity, and he's thinking of holding for the next 1 to 2 years. So long-term perspective is being sought. What's the view, Saurabh, on the fundamentals for ITC?
See, it is a kind of a portfolio stock only. All the businesses are doing fine, be it hotel, be it FMCG, be it stationery business or the cigarette business. But in my opinion, I think yes, he can go ahead with the.
Okay.
Okay, I think he's...
go ahead. I think he's saying you can go ahead and hold ITC, because the point that he was making is that it is a portfolio stock. Unfortunately, we seem to be having bad luck this morning with the lines of both of our guests, and hopefully Brijesh will stay with us. Otherwise, you might have to listen to Mahima sing this morning. But having said that, let's talk about REC and PFC. And this is a question from Piyusha, who's writing in and asking about this. She wants to buy right now at the current level for the long term, and so therefore, are these the best opportunities in your opinion? By the way, if you buy PFC, you effectively get REC, because PFC is a whole is an owner of a considerable stake in REC. But I will still throw the question to Brijesh on this one. Brijesh, on the charts, do these look like attractive levels?
Yeah, I think the RAC is at a very decent support. 350 is a very strong base. I think from the level of 350, this can go back to. It will take a little longer time from the year perspective. I think this can push back to 550 plus level. So definitely RAC is a very strong trade setup. And I think with the stop loss of 350, one can take the long idea.
Okay, all right. We've got our next question from Salini, who's writing us from Kerala. She's bought 100 odd shares of GSFC at the levels of 213 and wants to know the short-term target for this one, and wants to know if she can average out also at the current levels. Your view with regards to where charts stand for GSFC, Brijesh?
It is still in a conservation mode. 215, 220 is a band where it has got a small resistance. But from the long-term perspective, I think this level will be taken out, and we can bet for 250, 255 on the higher side. So the view will be hold. The stop loss for the trade will be 190.
Okay, so that's the view on GSFC. Let's take the next one, and it's Suzlon Energy, by the way. It's Ajay who's writing in. I'm not sure where from, but he's looking at trying to find out what the trend would be. It's around that 60 mark, and it's more or less been in a consolidation mode, seemingly. Brijesh, would you agree, and would you buy at this moment?
If somebody is taking a small trading kind of a setup, then I think, yes, there is an opportunity, because from the recent level of 55, the stock has taken support and it is likely to see some bounce. So the bounce can go back to 70, 75 levels. So that's a range of this 55 to 75. So that is the spread, but what we can look for the Suzlon. So with the stop loss of 55, we can play 10 points kind of a move.
All right, so that's with regards to where charts are concerned for Suzlon Energy. But viewers, it's time to slip into a very short break, but we'll be right back answering all your queries on the other side. So do stay tuned.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
Hi, thanks so much for tuning in again. You're watching Ask Profit. My name is Puneet and with me is Anushi, and for the next half an hour, we'll be solving all your queries which you have. So do send them on WhatsApp. You can also call us on the number that's visible on your screen right now. But first, let's take a very quick market check again, because we are seeing a day which was dominated by news flow with what's happening globally with the H-1B visa crisis that has had a cascading impact on the market. And while we have recovered from the day's low, we started, the implied open also showed about a 87 to 90 point downtake on the Nifty 50. Currently, we're hovering at almost flat to a slight negative bias there, but still continuing to hopefully that over the next couple of hours we'll try to get there in the positive trajectory. But this seems to be a decent rebound, to say the least. Let's look at the Nifty 50 contributors, because we started off the day with the IT majors like Tech Mahindra, TCS, as well as amongst others, also showing the negative impact, and that while still continuing, Infosys is the biggest one, which is showing a 30-point downtick on the Nifty and trying to drag it down, while something like a Bajaj Finance, HDFC Bank, as well as Eternal, which has actually been a source of strength essentially for the markets at this particular point of time, continues to be a positive momentum booster. Adani Enterprise also marginally, still also showing some positive trajectory on the Nifty. Let's quickly look at the advances and the decline ratio very quickly as well, because we started out the day with, of course, the advances being slightly higher. Then that trend reversed essentially very quickly. And now again, we are seeing that the advances are continuing to be higher than the declines, although there are about 150 stocks that seems to be the difference between the two. Let's also look at, very quickly the mid-cap and the small-cap index before we go across to our guests. Mid-cap largely, flattish with a slight positive bias. It has continued to be so, while the small-cap is also down 0.10% as well. Rajesh Palvia is still with us, SVP, Technical and Director Research at Axis Securities. Rajesh, we have seen consistent pressure on the IT space, and that seems to be the trend. Do you expect that this could be used as a positive time to essentially add certain positions either in the mid-cap space or in the large-cap space for now?
Hi, morning. So if we analyze, if we keep IT sector as on a sideline, and if we look at the broader market is showing sign of confidence, and the way mid-cap, small-cap space is attracting the buying interest since last couple of trading session, and Nifty is also comfortably holding about 25,200 and almost trading at 25,300 zone. So I think it clearly shows that, other than IT basket is clearly having a confidence on the market. And we believe that, once this supply pressure on the IT stocks settle down at certain level, I think again Nifty will regain to its upward trajectory, and possible breakout towards 25,450 we may see in the coming days. So once that breakout happens, I think on the higher side, possible target towards 25,650, 700 we could reach in the coming trading sessions. So I think buy on dip should be the strategy, as broader market is showing sign of confidence. A lot of consumption oriented sector and stocks are really showing good buying interest, as new GST regime is now kicked in. So I think a lot of buying interest is happening in the domestic oriented theme. So I think stocks from real estate, stock from FMCG basket, and consumption oriented like automobile, all these stocks are showing sign of buying interest. Even banking, financial, which is also showing outperformance, and we have seen most of the private as well as the PSU bank have shown good traction. So yes, we do believe that buy on dip should be a strategy at this juncture. For trading point of view, 25,200 needs to keep as a stop loss. On the higher side, 25,450 we are projecting target for next couple of days.
Okay, so those are some levels to watch, as well as sectors that one should be watching out for. But with that, let's shift our focus to the viewer queries. And this one is from Arjun, writing to us from Kolkata. He wants to understand whether it's the right time to invest in Idea Forge. And this is for the 7 to 8 months of a time frame that he's looking at. Rajesh, coming to you, is this the correct time? What are the crucial checkpoints in place for this stock?
So Idea Forge managed to give breakout of its near-term chart. Stock was in consolidation, but looking at the breakout on the near-term chart, we believe that if stocks continues to trade above 520 mark, I think some more traction towards 600, 620 we may see in the coming month. So yes, one can buy an equivalent, as already corrective move is likely to over, and looking at the near-term chart breakout, we believe that continuity of uptrend would be there. So At this juncture, yes, he can hold on the position. Upside target, we are projecting around 600 to 640. On the downside, for positional perspective, 505 needs to keep as a stop loss.
Got the view, Rajesh. And Rajesh, I'll come to you for another query. That's Triveni Turbine. Anil is writing into us from Jalandhar, and he's a regular viewer. So Anil, thanks so much for joining in and giving us time as well. 1200 is what he's holding shares currently, bought at 599 rupees per share. Rajesh, do you expect that within the next 6 months we could see some revival in this particular counter, because our viewer is holding this since some time? He's asking that there could be some growth prospects in this particular time frame. So any view on this one?
Yeah, I think looking at the near-term, short-term structure, yes, stock is in bullish trajectory, and the way stock is showing, attracting buying interest at a lower level. We believe that consolidation seems to be over. Risk to reward is in favor. At this juncture, 510 needs to keep as a stop loss. Stock is comfortably holding about to 20-day moving average. So after a consolidation, I think near-term chart is showing a sign of recovery. So we believe that yes, possible up move towards 585 to 600 we may see in this counter. So at this juncture, yes, one can buy and accumulate with stop loss of 505.
So buy and accumulate is the view for Triveni Turbines. But next we have a caller joining us, and this is Dashish calling us from Mumbai. Hi Dashish, how can we help you on the show today?
Very good morning to you.
Good morning to you as well.
Regarding Ambuja Cement, 1125 shares, cost is around 200 rupees. Holding for quite long time. Would our experts know advise switching over to ACC? And how is the long-term chart for both, if you can compare?
Dashish, any time frame that you have in mind? I understand that you continue to hold it for a long term, but just want to understand.
Yeah, no, I know I'm not in a hurry to book profit.
Okay, with that in place, let me go across to our fundamental guest. That's Lancelot joining us as well. Lancelot, what's your view on Ambuja Cement?
I think Ambuja Cement is in a structurally a bull market because you have seen good growth coming in, and the cement market is also picking up. So it is positive for the company. I think valuations have moved up a little bit over the past couple of months. But given that there is a visibility as far as growth in both revenue and profitability is concerned, I think one can look at accumulating this whenever there's a bit of a price decline.
Got the view, Lancelot, and good morning to you. But the buy price on Ambuja, roughly 200 rupees per share, it was great entry point as well. And viewers, of course, standard disclaimer that Ambuja Cement is part of the larger Adani Group, and so is the channel that you're watching currently as well. But a very decent buying price, to say the least, from the viewer as well. So Dashish, many congratulations on that. The next query is coming in from Prague, actually. Nidesh is writing into us for a short-term view that he wants on something like a Paytm. So Rajesh, let me come to you, because he's holding roughly about 700 shares, but he's bought it at roughly about 1200 rupees per share. Do you fear any kind of view that you have actually in the short term on Paytm?
I think he may hold all the position, as we have seen a very strong run up in this counter. Some profit taking is happening in this counter at higher level, but looking at the breakout on near term to short term perspective, I think till stock is holding above 1150, I think trajectory is likely to exhibit on the bullish side. And once stock manages to cross about 1220, I think on the high side, 1300 to 1340 would be the next target for the counter. So overall structure is looking bullish. So he may hold on the position. 1150, which is almost 50-day moving average support area, needs to keep as a stop loss to hold the position.
Okay, so that's a view for Paytm that we have for you. Next, we have a caller joining us as well, and this is Suraj calling us from Bengaluru. Hi, Suraj, how can we help you today?
So I had a query. I am holding 2,000 shares of Yes Bank at a price of 23. So shall I be holding it right now, or is it right time to exit and maybe invest that amount somewhere else?
Suraj, how long have you been holding this particular counter?
I started buying at 150 and then I averaged it out to 23, and it's been more than, I don't know, 5 years, 6 years. Yes.
Okay, with that view, let me just go across to Rajesh. Rajesh, your view on the stock?
So stock was underperformed to whole banking pack, and now looking at the recovery in last couple of week, stock is now approaching towards its swing high of around 22 level, which is important and crucial for this recovery phase. If at all stock manages to cross about 22 level, then maybe some short covering action we may see in this counter, and possibly he may get his a buying price which is around 23 level. So at this juncture recovery is happening, so stop loss where I'll ask him to keep, which is around 20.75, needs to keep as a stop loss. And I think if it's not breaks below 20.75, possible target towards 23 to 24 we may see in the near term perspective, where he may again review what kind of development, because again the stock is moving up since last couple of weeks. So maybe another rally towards 24 we may see in the near term perspective.
Got that view, Rajesh. The next query actually is coming in on a stock, Crompton Consumer, and our viewer Sujit is writing to us from Sharjah. So another international query that we have today. He's bought roughly about 100 shares at 345 rupees per share, and while there was some positive momentum, we have seen that kind of phase out over the last couple of quarters. He's asking specifically any GST rate cut benefit for this particular stock. He can hold for another 4 months as well. But let me also get first Lancelot's view on this one. Lancelot, it's a stock which started to show some promise before the rally fizzled out. Any view that you have on Crompton Consumer right now?
I think Crompton Consumer will benefit, will get some benefit from this rally on the GST side. But if you look at valuations, it is trading at almost 38 times earnings. So it is a little bit expensive considering that, the growth had been low, and even with whatever improved growth we see, it will take a while for this company to, become attractive. So I think it's better to wait for, if one can accumulate this at lower values, yes, it is looking, but at this point of time, definitely looks a bit expensive.
Very interesting question here that we are seeing from the cement space, and this is Sagar writing to us. Now he holds about 15,800 shares of JK Cement, and this was at a starting price of 169 that we are looking at. Currently, if you just look at the stock price, now he's made about 10 crore of a profit on that one. So congratulations, first of all, Sagar, on this big profit that we've been seeing. He's been holding the stock for more than a decade now and wants to understand, whether he should continue to hold this particular counter. Is there more upside to this one, or whether there would be some bit of that market share loss in terms of more competition coming into picture? So Lancelot, I'll just come to you on this one. What is your overall picture on this particular counter? If you have any other beneficiaries in the cement space as well that you can highlight.
I think Sagar Cement has been doing well. Even in the last couple of quarters, you've seen improvement in the revenues. And the last quarter net income has also improved, but it is still a relatively smaller player as compared to the larger players. And if you look at the space, there is consolidation that is happening in the space.
Question is for JK Cement.
Oh, JK Cement.
Yeah.
So okay, I don't track JK Cement, so I don't have much information on that.
But if you can give us an overall picture in terms of your particular stocks that you like in this sector.
Yes.
Yeah.
In this sector, I think I would like Ultratech Cement because they are the major leaders. They have the lowest cost per ton manufacturing cost of cement, and they have expanded their footprint to South India as well. So given that, you are seeing consolidation in the space, the bigger players will always be able to expand and produce cement at lower cost and thereby be more competitive. So as demand picks up, you will start to see the benefits of an operating leverage kick in for somebody like Ultratech Cement.
I want to understand your view also for JK Cement.
So JK Cement has been doing well, sorry, Sagar Cement.
No, it is about JK Cement. Rajesh, yeah. Okay, this seems to be an error. Rajesh, let me come to you on this one. I'm asking this about JK Cement to you. What is your technical view on this particular counter?
So stock is in uptrend. Clearly, if you analyze the across all time frame, stock is moving in higher top, higher bottom formation. That clearly shows that upward trajectory is still continue for the stock. The way near-term, short-term charts are placed, like whatever minor dips are coming to this counter is getting attracted by the buying interest. Now stock is trading near to its 20-day, 50-day moving average support area. So overall, I think if he wanted to remain invested, as he has already made a huge profit in this counter, and he has bought at very low level and holding since long time. So I think he may ride the profit, or if he wants to switch to some other counter in cement space, so he can partially book it. But I think I would advise at this juncture 6400, 6500 is the key support area for near term, short term, till this stock is holding around these level. I think trajectory is likely to exhibit on the bullish side. On the higher side, once his stock manages to cross above 7200, could be the another leg of rally towards 7600 to 7800 we may see in this counter. So overall structure is bullish, so he may hold the position with stop loss of 6500.
Got that view, Rajesh, and definitely a company you can put on your radar, because cement space has also seen a GST reduction from 28 to 18, and most seem to be almost doubling their capacity in the next few years, including the likes of JK Cement, but valuation definitely punchy to say the least. The next question is on WhatsApp again. Tarun Agarwal from Ranchi is writing into us for a query on if you should buy into an IT company now, and that's largely asking for a long-term view. Seems to be triggered by what's happening today in the IT space as well. So Lancelot, do you have any view, any particular IT stock that you like that a viewer can enter right now?
So, I think the IT space has seen a major correction over the last 12 to 18 months, given the global issues. And however, the most recent fall is mainly because of the H-1B visa issues. And I think, most of these IT companies are resilient enough or strong enough to be able to cope with the existing, with the changing environment. And you may see a lot more offshoring happen as a consequence to higher H-1B visa costs. So that would be positive for, companies like TCS, HCL Tech, Infosys. I think these are the three companies which one can look at, investing in, because even at these levels, the valuations are fairly comfortable, and the dividend yields have been relatively good. So we will see more dividends come out, and then when this global scenario seems to pan out, you will start to see an improvement in the valuations going ahead. So it definitely is an opportunity to buy any of these three. Could be good at this point in time.
Got that view, Lancelot. We are getting another caller in. Venkatesh is dialing into us from Bengaluru. Venkatesh, a very good morning to you. What's your query?
Good morning. I am holding Varun Breweries Limited, 2,500 shares at an average price of 463.
Right.
I am sitting with a marginal profit of around 1.5%. I would like to know the long-term view on this.
Okay, Venkatesh, and is this the only particular, is this one of the key stocks in your portfolio? Because it's of course a very high weightage given the number of shares and the share price. Do you also have any other holdings right now?
Yeah, I am holding SBI, Reliance, Geo Finance, Infosys, and Adani Ports.
Got that view. So I'll just get you a long-term view on this. Lancelot, specifically on Varun Beverages, we did see that, there's the GST rate has largely been similar to the cess as well as the GST that was there before. So it's at 40% now. Any view on a long-term view on Varun Beverages for you?
So I think, long-term, definitely the stock looks at a good investment. Because, apart from India, Varun Beverages also has acquired Pepsi franchisees in Africa. And if you look at the last quarter results in the last quarter, we've seen an improvement in the operating profit as well as in the revenue growth for those regions. So I think over a period of time, you will see those regions contributing significantly to Varun Beverages profitability. And given that things are a little bit soft now, the stock price has corrected significantly, valuations are reasonable. One can look at holding and even accumulating additional shares in the stock at these levels.
So That's the view for Varun Beverages. Now, next query is regarding Dreamfolk Services. Now, Soham Ganguly has about 65 shares, and this is at a price of 455. Now, in the recent couple of sessions, if we see, Dreamfolks has been in focus, but for the wrong reasons. Now, the company did announce just a few days earlier that it has shut down its domestic lounge business as well. Since there, it's in a downward trajectory. I've seen the stock currently trading at a price of 112. Rajesh, let me come to you on this particular counter. What is your view on this?
I think one needs to avoid, as a lot of negative news flow is coming for this counter, and looking at the major supply in last couple of days. Stock is in downtrend. Series of lower top, lower bottom formation is taking place in this counter, which clearly shows that there is a sustained supply pressure is taking place in this counter. Maybe we may see further more lower trajectory for this counter. So at this juncture, I would say avoid it. Maybe it can go down below 100 kind of level also in the continuation of this down move. Until the stock not crosses above 150 zone, there won't be any change in the stance, and stock may exhibit on the weaker bearish side for near term to short term also.
Got the view, Rajesh. The next query is also on WhatsApp. It's coming in from Bengaluru. Satpati is writing into us for a query on Patel Engineering. Now, they have been holding the stock for the last couple of years, and the average price for the viewer is roughly about 47 rupees per share. And stock's not gone away from those levels for a while now. And they are saying that there hasn't been any positive momentum. Should they hold on to the stock? They can hold for another couple of years, and that's the query. Lancelot, let me come to you because there have been some structural challenges, at least on the fundamental side for this one. Do you have any view on Patel Engineering?
Yes, I think I agree with you that since we are seeing some amount of concerns on the structural changes which the company is facing going forward. It is better to stay away at this point in time till there's a lot of clarity about how things are going to pan out for the company.
So that's the view for Patel Engineering. Now the next question, if we see, is regarding JSW Energy, and this is in regards to long-term perspective that Raj Mahindra wants to understand whether is it a good time to invest in this stock at these current levels. Lancelot, your view on this?
So I think JSW Energy is definitely in a very sweet spot. It has been growing the renewable energy book. It is being able to procure assets or get energy assets at much lower cost than other competitors in the market. So yes, the opportunity is big and the growth prospects are good. However, when you look at the the valuations of the company, they seem to be a little bit still a little bit on the higher side, and it's very important that one looks at an entry point when at maybe a little lower levels, because then only you can get the benefit of the upside. Otherwise, if it's already trading at a higher multiple, there is a possibility that going forward also it will take a couple of years before you start to see the benefits.
Time for the rapid fire session. Essentially, we try to answer as many queries as possible. So Rajesh as well as Lancelot, request you to keep your answers short. Give us a quick view on these stocks so that we can cover as many as possible. The first one is on Ather Energy. Anurag from Nagpur is asking a question. Buy price is roughly 559 and he's holding over 700 shares. Lancelot, your view?
You should buy this stock even at this levels.
Okay, the next question is from Manoj, writing to us from Dubai. He has about 900 shares of Sheela Foam, buying it at a price of 699. Lancelot, your view on this counter? Okay, I think there seems to be some audio issue with Lancelot. Rajesh, Lancelot, your view on Sheela Foam? He's bought it at a price of 699.
I think it's expensive at this point in time. Maybe you should look at exiting.
Okay.
Well, the next one is Adani Power, bought at 133 rupees per share by a viewer. Rajesh, your view on this one?
So fresh breakout on the chart, so I think he may hold on the position. Possible target towards 190 to 200 we may see for the Adani Power.
Okay, the next question the viewer has bought about 642 shares of Redington, and this is at a price of 312, facing a loss of 11,000 currently. Lancelot, your view on Redington?
One should exit this counter, very low margin business.
Well, the next one's on BSC. Pankaj is asking, he's bought it at the current level. Rajesh, do you see any positive momentum on this one?
So if horizon is little longer, he may hold on the position as stock has already corrected. It's available on attractive price point. So keep a stop loss of 2140 if you have bought at current level.
Okay, Saurav from Jaipur has bought about 110 shares of Bajaj Finance, average cost being 667, holding it for more than 1.4 years. Now wants to understand the view on this. Lancelot, your view?
So one should continue to hold this stock. You will see compounding returns as well as compounding values to hold.
The next one's on Kalyan Jewellers. Our viewer hasn't mentioned the buy price, but he's holding roughly 40 shares. Rajesh, your view on this one?
I think structure is still weak side. Until the stock not crosses 540, stay away from the counter. On the downside, as you already bought, so 495 needs to keep as a stop loss.
Lancelot as well as Rajesh, thanks so much for joining in, giving us your time and solving a lot of viewer queries today as well. But with that, viewers, that's all the time that we have on this edition of Ask Profit. From Anushi, myself, as well as Alex and Mahima, thanks so much for joining in. KYC comes up next, and we are putting focus on JK Tyres.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया है।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं, ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to NDTV Profit. You're watching Know Your Company, that is KYC. Let's understand what's on the list today, a JK Tyre. Why a JK Tyre? But before we get to that, I'm Hiral Datia and with me is Puneet Javeri. An interesting conversation, Puneet, this is going to be because very critical to understand what's happening with the tyre space, a beneficiary in terms of the GST reductions as well, and the kind of demand surge that people are anticipating. But first up, let's quickly take the quick questions as to what we will talk to the management about as well. The significance when it comes to the Chennai plant, specifically with regards to global exports, because this is one of the most crucial plants that they have. This is where they have incrementally been adding capacity as well, and the exposure it has to global markets. On number two, the key aspects in terms of international market growth and the aspirations that the company is sitting on. And very lastly, the acquisitions that the company is looking to make in the global markets.
Well, the other couple of key aspects on the conversation was on radialization. Now, that's essentially a key process where a lot of passenger car tires have already moved to this one. It's a process where the global markets are already radialized enough in the industry, and JK seems to be the pioneer in this because they were the first one to introduce radial tires back in 1999 and have been steadily increasing that. For trucks and buses, they're already at 66. And finally, in terms of the growth of the premium tires, and this one is key because that is going to be a big margin booster going forward as well. So these are the key 5 things that you need to watch out from the conversation with the management today.
Absolutely. But now let's tell the viewers what JK Tyre is all about. Part of the JK organization, the company was founded in 1951. It actually co-produced the first radial tire in 1977, and it's present in nearly 105 countries over almost 230 distributors. In fact, if you talk about the global distributors as well and this network that they have, it's a strong network of almost nearly 6,000 dealers that we're talking about, and 650 plus dedicated brand shops. In fact, overall, if you talk about the 11 globally benchmarked sustainable manufacturing facility is what the company has. In fact, it has 9 in India, 2 in Mexico, and they collectively produce nearly 35 million tires annually.
Well, the other one is about the plants, right? Because we specifically mentioned that 9 of them are in India. They are spread across the globe. We visited the Chennai plant and we're going to get you some perspective from the shop floor. But apart from that as well, Uttarakhand as well as Karnataka are 2 key main geographies for the company. They have 3 plants each in these geographies. So they are expanding across north as well as the southern markets through these plants. The other one's Rajasthan, where they have another plant. Madhya Pradesh is largely for the passenger car radial space, while Mexico, they had 3 plants earlier. They've closed down 1 just about 18 months ago, but still holding on to 2 plants. And this was another key plant because this is a key one to export to geographies like the US, and which is key for the tire maker. Similar strategy that what the other tire makers have also employed at this particular point of time.
Right. Now taking this into consideration, let's quickly understand the revenue mix of the company as well. 2 segments that we're talking about, replacement as well as OEM and exports. Now, clearly, if you talk about replacements, it has come down slightly, but has remained above that 60% mark. We're somewhere, sorry, it's gone up, I would say, from 61% to 64%. In terms of OEMs, that has remained stable, and your exports have seen a marginal downtick from 16% to 14%. But in terms of the replacement market, that becomes the key, and that is why you're talking about the revenue mix and the benefits of GST that could be coming in, especially when the replacement market picks up.
And they are a beneficiary directly for the GST rate cut, but also indirectly because through automobiles as well, which has seen a GST rate cut as well. So that's definitely one. The other aspect is on consolidated financial, and here you'll see that between FY24 and 25, the company did see a dip in its margins from roughly about 14% all the way down to 11.3%. And that's largely because of higher commodity costs. So natural rubber prices went through the roof in FY25, and they were a key impact because of that. Apart from that as well, you saw that across the industry where the growth was largely absent because of such high costs. So the companies had to absorb that particular point of time, and India is a natural rubber scarcity market. Roughly 40 to 45% of natural rubber is imported in the country, and hence we are a direct impact essentially of the commodity higher cost. So you said you did see that impact. Profits were also impacted because of that, but largely in terms of revenue, from FY23. It was a strong jump going into FY24, and hopefully, the company is hoping essentially that FY26 will be a similar growth trajectory.
Interesting numbers here, but let's quickly look at the rating parameters from here on. What are we going to talk about? First up, what we analyze is the income statement, balance sheet, cash flow and return ratios. These are the top 4 parameters that we will be considering. And post that, the shareholding, street credentials, valuation and the street coverage. All of this absolutely important 8 parameters that we're looking at. But Puneet, why don't you start with the income statement?
Well, largely, I did mention that, the natural rubber price impact was seen in FY25, and you did see the margins correct because of that. But, in terms of the 3-year CAGR performance, especially on the profits, we saw FY25 largely being a drag on the overall 3-year CAGR, but it still maintained a good 36% CAGR on profits, and hence we've given this a neutral rating, largely because of that aspect. Since the pandemic, the company has invested heavily in machines, they've invested in cost optimization, and therefore you're seeing almost the EBITDA CAGR being double of their revenue growth in this particular point of time. But a lot more work needs to be done, and since because of that aspect, as well as the recovery, while in Q1 we did see some key aspects of that, it is still something to watch out for. So hence we've given this a neutral because of that aspect. Quarter on quarter as well, you did see on a YY basis margins getting impacted, but a still better performance compared to what analysts had estimated. But we'll need some more evidence essentially of growth coming back in this year, and hence we've given this a neutral for now.
Okay. Let's look at the balance sheet. We have given the balance sheet a thumbs up. If you talk about the equity, that's remained pretty much stable. In fact, their debt to equity ratio has somewhere improved marginally, so that is a positive. Their cash and bank, from almost a 266 odd crores, that actually nearly reached a 770, and that's where it's remained stable in that 770 kind of range in the last 2 years, which is again a strong one. Borrowings also somewhere that FY23 number has remained stable at FY25. And in terms of your other equity, that has seen a sharp improvement. So it's categorically telling you that the financials are improving when you're seeing that EBITDA base, which is improving. And secondly, when your cash and bank is remaining steady and improving. And third, your debt to equity, that has somewhere improved as well. So that again is another positive that we are tracking over here. And hence a thumbs up that comes in on the balance sheet front as well, Puneet.
Well, similar to the income statement, we have seen the cash flow also impacted in FY25. So when you look at the cash flow from operations to profit ratio, that fell to 45%. It was roughly around 94 in FY23, went to 77, and largely was expected to stabilize at that level. So we've given this a neutral as well, largely to see if that evidence does pan out of maintaining over a 70% cash flow to operations to profit ratio, and hence a neutral for now. The net cash flow did come back into the positive trajectory, but marginally of 15 crores, but still some evidence needed for the company, but definitely on the trajectory it is expected, and the commentary by the management is positive to improve the cash flow from operations as well going into this year. Okay, so that's a neutral rating coming in for cash flows. Let's look at the return ratios as well. Again, a neutral one coming in there because clearly FY24, they've seen a number as high as 19%. Currently in FY25, they're at around 13%. How soon will they be able to get to that 19% mark is the key question over here, and hence a pretty neutral rating is what we've given on the return on capital employed. In terms of shareholding as well, Hiral, we have seen that the management has been able to maintain largely over a 50% share, while we would as investors like a lot more over 70%, but the company has mentioned that 51 seems to be what they are holding on to right now. Because of the reduction that we saw essentially in FY23 going into FY24, we did see the foreign investors largely enter the stock and have maintained that 16% share, while the public has continued and retail investors essentially have continued to show promise in the stock as well. So we've given this a thumbs up. Largely seems to be that both the domestic investors as well as foreign investors waiting for a turnaround in the stock as well as in terms of financials this year. And if you talk about street credentials enough, because taking the retail investors into consideration, it has given good returns to them as well. In the last 1 month, 16% is the kind of up move that you've seen on a JK Tyre. Last 5 years, 6.6 times is the downtake that you've seen as well. But at least from a 1 month perspective, a good up move. 6 months as well. So the trajectory over the last 6 months has started pretty positively. Yes, definitely. And, in terms of when you look at the valuations as well for JK Tyre and effectively in this particular point of time and, just a slight correction that it's actually been up 5.6 times over the last 5 years. So stock has, and largely it got impacted because of the pandemic. But there is one in terms of, the valuations priced attractively to say the least, because we have seen largely an absence of growth in FY25. Currently, the PE is roughly between 12.6 to 13 times price to earnings for 1 year forward in terms of valuations. And this is largely in line with what's happened in the 5-year term as well historically. So the street seems to be just waiting on the sidelines to see that the company's large measures that they've done actually result and come into the financials as well. So we've given this a thumbs up compared to peers which trade roughly between 18 to 22 times price to earnings. This does give the comfort of the absence of growth, and once growth comes back, you should start seeing that valuation perk up as well.
Valuation should perk up, but if you have to talk about the street credentials in terms of the coverage, 4 buy calls, 1 hold, an average upside of around 9%. So not major brokerages that are covering the counter right now, and hence a neutral rating.
And that largely seems to be, the key aspect, right? Because we have seen foreign investors holding it, but absence of brokerage in this particular time or point of time as well.
So whether you have further coverage that comes in initiations is what we need to see. But very quickly, in terms of your first 4 parameters, your income statement, cash flow, return ratios are a neutral. It's your balance sheet only, which is a thumbs up, which is a very good strength. Your shareholding, street credentials, valuation, again, a thumbs up. Your coverage is slightly neutral over here. So an overall 6 on 8, which is also a very good rating that we've given JK Tyre, Puneet.
And we are very stringent with the rating, so definitely key one aspect as well. But we did have a chance to speak to Mr. Anshuman Singhania. He's the managing director of JK Tyres, and we did visit the company at the shop floor in Chennai, a key factory which is almost 40% of his exports. Listen in to what he had to say. My first question largely about this facility, because it's almost 20% of the company's revenue, but very importantly, as you also mentioned to us, that it's almost 30 to 40% of exports that go from this one facility itself. Talk to us about the importance of the facility as well as the kind of technology investments that you've done over the last decade or so in this, which will lead to your international operations as well from the exports from this facility.
Sure. We have invested almost around 2,600 crores in this facility, and we are here making truck radial tires and passenger radial tires, which we are catering to the domestic and exporting as well. So here we are making a lot of premium range tires in the truck space and even in the passenger space, which we are serving in the domestic market. And here our premiumization has been one of the key drivers to enable us in terms of putting capacities. We are also having almost around 1,400 crores investments which are currently going on in our 2 locations, which will start ramping up from Q3 onwards. In terms of our markets in export, we are exporting to about 100 countries. We are exporting to UAE. We are exporting to Brazil, Latin America, Mexico, and also new markets in EU and UK. And we would be one of the largest exporter for truck radial tires from India in the EU and UK as we speak.
In terms of international operations, and we are actually seeing one of the major processes about this one as well in terms of truck radial tires. International operations has been one of the most focal points for all tire makers. Roughly for you, 16% comes from the export market. How do you see the medium-term trajectory of this? Because we are seeing one of the key on-sites of Europe demand coming back as well. Do you feel that going forward specifically, you will be one of the big beneficiaries of this, and with this new plant, a lot of that will be serviced with?
Yeah, with our capacities coming in stream, not only for the domestic market we'll be able to cater, but we'll be able to export as well. And as I said that our EU and UK are new markets. We are making a lot of development sizes, for those markets, and there we are a very negligible player. So we will have a lot of headroom to as we go forward to play in those markets.
Specifically, one of the key aspects, in the early 2000s was acquisitions by the tire makers in international markets, both to gain technology as well as to gain capacity in those markets. You also done that with Tornel in Mexico, and you have 2 facilities there operating as well. Talk to us a little bit about, your perspective of acquisitions, if any, in the future, because we seem to be that Indian tire makers seem to have grown leaps and bounds with technology so much, including yourself, that you all don't need to actually do another technologically enabled acquisition. How do you see that tire industry has evolved, and if you can talk to us about JK Tires as well with that aspect, and what do you feel in the near future? Will it be brownfield capacity expansion similar to yours?
So look, in terms of our capacity increase, here we are equipped for a brownfield in all our locations for the time being, and international acquisitions are very tempting. We are always on a horizon to look at international acquisitions. As you said, that Tornel has been a very successful acquisition where we have turned around the whole company, Tornel Mexico. Here we are always looking out in the horizon for newer opportunities which come by.
But largely, would you say that you all don't actually need to do any acquisitions, which would be very, at least in the current market scenario, for absorption of technology? And India has, with yourself as well, in the tire space, done a lot of innovation enough now, so that, and we could drive that in the future?
You see, it's just not about the technology acquisition. It is also serving the market faster. We have been very successful in turning around acquired companies. We've acquired 3 companies, and we have turned it around in no time. So technology, yes, plays a very important role, but serving the market in terms of a ready facility with an upgradation also plays a very important role.
You were the first, pioneers essentially into radial tire space, launched back in 1999 for you all. And since then, now I think 2/3 of the market has become radial in terms of the trucks and buses. Do you expect that share will continue to grow substantially? And how does that, augur well in terms of the new investments that will be going in those for the international market as well? Do you think that for the international space, it will largely be the radial tires that will be getting absorbed as we see in the market?
Largely, well, I'll break this up into 2. One is the commercial, which is the truck tires, and the other one is the passenger car tires. In the passenger car tire, right now in the international market, it has almost become 98 to 99% radialized, and so has India. And but coming to the truck radial tires, right now we see that 56% is in India radialized, and rest is bias, non-radial. We have a feel that the bias is going to remain at a long run also. Long-term bias is going to remain because India still is a very price-sensitive market, and the applications in which the bias goes, namely mining application, even the construction application, their bias is still going to be staying. Well, in the international market, radialization in the truck space has happened more in America, more towards Europe. There are some pockets where truck bias tires are still at a play, where we are also participating.
You did mention about realization in America as well as in Europe, and I just want to pinpoint Europe for a bit because it's a huge market for the tire industries. What is your current share, if any? You can give us some perspective on Europe specifically. How much is your revenue in terms of percentage that comes from there? And do you expect that we'll start seeing a revival, because that market has been depressed for almost the last 3 to 4 years? Do you expect that will be the next growth engine coming back for the tire industry, and what would that be for you?
Yeah, so as I said, that Europe is a new market for us. we will be certainly developing a lot of new sizes for the European market. And there, I would say that we are a very, very small player in terms of the market share. And we would be definitely developing that. But from India to EU and from India to UK, we are one of the largest exporters in terms of truck radial tires.
So you should be seeing a big benefit because of the FTAs also, right, which have now been coming in for.
Yeah, sure. The FTAs are also giving the Indian producers a good advantage over rest of the other countries here, and we will surely be taking advantage of that.
You mentioned about truck and bus retail because that's almost bread and butter, 50-55% of your revenue. But the passenger car space has also been very, very prominent for you. Over 30% of your revenue comes from there. We've seen, GST rate cut that will benefit all automobiles. Do you expect that could grow faster? Because we are starting to see a lot of offshoots for the commercial vehicle space as well. So how do you see those in the current demand conditions for India specifically?
So I think GST has been a very welcoming move from the government. And GST brings in a lot of cash in hand for the consumer. And the consumer-facing goods like passenger car tires, the 2-3-wheeler tires, and even the farm tires will definitely see a good positive flip as we go along. And even in the commercial vehicle, there will be a lot of movement. And we measure it by BTKM, which is billion ton per kilometer. And there we have seen there is a sharp increase in terms of percentage, which is an indicator of freight movement. And with this GST, I think there will be a lot of movement amongst our major highways with our large and small and medium transporters. So there is a lot of positive growth coming in from there.
So that's the management, in conversation with Puneet as well. But clearly, Puneet, the company has indicated they're very small in the European market, and that's what they want to develop, a big beneficiary of trucks and bus exports from Europe, to exports to Europe from India. So that's the business that investors should be looking at as well. But completely out of time. But that's it, it's a wrap on this edition of Know Your Company. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
से ज्यादा की बचत होगी? और तभी तो मैं कह रहा हूं ये बचत उत्सव है। हम वो सामान खरीदें जो मेड इन इंडिया। हर दुकान को स्वदेशी से सजाना है। जब ये होगा तो भारत तेजी से विकसित होगा।
Hi, thanks so much for joining in. You're watching NDTV Profit. At the onset, let me wish all of you a very happy festive season, a happy Navratra to everybody tuning in. And as you can see behind me, I'm at an electronics store. Today is D-Day. It is the day that GST 2.0 rolls out. And I've been thinking for a while, I need a new phone, I need a couple of new gadgets. And I usually am the tech guy. I go and spend on tech that I don't really need. But incidentally, my co-anchor Mahima has been browsing a couple of sections here because I think she wants to figure out what to buy. I've never seen her so excited about tech before, and the reason is that it's all gotten cheaper. Quite a few of these things have gotten cheaper. Let me go across to her and find out what she's looking at. Mahima, what have you been looking at?
Right, so a couple of things, Alex, that I'm looking at right now. Of course, the first three things where we've seen GST cuts coming in from that 28% mark to 12% mark. The first one being TV, more than that 32-inch. Something like this, yes. And then you have your ACs and dishwashers. So people who are worried about washing dishes at home and who have no maids will be happy with the GST cut that we've seen. So these three things, of course. And of course, we've not seen any GST cut on phones. But yes, I think iPhone 17 is something that people are looking at right now for sure.
So that's one. So on the one hand, you have the GST cuts. On the other hand, you have festive offers that kick in.
Exactly.
So it's a great time to be going out and figuring out what you want, get your lists in order. But it's not just consumer electronics. And we'll be speaking with the director of Vijay Sales very shortly. Mr. Nilesh Gupta is going to be joining us. But we've also got conversations lined up for you to talk about the automotive space and also the snack space, because all of that is getting cheaper. Let's run through the list very quickly. What gets cheaper today?
So a lot of things, like from a toothbrush in your bathroom to a butter in your fridge, everything gets cheaper because that includes a lot of milk, dairy items, that includes your paneer, chocolates, ice creams, butter, cheese, etc. So that's from the staple pack. You're also seeing snacks getting cheaper in terms of where they were at 12% earlier will now be charged at 5% mark. Apart from that, you have your clothing, apparel below that 2,500 mark will go down in terms of where GST rate stands to that 5% mark again. In terms of where your hotel industry stands in terms of the consumption space, well, where your ticket size is below that 7,500 mark, that gets cheaper too. So a lot of items for sure, Alex, getting cheaper from today, and this marks the onset of festive season as well. Navratri kicking in, making things cheaper. And that'll, in general, boost demand.
Yeah.
That's what we've been hearing from analysts and management as well.
And also people on the ground. We've got from the automotive space, Mr. Sandeep Kumar Bafna, who's the chairman and managing director of Fort Point Automotive Cars. Sir, thanks so much for taking the time. Mr. Bafna, can you give me a sense of the offers that are currently underway? And of course, today is the day when all of those prices tick down. What is the kind of initial response that you are seeing? Do you see feet on the ground? And what is your anticipation for sales this festive season?
So let me start with two-wheelers. We are dealers for Hero. Suddenly, there has been a spike in inquiries. And in fact, today we are expecting a lot of payments to pour in for the Hero bikes. In fact, we've launched also 2-3 new products, and which were in waiting for such a long time, and that now would change the whole concept of things which are going to happen. On the car front, we are dealers for Maruti. In Maruti Suzuki, as you are aware, that there is a reduction in GST, plus the company has also reduced prices, which came to us as a big surprise. We thought that just the GST benefit would go to the customer, but the company has also reduced their prices on the product. Along with that, even though it is up to December only, but I feel that along with that, they will give a lot of other discounts and benefits which are also coming in. Financing has becoming is becoming cheap. Today, Mahindra Finance has announced that there won't be any processing charges from today onwards up till the end of the season. So I feel that, this whole thing
It's
is
a combination of the prices going down on account of GST, as well as the discounts that are kicking in from the festive side, a lowering of the processing fees. All of that is exciting, to say the very least. I'll come back to you in just a bit. We're joined in store right now by Mr. Nilesh Gupta, as I've pointed out. Nilesh, thanks so much for taking the time. It's an exciting time because I think normally on a Monday at 12 o'clock, it's not as busy as it is today. It's deserted, and today is a different story. Can you take us through where you think the biggest excitement is going to be after the GST cuts and coupled with the festive fervor that you would expect?
So I think this time is going to be a double whammy. One is the GST cut, and second the festival also. Plus, last 15 days have been very poor because people who are waiting for today onwards to buy. So I think the basic action is going to be in last screen televisions, because there, in rupee terms, is the maximum.
What is it like?
In last screen televisions, it is nearly 15 to 18,000 rupees, which has come down 65, 75 inches and above. So in rupee terms, it's really big. Air conditioners, it would be there, but air conditioners, we'll have to wait for the weather to be on the favorable side. Be on the favorable side.
Yes.
But even dishwasher, that's a category which we saw in the rise after COVID. I think that's something which will become a staple food, like how everybody has washing machine in the house, a dishwasher will also come in.
Those are where your flat screen TVs are, the
Yes,
big ones, right? So let's walk across to that segment as well while we're talking about it. And Mr. Gupta, really the question that I have is that alongside all of this, there is a call by the Prime Minister to make local and to buy Indian.
Yes.
There are more technological products, more consumer electronics that are being made in India, but there are still a lot of manufacturers that make outside and sell here. So in the catalog that you have, do you have more products than you had 2 years back that are made in India?
So now if you see in the last 3-4 years, the government ensured that all these products, 90% of them are made in India.
Okay.
Because they made it impossible to import because the duties were high. So everybody has set up the factory. You see in our industry, a lot of factories have been set up. So all the televisions which you see here, except for the last screens, very, very last screens, 100 inches and above, which is minuscule sale. It's all make in India. And even the 100 inches in few factories, a few brands are assembling here. So everybody is having make in India, even if you see Apple phones.
Yeah.
Most of the phones are now make in India. In fact, we are exporting it also. So accordingly, I think everything what you see here is, if not 90%, at least 75-80% is make in India.
Absolutely. We'll come back to you, Mr. Gupta. We're also joined by Rishabh Jain, who's the CFO of Bikaji Foods, joining us now. Mr. Jain, hi. Good afternoon to you, and thank you so much for joining. Just want to understand the demand that we're seeing in the snacking space. We talked about how auto space is picking up, how consumer durable space is picking up, but snacking is one industry that, when I was speaking to one of the FMCG analysts, he said that snacking is going to be that one industry that's going to see a lot of demand boost because of GST 2.0. Your view with regards to the demand that's coming in already?
So we are also expecting the same. So it's a peak Diwali season, and we see a lot of gifting and all during this season. And there is good cut from 12 and 18% to 5%. It's more of simplification and ease of doing business. So we see that it will be good Diwali this year for all the snacks later.
Let me ask you this though, when you're talking about the price points where there is going to be an impact for GST in the snacking space, the expectation is that these are all small ticket items. So as manufacturers, would you say that it's easier to control it with the grammage, and on the packet you're not likely to see too big of a change, and so therefore the question is, how does that bolster demand?
So basically we have two type of overall packs. So family pack and impulse pack. So family pack is all about 20 rupees, which is 200 grams, 400 grams, which are MRP driven brand. So we have reduced MRP from today, and for in impulse pack we increase grammage. That's what we're doing, and we are committed to pass on completely to the consumers. That's what we are targeting.
Okay, Mr. Gupta, coming back to you, last time when we spoke, we were talking about how, you are confident that this time you'll do a 20% growth apart from what you did last year. Considering now that, pre-bookings would have probably come in, do you think that 20% can be higher?
No. 20% will not. See, 20% was also a very large goal.
Yes.
So I think even if you achieve that, it's a great thing. But now the expectation is we will be able to do it 20% because what has happened is last 15 days has been very dull. So there's a backlog over there. So that will also come in. So in this period, I'm sure this time 15 to 20% seems plausible.
And what, according to you, will drive that mix? Do you see it changing because, as you pointed out, these televisions get cheaper? Will that
television will drive, mobiles will drive, laptops will drive, and appliances traditionally is a Diwali product. So all refrigerators, washing machines is also going to drive. And if weather supports, normally in this part of the country, west part, November is a mini summer. Second summer. So if that happens, then with a 10% reduction in the GST, I think AC will also kick off.
Do you think the premiumization part will also pick up from here on? Because now we're seeing, some products getting cheaper. Do you think a consumer would want to move towards a more premium TV or, a better energy efficient AC?
So that was always happening in the last post-COVID, but now it's going to take more further ahead. For the simple reason is a person who was planning to buy 55 now will think of buying a 65, and a 65 guy would move up to 75.
Exactly.
Okay, I do want to ask about that same question to Mr. Bafna because, Mr. Bafna, you were pointing out that there are more inquiries, but in the two segments that you mentioned, in the two-wheeler space and in the four-wheeler space, for Maruti Suzuki, they are anticipating that the small cars will really see a bump in demand. I'm just wondering what you're seeing on the ground.
So actually what has happened is we've seen in the last couple of days a lot of two-wheeler customers walking into our showroom, and after the price reduction announcement 3 days ago by Maruti Suzuki, the product like Espresso being below 3 lakh rupees, customers are moving from two-wheelers to four-wheelers. I mean, they're at least inquiring, and at least 10% to 15% conversions should take place. So I feel that a lot of upward movement and upward movement in the four-wheeler industry and from the two-wheeler to four-wheeler would also happen. Along with that, you see that the 100cc motorcycles, now people are moving to 125cc with this price reduction. So we find that the inquiries in the 125cc also has increased. With Hero coming out with the new Glamour, customers are instead of going for the Splendor 110, they're moving for the 125cc. So you see that whole upward movement has started, and I feel that this would really break a lot of barriers, which earlier customers were not thinking of buying a four-wheeler are now moving towards that. And in the rural segment also, we are seeing a lot of inquiry growth.
Excellent, and it's great to hear that from a dealership that is representing both the largest car maker as well as the largest two-wheeler manufacturer, among the largest two-wheeler manufacturers. But speaking about auto and speaking about premiumization, we've got a ground report for you from Tamil Nadu, the implications of GST 2.0 rolling out. Sam Daniels has this report. Check it out.
The price of cars have become cheaper with cut in GST from the earlier 28% to 18%. The industry is optimistic that this could encourage first-time car buyers to go for it this festive season. The GST on electric vehicles too has been brought down to 5%, triggering excitement that this could actually spur purchase of EV cars. With me, Niranjan, a health and fitness coach. Thank you very much for your time. What would this mean for first-time car buyers?
So this is definitely a very encouraging move for the first-time car buyers. I think car rates have come down and it has put the cars in an accessible range for the first-time buyers.
You think this should have been done long time ago? The opposition says the Indian consumers have paid 50,000 crore as GST so far.
I mean, you would always be happy if the cars were cheaper even 5 years down the line, or 5 years earlier. But better late than never. I would say this is a welcoming move. If it had been done earlier, yes, well and good, but still better late than never.
Is this eyeing elections?
Oh, I would say elections are still quite a time away, but looking at the roadmap, yes, I think elections are 4 years down the line, and especially with the BJP not getting a very strong mandate this time. Yes, they are at power in the center, but it was not a very strong mandate compared to the previous 2 terms.
Right.
So I think all these moves are more people-centric.
Right. Thank you very much. And car dealers say ever since the GST reforms were announced, they've been experiencing a slump in bookings, and now they hope there could be revival of demand for cars. Thank you very much, Mr. Sankara Pandian, the team manager here.
Yes.
How are the bookings now, and how was it over the last 2 weeks?
Sir, customers are eagerly waited because of the GST. Now, yesterday night they confirmed everything. So, from today onwards, the booking expected as more than the actual. We expected the best result from every dealerships.
What kind of price cut for your models, be it Sonnet, be it for Seltos?
Sir, in a category wise, government has decided 2 categories of GST. It is 18% and 40% for cars especially. But 18% it is a highest margin to every end user or the customers. For example, if it is in a 10 lakh worth of car, they can save up to 1.3 lakh rupees straight away from GST. Plus added benefits available for festival seasons. So customers are really happy with that. We expected more number of booking coming days.
So it's going to be bumper festive season for you now. And for electric vehicles?
Exactly, sir. But electric, they maintaining the same for 5%. So there is no ups and downs. But electric is a future.
Thank you very much for your time. And dealers expect a bumper booking this festive season. And customers can't really wait to avail this GST tax cut, which have just made cars affordable.
Okay, so that's the ground report coming in straight from Tamil Nadu, and dealers are expecting a bumper booking season is what the word is coming in.
Bachat Bonanza.
Bachat Bonanza, exactly. And speaking of Bachat Bonanza, Mr. Gupta, we were talking about how people will be able to save on large TVs. But considering that this savings will happen, I believe what Alex was indicating was that small items will also pick up sales, because the moment they save in some item, they would want to spend that in some other item. What is your expectation? What are the other items that you're seeing demand spur up in?
So this time what we are seeing is a person who would have not wanted to buy a television this Diwali. Will buy because he'll say, oh, I always wanted that 75-inch television. So he'll come and go. And whatever he was planning to buy, whether it's a refrigerator or a mobile, he'll buy. And secondly, when he comes in the store, and because he's going to go for EMI, so there are full chance that if he had come to buy a 55 inches, he'll upgrade to 65 or even 75. And likewise, it will go up. Plus, then possibly he may also look out for a headphone. Because today in television, the most important thing is at night when one is sleeping and one is watching, the problem is what to do with the sound.
But the question is, that's an interesting point that you raise, which is a lot of people are buying white goods with a credit card or with an EMI. So what is the mix right now for large ticket items like phones and like televisions, as you pointed out?
I think 70% of our sale comes from EMIs. Okay. Whether it's a credit card or a plain paper finance. And 70 to 75% is coming from EMI.
And this is across... I know this is for you, but would you say that this is the trend across the industry as well?
In fact, people don't want to pay down payment. People are only looking out for zero down payment, zero processing fee schemes.
Even in terms of, the overall discounting that's taking place, because we have a lot of online platforms giving big discount, festive season discounts. Can you give us a sense in terms of the average percentage of discounts that we're seeing on these electronic items?
See, basically, anywhere between 5 to 15-20% is the norm which is happening. But more than direct discounting, it is the EMI schemes which are being more sweetened. As I said, zero down payment and a longer tenor. Now it's no longer restricted to 8-12. It's going to 18, even 24 months. And in the case of one brand, Sony, they give pay by screen size. So if you're buying a 55 inches, you have to pay 5,500 per month.
Okay.
So it goes up to that size. So accordingly, what is happening now? This is also another form of discount. Then there are exchange offers which comes up. So in mobile, you'll always find whatever your value of the mobile is there, plus there's a bump up of 2,000, 3,000, 4,000. So all this forms a part of a discount. And this is what Diwali makes so big for our industry.
Okay, interesting. One more question that I had with you was with regards to where e-commerce and quick commerce trends are picking up, right? Because I recently a report came out which said that DMart Ready and Amazon now has the highest average discount, which is at 23%. So this might not impact the larger appliances, overall, but smaller appliances, for example, a mixer grinder might see some kind of impact there. Any trend that you're picking up?
See, frankly speaking, wherever there's a maximum discount, possibly they are not the best of the brands which the consumers would want. There will be selective brands where the maximum discounts are happening.
Correct.
So for those consumers who just want a temporary or they are looking for discounts, yes, that becomes a go-to. But otherwise, a consumer normally would want to buy, and as we are saying, premiumization is happening. So in premiumization, even the brand premiumization is happening. A consumer wants to go in for a better brand also.
Right.
Interesting. Okay. Now, in terms of the other ground report that we are bringing to you is with regards to a ground report that's coming in from Rishabh, who's spoken to somewhere in Karol Bagh with regards to where Bikaner Wala stands. Listen to what he has to say.
Right, bright and early here at Karol Bagh. We are at the prominent corner location of Bikaner Wala in Karol Bagh on the morning of September 22nd, which is when the new GST rates kick in. And as you can see behind me, you have the poster put up by the restaurant that says GST Uphar, which translates to a GST gift. And it does say that saste hue cakes, pastries or namkeens, which translates to cheaper cakes, pastries as well as savory items. Let's head inside and figure out what sort of benefits will be passed on to the consumers with this. Right, I'm joined by the management of Bikaner Wala here in Karol Bagh. Sir, आज से सितंबर 22 हो गई है, नए GST रेट्स आ रहे हैं. आप किन किन प्रोडक्ट्स पे कम हो रहा है रेट और आपकी क्या उम्मीदें हैं?
हमारी नमकीन जो 12% थी वो अब 5% पे हो गई, तो 7% हम लेस कर दिए उस पर. और कुकीज़ वगैरह जो 18% में आते थे वो भी 5% हो गए, तो 13% उसको भी हमने कम कर दिया है. MRP अभी फ़िलहाल वही लगी हुई है, लेकिन हम कस्टमर को जो बिलिंग कर रहे हैं वो लेस करके ही कर रहे हैं.
तो एक बार हम स्टिकर प्राइस और बिल देख लेते हैं सर. तो जैसे आप बोल रहे हैं बिस्किट्स, नमकीन, केक्स वगैरह पे जी
ये लगे हैं. ये कुकीज़ है, इसकी MRP है 144. जब हम कस्टमर को दे रहे हैं, ये बिल है इसका 144 का 128 का दे रहे हैं. 13% इसमें हमने लेस कर दिया है.
इससे आपको क्या लगता है कि और कस्टमर का जो डिमांड है वो बढ़ेगा?
बिल्कुल बढ़ेगा जी, नेचुरल बढ़ेगा. अगर कस्टमर का पैसा बच रहा है तो वो कहीं न कहीं खर्च करेंगे ही, खाने पीने में और में सब चीज़ों में करेंगे वो.
और आज तो पहला दिन है इस GST रेट कट का. यही चलता रहेगा आगे तक? आगे फेस्टिव सीजन भी आ रहा है.
बिल्कुल आगे भी यही चलेगा. हमारी उम्मीद है कि ग्राहक आए और अपना पैसा बचाएं और ज़्यादा से ज़्यादा मिठाइयाँ, नमकीन, बिस्किट्स और ये खरीदे, ताकि अपने बच्चों के लिए भी दिवाली पे और पे नवरात्रों में ये सारी चीज़ें घर में ले जाएं.
Right, there you have it. All sorts of GST rate cut benefits being passed on to the end consumers. You have savory items that are getting cheaper, about 7 to 8% at least. Shops starting today, starting September 22nd, have started passing on these benefits to the customers, and they have done so in hopes of higher footfall and better traction ahead of the coming festive as well as wedding season.
All right. Well, thanks so much, Rishabh, for getting us that update. It's certainly given us some food for thought. And the other thing that, of course, we've got is our list of things to maybe look at buying. Of course, that depends on what your EMIs this month are. Mahima, I'll ask you that after the show is done. Nilesh, thank you so much for joining us today. And of course, Mr. Sandeep Kumar, thanks so much for joining us as well. And viewers, do stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है. एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया.
प्रणाम दादाजी.
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं घनश्याम दास. इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है.
जो आगे की सोचते हैं ग्रो करते हैं. डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO.
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं.
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूँ, उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
everyone, welcome to NDTV Profit. A very good afternoon to all the viewers here watching Profit Buzzers. I'm Hiral Datia and with me is Anushi Vakaria. Interesting day of trade. The range in terms of the markets remains absolutely narrow. You're talking about a low point of 25,211 on Nifty 50 and a high point of around 25,331. 100-point range is where you're trading at, right? So the breadth seems to be pretty much narrow. No major moves that are coming in there. We started off the day really at the day's lows. There has been that recovery, and from there, a pretty range-bound session is what you're seeing. Let's quickly look at the Bank Nifty as well on the screens and see what Bank Nifty is doing in trade. And then we'll look at the contributors. Bank Nifty, though, there is some bit of encouragement there. 0.1% higher, but has receded from the day's highest levels. If you look at the sectoral heat map, and then we'll look at the Nifty 50 contributors, because that will tell you what's weighing in. It's IT that is weighing in today as well, though has recovered slightly, but still down almost 2.7% in trade. The top losing sector on the back of the H-1B visa fees that have been hiked, and that is what is putting pressure. Though a lot of brokerages are of the opinion that this is not going to be a major reaction. So don't be surprised, if there is a recovery that does come in the couple of days from here on. Pharma under pressure. Defense also seeing, some bit of meager moves, but energy, you have real estate, media, consumption, metals. These are the ones which are actually gearing up in trade today and taking GST 2.0 that comes into effect today. It is the GST bonanza. It is the dhamaka that has creeped in, and that is what is keeping consumption on a high today. Let's quickly look at the contributors in terms of Nifty 50, because that will give you a fair bit of an idea. You're in between your breadth as well. Your reds are pretty higher as compared to your greens on the Nifty 50 heat map. But to add to this, let's see the contributors. That will give you a better aspect and trend in terms of what's losing out. Infosys, TCS, Tech Mahindra, all three IT heavyweights are weighing in, and that is what is pulling your Nifty lower. What is providing support today is a Zomato, HDFC Bank, Bajaj Finance, and Adani Enterprises. In fact, the entire Adani group of stocks have been buzzing in trade for a second or third consecutive session after the SEBI order that has given the Adani group of companies a clean chit as well. But broader markets also pretty interesting, Anushi, because a lot of stock-specific action that you're seeing, a lot of smaller sectors on the back of GST benefits are seeing a tailwind, but there are negative sectors as well, like the shrimp exporters, which are seeing pressure on the back of the additional tariffs that we're talking about.
Yeah, absolutely. We are seeing some bit of that impact playing out, with counters like Apex Frozen Foods, Avanti Feeds and Focus, which, derives about 70 or rather 55 to 60% of their revenue from North America as well. See, you can see Avanti Feed down about 3%. Now, if you just take the overall broader markets in consideration, just let's pull out the advanced decline ratio, you'll see that it's mostly a mixed sort of a market that we're looking at, with declines slightly outpacing where the advances are concerned. There you go, about 1,261 declines in comparison with how the advances are faring in trade today. In fact, if you look at the Nifty mid-cap and the small-cap indices, majorly flat reactions are what we are looking at in terms of both of these indices. Small-cap 250 being down about 0.3% right now. Let's see the BSE 500 as well to just get a gauge of what the stocks are doing specifically. You'll see a lot of these Adani names emerging right on your screen, just as Hiral spoke about it earlier as well. So that's where, where the broader markets are going essentially, Hiral, but the main story remains on IT, right?
Absolutely, IT remains to be in focus, the top losing sector. In fact, Puneet here with us to tell us more. Puneet, clearly, if you talk about Trump H-1B visa, fees that have been hiked, a lot of clarifications that have come in as well, a lot of sectors that have been exempted. For example, you have pharmaceuticals, which goes up as well. But before we head across to Puneet, let me take this question with Prashant Tapse, Senior VP Research Analyst at Meta Equities. Prashant, welcome to the show, and always a pleasure to speak to you at NDTV Profit. IT as a sector, the top losing sector, though a lot of brokerages have been of the opinion that this is not going to be a major hit, but the sector apparently drooling under pressure. Would you advise investors to actually buy and take this opportunity of the fall as a positive?
I think the near-term outlook remains very blur and volatile. But I think the way how Trump has been giving such kind of statements every weekend, so again in a very short period of time, there will be more clarity on that, and impact on the index will be very minimal. So even I am with the other brokers who are very much neutral to positive on such kind of announcement. A sentimental impact, obviously the price has already corrected by 2 to 5%. So yes, as a trader, I would like to have some kind of opportunistic stick stocks which like HCCL or Tech Mahindra or Infosys. These stocks looks good me on the technical chart, but overall on the fundamental impact on the earnings, obviously we have to wait and watch.
Okay. In fact, you know, as we know, US President Donald Trump slaps this $100,000 fees on H-1B visa applicants. Let's quickly listen into what Santosh Rao also had to say.
H-1B, that's been a political football for a very long time. It's very visible. They see a lot of Indians and foreigners in the IT field, and that becomes an easy target, saying they think they're taking away all the jobs. It's far from the truth. It's absolutely, the H-1s have been net positive to the US economy. They add to the tax-paying base. They increase overall. They've been it has been abuse on the margins. So maybe they need to correct that, but hopefully at some point things will be rational and they will understand the benefit of it, because jobs can leave the country and go outside, which is a big risk. And I spoke to a few people who hired H-1s, and they corrected this. They saw this way back, and I think you mentioned that in your reports. They saw it way back. They said they don't have any H-1s coming from India. They hire students coming out of college and working here, go through the system, H-1 and OPT and all that stuff. So they're doing it the normal way, and that's the majority of their staff. So I think companies are ready for it. It's not going to have a big impact. The impact, if there is any, you'll see it 3 to 4 years down, where maybe jobs go to India and maybe jobs increase here. So we don't know which way it's going to go. So we'll have to wait and see for the immediate impact.
In fact, addressing on the same issue, Kenneth Andrade, a founder of Old Bridge Mutual Fund, suggested waiting on IT stocks amid near-term challenges. He in fact said that IT companies' financial strength will help them overcome the current pain. Let's listen into that as well.
I mean, inaction is better than action at this point in time. Okay, and there are points in time in your investing journey where sitting quiet is the best thing that you should do. And I think that's the time now. Either which ways, it's left to businesses and business models to define as to how they want to build it forward. Capital with these companies are never an issue. So keep them in your portfolio because they got the financial strength to ride this out. Keep them in the portfolio because they've been through multiple cycles where they've come through stronger. I wouldn't want to rush just because there's a correction and build on it, simply because you can't build a business model with this kind of uncertainty. At least from an investor perspective, I can't see how individual companies will go out and build this business model. So there will be companies that will do it, but as an individual investor, I can't see which one is going to do it and build it out successfully. That will take a couple of quarters to figure it out. So I think that's where we are in our thought process on how to approach IT services companies.
Okay, so that's the word coming in of what one should be doing with IT, but also let's look at what brokerages are saying in terms of the impact. My colleague Puneet is with us. Puneet, Trump clearly targeting H-1B visa. There are a couple of clarifications that are coming in as well. And what are brokerages making out of it?
Well, largely, as you rightly mentioned, that they're not seeing a very meaningful impact because from 2016 onwards, a lot of IT companies began to reduce their exposure to H-1B. Now, that was largely led by onshoring as well as hiring local talent in US, as well as increasing the exposure of offsite with GCCs as one of the key growth areas as well. So largely when you see Investec as a brokerage firm, they mentioned that they don't see any meaningful impact. But a couple of key points that they've made, they have mentioned they're expecting a potentially higher US wage inflation going forward. They're also seeing that operating models for all these IT companies will start to see changes and undergo meaningful changes going forward. And they're expecting that a higher local hiring for someone like the IT companies like TCS amongst others and higher on-site wage inflation will likely impact margins, at least in the near term. That's what the key aspect that Investec is making. Someone like a Citi as well, largely, we have spoken to the analyst on our channel multiple times, Mr. Surendra, and he seems to be highlighting that there are pressures for the IT space as a whole. whole. They're seeing multiple potential impacts because of this. They've highlighted that the cost of doing business is largely expected to go up, but this will be passed to clients probably with a lag, and hence you could see some impact on profits because of that. Higher nearshoring as well as offshoring, which essentially means that you will hire in India and they'll be working for those clients in the US as well as GCCs, is a very likely outcome. That seems to be a common theory amongst others, and their margins will of course get impacted because of that as well. The last key point that they're making is, the competitiveness in the global context doesn't change, and that seems to be another key point, that we are one of the lowest cost IT services companies essentially. So that will be a a strength that will continue to maintain as well. Finally, in terms of brokerages, I want to highlight Jefferies as well, because they've highlighted that 7 to 12% of the business will be renegotiated in the next 3 to 5 years. And they've highlighted that a change in operating model is likely for the Indian IT companies. And that seems to be a gist of a clutch of brokerages making some key points. So while near-term impact is limited, once the clarity emerges, operating models of all these IT companies will start to see a change. And that will be the other one to watch out for how this happens going forward as well.
Right, so that's with regards to where IT impact goes, and if you see the kind of stock reactions that are coming in, pretty interesting. But moving on, Adani Power, now that stock is in focus on the back of the share split that is happening, but your Adani group of companies have been buzzing on the back of the clean chit that has already been given by SEBI. Adani Power locked in upper circuit 20% up move in today's session. In fact, let's get in Varsha to tell us more about what's happening. Varsha, over to you.
Well, thank you so much for that. So yes, shares are trading at X stock split, and this was announced a month back. So each fully paid up equity shares has been converted into 5 equity shares. That's the stock split, and all this actually improves the liquidity, the stock's liquidity, and that's what we are seeing as of today. But let's talk about the positive key triggers for Adani Power, wherein they're going to expand their capacity by 2.5x. This is by FY32, and analysts are expecting that the market share will also increase from 8% to 15%, and the EBITDA, the expansion in EBITDA is expected at 3x by FY33. So all this, the planned capacity expansion, the EBITDA, the tripling of EBITDA by FY33, these are all the positive key triggers when it comes to Adani Power. And also the stock split is of course the reason why the stock is up today, but these are also the near-term triggers for this company, and one of the reasons why the stock is buzzing as of trade today.
Well, thank you, Varsha, for joining in. In fact, let's just pull out, some of these stocks which are in focus. Varsha spoke about Adani Power essentially, which is up over 20%, locked in on our upper circuit. But, even Adani Green, Adani Total Gas, all of these stocks are buzzing in trade today. We're seeing about a 8 to 9% of an upside over here, 19% of an upside for Adani Total Gas as well. Let me go across to Prashant, but standard disclaimer before that, the channel that you're watching is a part of Adani Group company, so do keep that in mind as well. Prashant, coming to you on a couple of these Adani Group companies which are in focus, just want to understand, what's your view regarding this?
So overall, we all know what went good for this group companies. SEBI has given a very clean sheet, and which was morely expected by the market as well. But again, going forward from last 2 days, why these group companies are up again? So I think going forward, the capital raising hurdle will be very clear for all these stocks, and they can raise funds very easily, because this was the biggest hurdle for any group company to get into such kind of a fundraising program. So I think that would be one reason. Again, if you consider the all-time high before the Edinburgh case, I think still majority of the stocks are trading below its all-time high. So I think only Adani Port as well as Ambuja Cement both are looking very attractive at this point of time. And valuation is always a concern, but again, I think Adani Port looks very good for me at this point of time. And Adani Power, obviously, power sector is very optimistic for us as well as the need of the country. Again, the split is giving a lot of opportunity for high liquidity, and a lot of investors can participate in this kind of volume game. So overall, very positive on the sector and positive on the Adani Group.
In fact, on a special segment of Profit Intelligence, we put the spotlight on what lies ahead for these Adani enterprises after the group stocks see a robust demand in terms of today's trade as well. Mahima is standing by to give us an overall perspective on what's going on. Over to you, Mahima.
The group of stocks that's in focus today is the Adani group of companies, of course, and Adani Enterprises out of them, is standing out because we've seen as to how the fundamental triggers are also there here. Currently, if you see, the stock is up over 6% in trade today. In fact, since the Hindenburg case, it's up around 113%. So this, takes us to a question whether a re-rating is required here or not, because right now the potential upside that Bloomberg consensus is suggesting is around 19%. In terms of what are the key fundamental triggers that we are looking at when it comes to Adani Enterprises, the first one is with regards to the Adani Airport, where Navi Mumbai Airport is set to commence operations from Q2 of FY26. The Mumbai Airport, in fact, has received a positive tariff order that provides clarity up to FY29, and this not just includes the airport part of business, but the non-airport side of business as well, which is going to develop the city side and will be a key to unlock value of around 657 acres of land that is in possession as well. In terms of the Adani New Industries, for this particular company, it starts as India's first off-grid 5 megawatt green hydrogen plant. Going forward, wind turbine business has also received first external order of 300 megawatt, and construction of additional 6 gigawatt module capacity progressing is also as scheduled. And plus, the solar PV modules, wind turbines will also feed into Adani Green's business as well. In terms of the Adani Road Transport, the 3 hybrid annuity model projects are more than 90% complete now. In terms of the Ganga Expressway, even the construction for this has crossed around 85% mark. The defense side of business which Adani has, companies, unmanned drones are already being utilized by the defense forces. With regards to this segment, revenue stood at around 1650 crore and EBITDA stood at around 400 odd crore. In terms of the Adani copper business, they've commissioned a smelter at the copper segment, and in terms of this particular counter, they expect full stabilization from Q3 FY26. The other one is the coal to PVC business, where the project is set to be commissioned in a phased manner over FY28 to 29. Lastly, the data center business. This is where they have a JV with EdgeConneX, a global data center operator. Here, Noida data center MEP works is in progress. The Hyderabad data center phase 2 MEP works is around 72% complete, and Pune data center phase 1 works at 85% complete. So this is the these are the various businesses that Adani Enterprises into, and the key fundamental triggers going forward as well.
So much, Mahima, for that. Those are interesting takes that are coming in Adani Power and Adani Enterprises. And just a quick disclaimer that NDTV Profit is a company owned by AMG, which is a subsidiary, the subsidiary of AMG Media, which is a part of the Adani Group companies as well. But moving on, GST benefits have started to pour in. Borosil Renewables becomes one of the beneficiaries as well, because the GST rate has been reduced to 5% from 12% on a couple of the products. Pradeep Kumar Kheruka, Chairman of Borosil Renewables, joins in. Pradeep, welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question, Mr. Kheruka, coming to you is, with the GST rate reduction that has happened from 12% to 5%, what is the kind of impact you're seeing on the company's average selling prices and profit margins? And how will the policy change affect the domestic demand for solar glass? And is the company's current and planned capacity sufficient to meet it?
Thank you for having me. The drop in GST rates on sales of solar modules from 12% to 5% is a very, very welcome step, and this is definitely going to boost demand in the domestic sector. We, of course, are suppliers of glass to module makers, and therefore we are looking at an increased demand coming in. As matters stand today, Borosil Renewables is fully sold out. We have sold all our production. There is demand for it. And we are currently in the phase of expanding our capacity significantly. We have announced 600 tons per day. When I have been out looking and negotiating for equipment, I find that the 600 ton figure is likely to be exceeded. But this is just a discussion. I'll be giving more later once the figures are firmed up. I shall be sharing that. But 600 tons already announced, and the expansion plans are well underway.
Hi, Mr. Kheruka. This is Anushi joining in as well. Just on the point that you were mentioning that you would see more of this demand coming in, want to just understand this in detail in which specific products that we see these demands. And now with increase in demand, do you see that capacity is sufficient enough to meet this?
Okay, so I've been in this business since 2010. And so I've seen movement of solar modules, etc. What has been driving the solar module business is... What has driven the solar module business has been the government orders for grid and so on. Now what we see is that the domestic segment rooftop solar is gaining momentum, which I had been predicting for a long time. It took its time coming, but we can see it happening. The other thing which I'm personally seeing on the ground is that electric vehicles are getting a lot of traction. And for people who are using electric vehicles, they swear by it because it's so much cheaper to run that. Now, where that features into solar modules is that if there is a big demand for garages with solar module rooftops, that could be really a very big game changer. And considering our population, considering the fact that we all need to be mobile, I just cannot predict what the demand for solar modules is going to be looking like. I think it's looking very positive to me personally.
Mr. Kheruka, one quick question. You mentioned that you will see capacity increase from the 600 tons. Earlier, if I'm not mistaken, the plan was 1,000 tons, but it was then cut short to 600 tons because the cash generation had reduced as well. So do you think that the increase will come back to 1,000 tons? Firstly, that was announced way earlier. And two, what is the kind of funds that you will need to get to this phase?
I've spent nearly 2.5 weeks traveling abroad, meeting with different machine makers, and we're getting all their prices. So we're in the midst of firming up the final cost of the project, and I think by the time, maybe in the next couple of weeks, we should be having a firm picture about the total outlay, the total expansion in capacity, and I will certainly share that with you. At this moment, to say anything more would be speculative, so that's not a good idea.
Fair enough. Mr. Kheruka, just want to understand on the import scenario as well. Now, from what I understand, still a decent amount of imports that you currently have of solar glass. Is that still a dependency that you see, or are you seeing a correction now in terms of that?
Solar glass imports of solar glass remain very high. That means the manufacturing of modules has increased a lot and continues to increase. So as far as we can see, the market is sort of wide open, and Indian manufacturing is at an all-time high. We have the highest production capacity in the world after China. And so I believe that this is something which bodes very well for India, for our manufacturing sector, and for renewable energy generally, and for cutting down on import bills. All of this it looks very positive.
Okay. Mr. Kheruka, a quick one. So what's the kind of volume growth you're envisaging for FY26 and maybe the first half of FY27 just before your new plant comes in as well?
So the FY26 should be maybe significantly higher than what it was in FY25 for two reasons. One is that production from the existing plant is going on ramping up. That's one. And the second thing is that the prices have risen significantly between the very depleted and we were very underpriced in the past year. So this year's results should definitely be significantly better than last year. But as you know, I don't make forward-looking statements. So other than this general thing, I don't think I should be saying anything more.
Thank you so much, Mr. Kheruka, for joining us on the show. Always a pleasure to speak to you. The stock seeing some smart moves today. Little over 9% is the kind of gains that you're seeing on Borosil Renewables. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया है।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
That's huge. That is a biggie. It's out there.
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. You're watching Profit Buzzers on NDTV Profit. In fact, in an exclusive, Home Minister Amit Shah hailed GST 2.0 as Modi's greatest reform ever, slashing rates on essentials for massive relief to the poor, farmers, MSMEs, women and youth. Slamming up opposition's credit war over GST, Amit Shah countered their claims, crediting BJP's vision over Congress's stalled ideas. Here's an exclusive interview with NDTV CEO and Editor-in-Chief Rahul Kanwal.
नवरात्र का पहला दिन है, यही वो दिन है जब से जीएसटी टैक्स कट्स जो आपने किए हैं वो इम्प्लीमेंट हो रहे हैं। आपको लग रहा है कि इससे भारत की अर्थव्यवस्था में उछाल आएगा, एक कंजम्पशन स्प्री आएगा जिससे जीडीपी ग्रोथ रेट थोड़ी बढ़ेगी?
देखिए, सबसे पहले मैं जीएसटी के लिए कुछ बात करना चाहता हूँ। जीएसटी बना तब से कुछ नेता इसको डिस्क्रेडिट करने में लगे, बदनाम करने में लगे, गब्बर सिंह टैक्स फला ढिका बोलते रहे। फिर देखा कि ये सफल हो रहा है तो ये तो कहा हमारा विचार था, प्रणब मुखर्जी ने विचार किया था, चिदम्बरम ने भी हमारा विचार आपने चुरा लिया, जबकि वो 10 साल ही रहे थे। मोदी जी ने चौथे साल में डाल दिया था, वो इम्प्लीमेंट नहीं कर पाए थे, मोदी जी ने कर दिया था। मगर उस वक्त क्यों इम्प्लीमेंट नहीं हुआ, राज्यों ने क्यों विरोध किया था? क्योंकि स्वाभाविक रूप से 16 प्रकार के बिक्री कर को इकट्ठा कर कर एक सेल्स टैक्स बनाते हैं, अब जीएसटी बनाते हैं, एक बिक्री कर बनाते हैं जिसमें 16 टैक्स मर्ज हो जाएंगे, ऑक्ट्रोय भी हो जाएगी, एक्साइज भी हो जाएगी, सेल्स टैक्स भी हो जाएगा, सेंट्रल सेल्स टैक्स भी हो जाएगा, मनोरंजन कर भी, 16 प्रकार के टैक्स मर्ज कर दिए। तो राज्यों की इनकम पर असर पड़ने वाला था। जब कांग्रेस से विचार लेकर आई तब राज्यों ने कहा था कि भाई हमारे रिसीट पर जो असर पड़ेगा, विपरीत असर पड़ेगा शुरुआती सालों में, इसका भुगतान केंद्र ने करना चाहिए। इन्होंने कहा कर देंगे, तो राज्यों ने कहा इसकी संवैधानिक गारंटी दीजिए, तो गारंटी नहीं दी। तो कोई संवैधानिक गारंटी नहीं देगा तो कौन भरोसा करेगा? मोदी जी ने भी आकर फिर से चर्चाएं शुरू की। अरुण जी उस वक्त वित्त मंत्री थे, सभी राज्यों के वित्त मंत्रियों की वही समस्या फिर से आई। फिर जब इस सोच में आया, उस वक्त में पार्टी का अध्यक्ष था, तब मोदी जी ने कहा कि भाई हम ही कहते थे संवैधानिक गारंटी देना चाहिए, तो हम कैसे पीछे मुड़ सकते हो? तो इस वक्त वित्त मंत्रालय, ब्यूरोक्रेसी, वित्त मंत्री सभी का बहुत बड़ा जिम्मेदारी आता है कि 5 साल तक आप, लंबे समय तक आप एक 14% इंक्रीज का गारंटी लोगे और इसका भुगतान करोगे। फिर भी उसको मान गए और हमने इस नवंबर महीने तक इसको पूरा भी किया।
Catch the full conversation at 8 p.m. on NDTV Profit. But let me also get in Amit Bhuptani from Nirmal Bang. Amit, welcome to the show and a pleasure to speak to you as always. We've spoken about the IT space in the previous half of the show, but taking your views right now with the kind of cuts that we are seeing in terms of the sector and individual stocks, are you seeing any reversal on the charts, or is this an opportunity to continue, selling?
Yeah, hi. Good afternoon, Hiral. So overall, if you look at the IT data structure, currently we saw that in today's session, the gap down opening took place in overall IT space due to the H1B visa news. But still the chart patterns which we are witnessing right now on the overall IT pack, it seems to be on the positive front. Still, there is not the breakdown which we are seeing. All the stocks, major stocks are taking the support of the averages. And on the Nifty IT also, currently we are seeing that it is running near 35,500 level. Once it goes above 35,750 level, then again the breakout will be witnessed in the IT index. While on the stock specific front, counter that looks positive, where we are seeing that the carry forward selling which got witnessed was from the Emphasis, Infosys. Each and every stock we saw that it opened on a gap down note, but again the reversal buying was seen in the overall front. So currently the counter that looks positive from my side will be Emphasis. The stock has taken 50 DM support at 2800 level. Once if it support gets broken out, then only we will witness a fresh short position. But again, if the stock goes about 2900 level, then we will see buying momentum. On the midterm chart, if we look at the monthly and the weekly chart also, the stock is showing the upside range to a 3,500 to 3,800 range. So currently setup seems to be in the positive front. Whichever dips are coming on the IT front, we can initiate a buy and dip strategy in overall space.
Got the view, Amit. But the next big story that's for today is the GST rate cuts effectively from today as well. Today is the first day, and one of the key beneficiaries is going to be the auto sector that's gearing up for a major boost under GST 2.0. Is the optimism being echoed by FADA President Mr. Vignesh, who joined us today, as well as someone like a Bajaj Auto's ED Rakesh Sharma also gave us his view on the subject. Listen into both of them.
At FADA, we're quite happy about the GST reforms because for long, at least in the entry-level segments of the two-wheelers and the four-wheelers, we've been having a lot of headwinds. And with this GST reform, I think there's going to be a sizable cut in terms of prices for the customer. And yes, there have been a lot of postponements, and we're going to see all those postponements and the deliveries come from today onwards. What is also happy to note is in the last 25 to 30 days, we've been having excellent inquiries and fantastic bookings. So I really wouldn't be able to put a number on it, but at least in my case, there has been about nearly a 20% hike in inquiries and about 10% hike in terms of bookings as such. So as mentioned before, this particular GST rate cut would not only help us in the festive season this month or probably this quarter, it's really going to help us in the next many years to come.
Since the last 1 week, when we've seen the news of GST percolate down to the customers in urban areas and rural areas, there has been a very positive response. There have been a lot of uptick in inquiries and people calling up showrooms, visiting showrooms for their eventual purchase during the auspicious period, which commences from today, the Navratris, and then, of course, goes on, depending on the state, into Diwali and slightly beyond Diwali. So it has had a very positive impact. And we are expecting this to be, a point of inflection. Because if I may remind you, the industry actually unexpectedly was not doing so well, the motorcycle industry, because its growth on year-to-date basis is actually tad negative, -1% or so if you look at the Vahan registration data. Last year, it closed at about 6% growth, which is FY25. Motorcycle industry grew at 6%. But there was a little bit of a tumble, particularly in June, July, and also in August, bringing the industry growth from April to August to -1. So a couple of growth inhibitors, which we felt were there, and these were, the inflation, which was reducing the disposable surplus to our kind of customers, and also a little bit of restraint on the side of retail finance companies in response to a disposable surplus getting weakened. Now, both these growth inhibitors, so to say, will get mitigated to a large extent by the GST cut.
Well, that was the management of Bajaj Auto. He's seen an inflection point in the two-wheeler space, and that's his view. But Prashant, we've spoken to you about, the positive outcome for the auto space as a whole. But now we've seen a sharp run-up for stocks like Bajaj, like Maruti Suzuki, Eicher, M&M, something like a TVS as well. Given the current run-up, any topics that you feel that is still making sense to enter right now, or what would you be watching out for going forward?
Yeah, I'll be waiting and watching the business updates of September as well as October to have a very optimistic outlook on the sector. So that will show us how the monthly business has been in terms of inquiries as well as on the conversion of the sales on the top line. But overall, I think if you want to have one pick in the four-wheelers, again, M&M still looks very good for me, as the EV segment as well as the traditional car segment is doing really great. In terms of volume also, M&M is doing wonderful in terms of bookings, and also I think in the four-wheeler, M&M still has some kind of good upside room for 5 to 10% for the next shorter period of time. So M&M can be one pick. In the two-wheelers, again, TVS can be one stock one should focus more on. Again, festival season, GST cut, it's a big gift for the consumer as well as the industry, where it was not moving well in terms of two-wheeler sales, which was very much flat from last 6 months. So I think that would be the great opportunity where two-wheelers can have some kind of good volume growth. I think again the indirect benefits of the auto ancillaries getting a GST cut. So overall, there may be chance of getting even some kind of uptick in the margins as well in the two-wheeler segment. So overall, bullish on both.
So that's Prashant's view, seeing some positive up moves still for stocks like M&M as well as TVS. Amit, on the charts, any view on any of the auto stocks that you still see has some more rally to go from here?
From my perspective, if you look at the overall auto space, it has run up quite sharply from last 2 weeks of trading sessions. So the risk reward favorable is not up to the mark at this point of time. If we need to select any counter from the auto space, Tata Motor still look favorable. It is lagging behind the rally of the overall auto space, and the stock is also having a base support on the downside towards 640 to 650 range. Currently, from last 8 months of consolidation, stock has been trading in the same range. The upside breakout for the stock is at 725. Once the stock gives a closing above 725 level, then we will witness a major buying opportunity in this counter, which will take towards 790 to 850 range. So currently, counter that looks favorable on the auto space will be Tata Motors with a support of 670 to 640.
Okay, so that's with regards to where the auto space goes as well. But moving on, Angel One, let's quickly look at what that counter is doing in trade, and the stock is in focus, under pressure today. They forayed into the life insurance, space as well. In fact, they've incorporated associate company, which is Angel One Live Well Life Insurance, and this is in partnership with a Singapore-based company, which is Live Well Holdings. The company will invest around 104 odd crores for a 26% stake, whereas Live Well will invest 296 crores to reach that 400 crore mark, and both companies will be contributing cash at face value at the time of incorporation. The ownership will be Live Well 74% and Angel One around 26% in the JV. To discuss more on this, joining us on the show today, we have Mr. Amit Majumdar, who's the group's Chief Strategy Officer at Angel One. Welcome to the show, Amit, and always a pleasure to speak to you at NDTV Profit. Angel One has actually made a debut when you talk about the life insurance space. Firstly, if you could help us understand, how many of your current customers actually hold a life insurance?
So we are, this is a greenfield project. We are yet to go live with our product on the platform as a manufacturer. We of course are already a distributor on the life insurance, but more as an open architecture. And we are doing not so much, but a reasonable number in terms of customer penetration and premium sold. But we are not a manufacturer yet. We are just a distributor.
Okay. The funds that have been raised in totality, which is 400 odd crores, if you could help us understand, what will it be used for?
So it's not 400 crore. We are investing 104 crore, which is 26% of the overall investment, which is largely 396 crore, so roughly 400 crore. We are investing only 26% of that as a joint venture domestic partner. And the primary investment will go into setting up the insurance joint venture. Also for its initial capital requirements, there are solvency requirements for setting up this venture. We believe that this capital of the overall 400 crores, of which we are 26% stakeholder, will be adequate for the growth trajectory that we have earmarked for this particular business. So this capital is meant to set up this business from scratch.
Okay, this is going to be an interesting move that Angel One will look at as well. Thank you so much, Amit, for joining us on the show and sharing your views. But moving on, Hind Copper is another stock, Puneet, that we need to look at. Interesting moves that have come in today's session. Metal as a sector has also been a buzz in the last couple of trading days.
And that's definitely been one of the key aspects, right? Because it's a space that actually just started to come into picture in the last few weeks as well. And that is one of the key aspects to look at. But let's get my colleague Vansh to give us more perspective of why this one is in focus today. Vansh.
Well, yes, so this is on the back of the Rakha mining lease that has been executed. Now the lease has been extended for a period of 20 years. Now this was already anticipated. The company has received the extension of mining lease back in October 2024, but the final execution was much awaited, and which has been executed right now. Also, if I talk about the importance of this lease, now the Rakha mine will restart by Q4 FY26 and will have a capacity of 3 million tons. Now, this would be a crucial step towards the reopening and expansion of Rakha copper mine, and also this development aligns well with the company's capex capacity expansion to 12 million tons from the current 3.47 million tons in FY24-25. Also, the company is planning a capex of over 2,000 odd crores in the next 5 to 6 years versus 350 odd crores of capex in FY25. Also, if I talk about the portfolio expansion, the company is also seeking MOUs with Indian PSUs to expand their mining portfolio. In fact, the company has signed an MOU with Oil India to collaborate on exploration of critical and strategic minerals on 19th of September as well. And the company is looking to acquire new copper deposits in India and abroad as well. So this is what the overall picture is panning out for Hindustan Copper as well.
Well, thank you for that, Vansh, getting us perspective on this important stock. Prashant, we've actually seen quite a decent run-up on Hindustan Copper once that key announcement came, where they are expanding capacity by almost 3 to 4-fold in the next 5 years. Do you still feel that it's merits to look at this particular stock despite the run-up?
Stock as a long-term story. But again, the review should be on quarter-on-quarter basis. The way they have announced the expansion plan as well as on the recent news, there should be some kind of action and execution to be seen every quarter. The way the stock has already reacted, I think the near-term outlook of the stock will remain very neutral to positive. But again, as a long-term investors, every dip has to be opportunistic to buy the stock.
Okay, so that's with regards to Hind Copper. But stay with us. In fact, let's also cut across to an exclusive chat my colleague Shrimi is having with the Consumer Affairs Secretary Nidhi Khare. Let's quickly listen in. Absolutely important on this GST bonanza.
Has taken place has actually brought a lot of cheer to the consumers in our country, because these are the seasons, starting from Navratri up to the wedding season in our country. A lot of purchases are made. So it is very important that Ministry of Consumer Affairs, therefore, should make sure that the benefits of reduced GST should pass on to the consumers. And what we have done is, we've held extensive meetings with all the e-commerce entities, major manufacturers of FMCG goods, the packers, importers, and such other people. And we have conveyed to them that they must make sure that the benefits of reduced GST must be passed on to the consumers. So with this, we have also built in, our own systems where we will be monitoring them. We will be also taking in complaints, and we will try to see that any such, violation is very quickly addressed to.
Fair point, ma'am. And in fact, I have seen that Ministry has extended the date of the MRP as well, especially on the unsold stock, the unsold inventory. That was first extended to March 31st, and later it was extended to March 31st, 2026. So what was the thought process behind it? And you think that it will help industry to have a smooth transition?
So when we were having these interactions with the manufacturers and retailers, major distributors, we found out that actually a lot of, products are, they are out of the manufacturing, the manufacturing wing, and therefore they are lying in, in big numbers in the supply chains. It will take some time for these goods to get exhausted, and they were concerned about what happens, if they are made to mandatorily go for the stickering of the revised MRP. So looking at their problem, which was very, very gigantic in scale, we have allowed these manufacturers, packers, and importers, their representatives too, that they should voluntarily now inform the consumers by any means, of the revised MRP. And then we have said that even if they do not get exhausted, then the unsold packages or the wrappers, the packing material, which is separately ordered and so on, so that can be also exhausted up to 31st March 2026 or earlier if it is possible. So we are just trying to smoothen the way in which the reduced GST can be passed on in full to the consumers without creating burden of compliance to the manufacturers, packers, or their importers.
I'm sure, ma'am. But, if a scenario like that, if companies, even after the deadline, would not be able to kind of revise their MRP, is there any penalty or any sort of enforcement action we will see from the Consumer Affairs Ministry, sir?
See, the product which are being sold as of, say, from today, they must carry the revised MRP, right? Now, what earlier we had said was that they should go for the stickering and such other things. Now we have said that, okay, you can do it voluntarily, but by whichever means that suit you, which means that the seller who is now offering the goods to the consumers has to convey to the consumer that this was the old MRP, and now from 22nd September, what is the revised MRP. So this can be done digitally, this can be done through, having comparative say rate charts. This can be done by any innovative way in which the seller is able to convince to the consumer that this is the revised MRP, and because of reduction of GST, the rates have come down.
That's right, ma'am. And also the fact that the Consumer Affairs Ministry has, now started and linking that to the redressal, portal. I wanted to understand, since the GST rate cut is across the board, and you may see very high traffic in terms of complaints. Are you kind of prepared to sort of handle all those complaints after GST rate cut, ma'am? How are you ensuring that?
See, we had held very extensive meetings with all the industry associations, all the manufacturers, and different stakeholders in the process. Broadly, there was a very major proactive consensus between all these people, and they have assured us that they will make sure that the benefits of reduced GST are passed on to the consumers.
But time for a quick break, but we do leave you with Ashok Chandra, the Managing Director and CEO of Punjab National Bank, and his insight of how the new GST framework could impact the banking sector as well. Let's listen into what he had to say.
Last evening the Prime Minister was giving a speech to the public where he was talking about the latest GST reforms being a Maha Bachat sort of a festival, and this is happening on the first day of Navratri, of course. Earlier today the new rates started being applicable. Wanted to get a sense from you as a banker, as a lender, also somebody who has a pulse on where the common public's finances are. How do you see this impacting, helping Indians out there?
I think this entire reform and the simplification which has happened in the GST space is a landmark movement. And I think it is benefiting, as our Honorable Prime Minister also mentioned, that it is benefiting to every citizen in the country now. Like your day-to-day consumption items, I think most of these day-to-day things have been reduced to zero. So thereby, the buying capacity of our disposable income of the person will increase now. Second thing, many other items related with the activity which every day we are required to have, there also a lot of reduction has happened from 18%, 12% to 5%. So entire this reform which has happened, it has improved the disposable income. That is the first thing. Second, the purchasing power of the person is going to improve, and the entire process is made very, very simple and the very easy to understand the things now. So entire this exercise which has happened in the GST front is going to ease the life of every citizen in the country. And if I can talk specific about the sector-wise, like retail, if you can talk, see, there has been a drastic reduction in the cement, the tax now from 28% to 18%. And thereby, definitely the housing loan segment is going to get a good boost now. And when the purchasing power of the person is going to improve, I am seeing a good going to happen in the purchase of house. Similarly, the vehicle loan, automobile sector, automobile sector, one side is that the tax rate has been reduced, and then again that the tires and other equipments also there has been a reduction in the tax rate now. So that is again going to brought down the cost of the vehicle. And when we have the disposable income in hand, I think definitely we're going to be a good purchasing happening in the vehicle loan segment also.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, if you look at the markets, the Nifty is down just 40 points, but that is largely led by the Nifty IT. If you look at the Nifty IT index, that is down more than 1,000 points in trade. However, on the flip side, the Nifty Bank index, that continues to remain in the green, around 70 points up in trade.
Absolutely. Now, as Somit was saying that Nifty IT, we did see an impact on the H1B visa issue. Most of the brokerages citing that they see minimal EPS impact on this, but the index down about 3% in trade currently. In fact, let's pull out the point contribution table to get a sense of this. Now, if you just look at the point contribution table, right in red, we see Infosys, TCS, Tech, Mahindra, all the IT names emerging, while in green, we see Eternal, Bajaj Finance, Adani Enterprises. In terms of how the sectors are faring in trade today, it's a mixed picture that we are looking at over here. Now, this is with, Adani, if this is in terms of the Nifty heat map, first of all, that we are seeing Adani Enterprises, Bajaj, Auto, Eternal, right at the top, seeing gains of over 1 to 4% each, while in red, we see all these IT names emerging. But in terms of how the sectors are doing in fair, we see the impact on Nifty IT that we've clearly outlined. Nifty Pharma also seeing about a 1% of a downtick. But what's working out is something like a Nifty Energy and Nifty Realty clocking in gains of over 1%. In fact, even Nifty Metal is seeing about a 0.7% of an uptick. But in terms of the advanced decline ratio in overall markets, if we see, it's remained more or less on the muted side with declines outpacing advances. Currently about 1,284 declines over 1,080 advances. So it is a mixed picture that we are seeing over here. In fact, if you look at the mid-cap indices, Nifty mid-cap 150, down majorly flattish reaction is what we are seeing. And for Nifty small-cap 250 also, if you look at that, now here we are seeing about a 0.4% of a decline. But in terms of stock-specific action, if we are looking at Adani Group companies are in focus. In fact, Adani Power locked in the upper circuit of 20%, Adani Green, Adani Total Gas as well. Some of the other counters which are working out in well trade today. Other counters which are in focus includes the likes of Anant Raj, up over 6% in trade. Hindustan Copper as well, seeing about a 6% of an upside. NetWeb Technologies also similar gains that we are looking at. So this is the overall perspective that we are seeing in terms of how the broader markets and the benchmark indices are doing. But let's shift focus to the interesting conversation of the day, and we have Chandragupta Prakash Mangal, the managing director of Mangalam Worldwide, joining us. Hello and welcome, Mr. Mangal. First of all, just want to understand the overall business strategy. Now, what we've seen is from September of 18, now your shares would be listed on NSE as well. So just want to understand the overall business outlook, the strategy that you have in place for FY26-27. If you can share some targets as well.
Hello, yes, good afternoon, and thanks a lot for having me here today. And definitely, as you said, that we got listed, migrated to the main board. It is a great milestone for the company. Talking about Mangalam Worldwide Limited, we are a fully integrated manufacturing facility in stainless steel, where we have 4 state-of-the-art facilities, starting from melting, which has a capacity of 66,000 metric ton annually. We melt billets and blooms, and we have the second unit is the rolling unit, where we roll these billets and blooms into different shapes and sizes. And third unit is the finishing unit, where we finish these rolled black rock products into finished bright products. And the fourth unit is the seamless pipes and tubes unit, which manufacture the seamless pipes and tubes ranging from 6 mm to 6 inches, which has a capacity of around 800 metric ton per month.
Right, sir. If you could take us through what is the kind of margins that you generate from each of your product? Which product is high margin accretive, and which one is on an average margins? Could you give us some idea on that front?
So as you see, we are a fully integrated. Yes, definitely. See, as you move up the value chain, definitely the highest margins are brought to us by the seamless pipes and tubes, which are somewhere around 12 to 15% on the EBITDA levels. And the bright bars also provide a good margin, which is around 7 to 8%. And coming to the black bars and the billets, those are the first step of the process. So you can say that do not generate that much volume. Going ahead, our idea is now to get more into the finished products, which is the finished bright bars and definitely the seamless pipes and tubes, so that we can attract more margins.
Okay, but your margins for last many quarters, what I'm seeing is the EBITDA margins have been around the 5 to 6% band. Any scope of this expanding going forward? And if yes, by how much do you see that?
Yes, definitely. As I mentioned earlier, that we are going to focus more on the finished product. EBITDA margins, we are estimating to go into the double digits as and when we push more of our finished products.
Right, sir. The double-digit EBITDA margin, by when are you expecting that to happen?
I don't think I can tell that, but going forward, we'll be expanding more into the finished products in the coming couple of years. So yeah.
So just on that, while you're anticipating this double-digit EBITDA margins, want to understand the mix that you'll have now that you're focusing more on these finished products that you're looking at. So if you're taking FY25 in context, what's the kind of mix that you currently have? And in FY26 or even 27, what's the kind of mix, the change in mix that you expect?
So currently, you can say that our mix in the finished products or the high margin products is around 20 to 25% of our overall sales. And this year, we are expecting that to increase to 40% of the overall sales.
That's double, almost a double of number that we are looking at. In terms of, your capex plans, also just want to understand that what is the kind of capex plan that you have for this year? Are you looking for more additions going forward to support the increase in demand that we're seeing?
Definitely, we are seeing increase in demand of our products, and currently, I wouldn't say that we have a capex plan immediately, but in the next year, we will definitely be expanding more into and adding more machines into the which can finish the products. So you can say we already have our base ready. We are an integrated unit, so we already have raw materials ready for us, and we'll be expanding more into the getting more capex into the finished products. So it's a balancing of the machinery, you can say. Right, sir.
Now, if you look at the last 3-year revenue and PAT CAGR of Mangalam worldwide, revenue has grown at a CAGR of around 26%, while PAT has grown at a CAGR of 35%. Can we expect similar growth rate for the next three financial year going forward?
Yes, certainly.
Okay. And just wanted to understand, exports currently contribute a very small portion, but the growth has been quite high here. So, say 2 years down the line, how much do you expect export revenue to come in? How much do you expect the export revenue to contribute to the total revenue?
So, in the last 2 years, we have put a lot of efforts into the exports while exhibiting at various exhibitions, and also increased our share to around 20 countries. We are exporting to 20 countries right now. The idea is to push, have more agent network and to push our products, and in the next couple of years we want to export 20% of our sales revenue.
Which are the key areas from which you see demand coming in for exports?
Geographical areas, if we talk about, is the Europe, which has the most demand in stainless steel for Indian products, and apart from that we do definitely have Latin America and North America.
Okay, so that's the picture in terms of where the domestic and the export mix is concerned. Also want to understand the current trends in terms of volumes as well as pricing. What is the trajectory that you see if you take the last quarter in perspective and now that we move forward to Q2 and Q3? What's the kind of growth trends that we're looking in terms of volumes as well as pricing?
In terms of volume, I think we are doing around 85 to 90% of our capacity, which will be stable. Also, in terms of prices, we have seen stable prices in the last quarter, but coming this month in September, we are seeing an increasing trend in the pricing.
Right. And lastly, sir, just wanted to understand what has been the trend when it comes to raw material prices?
It's the same. It's been stable at the moment, but since the raw material prices are showing a certain type of increase, that's why we're expecting the finished prices also to go up in the near future.
So, if there is a raw material prices, it's a complete pass-through for you, or do you need to bear some of its impact, or does the pass-through come with a lag? How does it work?
No, we do not have to bear this thing. It does work with a little bit of lag, you can say, but we do not have to bear the increase in raw materials. It is all passed on to the customers.
Mr. Kamangal, just want to understand on the debt side as well. What's the kind of debt picture that you have right now for FY26 in mind? Considering that if you see the last 3 years, it's debt to equity ratio has remained in the 0.6 to 0.7 x of range. So just want to understand on that part. Do you expect this to sustain forward as well?
Yes, that's what we expect going forward as well.
Okay, well, thank you so much, Mr. Mangal, for joining and sharing that perspective on the company. So that's all that we are seeing in terms of where Mangalam Worldwide is concerned. But let me go across to our guest who's joining us for today. That's Lancelot Dicona, CIO of Value X Wealth Connect. Lancelot, coming to you for this particular counter, last 3 quarters, last 3 years, in fact, if we see the margins have remained in 5% of range. While if you look at the growth CAGR for in terms of revenue and PAT, that has been at 26%. Just want to get your perspective on this particular stock.
I think you rightly observed that the margins are very, very thin margins, and while revenues have grown, margins have remained flat, and hence the absolute numbers have seen some growth. But this is a business with low margins. Any negative impact of price hikes or anything to do with the corporates or even freight rates, all these can impact the business negatively, and hence there is a risk in this higher risk in this business. Also, when you look at it from a perspective that it's trading at about 23 times earnings, this is relatively expensive for a commodity based company, because when you look at other companies, for them to be attractive, they need to trade at maybe around 10 to 12 times earnings. Look at some of the steel companies and other peers. So I think it's a little expensive at this point in time. Probably one should wait for a bit of correction, or if there is any new plans, which will change the margin profile of the company, then that could mean some amount of re-rating for this company.
Well, wait and watch is the takeaway coming in from Lancelot on Mangalam Worldwide due to expensive valuation. But another stock that remains in focus is Shalby. The stock is up more than 10% in trade, and this is after the promoter might have bought some stake from the open market. Let's get in Varsha with more details on this.
Thank you so much for that. Yes, as you rightly said, the stock is up. Now, one of the reasons would be the promoters have bought 60,000 shares. Now, with this, if you see, the total promoter shareholding will go up to almost 34.7%. But, let's talk about this company. What are the key growth triggers? Now, Shalby is into they provide multi-speciality hospital services. So, they basically have hospitals, and they're targeting 30% reduction when it comes to cost of goods sold, which will actually, impact positively to their EBITDA margin. Now, this will be because of the manufacturing efficiencies that the company will do. Onto the growth projects and expansion, their Mumbai Greenfield project is one of the key triggers for the growth for the company, and this will be, the construction have already started. The construction will be started post regulatory approvals. But talking about the outlook for FY26, they are expecting 12 to 15% of revenue growth, and EBITDA margin are expected to inch upwards because of the cost operational synergies or cost operational efficiencies that the company is opting for. So overall, a great positive trigger when it comes to their Mumbai Greenfield project, and the outlook of 15% of revenue growth with inch up of EBITDA margin are some of the positive trigger points when it comes to company. But yes, because of the promoter acquisition, as of today, the stock is buzzing. It's up almost 8 to 9%.
Right, Lancelot, have you looked at this counter, Shalby? Overall, the hospital sector is on an uptrend, is what I'm seeing. But this promoter buying stake from open market, that adds on to this uptrend, right?
Yes, it does. In fact, if you look at its probable valuation, it's still trading at a relatively higher valuation. And while a lot of the positives are being announced, it will take maybe a couple of quarters or maybe even a year for us to see the benefits kick in. And, while the hospital sector has appeared to be attractive from a longer term perspective, in the near term, a lot of the valuations have gone up. And then, and compared to that, Shalby would also get the benefit of that rise in terms of valuation, because when you compare it, you compare with what the peers have done. So at this point of time, considering that, we are not really aware of anything that is changing the dynamics of the company significantly in order to improve its earnings or even to generate some operating capacity leverage, then one has to wait till get some positive news or some feedback in terms of what exactly is driving this valuation and the share price up.
Okay, so that's the view for Shalby. That is what we are seeing. But another stock in focus, in fact, the whole sector is buzzing today, is the shipbuilding companies. Now, in this one particular counter which is buzzing is Swan Defence and Heavy Industries. Now, what they've done is they've signed a MOU with Gujarat Maritime Board, and this is for an investment of about 4,250 crore. Essentially, this will be deployed across 3 key projects at shipyard in Pipavav Port in Gujarat. Now, of this 4,250 crore of investment that we are looking at, 3,500 crore is to be infused to expand capacities and upgrade the shipyard infrastructure which are there. Now, this includes jetties, additional cranes as well. Along with that, they're also planning to build a center of excellence with a 200 crore of an investment. Now, this center would train over 1,000 youth annually and support the R&D needs as well. Along with this, they've also signed a 200 acre of maritime cluster to be developed with a 550 crore of an investment is what we are seeing. This is to boost indigenous shipbuilding and ancillary industries. But that's not all the news that we have for this particular counter. In other updates as well, now Swan Defence has also partnered to explore shipbuilding financing support, and this is with Sargamala Finance Corporation Limited and NBFC that we are looking at. This is to jointly explore projects which include the likes of new builds, ship repairs, as well as ancillary maritime infrastructure as well. Just a bit about this company, if you are talking about. Now, this company relisted on stock exchanges from Jan 20 onwards. Jan 25 onwards, in fact, this has been rebranded henceforth, formerly known as Reliance Naval and Engineering Limited. Now, the company is engaged in the construction of vessels, repairs and refit of ships. So that's the overall picture that we are seeing for Swan Defence, currently locked in a 5% of upper circuit. But Lancelot, your view on this particular counter?
So I think it is actually moving on the basis of all the potential, but companies have to realize that potential, and there's always a big time lag between realizing potential and actually generating profits. So if you look at this company, it hasn't actually generated much profits while it is boasting of some world-class shipbuilding infrastructure. You haven't actually seen much traction as far as assignments being completed, and the execution is definitely going to be watched, and hence I think it's trading at a very, very high multiple at this point in time. So while there is a lot of long-term hype or interest in the sector and the company concerned, it needs to actually provide results in terms of financial profits as well as cash flows to justify this high valuations.
Right. Viviana Power is another counter that remains in focus. The stocks went buzzing on the back of an order win of around 265 odd crore rupees. Let's get in Varsha with more details on the same.
Well, thank you for that again. So yes, on Friday actually a company received this order, post which the stock was up as well, and today is the second day wherein the stock is buzzing. Now this order needs to be completed within 16 months, and the order book stands at around 1,000 odd crores. Now about this company is into power transmission EPC, and let's talk about the growth triggers for this company. So they are pouring into transformer, which is the next leg of growth for this company. They're expecting almost 52 crores of revenue from this segment for FY26 and around 80 crores of revenue for FY27, and overall transformers will contribute almost 10% to the overall revenue for FY26 and 27, will also help to inch up margin from this segment as well. Now FY26 outlook and 27 outlook they've given, wherein they're expecting almost 550 plus odd crores of revenue for 26 and 850 crores of revenue for 27 with PAT margin of around 9%. So the near-term growth triggers is of course transformers, and the overall, if you see, transmission and distribution sector is also buzzing, and again the order wins and unexecuted order of 1,000 crores are some of the key triggers for this company for re-rating.
Right. Lancelot, coming to you on this counter, Viviana Power, have you tracked this counter?
So I have had a look at it, but when you consider that it's a 1,000 crore market cap company and it's trading at 45 times earnings, it is a little expensive, and especially when there are larger, more established players in the transmission and distribution space. So it is expensive, and it'll probably have to to really generate that kind of profits and then grow before it can trade at these valuations. So from a perspective that this is an expensive stock, one has to wait for some serious correction in price before one can look at adding it to the portfolio.
Okay, so that's the view for Viviana Power. But let's talk about SCPC now. And then the company remains in focus after it plans to expand its operations in Delhi water projects. Vansh gives us more details on the same. Vansh, over to you. Okay, there seems to be some kind of audio issue in terms of connecting with Vansh over there. But in terms of how stock performance is doing, stock is up over 9% in trade currently. Now cooled off from those days highs and up over 1%. But Vansh, what is happening in this particular counter?
So let me talk about another interesting stock, that is MK Global. That the stock is up already 20% in trade. Now the company is in the business of providing capital market services, and they operate capital markets ecosystem through institutional equities, asset management and banking businesses as well. If we talk about the operational mix, capital markets accounts for 56% of the revenue, wealth management 22%, asset management 7% and others account for 15% of the revenue. Also if we talk about the capital market segment, institutional clients accounts for 83% of the revenue, while non-institutional clients account for 17% of the revenue. Lastly, if I talk about the AUM split of the Q1 FY26, now PMS accounts for 59% of the AUM and alternative investments account for 41% of the AUM as well. So this is what the overall picture is looking like for MK Global as well.
Okay, Lancelot, your quick view on MK Global Financial Services, as that was the stock that Vansh is talking about right now.
So I think MK Global, is in a good space because they are one of the brokerage houses. They have a wealth management business. They have a PMS business. But I think over a period of time, if you look at it from a longer term perspective, all these businesses are going to get consolidated into some few larger players who are using technology and who will be able to actually increase their client base without much of investment in physical infrastructure. So going forward, I think those are the companies which will generate the highest return on their investments, and hence there are better alternatives to look at, in this space. You have, for example, the Angel One broking that is completely technology driven, and the other players in the space will be ICICI Securities because they have ICICI Direct. So I think it's the larger players who will benefit from this whole space, and so one should stay with the larger players because whenever consolidation happens, the weaker players will struggle.
Lancelot, thank you for joining us and giving us your perspective on the stocks that we discussed. Well, with that, it's a wrap on this edition of Small Cap Buzzer. Stay tuned and keep watching NDTV Profit.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं, ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
You're watching India Market Close here at NDTV Profit. I am Mahima Vachajani. With me is Neeraj Shah and Heerar Daria. Let's take a quick look as to how the markets are doing. Well, in terms of where the benchmark stands, the Nifty 50 under pressure, continues to be under pressure, down by about 0.3% below the 25,300 levels, of course, trading at around 25,260 levels. The Bank Nifty also in the red now, almost flat as we speak, and below the 55,500 levels as well. Let's try to pull up the Nifty 50 heat map, because that will tell us a picture as to what's putting pressure on the Nifty. And it's majorly the IT companies that are putting pressure on the overall Nifty contribution. Tech Mahindra, TCS, Infosys, Wipro, all counters in the red and seeing cuts of over 3% each in terms of the recent update that has come in with regards to where H1B visa stands. But something that's keeping the Nifty in check is the Adani group of companies. Adani Entertainment up 4.6%, Adani Port up 2%. Something like an Eternal is also doing well in trade today, up 1.7%, followed by something like a Bajaj Auto, Hero MotoCorp. So auto names also fairly doing well in trade today. Let's try to pull up the sectoral heat map and see as to how sectors are faring. In terms of the top sectoral gainer today, that's the Nifty Energy up 1%, followed by something like the Nifty Media, Nifty Metal, Nifty Realty also doing fairly well in trade today. Nifty Consumption seeing gains of about 0.5% and Nifty Oil and Gas also up by about 0.3%, but something that's under pressure. Nifty IT down by about 3% now, probably at its day's low point. Then Nifty Pharma down 1%, Nifty Healthcare also down by about 1%, Nifty Defense also down by about 0.5%. Let's try to pull up the advanced decline ratio and see as to how the broader end of spectrum is looking like. And there you go. It's like a tug of war situation here, because now we have almost 1,400 declines versus that of 950 odd advances. So of course the market is skewed more towards the sellers today. But Neeraj, with regards to where the broader markets stand, even the broader markets continue to be under pressure.
Yeah, and you know, not surprising that the IT names are leading the pack out there, Mahima. So I mean, that if you look at just broadly the stocks that are coming off at the broader end of the spectrum too, Zensar, Emphasis, LTI, Mindtree, Coforge, Persistent. These are the ones which have cracked the most. Inventor's Knowledge Solutions down about 4%. So everything pertaining to that bucket has looked weak today. There is weakness in some of the life sciences companies as well. SciLife, Concord Bio, and some CDMO names have a bit of pressure in the session today. So that is an issue. What has had a stupendous move and rally and continues aside of the Adani Group stocks are three names. One of them is Anant Raj, another 6% higher at 678. This whole data center related benefits that have come in really helping Anantraj today and over the last few days, so bear that in mind. There is strength in Hindustan Copper, 5.5% yet again. After the update that they've given, the stock has not looked back. So quite stunning really. And some of the shipping counters, SCI and a few other shipbuilding counters as well, are doing rather well for themselves. And Hiral, difficult to, except for IT, difficult to really spot big sore losers, just that the tech index has stayed 3% lower.
Absolutely, very difficult to really spot those kind of losers. But you know, few of the other stocks which are interesting is the entire Adani group of companies, as Mahima was mentioning, all of them firing on, you know, the same engine power, I would say. And apart from that, few of the other names which are buzzing in trade, Borosil Renewables, stock is up 10 to 11%. We did speak to the management as well on the back of GST benefits. So that's an interesting one to watch out for. But apart from that, Allovius is another one which is seeing some bit of pressure. But as Neeraj is mentioning, no major downtick except the IT index is what you're seeing. And a good boost coming in terms of where GST 2.0 goes. But let's also get in. Gaurav Bissa, Senior Vice President at Incred Equities. Gaurav, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. Seeing the way the markets are pretty range bound, if you have to look at Nifty 50 as well, 100 to 120 points range is what you've seen since morning to now. What should that strategy look like? Because major pressure coming in from IT, some bit of support that you've seen over the last couple of trading sessions from Bank Nifty as well. So Nifty and Bank Nifty, the strategy at this hour.
Hi, good afternoon to you and your viewers, and thank you for inviting me to the show. As far as indices are concerned, there were two interesting readings at the higher levels. One, if you connect the high of 26,300, which we made months back, and the more recent one that we made around 25,600 before going back towards 25,400. If you connect those two high points and there's a falling trend line, the resistance of which comes around 25,500. Interestingly, if you look at the option chain, this is the zone where we are seeing active call writing happening, which is increasing the confidence of people that Nifty might not be getting it easy at 25,500. On the other hand, there's a bearish harmonic Gartley pattern which got triggered at 24,424.50 spot. And the combination of these two, three factors is what I think resulted in some amount of profit booking, of course, aided by the fall in Nifty IT index. So the strategy is simple for now. I would not be too keen to jump the bandwagon and go ahead and buy the indices right away. I would recommend creating fresh shorts at any rise towards 25,400, keeping stop loss of 110 points and playing for 25,100 zone. So it's a good buy on dips candidate, but the risk reward is more skewed towards selling instead of buying at this juncture. And same goes for Bank Nifty. So if you see Bank Nifty, though it has not seen tremendous correction as such, it has been an underperformer. And when the markets are dull, you don't want to be having a dull index or a dull stock in a portfolio. So in my opinion, between Nifty and Bank Nifty, opportunities rise more for Nifty as compared to Bank Nifty.
What about your picks for the day?
Yeah, so the first recommendation would be buy on Amber. This is a stock which has been a clear outperformer in the last year and a half. It's been consolidating now. It has seen a bullish triangle, ascending triangle breakout. Volume participation has been good. It's been holding the breakout levels quite well. One can keep stop loss of 7850, buy for 9,000. Second is a buy on JSW Infra, another stock which has seen a very strong and stupendous upside. And since then, it has been more or less time correcting. It's given a breakout from falling trend line pattern. Also, it has given a small box breakout with volumes, making it quite interesting for 370. So one can buy JSW Infra having stop losses placed at 320.
Okay, all right. Now moving on to our stock of the day segment, and we have Hindustan Copper today. The stock is up over 5% as we speak in trade, and Vansh joins us with all the details as to why the stock is buzzing. Vansh, what are you picking up?
Well, yes, so the stock is already up 25% in the past 1 month. Now let's understand the reasons behind it. Now the company the Rakha mine lease deed has been executed by the company. Now the lease deed has been extended for a period of about 20 odd years, and the extension of the mining lease was received back in 8 October 2024. However, the final execution for the same was awaited, which has been completed right now. Also, if we talk about the importance of this deed, now the Rakha mine will be starting by Q4 FY26, and it will have a capacity of 3 million tons. And also, if we talk about the importance of the company, now this will be a crucial step for the restarting the Rakha mine as well. Now, also, if we talk about the capacity expansion, now the company's this deed aligns with the company's capacity expansion to 12 million tons from the to 12 million tons by FY30 from the current 3.5 million tons in FY25 as well. Also, if we talk about the capex, now the company is planning a capex about 2,000 odd crores in the next 5 to 6 years from the current 350 odd crores in FY25 as well. Now, if I talk about the portfolio expansion, now the company is also seeking MOUs with Indian PSUs for expanding their mining portfolio. In fact, they have signed an MOU with Oil India. Now, this is again for the collaboration and exploration of critical and strategic minerals as well. Also, if we talk about the company is also looking to acquire new copper deposits in India and abroad as well. So this is how the overall picture is panning out for the Hindustan Copper as well.
That one, and it is interesting because Hindustan Copper, since they made that announcement, as Vansh rightly said, or the presentation, has not looked back. And Gaurav, before we thank you, good afternoon, of course, and Hindustan Copper is one, but metals at large, are they showing a structural shift? Because it seems that hard assets across the world are doing well.
That's an interesting question, and I think one will have to change the lens if one is playing the metal. So let us first look at how the metal overall or the commodities index overall are doing. So if you look at aluminum, USD aluminum. So if you look at the charts, it's coming out of a 2.5 year consolidation. If you look at copper, it's formed a very strong base at 3.8, 3.9 in terms of dollar. It went till 5.1, and then we had some tweets coming from US President, which resulted in the commodity plummeting towards 4.2, 4.3 again. So in my opinion, the commodities themselves are doing quite well. And coming back, yes, if you see Nifty Metal Index now, and if you try to correlate on weekly charts itself, we are seeing a consolidation breakout sort of happening. And some resistances ahead, I would say, a close about 10,200, 10,300 Nifty Metal Index on weekly chart. That will pave the way for fresh leg of upside. So in my opinion, Nifty Commodities Index, Metal Index has been doing well. BSE Commodity Index has been doing well. Individual commodities on foreign exchanges, foreign bourses have been doing quite well. And coming to your question about Hindustan Copper, so it was a pure play Hindustan Copper for us. We were quite bullish on copper as a commodity, and the only logical name that came to mind was Hindustan Copper. So as a disclaimer, we had recommended Hindustan Copper around 200, 210 to our clients somewhere in Feb, March. And just today itself, we have recommended booking partial profits with a gain of 40, 45%. So in my opinion, one can still hold positional, but if somebody wants to play a trade, I think it's run up a lot, as one of your colleague mentioned. It's moved up 25% in a week or so. So when a high beta stock moves up so in such a rapid fashion, the risk reward gets distorted. So on that premise, I would say it's a buy on dips candidate. The structure is very strong, higher tops, higher bottom on weekly charts, breakout retest on weekly charts, EW counts are extremely strong. So in my opinion, this stock can do levels of 400, which is our final target. And any dip in the stock can be used for a positional trade, not for a day trading or 1 or 2 day trading.
100, that's very interesting, and that's the optimism around metals for sure. Okay, Gaurav, we'll take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. That's the derivative and the technical view. Let's welcome in a fundamental view, Deepak Shenoy, CEO of Capital Mind Mutual Fund, with us on the show. Deepak, always good talking to you. No different today. Thanks for taking the time out. Neeraj here. Good afternoon. Deepak, I want to take off where I left off with Gaurav Bissa, and which is whether this is a, whether you look at markets in, for example, as Manish Chokhani told us, right, the 10-year cycles, 1990 was something, 2000 was something, 2010 onwards, we've seen US markets do well, and half of this current decade has been dominated by the tech giants, right? Does this change now in that hard assets like gold, silver, emerging markets, etc., come to the fore? How do you think about it?
So I doubt, Neeraj, that basically commodity layers will come and take over the equity market universe in that sense. I think it's going to be more technology, just different ones possibly, but we are going to get more technology getting more valued. So it would be AI, it could be robotics, it could be layers that involve all of these new technologies. If it's 3D printing, that's one layer, or if it's self-driven cars and electric vehicles, that's another layer. But I think these are going to be the determinators of the future. It's not going to go back into I make better steel than you and therefore I should be valued. I doubt the metal cycle comes back and takes over that equity universe. But of course, they'll have cycles of their own. So there'll be time to buy metals, there'll be time to sell them, there'll be time to buy gold and sell them. But I don't think technology will get upended by this. So if I look at the next 10 years, whether it's in India or abroad, I think it's technology and technology-led companies that will make the biggest returns because they have the biggest scope of growth. Metals, FMCG and all of the other things will probably have only incremental, maybe 5 or 10% per year of growth. But I really think technology has 30, 40, 50% possibilities of growth in particular domains. And that's why I think the future will still belong to technology.
Interesting, Deepak. The timing is absolutely right when you talk about technology companies as well, because the kind of correction that you're seeing in today's session on the back of the H-1B visa fee hike that has come in, a pretty mixed view that's come in from brokerages as well. If you're saying that the upside is absolutely here to stay, would you be a buyer of IT companies at current levels? And would it be mid-cap IT or large-cap IT?
So I honestly think the IT companies are not the best benefits of the technology revolution.
Okay.
They are at best players who kind of support this ecosystem from the outside, but they don't necessarily own the benefits of this ecosystem. So whether it is, if you look at the new age startups that have come in that are using technology to benefit their businesses, they are actually likely to be better beneficiaries because they can use AI in their space. What the IT businesses, what we call IT businesses today, are typically players for hire, right? So you're hiring them to do something that will benefit you. So you will give them some money, and that money does not scale meaningfully with as technology gets better and better. It's not like I can get more and more margins. Take, for instance, the space in fintech. There are amazing layers of operating margins that can be earned in the longer term using finance to leverage your business. But it's not true for a person that's just an IT player that's providing services in this area. At best, you'll scale, in terms of either adding a layer of manpower on top or a small layer of technology on top. So I don't think the IT companies are the beneficiaries of this technology revolution. It will be the likes of Google, perhaps the likes of players like that in India if they were to list. Some of them are unlisted right now, but players using technology, whether it is in the payment space, whether it is in electric vehicle space, again, small players here in India right now, but they could grow. Technology services.
What would the likes look like in terms of the Indian markets from the listed space? Maybe you've not invested in them, but the kind of names one should actually start looking at.
Yeah, no, so I would say I won't take any single names right now because we're not allowed to, talk about it because they're part of our investment universe as a mutual fund. But in generally, I think there's travel technology. That's one layer. People who can benefit a lot from that. Maybe it's a vertical niche there. There's healthcare technology in healthcare itself that could dramatically increase. Again, there are players that are doing something in the electric vehicle space that are already established in the ICE space also. They're moving into electric technology. There are players in the battery technology that are making their way into lithium ion. There are players in perhaps some of the other layers here in the AI space. Again, many of them are public listed companies that are making small investments, whether it's AI or data centers. But I think data centers, again, it's an ancillary space. It's not primarily AI. So there will be some players who will benefit primarily from this. There will be some ancillary players downstream that will benefit. But I think that is the layer that you'll see technology evolve into. How they use technology to manage their spaces, perhaps own some of the technology as well that they can license out to other players. Those are the ones that will benefit. The IT players themselves seem uninterested for the most part in building product plays. So that's fine. You can always say that there has to be somebody who provides services on top. So you'll rate them like a service player. You're not going to give them the 100 times earnings and expect that earnings growth to be that maximum. But yeah, the H1B issue is going to affect for sure a lot of the IT companies. But I think in the long term, it will benefit India as an economy. So it may not benefit those particular players, but it will benefit India as an economy because more people will choose to perhaps stay back here. And hopefully, as our education system improves and evolves, that there will be more of the research that's being done here itself, and then we'll see more benefits downstream. But the IT players themselves, I don't think they'll benefit too much.
Hi, Mahima also joining in. Just want to understand, there's a lot of initiatives that have been taken in order to boost consumption. We have GST 2.0 kicking in today, festivities also kicking in today, plus there have been tax cuts, rate cuts, etc. And Prime Minister Narendra Modi yesterday also talked about the Swadeshi consumption of things. If you were to play the consumption theme, how would you play it? Would it be via staples, hotels, retail, QSRs? What would it be like, or even autos for that matter?
So I think hotels still have a lot more to go in terms of scale and footprint expansion, especially if interest rates were to come down. Hopefully, they will be able to do a significant amount of capex to grow the revenue footprint across. There's some in the travel space, whether it is in the direct in the transportation industry itself or in technology players that are providing technology to the transportation network, or in general, the consumption. I think the biggest beneficiary now is auto, because auto will directly see nearly 10% cut in effective end user prices. The lowest interest is in staples, because a 10 rupee packet of biscuits is not going to cost you 9 rupees 50 paisa, not even a microscopic chance. Because at that layer, people don't reduce prices by 5% simply because the change that is required to be given, where people don't use UPI, for instance, or use cash to pay, is just too painful to have that conversation. So the retail prices remain 10 rupees. You get a little more biscuit, a little more shampoo, or a little more soap, grammage of soap, but the prices don't change. So there's not that much meaningful benefit for end users in that, small-ish soaps and, things space, because I don't think the prices will come down meaningfully there. At the higher end, they will. At cars, they will. At wholesale quantities of a lot of these goods, I think they will be. So there will be downstream impacts to industry. And from consumption perspective, I think I'd play auto first. I'd play premium consumption first, because there I think you'll see a lot more offerings. You'll see travel, tourism, healthcare. I think all of these consumption elements will go up reasonably well. But the GST will add a fillip to perhaps travel and transportation, perhaps to the auto industry first, and then it will kind of meaningfully move downstream. Remember, there's an income tax cut also at the premium level. There's about 1 lakh rupees more. Everyone who's earning more than 12 lakh rupees a year is actually getting in terms of lower taxation from this year onwards. That's ongoing. So hopefully that will also kind of eat into consumption. But again, premium consumption is where it's the maximum. Staples is not so much.
Okay. Deepak, the final question today is I mean, and you would have spoken about the answers to the previous questions, but the one key question is whether the time and the price correction due to relatively lower activity in the capex linked themes, has that taken care of the valuation quote unquote bubble that had gotten formed maybe in 2024, and does this give an opportunity to analyze and invest into some of those capex related themes? Because yes, the flavor of FY26 is consumption, but at some point of time, for job growth and other factors, capex will have to come into play, right?
I think capex is happening, Neeraj. It's just not happening where you think it is supposed to happen. Right. So you're not expanding capacities of coal mines, or, that was where the capex used to happen earlier. I'll build more steel plants, so I'll do another steel plant capex and all that. But you see the capex that's happening in the semiconductor industry, that is massive compared to what it was. Defense. Again, defense companies doing their own capex to expand, both inorganic and organic. I think that has made, that is happening right now at a magnificent scale. So you're seeing the people who are actually doing the capex, their valuations are growing tremendously. In the semiconductor industry, defense industry, ports, a lot of that is kind of leading into downstream, even hospitals, wherever companies are doing hospital expansions, or have done in the last 3 or 4 years, we are seeing their valuations increase quite a bit. So the bubble in some of the spaces, for instance, in consumer staples, there has been a bubble for nearly 10 years now. And valuations have gotten even more expensive. I think that deserves to break, because there's absolutely no chance of meaningful growth in that space. I would say consumer durables, even though they have gone up, there's a tremendous scope increase. So there's not a valuation bubble there. Valuations are high, but I think growth can come and make a difference over there. In defense and in semiconductors, valuations are skyrocketingly high, but there's also a tremendous scope in terms of growth, because they could grow 100, 200% from here, almost year on year for the next 3 or 4 years. So I think their valuations should be looked at a sectoral level. At an industry level, we're still very, very at a Nifty level or a Nifty small cap level, we're still tremendously overvalued. And I would say a large part of it is because of the staples and some of the, the metal companies and all getting valued at 30, 40 times earnings. That's ridiculous. We absolutely shouldn't be paying those valuations. at the top of the cycle. At the top of the cycle, P should be single digits for the most part. So we're overpaying for a lot of boring sectors and possibly paying high for growing sectors that are, I mean, for sectors that are actually doing really well. But I think the growth will make sense in those sectors.
Absolutely, and that makes complete sense. I mean, just last week we saw at what valuations Urban Company got listed, and that's exactly what Mr. Sinha was talking about. Mr. Sinha, thank you so much for giving us those insights and taking out the time and speaking with us at NDTV Profit.
Thank you, Cheers, and thanks for having me.
Thank you so much. Well, Mr. Sinha was also mentioning that how auto sector is getting a boost from the new GST reforms, and NDTV Profit has been on ground and they've been bringing you all the updates. Now, my colleague Danish Anand is at a car showroom in New Delhi checking up on what is the mood at the ground level. Have a look.
Like PM Modi mentioned on Sunday, the GST Bachat Utsav has begun, and right now I'm present at Bagga Link Hyundai here in the national capital. First of all, I'd like to show you that how this dealership is ready to welcome all the prospective car buyers, and as soon as you step inside this dealership, there will be a feeling of festivities all around. And you can see today is the first day of the Navratra. The Mata's statue has been positioned here. Besides this, you can see all the walls and the roof of this dealership is completely decked up in festivities. But if you were waiting to buy a car from a very long time, then this is the best opportunity for you to buy a car, as Hyundai has announced massive discounts on its entire portfolio of cars, and this discount is in the range from 70,000 to almost 2 lakh rupees. But to talk more about it, that how the dealerships are preparing for the sudden surge, we have been joined by Mr. Zubair Khan, who's the senior sales manager at this dealership. So many thanks for speaking to NDTV Profit.
Yeah.
First of all, please tell us that how are you preparing to deliver so many cars to the buyers?
First of all, happy Navratras to all viewers, and a special thank you for Mr. Narendra Modi ji, who has been taken the step to reduce GST. That will definitely help to increase our business. You know, people are waiting since last almost say around 21 days in Shraddh period also, so waiting for this auspicious day. So it will definitely increase our business, and you see the decoration and everything is being done, and people are coming here for taking delivery. We have updated the booking status since last morning. Customers are coming here to waiting on this auspicious day. People are taking delivery. So everything is being done, and you see the whole showroom is full of the customers.
So how many cars are you expected to deliver today?
Today we are expecting around 15 to 20 deliveries. All it's been lined up, and just we will free the customer in next 15 minutes.
We'll also try speaking to a few customers, but before that, I would like to tell you that there is a good over and above discount that the company is offering. It is not just a GST cut that Hyundai is passing on to its customers, but the company has gone above and beyond that GST rate cut, and they're also giving a festive season discount.
That's an interesting take coming in. Thank you, Danish, for that festive season discount plus the GST cut benefits. Lots more pouring in for all the new buyers that will start trickling in from the 22nd of September, which is today. We also had a conversation with Rakesh Sharma, ED of Bajaj Auto, on how they are looking at the GST cuts and whether the downtick that they've seen in the domestic market will reverse in FY26, which is the remainder. Let's listen in.
Since the last 1 week, when we've seen the news of GST percolate down to the customers in urban areas and rural areas, there has been a very positive response. There have been a lot of uptick in inquiries and people calling up showrooms, visiting showrooms for their eventual purchase during the auspicious period, which commences from today, the Navratris, and then of course goes on depending on the state into Diwali and slightly beyond Diwali. So it has had a very positive impact. And we are expecting this to be, a point of inflection. Because if I may remind you, the industry actually unexpectedly was not doing so well, the motorcycle industry, because its growth on year-to-date basis is actually tad negative, -1% or so if you look at the Vahan registration data. Last year, it closed at about 6% growth, which is FY25. Motorcycle industry grew at 6%. But there was a little bit of a tumble, particularly in June, July, and also in August, bringing the industry growth from April to August to -1. So a couple of growth inhibitors, which we felt were there, and these were, the inflation, which was reducing the disposable surplus to our kind of customers, and also a little bit of restraint on the side of retail finance companies in response to a disposable surplus getting weakened. Now, both these growth inhibitors, so to say, will get mitigated to a large extent by the GST cut.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Back with India Market Close right here on NDTV Profit. Now, it's 2:35. Let's get in our guests on the show to try and understand what to do in terms of trade. We already had Gaurav Bissa speak constructively about specific pockets. I wonder if Akshay Bhagwat, who is Senior VP JM Financial, mirrors that sentiment. Akshay, good afternoon and thanks for joining in. It almost seemed until Friday that it's a buy the dip market, probably still is. But both Friday and today, we've gotten a bit of a dip, right? Is this a dip that you want to buy, or do you believe that the dip should be a bit more before you go out and initiate longs?
Good afternoon. Well, yes, it continues to be a buy on dip market, and it was a bit overstretched the point where it was trading last Friday. And the cool-off definitely gives us good opportunities to look for longs. If you look at the levels of 25,150 to 25,200 zone, that's an immediate support which should work for the very short-term trades. I think there should be a short-term pullback picking up once again. Tomorrow is the weekly expiry for the Nifty index, and in all due regard, there can be some volatility on the expiry day. So I'm looking at supports of 25,100 to 150 zone where I'm expecting a pullback once again, and in all due course 25,500 and 25,650 would be the two upside targets one can work with.
Okay. The other thing, Akshay, is if IT is not gonna be the participant today, Reliance Industries is starting to correct a bit as well. What takes the index higher? Is it Bank Nifty? Is it something else? And what are your specific recommendations for this afternoon?
Yes, so sector specific, if I were to take a trade and I'm talking about index rebounding once again, then Bank Nifty has to come to the rescue. In the prior rally which we saw in the bank index, it was primarily supported by the PSU banks, and somewhere the private banks have to get to the rescue act if Bank Nifty were to move up from here, because most of the PSU stocks, banks have already been overstretched on the short-term technical parameters. So I think if you look at the technical setup of ICICI Bank or an HDFC Bank or even an IndusInd Bank which has been beaten down. So these stocks have good weightages in the bank index, and I believe that they should come to or put up a rescue act for Bank Nifty to recover once again. Stock specific recommendations which I have on today's show, both on the buy side. The first trade is in Ambuja Cement, and with the Adani Group shooting up today, I think Ambuja Cement too is a beneficiary of this move. The momentum is catching up well. Cement stocks are also gaining good traction as we see on an intraday front, and I'm looking forward for upside targets till around 625 in Ambuja Cement with a stop loss of 582. The second recommendation is from the aviation sector. It is in Indigo, where the stock has been confined in a range since the last 7-8 days. But the way the short-term setup indicates that the stock is on the verge of a short-term breakout, which post which the stock should see a possible targets of around 6,032 on the upside. The stop loss would be 5,627 on this buy trade.
So two counters, Interglobe Aviation and Ambuja Cement, that come in as top picks. But another sector that is on our radar is IT. After the kind of correction it's seen, top loser, majority of the stocks seeing pressure on the back of the H1B visa fees that have increased as well. Jasmeet joins us with the details. Jasmeet, over to you.
Well, right, yes, thank you for that. Let's quickly understand the key takeaways from the overall shenanigan. The first one is the cost of doing business is supposed to go up after this particular announcement. When we look at the other aspect, we see that the companies plan on more of offshoring, hiring local talent, than investing more money in H1B visa. Well, thirdly, if we look at the other aspects, the Indian IT competitiveness is still maintained. Given this H1B visa impact will be on overall all the countries, so it's not like Indian IT competitiveness might be lost. While lastly, we also have the dependency on H1B visa have reduced over the last 8 years given the initial Trump initiation of 2016, and currently we have roughly 21,000 applications for it versus 39,000 back in those days. While we also said the earnings could fall, but there will be higher on-site wages which will hit margins by 3 to 4% going forward. If we look at the other aspects, the larger IT firms are well placed in this particular initiation compared to the mid-cap firms. Now let's quickly understand what does the brokerages say with the overall picture. We have DAM Capital telling that only 1 to 3% of the workforce of the entire firm is on H-1B visa, so the impact could be negative. Then we also have ICICI Securities, which says that they believe IT service companies could benefit from this move given the offshoring will reduce the cost and also help in margin improvement, while they also say this would trigger higher offshoring with reduction of cost. While next year Morgan Stanley, they say that the medium-term impact could be higher cost structuring, while they also see that order could be changing in the operational model and the business model as well. Now, they also see that it will allow the room for building into potential pricing for the new contracts where the client cost might increase going forward. While lastly, we also have Citi in the picture. They say that the cost of doing business in the US is going to go up, while they also say that Indian IT firm are in the cautious mode, so that's something to watch out for. Then we have BofA. They see a 7 to 18% annual profit impact by this particular move, while they also see that the Infosys, they have maintained the buy rating and they have cut the target price to 1780 from the initial of 1840, while they have also cut the target prices for Wipro with a maintenance of underperformance. Lastly, we have Jefferies. They see a 7 to 12% impact by this, and this will be adjusted over the next 3 years, and they also say that the higher onset wages to hit the profit by a range of 14 to 13%. So this is what all the brokers are penciling given the impact of H-1B visa.
Thank you so much for that. It's a very mixed view coming in from brokerages as well at this point in time. But let's get in Siddharth Khemka, Head of Research, Motilal Oswal Financial Services, joining in. Siddharth, welcome to the show and always a pleasure to speak to you as well. How would you advise investors to look at IT as a sector right now with the kind of correction that is coming in? Not all brokerages are penciling in a major negative reaction, though there is that uncertainty, that cloud which still hovers. What would you do?
Yeah, hi, good afternoon, Hiral. Good to be on the show as usual. I think there is a fair mix of, definitely there is a fair mix of uncertainty regarding to the IT companies. But one thing clearly stands out, and that is what most of the corporates have also come out and given clarification that at least in the near term, the impact could be very minimal, about 200 to 300 basis points at max on the overall revenue front. That is also because most of the FY26 requirements in terms of visa applications have already been locked in. So any new incremental cost in terms of the new tech, the visa fees would only start coming in from FY27 onwards. And by that time, there will be enough clarity as to how this business model could turn and switch. We heard a lot of companies talking about the onshore-offshore mix changing over the next few months. They can also look at some of the other regions like Mexico and Canada, which are at the same time zone, from where they could run some of these services which are required to be delivered, especially once the project delivery starts. That is where we see a lot of hands-on approach that is required. Overall, what we see is that Q2 earnings may not be that great, and things would gradually improve as we go forward because with the US Fed rate cut, we definitely see the overall discretionary spending on the tech side improving over the next few quarters. Nonetheless, as I said, near term, there could be volatility, but someone who is looking from a 2-year plus perspective, it's a good time to start accumulating with the expectation that the near term volatility can bring down the stock prices even lower. We have seen that stock prices have fallen in the last few quarters. Valuations are at a comfortable level. So we see even companies like Infosys announcing the buybacks, giving a kind of a cushion to the or a downward support to the stock prices. So the downside looks limited, but for the upside, we'll have to wait for at least few more quarters.
Okay, so that's with regards to IT. Downside looks limited. In fact, a couple of we were speaking to Mr. Shenoy, Deepak Shenoy as well, but he was of the opinion that the upside in terms of technology-related firms is major, but obviously does not take IT as a sector into consideration on that side. But Akshay, coming to you as well, with the correction that has come in right now, what would you advise investors to do with IT? And if you're a buyer, would it be any of the large cap or the small cap, the mid cap IT companies?
Well, it's day one and the news is just sinking in. So, there is some bit of an intraday volatility and we need some concrete evidence based on charts as to exactly where to call it a bottom in the IT space. So right now, what I understand is it's a broader range which the sector per se has been setting up since the last 1.5 month. And if you view technically Nifty IT index, I think at the levels of 35,380 odd, where it trades, there is still some more downside, possibly 34,200 can be in the making. So if a choice of stocks has to be made here from a price reading perspective, TCS would be one of the names which you can consider. It's down by over 3% but I think I will be looking to buy this again on the base areas around 3,000. So not today. When it dips further around 3,000, that's a good level to start rethinking about buying TCS on dips. Infosys is the other name which you can consider, although down by around 3%. The dip of around 1440, which is the lower end of the band, would be the band where you can reconsider buying this stock. So yes, still more room for some downside, maybe 2-3% more, and there's where again IT becomes lucrative for a trading bounce back.
The Motilal Oswal, of course, Siddharth gave, and I think their note suggested that they believe that there will not be too much of a margin dilution as well, maybe a bit of a top line softening. Well, I think the jury is out. We've seen the correction today. To a lot of people, this correction bakes in most of the negatives. Let's see if that is indeed the case. Mild de-rating also entirely possible. Breaking news, by the way. Okay, breaking news. Sorry, I just saw the red and I thought, okay, it's one more breaking news, but this is big. Okay, IndusInd Bank has mentioned or named Viral Damania as the CFO. So there's a CFO appointment that has happened in IndusInd Bank. Now, yes, this may not be a stock moving event, but from a perspective of what the bank has gone through in the recent past, this is an important one. I had a different question to ask Siddharth Khemka, but I'll bring him in on the IndusInd Bank conversation. Maybe Vishwanath will join us in due course as well. But Siddharth, crucial for IndusInd Bank, right, to have key managerial personnel appointed because they really want to ensure that the stemming down of confidence in the company's management functions is corrected, and this would be probably one such step.
Yeah, I think, hi Neeraj, good afternoon. So I think if you look at IndusInd, a lot of things on the plate for the new management, a lot of write-offs, a lot of accounting policies that needs to be made straight before the street starts having a belief in the overall franchisee. Near term, I think the financials that continues to remain weak, and in the challenging environment, I think the overall growth is also likely to be subdued. So the only trigger that the market could see is a good credible name coming in the CEO's place, and that could bring in some excitement. And apart from that, as I said, even if a new credible name comes into the place on the picture, there's a lot of cleaning that needs to be done, a lot of confidence building that needs to be done over the next few quarters before the market would start giving it a higher valuation multiple.
Okay, so though the stock after the news as well is at the day's lowest levels as we speak, with cuts of 1.4%. In fact, Santosh Kumar will continue to remain as the deputy CFO is what we're picking up so far. Very quickly, Akshay, your view with regards to IndusInd Bank from here on, and secondly, anything that actually comes to your radar that could be a buying opportunity?
See, IndusInd Bank technically is trading negative. It's just that it's clinging on to a short-term support. The support zone is exactly where we trade right now. That's the levels of 730 to 735. So you should not jump the gun and buy its support. Let it show some intent of recovery from the support, because if the support were to breach, we are looking once again for downside targets till 650. So keeping fingers crossed and hoping that once again you get slight bit of a recovery above 750, but in a no trade zone, trading at support, the trade setup will be either if you are intent on buying the stock, 750, let some strength get back in the stock before you commit your buy trades. Otherwise, we are looking at levels of 650 on the downside.
Downside you're looking at on IndusInd Bank. In fact, I was just going through this seasoned finance leader with over 27 years of professional experience, and he's been the CFO for Bank of America India. In fact, let me get in Vishy to get us more in terms of what this would actually mean. You know, a CFO coming in right now, still Vishy, you're seeing the stock which is actually inching lower at the day's lowest levels.
Yeah, so I mean, it's interesting that the CFO announcement is coming in now, about a month after Rajiv Anand took over as the CEO of the bank. But it's an important role. Remember, they didn't have a full-time CFO for a while now. Even Gobind Jain, who actually quit the bank back in January, he was also not a full-time CFO at that point in time. And since then, of course, the bank has had an interim CFO managing things, Santosh Kumar, the name of the gentleman there, who was part of the internal audit department. So he's, of course, now going to continue as deputy CFO, and Viral Damania will take over. Viral Damania has largely been a foreign banker, Bank of America, as Hiral was talking about, and then before that with Citibank, and he's worked in India and Bangladesh, and he's also worked at PwC. So some amount of international experience coming in, but what people will watch out for is if the new CFO comes in and finds more skeletons in the closet, because that's going to be the problem area. You know, already Gobind Jain claims that he was the one who blew the whistle on IndusInd Bank's accounting issues. That remains to be proven. Of course, he's also part of the investigation that is ongoing currently. Actually, this week, the police is going to, the EOW specifically, is going to question former MD and CEO of the bank, Sumant Katpalia, as well as Deputy Arun Khurana and Gobind Jain. All of these three people will be questioned between Monday and Wednesday, and then we'll find out whether they have anything more to say. On top of that, the new CFO coming in, is this going to be a kitchen sinking quarter? That's going to be the question, you know, whether the September quarter is going to be the problem area.
To add to this, Santosh Kumar continues as deputy CFO as well. So are you seeing any dynamics change there?
Not really. I mean, so you need somebody who has handled that position for a while to take, you know, sort of that transition period into account. So to that effect, you of course need the person to continue. But Viral Damania, so again, the point being that the Q2 quarter, whether there's going to be anything more that comes out, that's going to be a fear that a lot of investors are going to have about IndusInd.
Absolutely. Thank you for that, Vishy, for getting us some perspective as well. So I think that fear is there, and that's the reason why you're not seeing any positive reaction on the stock. The stock continues to inch low. We're nearly at the day's lowest levels. 1.3% is the kind of cut that we are seeing on IndusInd Bank with new CFO who has joined, that is Viral Damania as well. But let's move on to another aspect, which is GST and the kind of benefits that are pouring in overall, because we're talking about a consumption boost ahead of the festive season. One company which is looking at expansion right now, just ahead of the festive season, is P.N. Gadgil. In fact, Mr. Saurabh Gadgil, Chairman and Managing Director at P.N. Gadgil Jewellers, joins in. Saurabh, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is overall, the expansion that you're looking at right now in the next couple of weeks, multiple showrooms that you're opening, is this an anticipation of a super festive season?
Yeah, good afternoon. It's a pleasure, and I'm wishing everyone a happy Navratri. After IPO last year also, we had done a similar story, 9 days, 9 stores in Navratri, and which had paid off very well. So this year also we're doing a similar strategy, 6 stores of PNG and 4 stores of Lifestyle in this 9 days of Navratri. We have seen that this is a time when the industry sees a lot of footfall, a lot of boost in consumption. And our history has always been that this entire month gives good sales. So as a strategy, we always try to have a lot of store launches during the festive period. And hence, again, this year, we are doing 10 stores, 6 of PNG, 4 of Lifestyle. And we have called the entire activity as a celebration of 10 stores, the Shotsav.
You know, the thing about even jewelry companies would be that with the festive season coming in and the mood change in the mood change around just the GST-led benefits that come in, possibly leading to better mood, better sentiment, would all mean that maybe consumption of jewelry, which has actually been very strong, might continue to do well. And that would be the other question, Saurabh. I'm just trying to understand, Neeraj here, good afternoon. Do you expect that this festive month in particular, the next, let's say 40 days, right? Do they bring in substantial volume proposition on forget the number of stores expanded, but even on the stores which are operational right now, do they bring in the possibility of substantial volume expansion?
Hi, Neeraj. So definitely this entire month, like 40 days, would see great footfall. We see almost 100% conversion during festive time, and I think a significant portion of our revenue comes from these 40-45 days. So definitely these 45 days are focus for us, and it's also a time when we sell a lot of festive jewelry coupled with wedding jewelry in the following 2 months of Diwali. So definitely, so this period is a period of very high importance for us, and it would add definitely to the the entire year's numbers, because we have 2 main seasons: the Gudi Padwa Akshaya Tritiya month, the March, April, May season, and then the Diwali month of September to November.
Saurabh, sorry to cut in here, but just trying to understand. If I'm a consumer, and if buying gold, unless of course it's for weddings, it's separate, but if buying gold is not a time constrained event, if you will, and because I have optimism around goods where the GST rates have come off and therefore the prices have come off substantially, could it happen that the consumer may postpone the buying of jewelry or gold in favor of durables, etc., because there is only limited budget, right? And therefore there might be a delayed purchase of gold and jewelry?
I don't think this happening primarily due to 2 reasons. One, that today's sentiments around gold are bullish, and everyone wants to be invested in gold with a short and long-term view. So there's a lot of demand for gold from the investment perspective. And for the consumption side, we feel gold is a sticky consumption because it's linked to festivities, it's linked to emotions, and buying during these festive days is believed to get prosperity, is believed to get you more happiness. So this will not change in spite of the GST rate dip which has been announced by the government. I think it will have a positive impact on jewelry because people will have some more liquidity left, which can convert back into jewelry. So we are looking at the positive steps to lead to more consumption in jewelry.
Saurabh, a positive impact from a consumption perspective, absolutely, where disposable income to invest is higher. Would that actually flow into gold or would that flow into silver? What is the trend that you're looking at? Because currently the pace at what silver is moving is way faster as compared to gold.
Definitely, both gold and silver are on a bullish path, and we've seen rise in both. Like you rightly pointed out, silver has seen a little higher rise than gold. But I think festivities like Diwali, festivities like Navratri, bring a lot of gold consumption because people want to, have this golden necklace set, golden bangles, for their own consumption, gifting. So I think gold will rule the roost. But silver, again, for investment, silver coins during your Dhanteras are also popular. So both, I think will be popular. But if you look at ratio-wise, I think 90% will be gold and 10% will be silver consumption this festive season.
And gold, 10% silver. That's an interesting one. Thank you, Saurabh, so much for joining us on the show. In fact, we will be looking forward to reconnecting with you once we are mid-festive season to understand what the channel checks are indicating as well. But thank you so much for joining us.
Thank you.
Absolutely. In fact, let's quickly slip into a short break. On the other side, we'll get you the top buy today and sell tomorrow picks as well.
the best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. You're watching India Market Close on NDTV Profit. Now, Adani Group companies have been surging in trade after the SEBI's clean chit on the Hindenburg allegations. Let's head across to Anushi to tell us more as to what's happened and what's the kind of increase that we've seen since February 2023 and what are the key triggers from here on. Anushi, over to you.
Well, Hira, the rally continues for these Adani Group companies that we are looking at, and it's a big jump in terms of market cap addition that we are looking at since the Hindenburg saga that had happened in January of 2023. In fact, what we are seeing as overall addition of over 8.7 lakh crore over the course of this 1.5 to 2 years period that we are looking at, with Adani Power, Adani Ports and Adani Enterprises contributing the most to this market cap addition that we are seeing. We have other group companies in focus as well, but it's interesting to see the kind of moves that have taken place over the course of these 2 years period, in fact, that we are talking about. If we just see Adani Power, in fact, it has logged in about more than 5 times of a gain since that period that we are looking from February of 2023, wherein the companies, most of these companies had hit lows since the period that we are seeing. In fact, if you look at Adani Ports, Adani Enterprises also, it's a big shift that we are seeing in terms of how the percentage changes. But about what has happened and the key developments in terms of, what the companies are doing, most of the companies have maintained the guidance. In fact, some of them have even upped their guidance in terms of what has taken place. Adani Group, first of all, talking about Adani Enterprises, now group companies continue to see a rise after SEBI's clean chit on allegations by Hindenburg Research. In fact, SEBI finds no evidence of wrongdoing by Adani Ports, Adani Power, as well as Adani Enterprises. Adani Ports, if you look at the key developments that are taking place now, they expect a revenue increase of over 16 to 22%. This is to the levels of 36,000 crore to 38,000 crore, and this is with an increase in your focus towards trucking revenue that we are seeing.
Got it.
That's
Anushi,
the overall picture. Yeah.
Thank you so much. And on cue, Anushi, let's cut across to Gautam Adani talking.
But what we create must leave its mark on a history. समय की रेत पर हम छोड़े निशान, सुर्खियों से बढ़कर हो हमारी पहचान. And finally, embrace transformations. The future will march forward, with or without us. Either we shape the future into what we dream, or be shaped by the future into what we fear. रूप बदलना ही जीवन का सार, जो झुके नहीं वही बने अवतार. Therefore, my dear friends, let history remember the past 3 years as the spark that built a greater Adani. An Adani that stood taller in dignity. With every challenge, it quietly overcame. And let our resolve echo through every barrier we dared to break. Echo through every tomorrow we dare to build. Echo through every dream we dare to chase. And may the name Adani forever stand for courage, conviction, and a promise we all kept to our motherland, Bharat. My dear colleagues, Satyamev.
Okay, so that's Gautam Adani addressing all employees as well and clearly saying that integrity and transparency must remain the foundation of the group as well. Siddharth, a quick view in terms of Adani Group companies with the kind of up move that we've already seen, the kind of investing, the kind of plans that they have from here on, would you be a buyer?
Even if you look at within the Adani groups, we have coverage only on Adani ports in that sense. But I think what has come out clearly, the market is positive and the sentiments have turned in favor of the group after SEBI's clean sheet to the promoter and to the management.
Got it.
Yeah, so within the group, I think Adani Ports is one business which we are very positive on in this global volatility. They have consistently grown capacity, and I think over the next few years, capacity-driven growth as well as valuation comfort makes us positive on Adani Ports.
Okay, so Adani Ports is the topic and followed by Adani Green as well. In fact, let me also get an Aditya Agarwala from Invest for Edu. Aditya, good afternoon and welcome to the show and a pleasure to speak to you as always. A quick view with regards to where, let's talk stock specific itself. IT, which has seen a correction, anything that could come on your buying radar from there? And secondly, when you look at IndusInd Bank as well, on the back of the new CFO that has been announced, the stock is under pressure. What would you advise investors to do on both of these?
Good afternoon, Hiral. Thanks for coming on the show. Let's first talk about IT as a space. In the morning, we did see a sharp gap down opening, and from there, we are witnessing some kind of a buying emerging from lower levels. My sense is you're going to see a bit more volatility maybe for a day or two, but once the dust settles down, my sense is you will see IT coming back in the reckoning, and you will see a big short covering rally or maybe some long build up as well. I would like to stick to large cap IT names. A couple of them that stand out for me. Infosys, I think, offers an excellent risk to reward at current levels, and if you see from lower levels, we did see some kind of a buying in Infosys. So that is one stock that I would like to keep on my radar, and would like to keep adding in my portfolio today. And if it comes down tomorrow, we see a bit of a profit taking in Infosys as well, then that is also something that I would like to add in the portfolio for a target of 1650, 1750. Second is TCS. That is also looking quite impressive and interesting to me. Offers an excellent risk to reward as well, with a support on the downside at 3000. I think TCS also makes the cut, and then you can easily see levels of 3300, 3400 on TCS as well. And finally, HCL Tech is something that also looks quite interesting to me. So sticking to all large cap names, Hiral, and on HCL Tech, I think 1650, 1700 is something that you can spot. So this is as far as IT is concerned, and my sense is you should not ignore IT. And once this, after this news, the dust settles down, you will see a run up in IT stocks. Now talking about IndusInd Bank, we're not seeing anything happening in the stock after that sharp correction that we had witnessed in the stock. After that, it has been a one-way downward spiral and a slow grind, I would say. You see everyday stock slides about 1% or 2% lower. Even at current levels, I would still be skeptical holding on to IndusInd Bank, or rather look at fresh long addition in IndusInd Bank. There are better names in this space. I would look at them. I would give a complete avoid on IndusInd Bank. Till the time I see a move beyond 800 odd levels in IndusInd Bank, I'm not really interested in IndusInd Bank at current levels.
Yeah, well, I think a lot of people won't be for now, but tell you what, I mean, the current CFO not as well known, but the CEO very well known, and guessing he'll work his way through. What are the ideas though? And Aditya, I buy your point that let the trend show, and then it's better to buy from a trade perspective. Right, so and I kind of heard Siddharth say the same thing as well, almost to that effect. But Aditya, first, what are your stock recommendations for the afternoon?
Good afternoon, Neeraj. So a couple of stocks. The first one is Blue Star. It looks quite impressive to me on the chart setup, and we're witnessing a good run up in most of these stocks. So it's more of a consumption led right now market that we are witnessing. So stick to those names. So Blue Star is a buy for a target of 2150 with a stop loss at 1920 on the downside. Second stock is Naukri. We're witnessing a good up move in Naukri after a very long period of time, and it's a good move on the back of decent volumes as well. So I will stick to Naukri for a target of 1530 on the upside with a stop loss at 1350 on the downside.
Okay, on to our bull versus bear segment, and let's get in Varsha to talk about Borosil Renewables. Varsha, it's really zoomed today, so I'm guessing there is a bull argument. Trying to understand what is the bear arguments here.
Well, thank you for that, Neeraj. Let's start with the bull argument first, with the GST implication, of course, which is the talk of the town. With the GST implication from, the GST reduced rates from 12% to 5% is a positive boost for the company. But, company is expecting 2 to 4% of volume growth only in FY27 because of the, capacity, rather because of the new capacity being not fully operational. So that's one of the bear risks that the company has. While the new expansion of 600 tons per day brownfield expansion is on track, will start in FY27, but this long time gestation period for the new plant carries the execution risk. The strategic decision of a company's German subsidiary insolvency is one of the key trigger point, will also help in the capital allocation, and company will diversify their plans when it comes to India operation. But the subsidy failure at the international level is one of the risks, and the failed expansion proves that there has been a weak demand when it comes to international expansion as well. On the bull case, government policies like anti-dumping duty and ALMM provides a robust market for, of course, the solar modules, but for Borosil Renewables as well. But rising domestic competition, because a lot of companies are actually expanding hugely when it comes to solar glass or solar cells or modules. There is a lot of expansion going on. So this competition is one of the risks that the company faces. So yes, GST impact is the positive trigger for the company, but rising competition and all the new capacity which will be coming in FY27 poses some risk when it comes to volume growth overall. But onto that, we did speak with the chairman of Borosil Renewables, where he talked about how GST will positively impact the company, and of course on the outlook for next 2 to 3 years. Do listen in.
The drop in GST rates on sales of solar modules from 12% to 5% is a very, very welcome step, and this is definitely going to boost demand in the domestic sector. We, of course, are suppliers of glass to module makers, and therefore we are looking at an increased demand coming in. As matters stand today, Borosil Renewables is fully sold out. We have sold all our production. There is demand for it. And we are currently in the phase of expanding our capacity significantly. We have announced 600 tons per day. When I have been out negotiating for equipment, I find that the 600-ton figure is likely to be exceeded.
Okay, so that's with regards to Borosil Renewables looking at capacity expansion from 600 tons per day. Probably it could go to 1,000 tons per day that they had planned earlier as well. But now it's not the time for herd in the street. We are slightly delayed today on that front. But let's head across to Somit Sarkar.
You were waiting for the music to pause?
Absolutely. Yes.
So yeah, multiple stocks that remain in focus. Firstly, it's Hindustan Copper. Now there are buy flows on institutional desk. Second quarter numbers are expected to be quite strong for this counter. So keep an eye out for Hindustan Copper. Indigo is another stock. There are buy flows on large HNI desks. Dealers are indicating that air traffic might be a bit slower in the second quarter, but deals which measure average fare per passenger per kilometer, that could surprise on the positive side, and hence we are seeing this kind of an uptick when it comes to Indigo. For AB Capital, there are buy flows on PMS desk is what dealers are indicating. Camlin Fine, smart investors have started to accumulate. Delivery volumes could be on the higher side for this counter. The dealers are indicating that there is strong demand pickup that they're seeing for one of its key product, vanillin. When it comes to Paytm, the selling pressure is largely over is what dealers are indicating for time being at least, and hence we are seeing this kind of a 2% uptick that we are seeing in trade today. On Friday, the stock had declined sharply, but dealers are indicating for time being that the selling pressure is largely over for Paytm. For Aurobindo Pharma, dealers indicate that there are some buy flows on FI desk at lower levels in trade today. And for RateGain, there's a buzz of a potential acquisition announcement that could come in. This could be a bigger acquisition for the company. For ITC, there's a buzz of a potential block deal here. And for IMFA, there are buy flows on large HNI desk. There's some positive development that could happen anytime very soon for IMFA. So keep an eye out for IMFA as well.
ITC potential block deal.
Right.
Okay, and that could happen in the next few days.
Yeah, timeline I don't have, but the talks have started for that block deal is what.
A large one?
Yeah, a large one.
Okay, then you and I both know who could the seller be. So that is part one. Samit, the other thing is we don't usually hear too much about stocks, about Indigo in particular these days, simply because this overhang of the block, etc. The final few shares are left. Why this optimism? Because I know you track aviation very closely. Why this optimism likely?
You see, Q2 air traffic is weak. That is largely factored in right now. But what dealers are indicating is that fares could surprise on the positive side. In first quarter, we had seen a decline in the yields. So that could turn around in the second quarter. And this setup will be very strong given the fact that Q3 and Q4 will be a strong air traffic. So strong air fares and strong air traffic. The setup looks quite good for Indigo then.
Wow. Interesting ones. In fact, out of this list, let's just take a quick question with Aditya as well. Thank you, Somit, for that. One is Hindustan Copper, strong fundamental, plus there's a herd on street that even Somit has got to us. But are you seeing further upside, Aditya, on a Hindustan Copper? And secondly, Paytm also is another one along with a RateGain. Three names that come to my radar from this one. What are charts indicating?
Let's talk about Hindustan Copper, Hiral. It's been a very strong move, and it's not just today. If you take a look at last week, also we witnessed similar kind of an up move on the back of very strong volume. So my sense is this buying on such strong volumes will propel the stock much higher in the coming trading sessions. Probably can test levels of 350 as well. So that is the kind of target that I'm playing with on Hindustan Copper as of now. And on the downside, 270, 75 seems to be a very decent support. So the risk to reward is also favoring that you can still take a long bet in Hindustan Copper for a target of 350, 360 at least, with a stop loss at 275, 280 on the downside. Second, talking of Paytm, honestly, the risk to reward now is little skewed, not in favor of going long. It's more of a consolidation that I see in Paytm, a sideways price, rather than price correction, maybe a time correction is what we can see. 1150, 1100 could be on the downside. On the upside, 1260, 1300 will be difficult to take out immediately. So give it some time. It's still in a very strong up move without a doubt over a longer period of time frame. But immediately, I think there could be some time correction that we're witnessing in the stock.
Okay. And Siddharth, if I'm not wrong, you guys have been constructive Interglobe Aviation. And correct me if I'm wrong, right? My question is this the time to buy into Interglobe Aviation, or are there other stocks available which can give a better bang for the buck?
So Neeraj, I think definitely we have been positive, and I think the positive momentum, at least in terms of the numbers, should continue, given that the large order delivery in terms of the newer aircrafts that will be joining in. So by the management comments, they are likely to add one new aircraft every week for the next 2 years. So that's a huge upleg in terms of growth capacity in an environment where we are developing a lot of newer tier 2, tier 3 airports. There are a lot of international routes that are being opened up for Indian Airlines. And the biggest factor is that crude has largely remained constant. So it's in a way play on the Indian consumption story where more and more Indians are now traveling. So I think whenever that last leg of block is there, that could be the bottom. And from there, we could see a sustained growth, recovery in the stock price. For this year, our earnings estimate is a 44% earnings growth. So I think in any correction, it would be a good buy in the current market.
Okay, so that's Interglobe Aviation. A good buy in the current market scenario is what Siddharth is looking at. But let me go across to Aditya for his trading strategies. Aditya, what are the BTST, STBT trade calls for today?
So I've got an LIC which looks quite interesting to me, Hiral, for a BTST buy today, sell tomorrow. I would be looking to buy the stock at current levels, look for a target of 960 with a stop loss at 880 on the downside.
Okay, so LIC is the BTST call. 904, 1.2% upside, though the stock has cooled off slightly from the day's highs. But moving on and staying with what's happening between India and US. India is set to intensify its trade negotiations with the United States as Commerce and Industry Minister Piyush Goyal leads a delegation to Washington today. Rishabh joins us with more details. Rishabh, good afternoon. What are you picking up?
Absolutely, a crucial set of negotiations is starting today in Washington, led by, of course, India's Commerce Minister Piyush Goyal. Apart from that, you will be joined by India's Chief Negotiator Rajesh Agarwal. Both of them will be leading a delegation for trade talks with the US. Now, this comes right after you had the likes of Assistant US Trade Representative Brendan Lynch visit India last week. He was in town for about a day-long talks that he had with the Indian side. This came after a certain thaw came in the relations between India and the US. There was some sort of barriers that had come up, some sort of issues that had propped up. But with the top leadership, with President Trump and Prime Minister Modi also reconciling, that has gone away, and trade talks are back on the fast track. Both sides have very clearly said that they are expeditiously moving towards an early conclusion for the first tranche of the bilateral trade agreement. That means that there is a real possibility that the fall deadline is respected in this case, and the fall deadline is roughly around mid-November or the end of October. That is when we can expect the contours of a first tranche of the bilateral trade agreement to emerge. India is expected to stick to its red lines. You have the top leadership, all of them have said that agri and dairy, those two remain off limits. India will continue to protect the interests of its farmers, of its livestock holders, of its fishermen and its MSMEs. That has been the word throughout, and that is expected to stay in the current round of negotiations as well.
Thank you, Rishabh, for that. In fact, interesting information that is coming in and details arising out of it will be crucial to track as well. But Aditya, few of the other names that are buzzing in trade today, MK Global locked in upper circuit. John Cockerell, that's another one which is seeing some smart moves over the last couple of trading sessions. That is also locked in upper circuit. Tina Rubber, Shalby, Viviana Power, SEPC, all smaller names, but very strong moves coming in all these counters. I know the ones which are locked in upper circuit, you might not see any opportunity to right now invest in. But anywhere where you're seeing strength in the charts over the last couple of days, where if any opportunity arises, you could look at a buying call.
Out of all the names that you took, Hiral, maybe a Shalby something that I can look at because it's not just today that we are witnessing good volumes. There are good volumes that we've been witnessing constantly in the stock on all up moves in the past few trading sessions. That tells me that there is enough strength in the stock to take it to levels of maybe a 290, 300 all the way up. But just a caveat here, these stocks usually carry a lot of risk. If you take a look at their beta, usually you will find it very high. Very sharp moves happen in these stocks. So one has to be little nimble-footed. If the trend reverses, you should exit the stock immediately. So maybe you can put a stop loss somewhere around 250 for a Shalby and look for a target of 300. And if the trend reverses in these stocks, you should exit the stock quickly rather than holding on to them, because the trend also reverses very fast on the downside.
Okay, so that's with regards to where Shalby goes. There you're seeing some good volumes that are coming in. Siddharth, very quickly with regards to auto as well, some strong moves coming in terms of today's session. Would you be a buyer with the kind of upside that has restarted?
So yeah, Hiral, if you look at the GST 2.0 reforms got implemented from today, and one of the biggest sector that benefits remains auto. So the entry-level auto stocks, for example, Maruti, Hyundai, then you have Hero Moto on the two-wheeler side. And I think the biggest beneficiary this year we are seeing is M&M. There is a strong push from the rural side with the healthy monsoon, the RBI cutting rates right across, the enough liquidity into the system, and finally the GST beneficiary. So I think all in all, we continue to remain positive on the entire auto space. Our preferred picks, Maruti, M&M, and in the two-wheeler space, Hero MotoCorp.
Okay, so Maruti and Hero MotoCorp 2, M&M and a Hero MotoCorp, 3 companies that Siddharth is looking at as well. But you're just 2.2 minutes away from closing. But very quickly before we go, Aditya, any one call that comes to your radar towards closing that you would recommend, apart from your BTST calls or anything that you've recommended so far?
Not really, Hiral. I would stick to one blue star that I had spoken of at the start. That is looking very strong. So I will stick by that for a target of 2150, stop loss 1920 on the downside. Second, one stock which is seeing a very sharp move towards the closing end of session is Muthoot Finance, looking very strong on the chart, set up a sharp 4% up move on the back of good volume. So this is also one stock which can be looked at for a BTST candidate for a target of 3200 on the upside with a stop loss just somewhere around 2950 on the downside.
Okay, so Muthoot Finance, another one. Siddharth, anything that you would want to recommend?
So I think one more stock that comes to my mind to play this entire consumer space and the beneficiary of GST 2.0 is Polycab. I think with the now monsoon behind, the capex driven sector, especially with government projects picking up pace, plus the construction activity on the residential side, that should boost demand. There is clearly the long term, if you look at the investments in power, railways, roads, infrastructure, real estate, that is likely to sustain the demand. And Polycab has a lot of focus in both the cables and wire segment as well as in the FMEG, which is your electronic goods. So both of which we believe could sustain a strong earnings growth of around 20% plus over the next few years.
Right. So that closing. So thank you so much, Aditya and Siddharth, for joining us on the show. But Polycab to be absolutely noted by viewers and investors, as well as a fundamental pick coming in there. In terms of closing rates, let's quickly pull up Nifty 50 on the screens. Not a bad day, but the breadth in terms of markets has been absolutely narrow. We're closing absolutely near the 25,200 mark, 0.5% downtick coming in there, probably near the day's lowest levels as well. Bank Nifty as well, 0.3% lower, so some bit of visibility coming in on that front. Let's quickly pull up VIX as well as the PSU Bank Index, and then we'll see the sectoral heat map in terms of what the closing is looking like. VIX is what has actually climbed today, 5 to 6% upside, 10.55, but that is still a comfortable level to look at. If you see in terms of the breadth as well, if you have the advanced decline ratio, that will tell you the absolute story. You see the gyrations that have come in during the day. Your declines have been way higher as compared to your advances as well, nearly double to your advances, and that is what has actually put pressure overall. Overall, if you see in terms of your individual sectors, and then let's pull up the Nifty 50 heat map post that. Energy, media, metals, they continue to be the gainers, but majority of your sectors have actually got into the negative. IT, some respite coming in there, but the top losing sector today, 2.9% is the kind of cuts coming on that one. Pharma and India Defense, which actually ended lower. Apart from that, in terms of the consumption pack, let's see what's happened there. Marginal gains of 0.2% in terms of Nifty consumption as well. Oil and gas, which has also come in on the borderline. So clearly your losers are way higher than your gainers. Auto also started to see some correction. Let's look at the heat map in terms of Nifty 50, and then we'll look at the contributors. Adani Group of companies, strong moves there. Adani Enterprises, Adani Ports. In fact, the entire group has and was buzzing in trade today. Eternal, Bajaj Finance, Ultratech Cement, SBI, few of the top gainers there. But clearly, the breadth in terms of the losers is way higher as compared to your gainers. Tech Mahindra, TCS, Infosys, Wipro, HCL Tech, all of them in the red. Cipla is in the top 4 to 5 companies which were the top losers on Nifty 50 as well. And in terms of broader markets, let's look at what that looked like, because there was some bit of respite in terms of the mid-cap and the small-cap index. But there you go. After that dip, we did see some bit of a buying interest coming in back, but pretty much in line with what the benchmarks were doing. It's the small cap 250 which saw a major downtick, 0.9% lower on that front as well. In terms of individual companies, we already saw a few of them. MK Global locked in upper circuit, John Cockerell locked in upper circuit, Tina Rubber, Shalby, Viviana Power. These were few of the names which saw some good moves in trade today. Adani Power, Adani Green, Borosil Renewables, NetWeb. These were few of the other gainers as well. IFL Caps, in fact, has actually got added to that downtick, 7.5% downtick there. Car Trade, another one. Zensar Technologies, Kesoram Industries, as well as Kfin Tech were few of the other top losers in trade today. But clearly, in terms of where markets go, if you see, the range has been narrow. There has been pressure which did come in again in that last hour of trade, and that's clearly visible with marginal buying interest from the day's lowest levels. But let's also move into the cues for trade tomorrow. Let's pull up that one on the screens and see what all are we watching out for. If we can have that one. Gujarat Apollo Industries, Hariom Pipes, India Glycols. Few of the names where we will see corporate action on the back of dividends that will be announced. Apart from the dividends that are being announced, the other aspect that we should be considering is the merger with regards to Piramal Enterprises and Piramal Finance, where the shareholders will be getting 1:1 equity on the back of the merger as well. And we have a Pidilite Industries bonus issue that will be announced tomorrow, and that ratio of 1:1. So that is something that you should be watching out for. And Sudarshan Chemicals will have a board meeting. So will there be anything that could come in from there? In terms of IPOs, Anand Rathi will be opening tomorrow. Apart from that, I think it's Solar Industries. Shesai Tech is another one that you should be watching out for, and Jaro Institute of Tech. So 4 IPOs that will be opening in tomorrow's session as well. So lots to watch out for, but completely out of time. Thanks for tuning in to India Market Close. Join us again for more market insights and updates. Until next time, have a great evening.
the best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
देश के लोगों को 2.5 लाख करोड़ रुपए से ज्यादा की बचत होगी। और तभी तो मैं कह रहा हूं ये बचत उत्सव है। हम वो सामान खरीदें जो मेड इन इंडिया हो। हर दुकान को स्वदेशी से सजाना है। जब ये होगा तो भारत तेजी से विकसित होगा।
Hi, thanks so much for joining in. You're watching NDTV Profit. At the onset, let me wish all of you a very happy festive season, a happy Navratra to everybody tuning in. And as you can see behind me, I'm at an electronics store. Today is D-Day. It is the day that GST 2.0 rolls out. And I've been thinking for a while, I need a new phone, I need a couple of new gadgets, and I usually am the tech guy. I go and spend on tech that I don't really need. But incidentally, my co-anchor Mahima has been browsing a couple of sections here because I think she wants to figure out what to buy. I've never seen her so excited about tech before, and the reason is that it's all gotten cheaper. Quite a few of these things have gotten cheaper. Let me go across to her and find out what she's looking at. Mahima, what have you been looking at?
Right, so a couple of things, Alex, that I'm looking at right now. Of course, the first three things where we've seen GST cuts coming in from that 28% mark to 12% mark. The first one being TV, more than that 32-inch. Something like this, yes. And then you have your ACs and dishwashers. So people who are worried about washing dishes at home and who have no maids will be happy with the GST cut that we've seen. So these three things, of course. And of course, we've not seen any GST cut on phones. But yes, I think iPhone 17 is something that people are looking at right now for sure.
So that's one. So on the one hand, you have the GST cuts. On the other hand, you have festive offers that kick in.
Exactly.
So it's a great time to be going out and figuring out what you want, get your lists in order. But it's not just consumer electronics. And we'll be speaking with the director of Vijay Sales very shortly. Mr. Nilesh Gupta is going to be joining us. But we've also got conversations lined up for you to talk about the automotive space and also the snack space, because all of that is getting cheaper. Let's run through the list very quickly. What gets cheaper today?
So a lot of things, like from a toothbrush in your bathroom to a butter in your fridge, everything gets cheaper because that includes a lot of milk, dairy items. That includes your paneer, chocolates, ice creams, butter, cheese, etc. So that's from the staple pack. You're also seeing snacks getting cheaper in terms of where they were at 12% earlier will now be charged at 5% mark. Apart from that, you have your clothing, apparel below that 2,500 mark will go down in terms of where GST rate stands to that 5% mark again. In terms of where your hotel industry stands in terms of the consumption space, well, where your ticket size is below that 7,500 mark, that gets cheaper too. So a lot of items for sure, Alex, getting cheaper from today, and this marks the onset of festive season as well. Navratri kicking in, making things cheaper. And that'll, in general, boost demand. Yeah. That's what we've been hearing from analysts and management as well.
And also people on the ground. We've got from the automotive space, Mr. Sandeep Kumar Bafna, who's the chairman and managing director of 4 Point Automotive Cars. Sir, thanks so much for taking the time. Mr. Bafra, can you give me a sense of the offers that are currently underway? And of course, today is the day when all of those prices tick down. What is the kind of initial response that you are seeing? Do you see feet on the ground? And what is your anticipation for sales this festive season?
So let me start with two-wheelers. We are dealers for Hero. Suddenly, there has been a spike in inquiries. And in fact, today we are expecting a lot of payments to pour in for the Hero bikes. In fact, we've launched also 2-3 new products, and which were in waiting for such a long time, and that now would change the whole concept of things which are going to happen. On the car front, we are dealers for Maruti. In Maruti Suzuki, as you are aware, that there is a reduction in GST, plus the company has also reduced prices, which came to us as a big surprise. We thought that just the GST benefit would go to the customer, but the company has also reduced their prices on the product. Along with that, even though it is up to December only, but I feel that along with that, they will give a lot of other discounts and benefits which are also coming in. Financing is becoming cheap. Today, Mahindra Finance has announced that there won't be any processing charges from today onwards up till the end of the season. So I feel that this whole thing is
a combination of the prices going down on account of GST, as well as the discounts that are kicking in from the festive side, a lowering of the processing fees. All of that is exciting, to say the very least. I'll come back to you in just a bit. We're joined in store right now by Mr. Nilesh Gupta, as I pointed out. Nilesh, thanks so much for taking the time. It's an exciting time because I think normally on a Monday at 12 o'clock, it's not as busy as it is today. It's deserted, and today is a different story. Yes. Can you take us through where you think the biggest excitement is going to be after the GST cuts and coupled with the festive fervor that you would expect?
So I think this time is going to be a double whammy. One is the GST cut, and second the festival also. Plus, last 15 days have been very poor because people who are waiting for today onwards to buy. So I think the basic action is going to be in last screen televisions, because they, in rupee term, is the nice.
What is it like?
In last screen televisions, it is nearly 50 to 18,000 rupees, which has come now, 65, 75 inches and above. In rupee term, is really very. Air conditioners, it could be there, but air conditioners, we'll have to wait for the weather to be on the favorable side. Be on the favorable side. Yes. But even dishwasher, that's a category which we saw in the rise after COVID. I think that's something which will become a staple food, like how everybody has washing machine in the house, a dishwasher will also come in.
Those are where your flat screen TVs are, the big ones, right? So let's walk across to that segment as well while we're talking about it. And Mr. Gupta, really the question that I have is that alongside all of this, there is a call by the Prime Minister to make local and to buy Indian. Yes. There are more technological products, more consumer electronics that are being made in India, but there are still a lot of manufacturers that make outside and sell here. So in the catalog that you have, do you have more products than you had 2 years back that are made in India?
So now if you see in the last 3-4 years, the government ensured that all these products, 90% of them are made in India. Okay. Because they made it impossible to import because the duties were high. So everybody has set up the pack. You see in our industry, a lot of factories have been set up. So all the televisions which you see here, except for the last screens, very, very last screens, 100 inches and above, which has minuscule say. It's all make in India. And even the 100 inches and few factories a few brands are assembling here. So everybody is having make in India. Even if you see Apple phones, yeah, most of the phones are now make in India. In fact, we are exporting it also. So accordingly, I think everything what you see here is, if not 90%, at least 75-80% is make it.
Absolutely. We'll come back to you, Mr. Gupta. We're also joined by Rishabh Jain, who's the CFO of Bikaji Foods, joining us now. Mr. Jain, hi. Good afternoon to you, and thank you so much for joining. Just want to understand the demand that we're seeing in the snacking space. You know, we talked about how auto space is picking up, how consumer durable space is picking up, but snacking is one industry that, you know, when I was speaking to one of the FMCG analysts, he said that snacking is going to be that one industry that's going to see a lot of demand boost because of GST 2.0. Your view with regards to the demand that's coming in already?
So we are also expecting the same. So it's a peak Diwali season, and we see a lot of gifting and all during this season. And there is good cut from 12 and 18% to 5%. It's more of simplification and ease of doing business. So we see that it will be good Diwali this year for all the snacks players.
Let me ask you this though, when you're talking about the price points where there is going to be an impact for GST in the snacking space, the expectation is that these are all small ticket items. So as manufacturers, would you say that it's easier to control it with the grammage, and on the packet you're not likely to see too big of a change, and so therefore the question is, how does that bolster demand?
So basically, we have two type of overall packs. So family pack and impulse pack. So family pack is all about 20 rupees, which is 200 grams, 400 grams, which are MRP driven brand. So we have reduced MRP from today, and for impulse pack we increase grammage. That's what we're doing, and we are committed to pass on completely to the consumers. That's what we are targeting.
Okay, Mr. Gupta, coming back to you, last time when we spoke, we were talking about how, you are confident that this time you'll do a 20% growth apart from what you did last year. Considering now that, pre-bookings would have probably come in, do you think that 20% can be higher?
No, 20% will not. See, 20% was also a very large goal.
Yes.
So I think even if you achieve that, it's a great thing. But now the expectation is we will be able to do it 20%, because what has happened is last 15 days has been very dull. So there's a backlog over there. So that will also come in. So in this period, I'm sure this time 15 to 20% seems plausible.
And what, according to you, will drive that mix? Do you see it changing? Because as you pointed out, these televisions get cheaper. Will that
lead to television will drive? Yeah. Mobiles will drive, laptops will drive, and appliances traditionally is a Diwali product. So all refrigerators, washing machines is also going to drive. And if weather supports, normally in this part of the country, west part, November is a mini summer. Second summer. So if that happens, then with a 10% reduction in the GST, I think AC will also kick off.
Do you think the premiumization part will also pick up from here on, because now we are seeing, some products getting cheaper? Do you think a consumer would want to move towards a more premium TV or, a better energy efficient AC?
So that was always happening in the last post-COVID, but now it's going to take more further ahead, for the simple reason is a person who was planning to buy 55 now will think of buying a 65, and a 65 guy would move up to 75.
Exactly.
Okay, I do want to ask about that same question to Mr. Bafna, because Mr. Bafna, you were pointing out that there are more inquiries, but in the two segments that you mentioned, in the two-wheeler space and in the four-wheeler space, Maruti Suzuki, they are anticipating that the small cars will really see a bump in demand. I'm just wondering what you're seeing on the ground.
So actually what has happened is we've seen in the last couple of days a lot of two-wheeler customers walking into our showroom, and after the price reduction announcement 3 days ago by Maruti Suzuki, the product like Espresso being below 3 lakh rupees, customers are moving from two-wheelers to four-wheelers. I mean, they're at least inquiring, and at least 10% to 15% conversions should take place. So I feel that a lot of upward movement and upward movement in the four-wheeler industry, and from the two-wheeler to four-wheeler would also happen. Along with that, you see that the 100cc motorcycles, now people are moving to 125cc with this price reduction. So we find that the inquiries in the 125cc also has increased. With Hero coming out with the new Glamour, customers are instead of going for the Splendor 110, they're moving for the 125cc. So you see that whole upward movement has started, and I feel that this would really break a lot of barriers, which earlier customers were not thinking of buying a four-wheeler are now moving towards that. And in the rural segment also, we are seeing a lot of inquiry growth.
Excellent, and it's great to hear that from a dealership that is representing both the largest car maker as well as the largest two-wheeler manufacturer, among the largest two-wheeler manufacturers. But speaking about auto and speaking about premiumization, we've got a ground report for you from Tamil Nadu, the implications of GST 2.0 rolling out. Sam Daniels has this report. Check it out.
The price of cars have become cheaper with cut in GST from the earlier 28% to 18%. The industry is optimistic that this could encourage first-time car buyers to go for it this festive season. The GST on electric vehicles too has been brought down to 5%, triggering excitement that this could actually spur purchase of EV cars. With me, Niranjan, a health and fitness coach. Thank you very much for your time. What would this mean for first-time car buyers?
So this is definitely a very encouraging move for the first-time car buyers. I think car rates have come down and it has put the cars in an accessible range for the first-time buyers.
Do you think this should have been done long time ago? The opposition says the Indian consumers have paid 50,000 crore as GST so far.
I mean, you would always be happy if the cars were cheaper even 5 years down the line, or 5 years earlier. But better late than never. I would say this is a welcoming move. If it had been done earlier, yes, well and good, but still better late than never.
Is this eyeing elections?
Oh, I would say elections are still quite a time away, but looking at the roadmap, yes, I think elections are 4 years down the line, and especially with the BJP not getting a very strong mandate this time. Yes, they are at power in the center, but it was not a very strong mandate compared to the previous 2 terms. Right. So I think all these moves are more people-centric.
Right. Thank you very much. And car dealers say ever since the GST reforms were announced, they've been experiencing a slump in bookings, and now they hope there could be revival of demand for cars. Thank you very much, Mr. Sankara Pandian, the team manager here. Yes. How are the bookings now, and how was it over the last 2 weeks?
Sir, customers are eagerly waited because of the GST. Now, yesterday night they confirmed everything. So, from today onwards, the booking expected as more than the actual. We expected the best result from every dealerships.
What kind of price cut for your models, be it Sonnet, be it for Seltos?
Sir, in a category wise, government has decided 2 categories of GST. It is 18% and 40% for cars especially. But 18%, it is a highest margin to every end user or the customers. For example, if it is in a 10 lakh worth of car, they can save up to 1.3 lakh rupees straight away from GST. Plus added benefits available for festival seasons. So customers are really happy with that. We expected more number of booking coming days.
So it's going to be bumper festive season for you now. And for electric vehicles?
Exactly, sir. But electric, they maintaining the same for 5%. So there is no ups and downs. But electric is a future.
Thank you very much for your time. And dealers expect a bumper booking this festive season. And customers can't really wait to avail this GST tax cut, which have just made cars affordable.
Okay, so that's the ground report coming in straight from Tamil Nadu, and dealers are expecting a bumper booking season is what the word is coming in.
Bachat Bonanza.
Bachat Bonanza, exactly. And speaking of Bachat Bonanza, Mr. Gupta, we were talking about how people will be able to save on large TVs, but considering that this savings will happen, I believe what Alex was indicating was that small items will also pick up sales, because the moment they save in some item, they would want to spend that in some other item. What is your expectation? What are the other items that you're seeing demand spur up in?
So this time what we are seeing is a person who would have not wanted to buy a television this Diwali. Will buy because he'll say, oh, I always wanted that 75-inch television. So he'll come and go. And whatever he was planning to buy, whether it's a refrigerator or a mobile, he'll buy. And secondly, when he comes in the store, and because he's going to go for EMI, so there are full chance that if he had come to buy a 55 inches, he'll upgrade to 65 or even 75. And likewise, it will go up. Plus, then possibly he may also look out for a headphone. Because today in television, the most important thing is at night when one is sleeping and one is watching, the problem is what to do with the sound.
Like you're speaking from experience, sir. But the question is, that's an interesting point that you raise, which is a lot of people are buying white goods with credit card or with an EMI. So what is the mix right now for large ticket items like phones and like televisions, as you pointed out?
I think 70% of our sale comes from EMIs. Okay. Whether it's a credit card or a plain paper finance. And 70 to 75% is coming from EMI.
And this is across... I know this is for you, but would you say that this is the trend across the industry as well?
In fact, people don't want to pay down payment. People are only looking out for zero down payment, zero processing fees schemes.
Even in terms of, the overall discounting that's taking place, because we have a lot of online platforms giving big discount, festive season discounts. Can you give us a sense in terms of the average percentage of discounts that we're seeing on these electronic items?
See, basically, anywhere between say 5 to 15-20% is the norm which is happening. But more than direct discounting, it is the EMI schemes which are being more sweetened. As I said, 0 down payment and a longer tenor. Not now it's no longer restricted to 8-12. It's going to 18, even 24 months. And in the case of one brand, Sony, they give pay by screen size. So if you're buying a 55 inches, you have to pay 5,500 per month.
Okay.
So it goes up to that size. So accordingly, what is happening now? This is also another form of discount. Then there are exchange offers which comes in. So in mobile, you will always find whatever your value of the mobile is there, plus there's a bump up of 2,000, 3,000, 4,000. So all this forms a part of a discount. And this is what Diwali makes so big for our industry.
Okay, interesting. One more question that I had with you was with regards to where e-commerce and quick commerce trends are picking up, right? Because I recently a report came out which said that DMart Ready and Amazon now has the highest average discount, which is at 23%. So this might not impact the larger appliances, overall, but smaller appliances, for example, a mixer grinder might see some kind of impact there. Any trend that you're picking up?
See, frankly speaking, wherever there's a maximum discount, possibly they are not the best of the brands which the consumers would want. There will be selective brands where the maximum discounts are happening.
Correct.
So for those consumers who just want a temporary or they are looking for discounts, yes, that becomes a go-to. But otherwise, a consumer normally would want to buy, and as we are saying, premiumization is happening. So in premiumization, even the brand premiumization is happening. A consumer wants to go in for a better brand also.
Right.
Interesting. Okay. Now, in terms of the other ground report that we are bringing to you is with regards to a ground report that's coming in from Rishabh, who's spoken to somewhere in Karol Bagh with regards to where Bikaner Wala stands. Listen to what he has to say.
Right, bright and early here at Karol Bagh. We are at the prominent corner location of Bikaner Wala in Karol Bagh on the morning of September 22nd, which is when the new GST rates kick in. And as you can see behind me, you have the poster put up by the restaurant that says GST Uphar, which translates to a GST gift. And it does say that Saste Hue cakes, pastries or namkeens, which translates to cheaper cakes, pastries as well as savory items. Let's head inside and figure out what sort of benefits will be passed on to the consumers with this. Right, I'm joined by the management of Bikaner Wala here in Karol Bagh. Sir, आज से सितंबर 22 हो गई है, नए GST रेट्स आ रहे हैं. आप किन किन प्रोडक्ट्स पे कम हो रहा है रेट और आपकी क्या उम्मीदें हैं?
हमारी नमकीन जो 12% थी वो अब 5% पे हो गई, तो 7% हम लेस कर दिए उस पर. और कुकीज़ वगैरह जो 18% में आते थे वो भी 5% हो गए, तो 13% उसको भी हमने कम कर दिया है. MRP अभी फ़िलहाल वही लगी हुई है, लेकिन हम कस्टमर को जो बिलिंग कर रहे हैं वो लेस करके ही कर रहे हैं.
तो एक बार हम स्टिकर प्राइस और बिल देख लेते हैं सर. तो जैसे आप बोल रहे हैं बिस्किट्स, नमकीन, केक्स वगैरह पे जी
ये लगे हैं. ये कुकीज़ है, इसके MRP है 144. जब हम कस्टमर को दे रहे हैं, ये बिल है इसका 144 का 128 का दे रहे हैं. 13% इसमें हमने लेस कर दिया है.
इससे आपको क्या लगता है कि और कस्टमर का जो डिमांड है वो बढ़ेगा?
बिल्कुल बढ़ेगा जी, नेचुरल बढ़ेगा. अगर कस्टमर का पैसा बच रहा है तो वो कहीं न कहीं खर्च करेंगे ही, खाने पीने में और में सब चीज़ों में करेंगे वो.
और आज तो पहला दिन है इस GST रेट कट का. यही चलता रहेगा आगे तक? आगे फेस्टिव सीजन भी आ रहा है.
बिल्कुल आगे भी यही चलेगा. हमारी उम्मीद है कि ग्राहक आए और अपना पैसा बचाए और ज़्यादा से ज़्यादा मिठाइयाँ, नमकीन, बिस्किट्स और ये खरीदे, ताकि अपने बच्चों के लिए भी दिवाली पे और पे नवरात्रों में ये सारी चीज़ें घर में ले जाएं.
Right, there you have it. All sorts of GST rate cut benefits being passed on to the end consumers. You have savory items that are getting cheaper, about 7 to 8% at least. Shops starting today, starting September 22nd, have started passing on these benefits to the customers, and they have done so in hopes of higher footfall and better traction ahead of the coming festive as well as wedding season.
All right. Well, thanks so much, Rishabh, for getting us that update. It's certainly given us some food for thought. And the other thing that, of course, we've got is our list of things to maybe look at buying. Of course, that depends on what your EMIs this month are. Mahima, I'll ask you that after the show is done. Nilesh, thank you so much for joining us today. And of course, Mr. Sandeep Kumar, thanks so much for joining us as well. And viewers, do stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.
the best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert in
The GST Bachat Utsav begins. Sectors including auto, FMCG and banks stand to benefit from the new GST rates that kick in from today.
विश्वास होगा कि कर सरकार की इनकम बढ़ाने के लिए नहीं है, देश को चलाने के लिए है।
Home Minister Amit Shah, in an exclusive conversation with NDTV, hails the new GST structure and framework as a trust-based tax system and says it will boost production and consumption in India.
If we feel that the reduced GST has not been passed over to the consumer, it will be treated as unfair trade practice under the Consumer Protection Act 2019.
Consumer Affairs Secretary Nidhi Khare warns that not passing on lower GST will be an unfair practice and class action will be planned against those that don't comply. The market ends lower after US President Donald Trump announces a hike in the H-1B visa fee. The Nifty manages to close above the 25,000 mark while the Sensex fell by more than 400 points. Most sectors finished in the red with Nifty IT emerging as the top loser. Commerce Minister Piyush Goyal and External Affairs Minister S. Jaishankar will hold bilateral talks with US Secretary of State Marco Rubio to push for the first tranche of a bilateral trade agreement ahead of the October-November deadline. The Supreme Court describes the preliminary report on the Air India crash, which blamed the pilots as unfortunate, and issues notices seeking responses from the Centre, the DGCA, and the Aircraft Accident Investigation Bureau. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Let's take you through the latest in international, national as well as market news. The revised GST tax structure took effect today as the festive season begins. This is the biggest tax reform since the GST was first launched in 2017. The government has slashed the old 4-slab system into just two main rates, 5% and 18%. Daily essentials like milk, paneer, medicines and many food items now attract little to no tax, which means lower bills for households. Vehicles, electronics and appliances will also become cheaper, offering relief to buyers and a festive boost to demand. For businesses, fewer slabs means simpler compliance, smoother billing and lower costs in production and logistics. Manufacturers, retailers and the hospitality sector are expected to gain as reduced taxes encourage more spending. And on to an NDTV exclusive. Home Minister Amit Shah has called GST 2.0 Prime Minister Modi's greatest reform. While speaking to NDTV Network's Editor-in-Chief Rahul Kanwal, he said that the new structure and framework is a trust-based tax system, and added that lower rates on essentials bring relief to the poor, farmers, MSMEs, women and the youth. Let's listen in.
नवरात्र का पहला दिन है, यही वो दिन है जब से जीएसटी टैक्स कट्स जो आपने किए हैं वो इम्प्लीमेंट हो रहे हैं। आपको लग रहा है कि इससे भारत की अर्थव्यवस्था में उछाल आएगा, एक कंजम्पशन स्प्री आएगा जिससे जीडीपी ग्रोथ रेट थोड़ी बढ़ेगी?
देखिए, सबसे पहले मैं जीएसटी के लिए कुछ बात करना चाहता हूँ। जीएसटी बना तब से कुछ नेता इसको डिस्क्रेडिट करने में लगे, बदनाम करने में लगे, गब्बर सिंह टैक्स फला ढिका बोलते रहे। फिर देखा कि ये सफल हो रहा है तो ये तो कहा हमारा विचार था, प्रणब मुखर्जी ने विचार किया था, चिदम्बरम ने भी, हमारा विचार आपने चुरा लिया, जबकि वो 10 साल ही रहे थे। मोदी जी ने चौथे साल में डाल दिया था, वो इम्प्लीमेंट नहीं कर पाए थे, मोदी जी ने कर दिया था। मगर उस वक्त क्यों इम्प्लीमेंट नहीं हुआ, राज्यों ने क्यों विरोध किया था? क्योंकि स्वाभाविक रूप से 16 प्रकार के बिक्री कर को इकट्ठा कर कर एक सेल्स टैक्स बनाते हैं, अब जीएसटी बनाते हैं, एक बिक्री कर बनाते हैं जिसमें 16 टैक्स मर्ज हो जाएंगे, ऑक्ट्रोय भी हो जाएगी, एक्साइज भी हो जाएगी, सेल्स टैक्स भी हो जाएगा, सेंट्रल सेल्स टैक्स भी हो जाएगा, मनोरंजन कर भी, 16 प्रकार के टैक्स मर्ज करते हैं। तो राज्यों की इनकम पर असर पड़ने वाला था। जब कांग्रेस से विचार लेकर आई तब राज्यों ने कहा था कि भाई हमारे रिसीट पर जो असर पड़ेगा, विपरीत असर पड़ेगा शुरुआती सालों में, इसका भुगतान केंद्र ने करना चाहिए। इन्होंने कहा कर देंगे, तो राज्यों ने कहा इसकी संवैधानिक गारंटी दीजिए, तो गारंटी नहीं दी। अब कोई संवैधानिक गारंटी नहीं देगा तो कौन भरोसा करेगा? मोदी जी ने भी आकर फिर से चर्चाएं शुरू की। अरुण जी उस वक्त वित्त मंत्री थे, सभी राज्यों के वित्त मंत्रियों की वही समस्या फिर से आई। फिर जब इस सोच में आया, उस वक्त में पार्टी का अध्यक्ष था, तब मोदी जी ने कहा कि भाई हम ही कहते थे संवैधानिक गारंटी देना चाहिए, तो हम कैसे पीछे मुड़ सकते हो? तो इस वक्त वित्त मंत्रालय, ब्यूरोक्रेसी, वित्त मंत्री सभी का बहुत बड़ा जिम्मेदारी आता है कि 5 साल तक आप, लंबे समय तक आप एक 14% इंक्रीज का गारंटी लोगे और इसका भुगतान करोगे। फिर भी उसको मान गए और हमने इस नवंबर महीने तक इसको पूरा भी किया।
And on to another exclusive. Consumer Affairs Secretary Nidhi Khare told NDTV Profit. But before that, remember to catch the full conversation with the Home Minister at 8 o'clock this evening. And on to another exclusive. Consumer Affairs Secretary Nidhi Khare told NDTV Profit that failure to pass on GST benefits to consumers will be treated as an unfair practice. She added that class action will be taken against violators. Let's listen in.
If for some reason, if we feel that the reduced GST has not been passed over to the consumer, it will be treated as unfair trade practice under the Consumer Protection Act 2019. And the Central Consumer Protection Authority can take class action also if we find that a particular, say, company is actually making, these things too much, then we will also go for the class action. Otherwise, it will be escalated to the convergence partners, which we have about 1100 and odd. And it would be expected that companies immediately redress any such wrongdoing if they witness through their retailers. So this is uniform for everybody, including the e-commerce entities, and e-commerce entities also know this fully well. For them it is in fact very, very easy because they do not have to go for the restricting. They can digitally announce and show what is the new MRP. So it should not take them very long, and I'm sure they would be adhering to the instructions of the government on this.
And now let's go across to our reporters on the ground to see how the new GST benefits are likely to impact consumers. First up, I'm going to take you to Rishabh Bhatnagar, who filed this report from Bikanerwala in New Delhi's Karol Bagh, where shopkeepers share their take on the changes. Let's take a look.
Right, bright and early here at Karol Bagh. We are at the prominent corner location of Bikanerwala in Karol Bagh on the morning of September 22nd, which is when the new GST rates kick in. And as you can see behind me, you have the poster put up by the restaurant that says GST Uphar, which translates to a GST gift. And it does say that Saste Hue cakes, pastries or namkeens, which translates to cheaper cakes, pastries as well as savory items. Let's head inside and figure out what sort of benefits will be passed on to the consumers with this. Right, I'm joined by the management of Bikanerwala here in Karol Bagh. Sir, आज से सितंबर 22 हो गई है, नए GST रेट्स आ रहे हैं. आप किन किन प्रोडक्ट्स पे कम हो रहा है रेट और आपकी क्या उम्मीदें हैं?
हमारी नमकीन जो 12% थी वो अब 5% पे हो गई, तो 7% हम लेस कर दिए उस पर. और कुकीज़ वगैरह जो 18% में आते थे वो भी 5% हो गए, तो 13% उसको भी हमने कम कर दिया है. MRP अभी फ़िलहाल वही लगी हुई है, लेकिन हम कस्टमर को जो बिलिंग कर रहे हैं वो लेस करके ही कर रहे हैं.
That was in fact Bikanerwala. Let's move on to what's happening in the auto sector, which is seeing a boost thanks to the new GST reforms. My colleague Danish Anand was at a car showroom in New Delhi to gauge the mood on the ground. Let's take a look at this report.
Like PM Modi mentioned on Sunday, the GST Bachat Utsav has begun, and right now I'm present at Bagga Link Hyundai here in the national capital. First of all, I'd like to show you that how this dealership is ready to welcome all the prospective car buyers, and as soon as you step inside this dealership, there will be a feeling of festivities all around. And you can see today is the first day of the Navratra. The Mata's statue has been positioned here. Besides this, you can see all the walls and the roof of this dealership is completely decked up in festivities. But if you were waiting to buy a car from a very long time, then this is the best opportunity for you to buy a car, as Hyundai has announced massive discounts on its entire portfolio of cars, and this discount is in the range from 70,000 to almost 2 lakh rupees. But to talk more about it, that how the dealerships are preparing for the sudden surge, we have been joined by Mr. Zubair Khan, who's the senior sales manager at this dealership. So many thanks for speaking to NDTV Profit.
Yeah.
First of all, please tell us that how are you preparing to deliver so many cars to the buyers?
First of all, happy Navratras to all viewers, and a special thank you for Mr. Narendra Modi ji, who has been taken the step to reduce GST. That will definitely help to increase our business. You know, people are waiting since last almost say around 21 days in Shraddh period also, for waiting for this auspicious day. So it will definitely increase our business, and you see the decoration and everything is being done, and people are coming here for taking delivery. We have updated the booking status since last morning. Customers are coming here to waiting on this auspicious day. People are taking delivery. So everything is being done, and you see the whole showroom is full of the customers.
So how many cars are you expected to deliver today?
Today we are expecting around 15 to 20 deliveries. All is being lined up, and just we will free the customer in next 15 minutes.
We'll also try speaking to a few customers, but before that, I would like to tell you that there is a good over and above discount that the company is offering. It is not just a GST cut that Hyundai is passing on to its customers, but the company has gone above and beyond that GST rate cut, and they're also giving a festive season discount.
Right, thanks so much for that, Danish. And now these reduced GST rates are set to ease medical bills too, with the government completely exempting 36 life-saving drugs from GST. My colleague Tanushka Dutta sent us this ground report recording responses of many senior citizens and pharmacists alike. Let's take a look.
Your medical bill is set to become cheaper at this point, which comes as a huge relief with the new GST reforms. These GST reforms, also termed as next generation GST by the Prime Minister, is a great saving opportunity and boon rather that has been given as a festival gift to the citizens of this country. We do understand that medicines earlier used to be in the tax slab of 12% and 18%, but now it has has been slashed down to 5%. There are also 36 life-saving drugs which have been completely exempted from any sort of taxes.
I feel the medicines that we need at this age, around when we're senior citizens, we need a lot of medicines, and these are quite expensive at the moment. But we can now happily say we are buying it in a much, from today onwards, we are buying it in much cheaper slab.
It's a very welcome step. We were hoping in last years also that GST should reduce on the life-saving drugs also and general medicines. This is a basic necessity for a living life. So therefore, we welcome this statement of reducing on GST on the medical medicines.
Now, of course, this is all going to benefit us all because we buy in bulk actually. There is a list of 36 essential drugs and GST is reduced on them. So it is going to really benefit all of us.
मैम दरअसल क्या है कि जो हमारा पुराना GST था 12% उसको अब हमने रिड्यूस करके 5% कर दिया है और अब हमारे जितने भी बिल्स हैं उन सब पर चेंज होकर MRP जो है वो चेंज होकर जा रही है तो उसके बाद जो हम उसको चेंज करके ही कस्टमर को दे रहे हैं.
So of course, overall the healthcare sector is set to look forward to complete relief in terms of customers as well with this GST reform.
Thanks so much for that, Tanushka. Meanwhile, let's take a look at how the markets fared today. We saw benchmark indices closing on a weak note today with the Nifty settling around 25,200. The Sensex declined by 466 points, to close at 82,160 level. The Nifty IT was the biggest loser, pressured by the hike in the H-1B visa fees announced over the weekend by President Donald Trump. Now, most other sectors also finished in the red, but to give us more details, my colleague Puneet now joining us with a detailed market roundup of the day.
Well, it was a day that started under pressure and that was largely led by global factors. We did see some key indexes like the Nifty IT getting impacted, but all of these factors contributed to pressure on the Nifty 50 today. And while we have closed just a tad above 25,200, that was a short-term relief to say the least. We saw over 125-point reduction on the Nifty 50 today. The IT sector was dominating the news flow after President Trump hiked the H-1B visa fee from roughly about $1,000 to over $100,000, and with IT being one of the major employers in USA of H-1B visa applicants, we did see some pressure there as well. While brokerages did come out with mixed views, with certain brokerages affirming that we could see a margin impact, there were some that also saw that the reduction of H-1B visa applicants since 2016 by IT companies like TCS and Infosys does give them some pivot. That'll be something to watch out for in the near term. Amongst others, we did see that the top Nifty losers because of that were largely Tech Mahindra and TCS, but we also saw some positive gains as well on stocks like Adani Enterprises as well as something like an Eternal that did give some positive fillip to the Nifty 50 today. When you look at the mid cap and the small cap index, both ended in the red, and that was largely led by individual stocks that were impacted. For the mid cap 150, we saw the drag was led by Mphasis and Coforge for similar reasons that we mentioned for the Nifty 50, while for the small cap, K Fintech as well as Zentar were the biggest losers during the trading day. When you look at some key sectoral indices, and there's no surprise, the Nifty IT was the top sectoral loser today. And amongst others, we also saw some positive fillip on the other side, led by the Nifty Energy, which was led by Adani Power as well as Adani Green. Adani Power did have the stock split impact as well, but apart from that as well, it was up 20% in trade today. When you look at some other key sectoral losers, Nifty IT had LTIMindtree, Mphasis as well, which got impacted because of the H-1B visa hike. While we also saw the Nifty Metal gain for the third straight in a row, the Nifty Media snapped a two-day gaining streak. Overall, when you see the setup tomorrow, it'll be important if we can maintain that 25,200 level. So we might want some positive fillip into tomorrow's session, but largely a day dominated by global news flow. And tomorrow as well, 25,200 as well as 25,100 will be the key levels to watch out for.
Thanks, Puneet, for that. Meanwhile, brokerages have given mixed reactions to the H-1B visa fee hike announced by President Donald Trump on Saturday. As part of his latest crackdown on immigration, the US president signed a proclamation imposing a $100,000 fee, that's over 88 lakh rupees, on new H-1B visa applicants. Puneet is back with us to share the varied perspectives that we saw from brokerages on how this move could impact the market and Indian IT companies. Puneet, over to you.
They're not seeing a very meaningful impact because from 2016 onwards, a lot of IT companies began to reduce their exposure to H-1B. Now, that was largely led by onshoring as well as hiring local talent in US, as well as increasing the exposure of offsite with GCCs as one of the key growth areas as well. So largely when you see Investec as a brokerage firm, they mentioned that they don't see any meaningful impact. But a couple of key points that they've made, they have mentioned they're expecting a potentially higher US wage inflation going forward. They're also seeing that operating models for all these IT companies will start to see changes and undergo meaningful changes going forward. And they're expecting that a higher local hiring for someone like the IT companies like TCS amongst others, and higher on-site wage inflation will likely impact margins, at least in the near term. That's what the key aspect that Investec is making. Someone like a Citi as well, largely, we have spoken to the analyst on our channel multiple times, Mr. Surendra, and he seems to be highlighting that there are pressures for the IT space as a whole. They're seeing multiple potential impacts because of this. They've highlighted that the cost of doing business is largely expected to go up, but this will be passed to clients probably with a lag, and hence you could see some impact on profits because of that. Higher nearshoring as well as offshoring, which essentially means that you will hire in India and they'll be working for those clients in the US, as well as GCCs, is a very likely outcome. That seems to be a common theory amongst others. And the margins will of course get impacted because of that as well. The last key point that they're making is, the competitiveness in the global context doesn't change, and that seems to be another key point, that we are one of the lowest cost IT services companies essentially. So that will be a key that will be a strength that will continue to maintain as well. Finally, in terms of brokerages, I want to highlight Jefferies as well, because they've highlighted that 7 to 12% of the business will be renegotiated in the next 3 to 5 years, and they've highlighted that a change in operating model is likely for the Indian IT companies, and that seems to be a gist of a clutch of brokerages making some key points. So while near-term impact is limited, once the clarity emerges, operating models of all these IT companies will start to see a change, and that will be the other one to watch out for how this happens going forward as well.
Right, Puneet, thanks so much for that. And to understand the exact impact of new H-1B visa fees and whether this move is a setback for Indian IT or an opportunity to reinvent itself, don't miss the big question this evening, airing live at 6 p.m. with my colleague Vikram Moza. The show will explore if the American dream is becoming unattainable for Indian tech professionals amid these new visa fee hikes. Don't forget to catch that. And moving on, Adani Group Chairman Gautam Adani reacted to SEBI's report clearing the group of all allegations in the Hindenburg case. He said that a 2-year-long cloud has finally been lifted. The chairman expressed deep gratitude to his supporters, calling the outcome a testament to their unwavering faith. Let's listen in.
Today, a cloud that had hung over us for more than 2 years has been lifted. SEBI comprehensive investigations has concluded by rejecting all allegations contained in the Hindenburg report from January 2023. It was your unwavering faith, your strength, and your belief in the company that sustained us throughout this period. This outcome belongs not only to the Adani Group, but also individually to each of you stood by us. And for that support, I'm deeply thankful.
And India is set to intensify its trade negotiations with the United States as Commerce and Industry Minister Piyush Goyal led a delegation to Washington today. The delegation aims to advance ongoing talks and work towards the early conclusion of a mutually beneficial trade agreement. My colleague Rishabh joining us now with more details on this extremely significant development.
Absolutely, a crucial set of negotiations is starting today in Washington, led by, of course, India's Commerce Minister Piyush Goyal. Apart from that, you will be joined by India's Chief Negotiator Rajesh Agarwal. Both of them will be leading a delegation for trade talks with the US. Now, this comes right after you had the likes of Assistant US Trade Representative Brendan Lynch visit India last week. He was in town for about a day-long talks that he had with the Indian side. This came after a certain thaw came in the relations between India and the US. There was some sort of barriers that had come up, some sort of issues that had propped up. But with the top leadership, with President Trump and Prime Minister Modi also reconciling, that has gone away and trade talks are back on the fast track.
Trade talks back on the fast track. That's what we're hearing from my colleague Rishabh. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
the best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of
Hello and welcome to NDTV Profit. You're watching Know Your Company, that is KYC. Let's understand what's on the list today. A JK Tyre. Why a JK Tyre? But before we get to that, I'm Hiral Datia and with me is Puneet Javeri. An interesting conversation, Puneet, this is going to be because very critical to understand what's happening with the tyre space, a beneficiary in terms of the GST reductions as well, and the kind of demand surge that people are anticipating. But first up, let's quickly take the quick questions as to what we will talk to the management about as well. The significance when it comes to the Chennai plant, specifically with regards to global exports, because this is one of the most crucial plants that they have. This is where they have incrementally been adding capacity as well, and the exposure it has to global markets. On number two, the key aspects in terms of international market growth and the aspirations that the company is sitting on. And very lastly, the acquisitions that the company is looking to make in the global markets.
Well, the other couple of key aspects on the conversation was on radialization. Now, that's essentially a key process where a lot of passenger car tires have already moved to this one. It's a process where the global markets are already radialized enough in the industry, and JK seems to be the pioneer in this because they were the first one to introduce radial tires back in 1999 and have been steadily increasing that. For trucks and buses, they're already at 66. And finally, in terms of the growth of the premium tires, and this one is key because that is going to be a big margin booster going forward as well. So these are the key 5 things that you need to watch out from the conversation with the management today.
Absolutely. But now let's tell the viewers what JK Tyre is all about. Part of the JK organization, the company was founded in 1951. It actually co-produced the first radial tire in 1977, and it's present in nearly 105 countries over almost 230 distributors. In fact, if you talk about the global distributors as well and this network that they have, it's a strong network of almost nearly 6,000 dealers that we're talking about, and 650 plus dedicated brand shops. In fact, overall, if you talk about the 11 globally benchmarked sustainable manufacturing facility is what the company has. In fact, it has 9 in India, 2 in Mexico, and they collectively produce nearly 35 million tires annually.
Well, the other one is about the plants, right? Because we specifically mentioned that 9 of them are in India. They are spread across the globe. We visited the Chennai plant and we're going to get you some perspective from the shop floor. But apart from that as well, Uttarakhand as well as Karnataka are 2 key main geographies for the company. They have 3 plants each in these geographies. So they are expanding across north as well as the southern markets through these plants. The other one's Rajasthan, where they have another plant. Madhya Pradesh is largely for the passenger car radial space, while Mexico, they had 3 plants earlier. They've closed down 1 just about 18 months ago, but still holding on to 2 plants. And this was another key plant because this is a key one to export to geographies like the US, and which is key for the tire maker. Similar strategy that what the other tire makers have also employed at this particular point of time.
Right. Now taking this into consideration, let's quickly understand the revenue mix of the company as well. 2 separate segments that we're talking about, replacement as well as OEM and exports. Now, clearly, if you talk about replacements, it has come down slightly, but has remained above that 60% mark. We're somewhere, it's gone up, I would say, from 61% to 64%. In terms of OEMs, that has remained stable, and your exports have seen a marginal downtick from 16% to 14%. But in terms of the replacement market, that becomes the key, and that is why you're talking about the revenue mix and the benefits of GST that could be coming in, especially when the replacement market picks up.
And they are a beneficiary directly for the GST rate cut, but also indirectly because through automobiles as well, which has seen a GST rate cut as well. So that's definitely one. The other aspect is on consolidated financial, and here you'll see that between FY24 and 25, the company did see a dip in its margins from roughly about 14% all the way down to 11.3%. And that's largely because of higher commodity costs. So natural rubber prices went through the roof in FY25, and they were a key impact because of that. Apart from that as well, you saw that across the industry where the growth was largely absent because of such high costs. So the companies had to absorb that particular point of time, and India is a natural rubber scarcity market. Roughly 40 to 45% of natural rubber is imported in the country, and hence we are a direct impact essentially of the commodity higher cost. So you said you did see that impact. Profits were also impacted because of that, but largely in terms of revenue from FY23, it was a strong jump going into FY24, and hopefully the company is hoping essentially that FY26 will be a similar growth trajectory.
Interesting numbers here, but let's quickly look at the rating parameters from here on. What are we going to talk about? First up, what we analyze is the income statement, balance sheet, cash flow and return ratios. These are the top 4 parameters that we will be considering. And post that, the shareholding, street credentials, valuation and the street coverage. All of this absolutely important 8 parameters that we're looking at. But Puneet, why don't you start with the income statement?
Well, largely, I did mention that, the natural rubber price impact was seen in FY25, and you did see the margins correct because of that. But, in terms of the 3-year CAGR performance, especially on the profits, we saw FY25 being a drag on the overall 3-year CAGR, but it still maintained a good 36% CAGR on profits, and hence we've given this a neutral rating, largely because of that aspect. Since the pandemic, the company has invested heavily in machines, they've invested in cost optimization, and therefore you're seeing almost the EBITDA CAGR being double of their revenue growth in this particular point of time. But a lot more work needs to be done, and since because of that aspect as well as the recovery, while in Q1 we did see some key aspects of that, it is still something to watch out for. So hence we've given this a neutral because of that aspect. Quarter on quarter as well, you did see on a YY basis margins getting impacted, but a still better performance compared to what analysts had estimated. But we'll need some more evidence essentially of growth coming back in this year, and hence we've given this a neutral for now.
Okay. Let's look at the balance sheet. We have given the balance sheet a thumbs up. If you talk about the equity, that's remained pretty much stable. In fact, their debt to equity ratio has somewhere improved marginally, so that is a positive. Their cash and bank from almost a 266 odd crores that actually nearly reached a 770, and that's where it's remained stable in that 770 kind of range in the last 2 years, which is again a strong one. Borrowings also somewhere that FY23 number has remained stable at FY25. And in terms of your other equity, that has seen a sharp improvement. So it's categorically telling you that the financials are improving when you're seeing that EBITDA base, which is improving. And secondly, when your cash and bank is remaining steady and improving. And third, your debt to equity, that has somewhere improved as well. So that again is another positive that we are tracking over here. And hence a thumbs up that comes in on the balance sheet front as well, Puneet.
Well, similar to the income statement, we have seen the cash flow also impacted in FY25. So when you look at the cash flow from operations to profit ratio, that fell to 45%. It was roughly around 94 in FY23, went to 77, and largely was expected to stabilize at that level. So we've given this a neutral as well, largely to see if that evidence does pan out of maintaining over a 70% cash flow to operations to profit ratio, and hence a neutral for now. The net cash flow did come back into the positive trajectory, but marginally of 15 crores, but still some evidence needed for the company. But definitely on the trajectory, it is expected, and the commentary by the management is positive to improve the cash flow from operations as well going into this year.
Okay, so that's a neutral rating coming in for cash flows. Let's look at the return ratios as well. Again, a neutral one coming in there because clearly FY24, they've seen a number as high as 19%. Currently in FY25, they're at around 13%. How soon will they be able to get to that 19% mark is the key question over here, and hence a pretty neutral rating is what we've given on the return on capital employed.
In terms of shareholding as well, Hiral, we have seen that the management has been able to maintain largely over a 50% share, while we would as investors like a lot more, over 70%. But the company has mentioned that 51 seems to be what they are holding on to right now. Because of the reduction that we saw essentially in FY23 going into FY24, we did see the foreign investors largely enter the stock and have maintained that 16% share, while the public has continued and retail investors essentially have continued to show promise in the stock as well. So we've given this a thumbs up. Largely seems to be that both the domestic investors as well as foreign investors waiting for a turnaround in the stock, as well as in terms of financials this year.
And if you talk about street credentials enough, because taking the retail investors into consideration, it has given good returns to them as well. In the last 1 month, 16% is the kind of up move that you've seen on a JK Tyre. Last 5 years, 6.6 times is the downtick that you've seen as well. But at least from a 1 month perspective, a good up move. 6 months as well. So the trajectory over the last 6 months has started pretty positively.
Yes, definitely. And in terms of when you look at the valuations as well for JK Tyre and effectively in this particular point of time, and just a slight correction that it's actually been up 5.6 times over the last 5 years. So stock has and largely it got impacted because of the pandemic. But there is one in terms of the valuations priced attractively, to say the least, because we have seen largely an absence of growth in FY25. Currently, the PE is roughly between 12.6 to 13 times price to earnings for 1 year forward in terms of valuations. And this is largely in line with what's happened in the 5-year term as well historically. So the street seems to be just waiting on the sidelines to see that the company's large measures that they've done actually result and come into the financials as well. So we've given this a thumbs up compared to peers which trade roughly between 18 to 22 times price to earnings. This does give the comfort of the absence of growth, and once growth comes back, you should start seeing that valuation perk up as well.
Valuation should perk up, but if you have to talk about the street credentials in terms of the coverage, 4 buy calls, 1 hold, an average upside of around 9%. So not major brokerages that are covering the counter right now, and hence a neutral rating.
And that largely seems to be the key aspect, right? Because we have seen foreign investors holding it, but absence of brokerage in this particular point of time as well.
So whether you have further coverage that comes in initiations is what we need to see. But very quickly, in terms of your first 4 parameters, your income statement, cash flow, return ratios are a neutral. It's your balance sheet only, which is a thumbs up, which is a very good strength. Your shareholding, street credentials, valuation, again, a thumbs up. Your coverage is slightly neutral over here. So an overall 6 on 8, which is also a very good rating that we've given JK Tyre, Puneet.
And we are very stringent with the rating, so definitely a key one aspect as well. But we did have a chance to speak to Mr. Anshuman Singhania. He's the managing director of JK Tyres, and we did visit the company at the shop floor in Chennai, a key factory which is almost 40% of his exports. Listen in to what he had to say. My first question largely about this facility, because it's almost 20% of the company's revenue, but very importantly, as you also mentioned to us, that it's almost 30 to 40% of exports that go from this one facility itself. Talk to us about the importance of the facility as well as the kind of technology investments that you've done over the last decade or so in this, which will lead to your international operations as well from the exports from this facility.
Sure. We have invested almost around 2,600 crores in this facility, and we are here making truck radial tires and passenger radial tires, which we are catering to the domestic and exporting as well. So here we are making a lot of premium range tires in the truck space and even in the passenger space, which we are serving in the domestic market. And here our premiumization has been one of the key drivers to enable us in terms of putting capacities. We are also having almost around 1,400 crores investments which are currently going on in our 2 locations, which will start ramping up from Q3 onwards. In terms of our markets in export, we are exporting to about 100 countries. We are exporting to UAE. We are exporting to Brazil, Latin America, Mexico, and also new markets in EU and UK. And we would be one of the largest exporter for truck radial tires from India in the EU and UK as we speak.
In terms of international operations, and we are actually seeing one of the major processes about this one as well in terms of truck radial tires. International operations has been one of the most focal points for all tire makers. Roughly for you, 16% comes from the export market. How do you see the medium-term trajectory of this? Because we are seeing one of the key on-sites of Europe demand coming back as well. Do you feel that going forward specifically, you will be one of the big beneficiaries of this, and with this new plant, a lot of that will be serviced with?
Yeah, with our capacities coming in stream, not only for the domestic market we'll be able to cater, but we'll be able to export as well. And as I said that our EU and UK are new markets. We are making a lot of development sizes for those markets. And there we are a very, very negligible player. So we will have a lot of headroom to, as we go forward, to play in those markets.
Specifically, one of the key aspects, in the early 2000s was acquisitions by the tire makers in international markets, both to gain technology as well as to gain capacity in those markets. You've also done that with Tornel in Mexico, and you have 2 facilities there operating as well. Talk to us a little bit about, your perspective of acquisitions, if any, in the future, because we seem to be that Indian tire makers seem to have grown leaps and bounds with technology so much, including yourself, that you all don't need to actually do another technologically enabled acquisition. How do you see that tire industry has evolved, and if you can talk to us about JK Tires as well with that aspect, and what do you feel in the near future? Will it be brownfield capacity expansion similar to yours?
So look, in terms of our capacity increase, here we are equipped for a brownfield in all our locations for the time being, and international acquisitions are very tempting. We are always on a horizon to look at international acquisitions. As you said, that Tornel has been a very successful acquisition where we have turned around the whole company, Tornel Mexico. Here we are always looking out in the horizon for newer opportunities which come by.
But largely, would you say that you all don't actually need to do any acquisitions, which would be very, at least in the current market scenario, for absorption of technology? And India has, with yourself as well, in the tire space, done a lot of innovation enough now, so that, and we could drive that in the future?
You see, it's just not about the technology acquisition. It is also serving the market faster. We have been very successful in turning around acquired companies. We've acquired 3 companies, and we have turned it around in no time. So technology, yes, plays a very important role, but serving the market in terms of a ready facility with an upgradation also plays a very important role.
You were the first, pioneers essentially into radial tire space, launched back in 1999 for you all. And since then, now I think 2/3 of the market has become radial in terms of the trucks and buses. Do you expect that share will continue to grow substantially? And how does that, augur well in terms of the new investments that will be going in those for the international market as well? Do you think that for the international space, it will largely be the radial tires that will be getting absorbed as we see in the market?
Largely, well, I'll break this up into 2. One is the commercial, which is the truck tires, and the other one is the passenger car tires. In the passenger car tire, right now in the international market, it is almost become 98 to 99% radialized, and so is India. And but coming to the truck radial tires, right now we see that 56% is in India radialized, and rest is bias, non-radial. We have a feel that the bias is going to remain at a long run also. Long-term bias is going to remain because India still is a very price sensitive market, and the applications in which the bias goes, namely mining application, even the construction application, their bias is still going to be staying. Well, in the international market, radialization in the truck space has happened more in America, more towards Europe. There are some pockets where truck bias tires are still at a play, where we are also participating.
You did mention about realization in America as well as in Europe, and I just want to pinpoint Europe for a bit because it's a huge market for the tire industries. What is your current share, if any? You can give us some perspective on Europe specifically. How much is your revenue in terms of percentage that comes from there? And do you expect that we'll start seeing a revival, because that market has been depressed for almost the last 3 to 4 years? Do you expect that will be the next growth engine coming back for the tire industry, and what would that be for you?
Yeah, so as I said, that Europe is a new market for us. We will be certainly developing a lot of new sizes for the European market. And there, I would say that we are a very, very small player in terms of the market share. And we would be definitely developing that. But from India to EU and from India to UK, we are one of the largest exporters in terms of truck radial tires.
So you should be seeing a big benefit because of the FTAs also, right? Which has now been coming in for...
Yeah, sure. The FTAs are also giving the Indian producers a good advantage over rest of the other countries here, and we will surely be taking advantage of that.
You mentioned about truck and bus radial because that's almost bread and butter, 50-55% of your revenue. But the passenger car space has also been very, very prominent for you. Over 30% of your revenue comes from there. We've seen, GST rate cut that will benefit all automobiles. Do you expect that could grow faster? Because we are starting to see a lot of offshoots for the commercial vehicle space as well. So how do you see those in the current demand conditions for India specifically?
So I think GST has been a very welcoming move from the government. And GST brings in a lot of cash in hand for the consumer. And the consumer-facing goods like passenger car tires, the 2-3-wheeler tires, and even the farm tires will definitely see a good positive flip as we go along. And even in the commercial vehicle, there will be lot of movement. And we measure it by BTKM, which is billion ton per kilometer. And there we have seen there is a sharp increase in terms of percentage, which is an indicator of freight movement. And with this GST, I think there will be a lot of movement amongst our major highways with our large and small and medium transporters. So there is a lot of positive growth coming in from there.
So that's the management, in conversation with Puneet as well. But clearly, Puneet, the company has indicated they're very small in the European market, and that's what they want to develop, a big beneficiary of trucks and bus exports from Europe, to exports to Europe from India. So that's the business that investors should be looking at as well. But completely out of time. But that's it, it's a wrap on this edition of Know Your Company. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. I'll start on a bit of a philosophical note. When two elephants fight, it is the grass beneath them that suffers. But when it rains, it's the grass that soaks in the moisture first. And here, I'm talking about things in the context of the reform agenda that the government has had. First, in the form of the income tax cuts that were announced and the introduction of the new tax regime. And now, today, with the rollout of GST 2.0, where a host of items are getting cheaper and have gotten cheaper. The point is, there are a lot of people at the bottom of the pyramid and those that are earning less money than a lot of other people that have been at it for a while will get those benefits first. It's a little hard to tabulate and estimate how much each person will benefit because it depends on their spending habits, spending patterns. But then you can expect that each one of them will benefit in some form or the other. They might just discover that they have more money at the end of the month. So on this program, what we're going to try and do is we're going to talk about people who are just in their first few years of work, how they can utilize this extra amount of money that they might save to save for the future. And we'll also talk about how you can help your house help and people that work for you to save for their future and possibly for their children as well. Joining me in the first conversation today is Prableen Bajpai, the founder of FinFix Research. Prableen, thanks so much for taking the time and happy festive season to you. Let me start by asking you about what you think will occur. Do you agree with my thesis that people at the bottom of the pyramid will benefit first from this GST 2.0 rollout?
Hi, Alex, and happy festivities, happy Navratras to all your viewers and you. Absolutely. I think, Alex, like you said, it's a two-layered strategy that the government has brought in. The number one is the 12 lakh limit on the taxation. And I think a lot of youngsters, especially because our focus today is on the youngsters, fall in that bracket. So in terms of tax saving, a lot of them will benefit. And then, of course, now coming to the GST rate cuts, definitely, I think a lot of our lifestyle spending things which are used on a daily basis, on a weekly, or things which are, which are on the list, which is a recurrent purchase, I think they get impacted and there is going to be a positive impact. I'll give you an example here, Alex. For example, very basic things like a gym membership. So for a lot of youth out there, who are into fitness, and today's generation is very fitness conscious, an annual membership, for example, of a gym is, let's say, 50,000 rupees. So the earlier GST was 18%, now which comes down to 5%. So from that 9,000 on 50,000, it is a straight saving of 6,500 rupees because with 5,000, the GST only is 2,500. So on an annual basis, it's a simple example, but your 6,500 gets saved on a simple gym membership if it's costing you 50,000. Likewise, Alex, you and me, we both wear spectacles. A lot of kids today, the Gen Z we are talking about, I think it's not a luxury item. It is a necessity. And spectacles, all of these things have attracted a higher rate of GST. These are things which are used, which are, you want to change them, let's say after 6 months, 1 year. Such commodities also get impacted with the lower GST coming down to 5%. So I think there is going to be a positive impact. And let's say there's going to be a saving for everyone on a monthly budget. There will be few things which on an annual basis you save, but it still gets added eventually to your average monthly saving. And Alex, if let's say you're not even utilizing that to invest, but if you're utilizing it to consume more, then it still impacts and it's a multiplier impact on the economy. So overall, I think it's a plus, and definitely one of the articles I was reading, in fact, the government website, it read lighter on the pocket and brighter for the future. So I think that surely is the case.
What a beautiful way to put it. I think we can, these are essentially lists, right, of things that you think that people should be doing probably. So let's run through them. A few things that people can think of doing in order of priority if they're just starting out, if they've not done anything so far. And this is something perfectly normal for somebody who's 25, 26. But what should they do now?
Number one is always a buffer fund, Alex, because if you don't have that little kitty of yours for a rainy day, you will disrupt your process of long-term compounding long-term wealth creation. So having a little buffer for yourself is very essential. So when you start earning, set aside some money, let it be 50,000, 1 lakh, but have some money aside, which is not through your credit card. So, you should not be swiping your credit card for a rainy day. So you have some savings and then you start investing. Compounding is really, really, it's a magical mechanism, Alex. And I think if these kids can utilize it, it can be really so good for them. Increasingly, we are seeing that, more and more people want to retire early. So I think if these kids are even starting at 25 and they want to work till 50, so 25 years of compounding, if they're getting, I think a small SIP of 10,000 can give them 1.7 crores today. And if they're doing a step up, even with a 10% step up, it can create 3 to 4 CR for them. The idea is to get into that habit, and eventually as their salaries increase, they increase their investments, and of course parallelly keep doing your EPF or PPF, whatever you are. I think health plans, that's so good that now GST will not be there, so it will be easier for them to get a health cover. There will be some saving there. I think these are the basic essentials. But I think one thing they should be avoiding here is, the comfort with debt has risen over the years. And it's very important that you have your buffer and then you start investing, and invest as small as maybe just 1,000 rupees a month, but you must start investing for the long term.
Yeah, I mean, I was discussing this today as well when I went to an electronics store to talk about GST. Somebody asked me, I was thinking maybe I should buy something. And I said, maybe I'll use my UPI application. And he said, you don't want to use your credit card and buy it on EMI? The thinking is different, right? So the age difference between the two of us was about 7-8 years, but the thinking is different. So, but having said that, if people are thinking of starting an investment, often in the mutual fund space, probably the difficulty is a problem of plenty and you get paralyzed by that choice that you have. So would you suggest keeping it simple at the start is the best way to go?
Yes, absolutely. Keep it simple as possible. For the long-term portfolio, Alex, what I would suggest is pick 4 passives and pick 1 active. So you take a large cap index, an equal weight index, pick a mid cap index. Right in the beginning, you may not choose a small cap index, but let's say if you are okay with it and investing for the long term, like really like 10, 12, 15 years, then you can go in for a small cap index as well. 1 gold passive, and then just complement it with a multi-cap fund. So, passives along with 1 active fund. And I think for kids, because for them, it will be a 15, 20-year portfolio. I think this can really give them the right start, and it can create the wealth that they want for the future. And for the near term, if their goals are like, let's say 3 to 5 years, then maybe just a multi-asset fund or a flexi cap fund. And that will be really good. I mean, nothing else required. So no chasing with passives, there will be no chasing. But I will also add one thing, when they start investing, please plant a tree, maybe a mahogany tree, and expect the same kind of growth. So if you can't expect the tree to grow overnight, please don't expect your money also to grow overnight. So you'll require that 20 years for the tree and same for your wealth.
So I'm glad that you said tree and not money plant, because you can see a money plant grow pretty quickly. But having said that, I noticed that you've talked about a Nifty 50 equal weight index, which is an interesting thing, right? Because, and just so that everybody understands what we're talking about, a normal Nifty 50 index fund would invest in the 50 constituents of the Nifty 50 in the proportion of the market capitalization. And what is market capitalization? It's simply the number of shares number of open shares of a particular company multiplied by the share price. So a Reliance Industries would go into the lakh crore. And so therefore it has a 9% of weightage on the Nifty 50. An HDFC Bank would have a higher than 10% weightage on the Nifty 50. So therefore every 100 rupees that you put in gets 9 rupees goes towards Reliance Industries, 10 plus goes to HDFC Bank, and so on and so forth. What Prableen is talking about is an equal weight. So there is basically a 2% weightage for everything. And that is advantageous. But I also see that you've put a mid-cap index and a 250 small-cap index. Why not go for a 500 and have the entire basket?
Alex, so equal weight, because number one, that, on a rolling return basis, if you see, equal weight has outperformed Nifty 50 by 3 to 4%. So I feel it's a very simple strategy to get the top 50 companies in the country and yet have a premium to the base index, which is Nifty 50. Now, why not 500 because it's a market cap based index. So eventually, the percentage of how big the company size is, like you said, the market cap, that plays a role. So I feel if you're dividing, number one, for the investor, it's easy to understand. In his mind, he knows that, okay, this is small cap, and that is why it's, going through more volatile times. This is mid cap. The growth path will be different, Alex. So I think, and then, you can even have these different schemes for different goals. So large cap can still be used for something which is 5 to 7 years away. But for example, your mid cap and small cap, want to keep it for 10 years plus. So, and that is why not a Nifty 500, to give them, more choice and also understand how the performance is, and also reduce the prominence of the larger names ultimately in the portfolio, because any other actively managed scheme will always have, large caps. Any other small cap will also have large caps to manage liquidity. And so, overall, the overlaps can also be reduced like this.
So the propensity, Prableen, of the, I don't mean this in any bad fashion, but the fact is that FOMO exists. And if you see your neighbor, if you see your friend making an investment in the next multi-bagger stock or a mutual fund scheme that is done incredibly well, the tendency is that you will want to do that. But you're suggesting don't get into that race, don't get into that trap, and keep it simple. At some point in the future, they can do that. But how do you avoid that FOMO?
It's hard for this generation, Alex, honestly speaking, practically, because, they are the generation who are born around with internet all around. They're used to seeing influencers. They are used to seeing Insta videos. And there's so much information which is not correct. And you tend to believe that. And honestly, all that advice is much more exciting than probably the conversation that you and me are having. So there is, of course, the tendency to follow these things, and also the tendency, because there is so much that you want to show to the world through social media, that you want to make quick money. So, telling them that it's a slow, boring process, it doesn't really go with the mindset that they have. But the reality is that you still have to, if you are looking to build serious wealth for yourself, then these have to be avoided. That, you're looking at your neighbor or your friend and he's telling you that, I made 30%, 50% in last 6 months. Maybe he got lucky, not necessarily that you're going to be lucky. And is that wealth sustainable? Maybe one time it works, maybe twice. Is it a sustainable process? If it was, maybe everybody was doing it. So I think there has to be, you have to be very level-headed. You have to understand that fine, maybe 10% of overall what you're investing, you can keep that money to try out, to experiment, because that's not a bad thing, Alex. Sometimes you learn it the hard way, but then you can only do it with that little proportion. Don't try and, sort of gamble with the overall portfolio of yours. And it's important to, of course, tell yourself that it is a slow process and you have to invest according to goals and you have to give it time. So if the mahogany can grow, then probably their money can. If that can't, then this will also not happen.
That's a good analogy. And incidentally, over the weekend, Prableen, I met somebody who has compared Kabir's verses to finance and financial literacy. And I can't, of course, quote Kabir. I'm not skilled enough and I don't have the language. But effectively what he was saying is, good advice is not something that people often gravitate towards. And that is the reason why the person who is selling milk has to go down the streets and keep calling to people saying, please buy milk. Whereas the person who is buying alcohol can sit and sell it wherever they are. But having said that, Prableen, thanks so much for joining me today. Absolute pleasure as always.
Likewise. Thank you, Alex.
All right. Well, that was how you should think about starting investing. But there's also a good thought that you might have if you want to do some good this festive season, and that is to set your house help, the people that are helping you at home, maybe somebody who's driving your car, assisting you in other ways, get them started on the road to financial freedom and get them started on the road to creating long-term wealth. Joining me on this conversation is Sharad Tandon, the founder at Invest at Ease. Thanks so much, Sharad, for taking the time, and season's greetings to you and your family and your team. Let me start by this, because a lot of people do this already. They devote a certain portion of the salary that they pay out to their employees, and I'm calling them employees because ultimately that's what they are, for long-term investing. Do you think that this is a good idea?
Alex, thanks for your wishes, and I heartily reciprocate to you, your team, and especially the viewers who listen to us every now and then. And luckily, I know the person you are referring to. I think you met Vinayak Sapre, where we were trying to quote Kabir. So Vinayak is one person I recruited in the industry long time back.
Very
So I
good.
know him
Good to
since
hear.
for 30 years. But as Vinayak probably in his conversation and Pravleen was pointing to look at is create more wealth. Lot of us in our own rights are doing that in a unorganized bits and bits pieces. We might not always be doing it very regularly, but my suggestion to everyone in my society, in my circle is very simple. You realize the value of the person or a househelp only when that person or she is not there. For some reason she is taken off, you will suddenly realize the value. And why these house helps in our, say, ancestral places were continuing for generations together? Because our family was taking care of them. Those were different times. The times have changed. Now, how do we go about doing it in a very organized way? My suggestion is Navratri probably is the right time to start that, learning from all the goddesses, blessings and things around, festivities being around. And on top of it, the GST cut which has happened, which is going to be implemented from today onwards, probably in a sense will enable all of us to handhold the households as the GST portion of their consumable, whatever they have, milk, rice, pulses, whatever they use, reduce their budget constraint to some extent. And can we sort of handhold them to migrate them from that saving, which is going to incidentally happen over a period of time, and start sort of providing them knowledge where and how to save. So that's a good way to start our own sort of charitable journey, if I may put that word, but for our own goods.
Okay, so let's get into the nitty-gritties of it. How would you suggest making a start? And ultimately, it's hard to explain to people who've not experienced the financial markets before why in a certain month their investments and whatever they've done can drop as much as 10-15%.
So how to do is a tough thing, and how to sort of coax them to get into it. And first thing first, we need to start enabling them by opening a bank account, which in a sense, this present regime has done it by opening Jan Dhan accounts. We need to sort of help them get a PAN card and Aadhaar if they don't have already. If they have, it's good. That's the first step. Now, second step is what I have done in my household is start providing my house helps, my drivers, my support structure, pay their salaries in the bank accounts directly. So what it does is it gives you a chunkier money at a go. Second, it reduces their risk of keeping the cash, which is very critical in these households. So understand the risk they are typically carrying. One is they are sort of vulnerable part of the society because there is a health and a social risk which comes to it. Their jobs are not as stable as a lot of other jobs. And in a sense, as you rightly pointed out, they are not that much literate in terms of financial knowledge, know-how. Now, we need to park into these step-by-step risks, reduce them, and then handhold gradually. And what this step will read is once they have a chunkier money from, say, 10 households where they work in their accounts, they will know how much money they earn and how much they want to spend is the second logical step on it.
If we're talking about savings, what instruments are appropriate? Because they're familiar with things like fixed deposits at the very least, right? Or recurring deposits. Mutual funds might be something that they've never considered. So would you say that a micro SIP, for example, which a lot of mutual funds have started offering, is something that they should do as well?
So first step first, Alex. So one of the drawbacks of their own surrounding is they don't have enough of health coverage. Fortunately, Ayushman covers to an extent. Can we migrate them to something which are government-backed institutions, schemes like, say, pension plans? You can do that. Can we ask them to take additional health cover? So the things you were saying, can I invest or should I invest on their behalf? Probably these are things where you can fund them additionally. If they have a savings account, all these things will fall in place. Because for them, that 2 lakh cover, 50,000 additional accidental benefit makes a lot of difference. And that's what is a step one. Second, as you rightly pointed out, they probably are affair with the FDs, or at least the worst case situation, the piggy bank, गुल्लक है घर में, कभी बचपन में किया था. Can we migrate them to a post office deposit first? They need some liquidity. Now, MF SIPs, even if we want to migrate to the Chotu SIP or Choti SIP, which we want to call 250 rupees a month, is easily doable in now if you have KYC documents. KYC again will form into PAN and Aadhaar, and then it goes on. And what sort of structures or schemes to look in those Choti SIPs? Predominantly help them create one corpus of around say 6 months, 7 months of their expenses into a liquid fund, which is slightly better than the bank accounts they'll keep. Then help them migrate into balance advantage fund. And that corpus should be at least 2 to 3 years of their expenses, because the stability in the job is not there. It can be for multiple reasons. Sudden expenses, some owner of the house moving out, someone new coming, you don't get a job, whatever it is, whatnot. So those are two buckets you fill, then you migrate to something else. While this might appear as a lower sort of generating returns, but it's still better than not making any returns. The other step which we probably all of us can do easily is, if there is a person in their society, their family kid, can we handhold them for a proper educations? If they are already going to schools, can we handhold them to get them into providing them for books, their proper place to sit and study, teach them, handhold them. Also, parallelly, most of these house helps are not from the local geography. Can we enable them to learn an alternate language so their life becomes slightly easier in the landscape they are moving around?
Upskilling is what you're suggesting.
Yeah.
But speaking about investments, and you've mentioned quite a few good options, but one thing that a lot of people have done for generations, for years now, is to give gold, right? I know my mom-in-law did the same thing a while back. She's bought gold and she's given it to a house help who incidentally has been with her for 2 decades. And you spoke about that as well. Why should you not do that?
Okay, so problem in doing that, once in a while you'll do that, they will hold on to it. But if you make a regular habit, more often than not, if you look at their economic situation, they will go and pawn it. Once they pawn it, the problem is they will get into an interest rate fiasco, because that local money lender will charge them heavy interest. And then it's a vicious cycle, all of us know. So typically avoid that. Occasions like kids' marriage, some anniversary in your house, some good wishes, something event happening, please be generous, give it to them. But don't make it a regular habit to give them a gold as a sort of in lieu of, I say, gifts or salaries, because more often than not, because of their condition, they'll tend to go and pawn it to the money lender.
Yeah. Sharad, you know, I've had this same conversation on this show before, and I'm hoping that people are aware of the rates of interest that are charged by these money lenders, by loan sharks that are, by the way, operating off the books and completely illegal. Are you familiar with the rates? Because I am. And do you want to suggest what people can do before maybe even facilitating some of these investments? If you find that your house help is mired in debt, in your opinion, should you help them extricate themselves?
So I'll give you an example, and this is not like I'm trying to create here. The society we stay, there are a lot of security guards who come from, say, northern belt of India. And most of them often have this situation. So what we have done in our society itself is, up to 6 months of their salary, we give them as an advance, and we recover around 50% of salary every month till the time loan is repaid. So that's one way to do it. Probably we can replicate the model in your own house helps. We have, all of us in some form and size would have been doing that. But you rightly pointed out, for them to get out of that vicious cycle, we will have to pull them out of the debt trap one. It's individuals choice how much and how far you want to pull them out, because that will depend on individual house help, how much he or she is in debt at that point of time.
Got it. Okay. And I think we've covered quite a bit of ground. Sharad, thanks so much for joining me today, and pleasure having you.
My pleasure, Alex, as always.
All right, that brings us to the end of this edition of Your Money Matters. Let us know what you think, and as always, your comments are welcome. Do stay tuned. This is NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
देश के लोगों को 2.5 लाख करोड़ रुपए से ज्यादा की बचत होगी। और तभी तो मैं कह रहा हूं ये बचत उत्सव है। हम वो सामान खरीदें जो मेड इन इंडिया। हर दुकान को स्वदेशी से सजाना है। जब ये होगा तो भारत तेजी से विकसित होगा।
Hi, thanks so much for joining in. You're watching NDTV Profit. At the onset, let me wish all of you a very happy festive season, a happy Navratra to everybody tuning in. And as you can see behind me, I am at an electronics store. Today is D-Day. It is the day that GST 2.0 rolls out. And I've been thinking for a while, I need a new phone, I need a couple of new gadgets. And I usually am the tech guy. I go and spend on tech that I don't really need. But incidentally, my co-anchor Mahima has been browsing a couple of sections here because I think she wants to figure out what to buy. I've never seen her so excited about tech before, and the reason is that it's all gotten cheaper. Quite a few of these things have gotten cheaper. Let me go across to her and find out what she's looking at. Mahima, what have you been looking at?
Right, so a couple of things, Alex, that I'm looking at right now. Of course, the first three things where we've seen GST cuts coming in from that 28% mark to 12% mark. The first one being TV, more than the 32-inch. Something like this, yes. And then you have your ACs and dishwashers. So people who are worried about washing dishes at home and who have no maids will be happy with the GST cut that we've seen. So these three things, of course. And of course, we've not seen any GST cut on phones. But yes, I think iPhone 17 is something that people are looking at right now for sure.
So that's one. So on the one hand, you have the GST cuts. On the other hand, you have festive offers that kick in.
Exactly.
So it's a great time to be going out and figuring out what you want, get your lists in order. But it's not just consumer electronics. And we'll be speaking with the director of Vijay Sales very shortly. Mr. Nilesh Gupta is going to be joining us. But we've also got conversations lined up for you to talk about the automotive space and also the snack space, because all of that is getting cheaper. Let's run through the list very quickly. What gets cheaper today?
So a lot of things, like from a toothbrush in your bathroom to a butter in your fridge, everything gets cheaper because that includes a lot of milk, dairy items. That includes your paneer, chocolates, ice creams, butter, cheese, etc. So that's from the staple pack. You're also seeing snacks getting cheaper in terms of where they were at 12% earlier will now be charged at a 5% mark. Apart from that, you have your clothing, apparel below that 2,500 mark will go down in terms of where GST rate stands to that 5% mark again. In terms of where your hotel industry stands in terms of the consumption space, well, where your ticket size is below that 7,500 mark, that gets cheaper too. So a lot of items for sure, Alex, getting cheaper from today, and this marks the onset of festive season as well. Navratri kicking in, making things cheaper. And that will, in general, boost demand. Yeah. That's what we've been hearing from analysts and management as well.
And also people on the ground. We've got from the automotive space, Mr. Sandeep Kumar Bafna, who's the chairman and managing director of Fort Point Automotive Cars. Sir, thanks so much for taking the time. Mr. Bafna, can you give me a sense of the offers that are currently underway? And of course, today is the day when all of those prices tick down. What is the kind of initial response that you are seeing? Do you see feet on the ground? And what is your anticipation for sales this festive season?
So let me start with two-wheelers. We are dealers for Hero. Suddenly, there has been a spike in inquiries. And in fact, today we are expecting a lot of payments to pour in for the Hero bikes. In fact, we've launched also 2-3 new products, and which were in waiting for such a long time, and that now would change the whole concept of things which are going to happen. On the car front, we are dealers for Maruti. In Maruti Suzuki, as you are aware, that there is a reduction in GST, plus the company has also reduced prices, which came to us as a big surprise. We thought that just the GST benefit would go to the customer, but the company has also reduced their prices on the product. Along with that, even though it is up to December only, but I feel that along with that, they will give a lot of other discounts and benefits which are also coming in. Financing is becoming cheap today. Mahindra Finance has announced that there won't be any processing charges from today onwards up till the end of the season. So I feel that this whole thing is
a combination of the prices going down on account of GST, as well as the discounts that are kicking in from the festive side, a lowering of the processing fees. All of that is exciting, to say the very least. I'll come back to you in just a bit. We're joined in store right now by Mr. Nilesh Gupta, as I've pointed out. Nilesh, thanks so much for taking the time. It's an exciting time because I think normally on a Monday at 12 o'clock, it's not as busy as it is today. It's deserted, and today is a different story. Can you take us through where you think the biggest excitement is going to be after the GST cuts and coupled with the festive fervor that you would expect?
So I think this time is going to be a double whammy. One is the GST cut and second the festival also. Plus, last 15 days have been very poor because people who are waiting for today onwards to buy. So I think the basic action is going to be in large screen televisions, because there, in rupee term, is the nice.
What is it like?
In large screen televisions, it is nearly 50 to 18,000 rupees, which has come down 65, 75 inches and above. In rupee term, it's really very. Air conditioners, it could be there, but air conditioners, we'll have to wait for the weather to be on the favorable side. Be on the favorable side. Yes. But even dishwasher, that's a category which we saw in the rise after COVID. I think that's something which will become a staple food, like how everybody has washing machine in the house, a dishwasher will also come in.
Those are where your flat screen TVs are, the big ones, right? So let's walk across to that segment as well while we're talking about it. And Mr. Gupta, really the question that I have is that alongside all of this, there is a call by the Prime Minister to make local and to buy Indian. Yes. There are more technological products, more consumer electronics that are being made in India, but there are still a lot of manufacturers that make outside and sell here. So in the catalog that you have, do you have more products than you had 2 years back that are made in India?
So now if you see in the last 3-4 years, the government ensured that all these products, 90% of them are made in India. Okay. Because they made it impossible to import because the duties were high. So everybody has set up the pack. You see in our industry, a lot of factories have been set up. So all the televisions which you see here, except for the last screens, pretty very last screens, 100 inches and above, which has minuscule say. It's all make in India. And even the 100 inches in few factories, a few brands are assembling here. So everybody is having make in India. Even if you see Apple phones, yeah, most of the phones are now make in India. In fact, we are exporting it also. So accordingly, I think everything what you see here is, if not 90%, at least 75-80% is make it.
Absolutely. We'll come back to you, Mr. Gupta. We're also joined by Rishabh Jain, who's the CFO of Bikaji Foods, joining us now. Mr. Jain, hi. Good afternoon to you, and thank you so much for joining. Just want to understand the demand that we're seeing in the snacking space. You know, we talked about how auto space is picking up, how consumer durable space is picking up, but snacking is one industry that, you know, when I was speaking to one of the FMCG analysts, he said that snacking is going to be that one industry that's going to see a lot of demand boost because of GST 2.0. Your view with regards to the demand that's coming in already?
So we are also expecting the same. So it's a peak Diwali season, and we see a lot of gifting and all during this season. And there is good cut from 12 and 18% to 5%. It's more of simplification and ease of doing business. So we see that it will be good Diwali this year for all the snacks players.
Let me ask you this though, when you're talking about the price points where there is going to be an impact for GST in the snacking space, the expectation is that these are all small ticket items. So as manufacturers, would you say that it's easier to control it with the grammage, and on the packet you're not likely to see too big of a change, and so therefore the question is, how does that bolster demand?
So basically we have two type of overall packs. So family pack and impulse pack. So family pack is all about 20 rupees, which is 200 gram, 400 gram, which are MRP driven brand. So we have reduced MRP from today, and for impulse pack we increase grammage. That's what we're doing, and we are committed to pass on completely to the consumers. That's what we are targeting.
Okay, Mr. Gupta, coming back to you, last time when we spoke, we were talking about how, you are confident that this time you'll do a 20% growth apart from what you did last year. Considering now that, pre-bookings would have probably come in, do you think that 20% can be higher?
No. 20% will not see. 20% was also a very large goal.
Yes.
So I think even if you achieve that, it's a great thing. But now the expectation is we will be able to do it 20% because what has happened is last 15 days has been very dull. So there's a backlog over there. So that will also come in. So in this period, I'm sure this time 15 to 20% seems plausible.
And what, according to you, will drive that mix? Do you see it changing because, as you pointed out, these televisions get cheaper? Will that lead to
televisions will drive, mobiles will drive, laptops will drive, and appliances traditionally is a Diwali product. So all refrigerators, washing machines is also going to drive. And if weather supports, normally in this part of the country, west part, November is a mini summer. Second summer. So if that happens, then with a 10% reduction in the GST, I think AC will also kick off.
Do you think the premiumization part will also pick up from here on because now we are seeing, some products getting cheaper? Do you think a consumer would want to move towards a more premium TV or, a better energy efficient AC?
So that was always happening in the last post-COVID, but now it's going to take more further ahead for the simple reason is a person who was planning to buy 55 now will think of buying a 65 and a 65 guy would move out to 75.
Exactly.
Okay, I do want to ask about that same question to Mr. Bafna because Mr. Bafna, you were pointing out that there are more inquiries, but in the two segments that you mentioned, in the two-wheeler space and in the four-wheeler space, Maruti Suzuki, they are anticipating that the small cars will really see a bump in demand. I'm just wondering what you're seeing on the ground.
So actually what has happened is we've seen in the last couple of days a lot of two-wheeler customers walking into our showroom, and after the price reduction announcement 3 days ago by Maruti Suzuki, the product like Espresso being below 3 lakh rupees, customers are moving from two-wheelers to four-wheelers. I mean, they're at least inquiring and at least 10% to 15% conversions should take place. So I feel that, a lot of upward movement and upward movement in the four-wheeler industry and from the two-wheeler to four-wheeler would also happen. Along with that, you see that the 100cc motorcycles, now people are moving to 125cc with this price reduction. So we find that the inquiries in the 125cc also has increased. With Hero coming out with the new Glamour, customers are instead of going for the Splendor 110, they're moving for the 125cc. So you see that whole upward movement has started, and I feel that this would really break a lot of barriers, which earlier customers were not thinking of buying a four-wheeler are now moving towards that. And in the rural segment also, we are seeing a lot of inquiry growth.
Excellent. And it's great to hear that from a dealership that is representing both the largest car maker as well as the largest two-wheeler manufacturer, among the largest two-wheeler manufacturers. But speaking about auto and speaking about premiumization, we've got a ground report for you from Tamil Nadu, the implications of GST 2.0 rolling out. Sam Daniels has this report. Check it out.
The price of cars have become cheaper with cut in GST from the earlier 28% to 18%. The industry is optimistic that this could encourage first-time car buyers to go for it this festive season. The GST on electric vehicles too has been brought down to 5%, triggering excitement that this could actually spur purchase of EV cars. With me, Niranjan, a health and fitness coach. Thank you very much for your time. What would this mean for first-time car buyers?
So this is definitely a very encouraging move for the first-time car buyers. I think car rates have come down and it has put the cars in an accessible range for the first-time buyers.
You think this should have been done long time ago? The opposition says the Indian consumers have paid 50,000 crore as GST so far.
I mean, you would always be happy if the cars were cheaper even 5 years down the line, 5 years earlier. But better late than never. I would say this is a welcoming move. If it had been done earlier, yes, well and good, but still better late than never.
Is this eyeing elections?
Oh, I would say elections are still quite a time away, but looking at the roadmap, yes, I think elections are 4 years down the line, and especially with the BJP not getting a very strong mandate this time. Yes, they are at power in the center, but it was not a very strong mandate compared to the previous two terms. Right. So I think all these moves are more people centric.
Right. Thank you very much. And car dealers say ever since the GST reforms were announced, they've been experiencing a slump in bookings, and now they hope there could be revival of demand for cars. Thank you very much, Mr. Sankara Pandian, the team manager here. Yes. How are the bookings now, and how was it over the last 2 weeks?
Sir, customers are eagerly waited because of the GST. Now, yesterday night they confirmed everything. So, from today onwards, the booking expected as more than the actual. We expected the best result from every dealerships.
What kind?
Margin to every end user or the customers. For example, if it is in a 10 lakh worth of car, they can save up to 1.3 lakh rupees straight away from GST, plus added benefits available for festival seasons. So customers are really happy with that. We expected more number of booking coming days.
So it's going to be bumper festive season for you now, and for electric vehicles?
Exactly, sir. But electric, they maintaining the same for 5%. So there is no ups and downs, but electric is a future.
Thank you very much for your time. And dealers expect a bumper booking this festive season, and customers can't really wait to avail this GST tax cut, which have just made cars affordable.
Okay, so that's the ground report coming in straight from Tamil Nadu, and dealers are expecting a bumper booking season is what the word is coming in.
Bachat Bonanza.
Bachat Bonanza, exactly. And speaking of Bachat Bonanza, Mr. Gupta, we were talking about how people will be able to save on large TVs. But considering that this savings will happen, I believe what Alex was indicating was that small items will also pick up sales, because the moment they save in some item, they would want to spend that in some other item. What is your expectation? What are the other items that you're seeing demand spur up in?
So this time what we are seeing is a person who would have not wanted to buy a television this Diwali. Will buy because he'll say, oh, I always wanted that 75-inch television. So he'll come and go. And whatever he was planning to buy, whether it's a refrigerator or a mobile, he'll buy. And secondly, when he comes in the store, and because he's going to go for EMI, so there are full chance that if he had come to buy a 55 inches, he'll upgrade to 65 or even 75. And likewise, it will go up. Plus, then possibly he may also look out for a headphone. Because today in television, the most important thing is at night when one is sleeping and one is watching, the problem is what to do with the sound.
But the question is, that's an interesting point that you raise, which is a lot of people are buying white goods with credit card or with an EMI. So what is the mix right now for large ticket items like phones and like televisions, as you pointed out?
I think 70% of our sale comes from EMIs. Okay. Whether it's a credit card or a plain paper finance. And 70 to 75% is coming from EMI.
And this is across... I know this is for you, but would you say that this is the trend across the industry as well?
In fact, people don't want to pay down payment. People are only looking out for zero down payment, zero processing fee schemes.
Even in terms of, the overall discounting that's taking place, a lot of online platforms giving big discount, festive season discounts. Can you give us a sense in terms of the average percentage of discounts that we're seeing on these electronic items?
See, basically, anywhere between 5 to 15-20% is the norm which is happening. But more than direct discounting, it is the EMI schemes which are being more sweetened. As I said, zero down payment and a longer tenor. Now it's no longer restricted to 8-12. It's going to 18, even 24 months. And in the case of one brand, Sony, they give pay by screen size. So if you're buying a 55 inches, you have to pay 5,500 per month. Okay. So it goes up to that size. So accordingly, what is happening now? This is also another form of discount. Then there are exchange offers which comes in. So in mobile, you will always find whatever your value of the mobile is there, plus there's a bump up of 2,000, 3,000, 4,000. So all this forms a part of a discount. And this is what Diwali makes so big for our industry.
Okay, interesting. One more question that I had with you was with regards to where e-commerce and quick commerce trends are picking up, right? Because recently a report came out which said that DMart Ready and Amazon now has the highest average discount, which is at 23%. So this might not impact the larger appliances, overall, but smaller appliances, for example, a mixer grinder might see some kind of impact there. Any trend that you're picking up?
See, frankly speaking, wherever there's a maximum discount, possibly they are not the best of the brands which the consumers would wanting. There will be selective brands where the maximum discounts are happening.
Correct.
So for those consumers who just want a temporary or they are looking for discounts, yes, that becomes a go-to. But otherwise, a consumer normally would want to buy, and as we are saying, premiumization is happening. So in premiumization, even the brand premiumization is happening. A consumer wants to go in for a better brand also.
Right.
Interesting. Okay. Now, in terms of the other ground report that we are bringing to you is with regards to a ground report that's coming in from Rishabh, who's spoken to somewhere in Karol Bagh with regards to where Bikaner Wala stands. Listen to what he has to say.
Right, bright and early here at Karol Bagh. We are at the prominent corner location of Bikaner Wala in Karol Bagh on the morning of September 22nd, which is when the new GST rates kick in. And as you can see behind me, you have the poster put up by the restaurant that says GST Uphar, which translates to a GST gift. And it does say that Saste Hue cakes, pastries or namkeens, which translates to cheaper cakes, pastries as well as savory items. Let's head inside and figure out what sort of benefits will be passed on to the consumers with this. Right, I'm joined by the management of Bikaner Wala here in Karol Bagh. Sir, आज से सितंबर 22 हो गई है, नए GST रेट्स आ रहे हैं. आप किन किन प्रोडक्ट्स पे कम हो रहा है रेट और आपकी क्या उम्मीदें हैं?
हमारी नमकीन जो 12% थी वो अब 5% पे हो गई, तो 7% हम लेस कर दिए उस पर. और कुकीज़ वगैरह जो 18% में आते थे वो भी 5% हो गए, तो 13% उसको भी हमने कम कर दिया है. MRP अभी फ़िलहाल वही लगी हुई है, लेकिन हम कस्टमर को जो बिलिंग कर रहे हैं वो लेस करके ही कर रहे हैं.
तो एक बार हम स्टिकर प्राइस और बिल देख लेते हैं सर. तो जैसे आप बोल रहे हैं बिस्किट्स, नमकीन, केक्स वगैरह पे जी
ये लगे हैं. ये कुकीज़ है, इसके MRP है 144. जब हम कस्टमर को दे रहे हैं, ये बिल है इसका 144 का 128 का दे रहे हैं. 13% इसमें हमने लेस कर दिया है.
इससे आपको क्या लगता है कि और कस्टमर का जो डिमांड है वो बढ़ेगा?
बिल्कुल बढ़ेगा जी, नेचुरल बढ़ेगा. अगर कस्टमर का पैसा बच रहा है तो वो कहीं न कहीं खर्च करेंगे ही, खाने पीने में और में सब चीज़ों में करेंगे वो.
और आज तो पहला दिन है इस GST रेट कट का. यही चलता रहेगा आगे तक? आगे फेस्टिव सीजन भी आ रहा है.
बिल्कुल बिल्कुल आगे भी यही चलेगा. हमारी उम्मीद है कि ग्राहक आए और अपना पैसा बचाए और ज़्यादा से ज़्यादा मिठाइयाँ, नमकीन, बिस्किट्स और ये खरीदे, ताकि अपने बच्चों के लिए भी दिवाली पे और पे नवरात्रों में ये सारी चीज़ें घर में ले जाएं.
Right, there you have it. All sorts of GST rate cut benefits being passed on to the end consumers. You have savory items that are getting cheaper, about 7 to 8% at least. Shops starting today, starting September 22nd, have started passing on these benefits to the customers, and they have done so in hopes of higher footfall and better traction ahead of the coming festive as well as wedding season.
All right. Well, thanks so much, Rishabh, for getting us that update. It's certainly given us some food for thought. And the other thing that, of course, we've got is our list of things to maybe look at buying. Of course, that depends on what your EMIs this month are. Mahima, I'll ask you that after the show is done. Nilesh, thank you so much for joining us today. And of course, Mr. Sandeep Kumar, thanks so much for joining us as well. And viewers, do stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Good evening and welcome to The Big Question. I'm Vikram Oza here on NDTV Profit. We're asking the big question tonight. It's about the pronouncements coming through from the US. President Donald Trump has slapped this $100,000 one-time fee on new H-1B visas. Now, one side believes that this is a move that could hit Indian IT giants like TCS and Infosys and Wipro and Tech Mahindra, and it could hit where it hurts. We've seen the impact play out on the stocks in trade today, but others are dismissing it as a knee-jerk reaction. So that other side believes that the hit will not be material in nature. For the American side, this move is aimed at protecting American jobs and to raise their wages. Companies over there are being accused of layoffs while hiring thousands on H-1B visas. So, on the whole, it begs the question for thousands of Indian professionals, is this the real end of the American dream? For the Indian tech industry, is it a body blow? Or is it a chance to reinvent and finally keep the best talent at home? And that's what we're asking. Is Trump shutting the door, or is he throwing the door open for India to rise stronger? We're tackling that on The Big Question tonight. And of course, to debate this, we have an excellent panel. Former High Commissioner, Ambassador Veena Sikri is joining us for the diplomatic and geopolitical perspective. From the industry side, we have Abhik Datta, the CEO of Tech Plus Talent. He's got this insider's view on how Indian IT is going to adapt. Kathleen Deroser is with us, a migration expert. She's going to explain what the policy means for professionals. Sandeep Agarwal also with us, fund manager and co-founder at Sovelo Investment Management. He's going to explain the impact on the Indian IT sector and what this means for the industry at large. And also to round out this panel is Aditya Mishra, Managing Director of CL HR Services. He tracks talent flows and, of course, the job market. He tracks very closely. So we have a perfect mix of voices to tackle the big question tonight. And good evening to all of you. Abhik, to you first. What do you see this as? Is it a hit to our IT sector, or you see it as an opportunity?
I think in a short term, it is a little bit of a blow, right? You have people who were aspiring to go to US, the on-site dream of a typical Indian IT engineer. So in the short term, it could be seen as a little bit of a hit, but in the mid to long term, this could be an opportunity. You could have brilliant minds staying at home. What we call as the reverse brain drain could happen, provided they get the kind of, the ecosystem they get in the US. So I would say a knee-jerk reaction as of now for the short term, but mid to long term, this could be an opportunity.
Kathleen, you tell me, from your vantage point as a migration expert, what does this mean for the thousands of Indian aspirants who are dreaming of a life in the United States? Is that American dream slipping away for them, or you think it's a temporary blip?
I wouldn't say that it's just shut or the American dream is no longer, visible. But yes, I would like to give you an information here that, H-1B is not only the route. There are alternatives such as L1, which is intra-company transfer, O1 visa for people, those who have extraordinary skill sets, F1 for STEM OPT, leading towards work authorization. So many US companies, those who are already exploring remote hiring models. So for international professionals, it is not necessarily to be on the US soil in order to work for the US clients. Right, so working, of course, it is still going to be there. You can still work with your US clients, but when it comes to American dream, I wouldn't say it's a no, but it's a churning of the skill sets. One, you have to upgrade your skills. The other, you have to upgrade your certificates. And of course, if you are, that much skilled enough, you are welcome in America. And America do require immigrants because they do not have enough, whether it's IT, whether it's healthcare, or resources, whether where the research is a lot of stuff. So they do require people. It's not the end of the American dream.
So Kathleen, you're saying it's not the end of the American dream. You think the companies are going to pay that much more for the highly skilled workers that would be still sought after from India?
Absolutely.
Okay.
Absolutely.
Aditya, you tell me, you work closely with Indian IT professionals, you work with IT firms. How does this hit the ground reality right now? Companies like TCS, Infosys, Wipro, are they going to rethink their American hiring model?
No, I think it's definitely in the short term going to be a challenge for all of them because they need to take this to their clients and talk to them. If they are willing to bear the cost of additional H1Bs, which is not going to be that easy because the amount is so steep. So the future that I see is of these IT giants reconfiguring their work and moving a significantly larger portion of the work to offshore. Think of a situation during the COVID times where all the people were working offshore, the onshore component was negligible. So probably that's going to happen little more than what it is happening now. Secondly, our Indian IT industry over the last decade has been able to perfect that model of combining offshore as well as the local hiring nearshore models. So that's going to continue for all these companies. And thirdly, I see that many of these large organizations are going to accelerate the process of setting up GCCs in India. And the small companies are going to probably work with a lot more shared GCC models. Maybe some new business model is going to evolve where companies like this TCS, Accenture, Wipro, and all of these are going to really come up with some innovative model with which they are going to work. Just one more point I want to add here is that I see this as a long term is going to hurt US economy in a significant way. So I think this is going to change sooner than later.
So you think the ground reality is going to kind of get shaken up in the short term. But then perhaps the need is so acute as far as the US is concerned, something that Kathleen is also highlighting. We might see a return as well to how things were, but we'll have to wait it out because things can rapidly change under the Trump administration. Sandeep, how do you see this fee? How is it playing out in stock valuations now of the IT giants, TCS, Infosys, Wipro? We've seen a knee-jerk overreaction. That kind of risk is something that the markets are still kind of digesting. Do you see a medium-term structural headwind playing out over here, or do you think it could last longer?
So, hi, good evening, and thanks for having me on the show. So I agree with all the previous speakers and mostly with what Aditya has said. So my view is this, that, Trump has done probably a calculation that, 100,000 divided by 6 is around $16,000, $17,000. So he believes that that is the amount which Indian companies save. So he has done basic maths and he has arrived at a conclusion that whatever is the margin, that is the additional cost. If I put, then, they will hire from US. But the problem is, where is their talent available in the US, and are they willing to work at the same amount of time and give same amount of time which Indian people who go from here, and you keep changing their bases every 7 days, 15 days, and they are very, very flexible to do that. Whether it will be possible, because I come from a background of running a tech company myself in 2008 to 10, and I have seen all this. It is very difficult to find people locally and to, even make them fungible to move from one location to other and all those things. So I think this is a mathematical call which has been taken rather than a practical call. In my view, yes, short term, as Aditya mentioned, there will be knee-jerk reaction, there will be a lot of execution challenge, but I honestly believe that it gives a very good edge to the Indian large companies the way, COVID gave. So if you see 2 times, 3 times, this is the 3rd time they are getting great chance to improve things. So before 2014, most of these companies were at 30-35% local resource, which after Trump came, he started pushing for more local. So all of these companies have largely reduced the use of H1Bs in last 7, 8, 10 years. Then after COVID, they went to the client and said that, see, we can do everything via online. Why you need people here? And I think now this is the 3rd opportunity where they can say that we have always executed well, so why you need resources here? So by the way, if you see the maths, we make more money when we execute from India in terms of profit. Billing rates are definitely much higher. In on-site, it is 3x, but still we make more money here. So they will be happy to do. So in short term, this growth for the large companies, which is already, 4-5%, that can look maybe 0 to 2% because of delays in decision making and lower billing rate. But I don't see challenge on the profitability side. And I think, it is very good. More GCC will open, more jobs will be created here. So in long run and medium term, it will be more profitable and better. in short term, it will look like a dent on revenue growth.
So what you're saying, Sandeep, is that local sourcing actually works out better for these IT companies, and perhaps that's the way of the future. It would work out, though, as far as the Americans are concerned, why they are bringing in this kind of fee right now. They are saying that people like the Indians are taking away their jobs. So that part is not going to get addressed, Sandeep. And if not, then are they going to come in with something bigger than just a $100,000 fee like the kind that they're talking about now?
I think, you know, they are trying to solve which doesn't exist. So where is joblessness? I mean, you see, to find even 100 people, it is a task. You have to hire so many consultants. It is a big challenge. Means I know this. You can find this data from annual reports of the companies also. It is almost impossible to get people. So there is no unemployment in tech after Lehman crisis. So what problem you are trying to solve? There is no problem which you are trying to solve. So I don't know what will be the impact. So in my view, you know, it will be in long run US. Means I think that US companies will be biggest loser in this, and I think that's the reason Section C has been introduced very smartly. They will probably give exemption to all big tech in recruiting from in H1B visa exemption, which they have already created a space for that. So I agree with what Aditya said clearly. Either it will be a loss for US companies in long run, or they will use that Section C to get exemption.
Let me see what the diplomatic vision for this is. Ambassador Sikri is with us as well. Ambassador, the H1B visa, it's actually been a bridge between India and the US. For decades it has been. Now, do you see this steep fee of $100,000? Is it becoming just another trade barrier, or is it part of a larger message actually from Washington? Because that's what we're trying to decode, that America does not want foreign workers, not Indians, who account for the more than 70% of the H1B visas that go out from the US.
Well, you know, I think we've seen definitely with President Trump that his unpredictability is his very predictability. And he has been trying to play to his MAGA constituency to show to them that he's bringing more and more American jobs. And I think the main factor of putting in this huge figure of $100,000 as compared to $2,000 to $5,000 earlier is to show that he's creating more jobs. But I feel that this is going to boomerang. This is going to be a self-goal for the US, because it's going to lead to, first of all, more and more global data centers coming up in India, and the offshoring is going to only increase, and it's not going to create the kind of jobs in America that they're looking for. Because if you look at the facts and figures, that many of the people who had gone on H1B visas, they stay on to open their own startups in other companies, and they are employing huge numbers of American citizens in their companies. And I think that has also been shown by many that the kind of jobs that the H-1B visa holders are going for in the big tech companies are not those jobs that can be filled by any American citizen.
Right.
And that is why the numbers of H-1B visas have been going down. Yes, because American companies are trying more and more to fulfill the president's desire to have local citizens. But to some extent, the local citizens are not available. And people, in fact, are talking about the state of American education, which makes it a situation where local citizens who have gone through that system are not available for those kind of entry-level and other jobs that the H-1B visa people are fulfilling. So I do not think that it is going to be, kind of a situation that's going to help American employment. But certainly, I think one problem we have to look at from the diplomatic point of view, that much of this is being used by the MAGA lobby to create a lot of anti-Indianism, and Indians are now being blamed or criticized, and this is what we have to work for. All of us have to work together to make sure that this image of India doesn't get hurt at all, because Indian citizens, when they go abroad, are known to be the best for assimilation with the local population, very quiet, very hardworking, not involved in crime in any way. So this is the image that we have to build upon and to preserve. And I think that this use of the 100,000, we already see that within 24 and 48 hours, the government of USA has pushed back. And they're showing now that this is not going to be implemented for at least 1 year, because the current round for this year has already been awarded. And it's only the next lottery cycle, which will take place sometime next year, which is going to be at least
these are political exigencies, according to you, Ambassador, because this is happening at a time even when India and the US are trying to go ahead with a trade deal. So is that possible now that we are likely to see India push back diplomatically on this, or you don't see the need for India to do this? The US will do it all on its own. Because as far as domestic policy is concerned, and we're talking about the exigencies of a MAGA, that part of the political debate in the US, that has to be satiated, and this perhaps is part of that. But in terms of implementation, perhaps it's not, they are going to hold back, like you're saying.
They are going to hold back on implementation, and I certainly think that they will do close consultations with the big companies of America, Amazon, Microsoft, and others who are utilizing these H-1B visas, and they will come up. I don't see it's going to be that kind of a major problem that is being projected now. For example, let's take even on the trade, when we've made it very clear that on the trade and tariffs, we're not going to, harm the interests of the Indian farmer or the dairy producer or the fisherman and so on. But even so, we see that, there's so much pressure to buy corn from America. And the reason being that China has stopped buying the corn. China is using their leverage with the large amounts of corn that they purchase from America. They've stopped it and they've started buying it from Brazil and other countries.
Correct.
So the American MAGA constituents who are in the rural areas are hugely upset and are in a very, very difficult position.
Correct.
So America is trying to turn the pressure on India and it's putting all kinds of pressure on India. But our Commerce Minister is right now on his way there and there are going to be talks. And I'm sure he'll be able to explain India's situation on this matter.
Right.
So these are aspects we have to understand and appreciate. We do value the American relationship a lot. It is the most important relationship for us. But we do value our own internal concerns as well, whether it is the interest of the H-1B visa holders, whether it's the interest of the farmers or the fishermen or the dairy producers. So these kind of things in the relationship do go on a lot. President Trump.
No, but do they work in tandem, Ambassador? Because we're talking about a whole bunch of different issues, especially when you're talking about this trade deal. So when you talk about an H-1B visa issue as well, do you think it's going to be tackled at the level of this trade deal as well? And how important is it going to be to kind of take that on?
It is going, all these things are tackled together. It's not that they're tackled at the same forum because there might be different interlocutors on the American and Indian side for each of the issues. But in the end, it all comes to what President Trump is thinking. And we do know that he has, telephoned our Prime Minister on his birthday. They've had a good exchange of views. Our Prime Minister has responded very warmly. Now, Commerce Minister is on its way. Let's see how the trade negotiations go. If the trade negotiations go well and there's a trade deal, maybe the 25% tariff on purchasing Russian oil will go.
Yes.
These are something that are going to be tackled simultaneously. It's not going to be one after the other.
So one wonders where this stands in the kind of hierarchy of issues to get sorted out now that you have an H-1B visa fee, which is as high as $100,000. How it kind of forms in the pecking order when you talk about this trade deal now, it's going to be an important piece to track. But as far as professionals are concerned today, Aditya, and do weigh in on this, because you track the hiring and staffing trends very closely, tell us what it means for the aspirations. Thousands of young Indian engineers who are looking at a life perhaps in the US. Do you see these professionals now looking at going to the US differently? The kind of roles, because we talked about offshore and onshore. Now, how are they going to be looking at the possibility of having a life over there, working in some of these firms that they used to?
No, I think there is slowly a shift taking place in their beliefs, in the paradigms. So they're looking at alternatives. Those who are looking to pursue careers abroad, and some of the best of countries, there are probably some equal opportunities which are available internationally. So people are thinking of different alternatives at this point in time. If some of these recent trends are any indicator, the interest or the perception around that American dream as the exclusive way to sort of prosperity and fame and reputation and all of that is slowly, I think, getting replaced by something else. And this is a great opportunity for our own country as well to improve the perception of our education system, of our employment system, the way we deal with entrepreneurs, for example, the way we make finances available for young people, the ecosystem for young and bright talent to prosper here
But
I
we
think
didn't-
it's a great opportunity for our country.
But Aditya, surely we didn't need to wait for something like this to happen because the talent pool has always been there. We have been talking about a demographic dividend at one level, but also our talent and services part of the entire ecosystem has been a driver of our current account deficit as well. How do you see that getting affected? Because now looking at this kind of move, one wonders why we were waiting this long to be able to harness the talent that we produce.
No, I think our country and economy has got many complex issues to deal with.
Which
so
won't go
the
away,
way I
right?
look at-
Which suddenly won't go away. But now the
they're not going to
need is
go
acute.
away, but this is probably every crisis has the potential of becoming an opportunity. So we could do something.
Abhik, do you see it like that? Because now, if firms cannot send people abroad as easily, now one wonders, will Indian IT and startups, will they start offering more lucrative opportunities at home? How do you see that compensation and demand shifting locally now in India?
For Abhik comes in just a small point. The number of unicorns which are there in all over the world,
yes,
India contributes such a significant part of it.
It does.
So why can't we do many more? Why can't we do a lot more research, development, and all of that? The academic ecosystem has to undergo a lot of transformation. So that's the opportunity right now.
It has to go through a transformation, but the need is now. So that's why I'm asking, at this point in time, if firms cannot send people abroad like they used to, as easily as they used to, or not be as expensive as it used to be, then will our ecosystem create more lucrative opportunities here, where compensation and demand are going to shift in a significant way? Abhik, what do you say?
Yeah, I would say that, on an immediate basis, if you see the US companies, right, let's say there are 10 jobs in total where H-1B visa people were working, eventually 8 of them are going to be outsourced to India, right? They may hire one person locally, one person in the near shore who could fly down during the weekend and go back to their own countries. But eventually, I see that there will be more offshoring happening as a result of this. And we should all be, looking at this as a blessing in disguise. We should be prepared for creating more startups here at home and looking at other geographies. Just don't be reliant on US, although the customers in the US are
so then where
exceptionally
else? Where else?
I would say we'll probably look at UK, Europe, Middle East. We are already working, although we are small, but we are already working in all these geographies and probably go big at them. We cannot just be, when I was in TCS like 15, 20 years back, the goal was to not be over dependent on US. That hasn't happened in the last 2 decades. We're still overly dependent on the US, especially the Indian IT industry. I think it is time that we change
Which is
that.
why the big question and the need to change that is now becoming more and more acute. Kathleen, you agree? Do you believe that these skilled professionals are going to pivot? Are they going to go to a Canada or an Australia or a Europe where the economy is not the strongest? But if the US door is closing, will they go to these countries, or do you think they are going to find more opportunities in India?
So this means the competition is really tougher. So professionals need to polish their skills and certificates. That's one. And one has to be flexible in career location. Where it shouldn't be just the US. We'll be leveraging Canada, Europe, Australia, Middle East again as a strong alternatives. And for aspirants, it is a wake-up call to not put all the eggs in one basket. And a smart aspirant today is going to look at multiple global opportunities. They're not going to stick to only America now.
No, but the kind of... Yes, go on.
Yeah, it's not the end of the American dream.
You were saying
I would say, yeah, I wouldn't say so. I would say it is an evolution. The professionals, those who are future ready, they are globally mobile and skilled. They will find a place in the US or
there's going to be a
elsewhere.
demand for them, you're saying. But does it change the
Absolutely.
equation for India? From being a talent supplier to the world, can we become a talent destination now? That is the real opportunity that we are talking about with all the startups, all the entrepreneurship that could grow over here. That is the real question, Aditya. Do you think we can do that? And can it happen in a short enough time, not just as a knee-jerk reaction, but yes, using this as a stimulus?
Yeah, I don't think it's going to happen in the short term. It's going to take some time because transformation will have its own time period. But we have to start at some point in time. If we really need to be a developed nation, fully developed in all senses in a holistic manner, then we have to be a talent destination ourselves. Just look at the number of people of Indian origin who are in the R&D organizations in the US. It has been so over a period of multiple decades of certain kind of policy that US has had, and that's how that American dream as a concept has really evolved in the campuses and the families and practically in lives of people. So all of this, maybe there is a time when an Indian dream is going to happen. Probably it is a few decades away, but
still a few decades away. Yes. Meantime, what do the markets do, Sandeep? Very quickly, if you can sum that up for us, because is it a bigger risk, this Trump's H-1B fee shock, or do you think it's about India's ability to retain and redeploy our top talent, our top tech talent, to redeploy them at home, to retain them here? Is that a bigger risk that the markets see?
No, so, I will quickly summarize. So, number one, on the revenue front, as I said, in large cap, you will see some more lower growth. So, the sector may go out of flavor from the large cap perspective. They will become more of dividend stories for 1 to 2 years. Mid caps also, they are little expensive. So, you will not see much interest because of uncertainty. In a small cap, because the sizes of deals are falling and AI and all very small size deals are coming, so they could be big beneficiary and they can do well. So that is one part. Second, I believe, the platforms which are evolving, you just see the data, Vikram. Microsoft listed in 1986 at $750 million when US was $5 trillion.
Right.
And in our country, Zomato and other platforms are listing 15-20 times of that size with similar size of economy.
Right.
So I'm very confident that some of these talents will, do great here, and it is a great opportunity. I believe we will have a wonderful time. We will not regret this problem. After 6 to 12 months, we will see a lot of new innovations, new platforms coming in.
Ambassador Sikri, a very quick take from you. You think India can use this moment to build its own Silicon Valleys?
Absolutely. That should be our target.
Right.
And that, I think, is happening. These big guys in America, they too will realize that they need our H-1B people, the individual talent.
Sure.
And so they will come to India and set up their bigger centers here.
Right.
And we already know that we are in global competition because the Chinese have already announced a K visa, they want to attract talent to themselves. But in this game, India is far ahead because our people have established themselves in India and abroad as being, quite unique and successful in this way. So we have to leverage that into allowing our Silicon Valleys to grow, whether it is Bengaluru or Hyderabad and Pune and others, and not let this 100,000 be a challenge, but make it into an opportunity.
So this $100,000 H-1B fee, it's turning out to be more than just a number. It's actually a signal for Indian IT. It may, of course, sting in the short term, but it could also force a rethink on where the future lies in chasing visas abroad or building opportunities at home. But one thing is quite clear, that the American dream is not dead, like Kathleen is also pointing out, but it's definitely becoming more expensive. Whether it's a roadblock, it's a reset, we are going to be watching that space. But my thanks to Ambassador Veena Sikri, Abhik Datta, Kathleen Deroser, Sandeep Agarwal, Aditya Mishra, thank you for joining us with your insights tonight, and thank you for joining us on The Big Question. I'm Vikram Oza. This has been The Big Question this evening. Thanks for joining us.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome, you're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. So viewers, benchmark indices closed on a weak note with Nifty settling around 25,200 levels. The Sensex also declined by 466 points to close at 82,160 levels. The Nifty IT sector was the biggest loser, pressured by the hike in the H-1B visa fees announced by President Trump. So most other sectors also finished in the red. The revised GST tax structure took effect as the festive season begins. Now, this is the biggest tax reform since the GST was first launched in 2017. The government has slashed the old 4-slab system into just two main rates, that is 5 and 18%. So daily essentials like milk, paneer, medicines and many food items now attract little to no tax, which means lower bills for households. Vehicles, electronics and appliances will also become cheaper, offering relief to buyers and also a festive boost to the demand. So for businesses, fewer slabs mean simpler compliance, smoother billing and also lower cost in the production and logistics. So manufacturers, retailers and the hospitality sector are expected to gain as reduced taxes encourage more spending. Indian IT companies, especially the mid-caps like Coforge, Persistent, Emphasis, have reassured investors that there will be no material impact of Donald Trump's recently announced $100,000 fee for H-1B visa applications. Now, several IT companies highlighted reduced reliance on the visa program and also increased the local hiring. Now, rating agency Moody's believes that TCS and Infosys, which are India's top leading IT companies, are better equipped to absorb the costs due to the rise in the H-1B visa application fees. Now, what are the reasons? So, there is higher profitability, strong balance sheets, and also increased focus on the local hiring over the last few years. Also, Assistant Vice President at Moody's, Shweta Patodia, said that steep rise in H-1B visa fees will raise operating costs for Indian IT services companies that have the US as their largest and most important market. Next up, we have TVS Holdings. So they have allotted cumulative non-convertible redeemable preference shares via bonus worth 986.5 crore rupees. Now, this bonus issue aims to reward the company's shareholders and also enhance their value. Now, the move is expected to boost investor confidence and also strengthen the company's shareholder base. Now, the bonus shares are non-cumulative, non-convertible and redeemable, providing shareholders with a fixed return on their investment. Now, TVS Holdings' decision to issue bonus shares demonstrates its commitment to sharing its profit with the shareholders and also promoting long-term growth. Next stock in focus we have is Shree Refrigerations, and they have received a significant order worth 19 crore rupees from Mascon Dock Shipbuilders. Now, the order is for the supply of turnkey HVAC solutions on board 14 fast petrol vessels. Now, this order is part of their ongoing project to build 14 fast petrol vessels for the Indian Coast Guard. Now, the project is valued at 1,070 crore rupees and Mascot Dock has already begun construction on the vessels. Now, Shree Refrigerations will design, supply and also install the HVAC systems for the vessels, ensuring a comfortable and also safe environment for the crew. Now, this order win is expected to boost Shree Refrigerations' order book and also reinforce its position as a leading provider of HVAC solutions in India. Next shares we'll talk about is of Eternal, and it hit a record high today, extending a strong run that has seen the stock soar 70% from its 52-week low and also surge 325% over its issue price. Now, amid the bullish performance of the stock, several brokerages remain optimistic about the further gains as well. As per Bloomberg, out of 33 analysts tracking the company, 29 have maintained a buy rating and 4 suggest a sell. So the stock's valuation, however, has raised the eyebrows. Eternal trades at a hefty trailing 12-month price to earnings multiple of 993 times. Now, Eternal's quick commerce business, led by Blinkit, has been the star performer and also a major growth driver for the brand. However, despite the growth in business and the stock market, the company's food delivery segment is showing signs of fatigue. Going ahead, losses at Blinkit are expected to decline with visibility on expanding the dark store network to 3,000. Next up, we have Swiggy. So the food delivery market in India is heating up, with Swiggy and Zomato battling for supremacy. Now, amid GST cuts and also the quick commerce boom, investors are wondering which company to bet on. So according to Bank of America, Zomato's quick commerce arm Blinkit is expected to drive the growth and also help the company outpace its peers. Next up, we have Share India Securities, and they have approved an additional investment of 28 crore rupees in its subsidiary, Share India Capital Services. So this investment is expected to boost the growth plans of Share India Capital Services, which provides various financial services including broking, lending and also investment advisory. Now, Share India Securities is a financial services company offering a range of services including equity broking, commodities trading and also mutual fund distribution. The next trade that was buzzing in trade today is Zaggle Prepaid Ocean Services. Also, they have entered into a strategic partnership with the AU Small Finance Bank to launch a co-branded retail credit card and also commercial cards. Now, this partnership aims to provide customized credit card solutions to customers, enhancing their shopping experience and also providing rewards and benefits. So the co-branded credit cards will offer a range of benefits including rewards, cashback and also discounts catering to the diverse needs of the retail and commercial customers. Now, this partnership is expected to strengthen Zaggle's presence in the payments industry and also expand AU Small Finance Bank's customer base. Next stock in focus is Coromandel International Limited. So the board of directors have approved the establishment of a technical monoammonium phosphate plant in Visakhapatnam. Now, this strategic move is expected to enhance the company's production capabilities in the fertilizer segment. Now, the TMAP plant will cater to the growing demand for fertilizers in the agricultural sector. Coromandel International is also a leading player in the Indian fertilizer industry, and this new project underscores its commitment to expanding its operations and also improving its product offerings. So, in addition to the TMAP plant, Coromandel International has also appointed Anirban Debrai as General Counsel and senior management personnel. So Ray brings over 24 years of experience in the company secretarial and legal fields. Now let's shift our focus to Solar World Energy Solutions. They are all set to launch its IPO on September 23 to raise approximately 500 crore rupees from the primary market. Now the company specializes in providing services for installing solar systems, catering to a diverse range of clients, including public sector undertakings, commercial and also industrial organizations. So the IPO price band is fixed between 333 to 351 rupee per share with a market lot of 42 shares. So the issue comprises a fresh issue of 1.25 crore shares worth 440 crore rupees and also an offer for sale of 14 lakh shares amounting to 50 crore rupees. Now, ahead of its launch, the grey market premium for the issue has gained in the last few days, indicating a listing price of 419 rupee apiece at a premium of 19.37% on the upper limit of the price band. Next up, we have Jio Payments Bank. So the subsidiary of Jio Financial, which is a subsidiary of Jio Financial Services, so they have launched a new savings account called Savings Pro. Now this account comes with a higher minimum threshold of 5,000 rupees, catering to customers who want to invest larger amounts. Now the Savings Pro account allows customers to invest up to 1.5 lakh rupee per day, providing a convenient and also a secure way to manage high-value transactions. Now, this move is expected to attract high net worth individuals with businesses looking for a reliable and also efficient banking solution. Now, Adani Group's impressive stock rally continues, with shares surging up to 10% after the SEBI gave the conglomerate a clean chit. So SEBI's final report found no evidence of allegations made by the Hindenburg Research and also imposed no penalty on Adani Ports and Special Economic Zone, Adani Power and Adani Enterprises. Now this decision has boosted investor confidence, with Adani Total Gas leading the surge with a 13.27% jump, which is followed by Adani Power with an 8.89% increase. So Adani Enterprises, Adani Green Energy and Adani Ports have also seen significant gains. The Adani Group has announced plans for $60 billion in investments by FY32, focusing on scaling the renewable and transmission infrastructure. Now, this move is expected to actually improve a long-term investor confidence and also drive higher multiples across its portfolio. Now let's shift focus to Larsen & Toubro's renewable energy vertical. So they've signed a memorandum of understanding with the Aqua Power to collaborate on the renewables and grid scope of the Yanbu Green Hydrogen Hub in Saudi Arabia. Now this project is a significant step towards promoting renewable energy and also reducing carbon footprint. The Yanbu Green Hydrogen Hub will be a fully integrated facility which is powered entirely by solar and wind energy. The project includes solar PV, wind and battery energy storage plants along with associated substations and also transmission lines. Now, L&T's partnership with Aqua Power aims to establish a collaborative framework to design and also achieve optimal configuration for the project. SEPC has secured a significant order worth 443 crore rupees for an irrigation project in Dehri, Bihar. Now, the project titled Jamania to Kakret Gangajal Lift Irrigation Scheme. This aims to enhance the agricultural water availability in the region. Now, the project involves the execution of a water supply scheme under the Zemanian Pump Canal Division, Mohania in Kaimur district. Now, SEPC has a 24-month timeline to complete the project, which is expected to support farmers and also boost agricultural productivity in the region. SEPC's whole-time director, Venkat Ramani Jai Ganesh, expressed his delight in securing this prestigious project, stating that it strengthens the company's position in the water infrastructure sector and also contributes significantly to its order book. Now let's shift focus to the GST 2.0 reform. So they have slashed taxes on two-wheelers, making your next ride more wallet-friendly. Now, effective this Navratri season, which begins today, GST on scooters and motorcycles up to 350cc have dropped from 28% to 18%. Now, that's a game changer for 98% of India's market. From commuters to first-time buyers, Honda's Activa 110 now is cheaper by 7,874 rupees, Dio 125 by 8,042 rupees, and Shine 125 by 7,443 rupees. TVS Jupiter 125 sheds 6,333 for 70,667 ex-showroom price, while Raider 125 and Entoq follow the suit. So Bajaj Platina 110 is down 5,551 rupees to 66,007 rupees. Royal Enfield's Hunter 350 saves up to 15,000 rupees. Classic 350, down 16,500 rupees, and Meteor is down 19,000 rupees. Even Suzuki's Bergman Street 125 has dipped 6,444 rupees to 75,556. So premium rides over 350cc jumped to 40% of the GST, targeting the luxury segments. Now, this simplification has boosted the festive sales, eases the EV transitions, and also fuels the auto sector growth amid rising demand. Economists also predict a sales spike, which is a perfect timing for Diwali deals. Ola Electric is also ramping up operations ahead of the festive season, aiming to reduce the vehicle delivery times from 12 to 14 days to ensure quicker handovers. Now, the company is focusing on faster deliveries while maintaining sustainable growth and also profitability. Unlike some competitors offering deep festive discounts, Ola Electric is emphasizing EBITDA margin optimization and also sustainable growth, positioning itself as a profitable and also a customer-focused player in the electric mobility segment. Now, state-run oil exploration companies, that is the ONGC and Oil India Limited, they are set to begin a 3,200 crore rupees of stratigraphic drilling campaign in early 2026. Now, this campaign will focus on untapped offshore areas in an effort to identify the new hydrocarbon. Now, the first phase of drilling will target wells located in the deep sea regions of the Andaman and Bengal sedimentary basins. Although there is no immediate plan to produce oil or gas from these wells, the government will compensate ONGC and also Oil India for the full cost of this campaign. The government retains the ownership of the drilling site and also will decide on how any potential discoveries will be monetized. Sharda's Cropkins chief is confident that the company will exceed 18% EBITDA margins in FY26. We'll break down the factors contributing to this strong outlook, including robust Q1 growth, stable pricing, and also a favorable euro-dollar rate. We'll also discuss the firm's financial health, which includes significant cash reserves and a recent doubling of dividends. India's industrial heartbeat is pushing stronger. The 8 core industries clocked a robust 6.3% year-on-year growth in August, which is up sharply from July's modest 2%. Now, this key index, covering 40% of the nation's factory output, signals a rebound amid global headwinds. Powering the surge, electricity generation rose 3.1%, which is fueled by summer demand and also grid upgrades. Now, coal production mined 11.4% more, thanks to the ramped-up mining and export boosts. So steel output forged ahead 14.2%. This is driven by infrastructure projects and also the auto sector revival. So fertilizers have grown 4.6% on steady farm needs. Petroleum refineries ticked up 3%, and cement has hardened 6.1% with construction boom. The recent US hike of the H-1B visa fee to $100,000 is causing significant concerns for the Indian IT companies. Now, former Zensar CEO weighed in, saying that this move could actually squeeze the profit margins. So he also said that large firms have been proactively reducing their dependence on these visas by increasing local hirings in the US. Now, they're also looking at strategies like accelerating the offshoring and also renegotiating client contracts to offset the higher cost. Ganesh Natarajan said the move has created uncertainty. IndusInd Bank has appointed a new Chief Financial Officer, Viral Damania. Now, he's a veteran with 27 years of experience from giants like Bank of America and Citibank. Now, this change comes as Santosh Kumar, who has been serving as a special officer overseeing finance and accounts, is stepping down from that role and also returning to his position as Deputy CFO. Now, these leadership shifts are part of a broader response to the accounting problems discovered in the bank's derivatives and microfinance businesses, which have led to a series of high-level resignations and also a regulatory scrutiny. Market regulator SEBI has dismissed allegations of fund routing and also stock manipulation made by Hindenburg Research, stating that it found no evidence of wrongdoing. Reacting to the decision, Gautam Adani said that a cloud that had hung over us for more than 2 years has been lifted. Now, he credited his employees for their resilience and also called the crisis a trial by fire. Adani also urged the group to now focus on innovation, transparency and long-term growth. The SEBI orders come after months of scrutiny and also will likely ease the regulatory overhang on the conglomerate. Prime Minister Narendra Modi is on a 2-day visit to Arunachal Pradesh and Tripura. Now, in Arunachal Pradesh, he inaugurated infrastructure projects worth over 5,000 crore rupees, including hydropower initiatives and also a convention center in Tawang. Addressing a rally in Itanagar, he highlighted the government's effort to reduce taxes and also praised the recent GST reforms. Later in Tripura, Prime Minister Modi inaugurated redeveloped Tripura Sundari Temple in Gomti district, which is a significant Shakti Peeth under the Prasad scheme. Now, he also launched the development of the Mata Tripura Sundari Temple complex at Matabari. Shardiya Navratri has begun and devotees have flocked to the Mata Vaishno Devi temple in Katra, Jammu and Kashmir to offer prayers. So the temple, which draws huge crowds every year, is beautifully decorated for the festival dedicated to Goddess Durga's 9 forms. Devotees across India, including Mumbai and Lucknow, have expressed joy at being able to visit the yatra was postponed earlier. Navratri celebrations will continue until October 1. Rajya Sabha MP and Infosys co-founder Sudha Murthy fell victim to an attempted cyber scam on September 5, 2025. A caller pretending to be from the Union Ministry of Telecommunications claimed her mobile number was misused and also threatened disconnection unless personal details were shared. So the call appeared under the name Truecaller Telecom Department. Police have registered an FIR and also have begun investigations into the matter. A cargo ship carrying approximately 1,000 tons of rice and 78 tons of sugar caught fire while anchored at Portbandar's Subhash Nagar jetty in Gujarat. The vessel Hari Darshan, owned by Jamnagar-based HRM and Sons, was bound for Somalia. Now, to prevent the potential explosions, the crew was instructed to move the ship about 1 kilometer into the sea. Fortunately, all crew members were safely evacuated and also no casualties have been reported. Maharashtra Chief Minister Devendra Fadnavis on Monday announced a new initiative to introduce spot taxi services in Mumbai aimed at enhancing last-mile connectivity and also easing the traffic congestion. Now, the innovative automated driverless spot taxis will primarily serve the busy business district corridor between Kurla and Bandra railway stations. Now, this corridor is expected to witness high commuter traffic with the upcoming bullet train station and also the new Mumbai High Court building. Now, this project is expected to significantly reduce the pressure on the existing public transport systems and also improve the daily commute experience for lakhs of Mumbai residents and workers. In a significant move to empower women, the government has approved the release of 25 lakh additional LPG connections under the Pradhan Mantri Ujjwala Yojana during the financial year 2025-26. Now, this decision aims to provide clean cooking fuel to more women, promoting their health and also well-being. Prime Minister Narendra Modi extended his greetings to women beneficiaries on this occasion, stating that the step strengthens the government's resolve towards women empowerment. The PMUY scheme has already benefited millions of women across the country, and this additional allocation will further expand its reach. As chaos unfolds in the US over President Donald Trump's new $100,000 H-1B visa fee, China is opening its doors wider to the global talent with a new visa category called the K visa. Effective October 1, Beijing's K visa targets young science and technology professionals, offering more convenience than existing visa types, including multiple entries, longer validity, and also extended stay permissions. Now, the visa allows holders to engage in education, cultural exchange, and also research, entrepreneurship, and business activities without the need for a domestic employer invitation. Now, this bold move by China aims to attract top STEM talent worldwide, capitalizing on mounting difficulties faced by professionals seeking to work in the US. Russian President Vladimir Putin has announced that Russia will voluntarily adhere to the nuclear arms limits of the New START treaty for one more year after its expiration in February. Now, this move, which Putin says is aimed at fostering non-proliferation and also maintaining strategic balance, is a direct appeal to the United States to also respect the treaty's limits. Now, the New START is the last remaining major nuclear arms agreement between the two global powers, and its potential dissolution has been a source of growing international concerns. Well, with that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
GST budget utsav begins. Sectors including auto, FMCG and banks stand to benefit from the new GST rates that kick in from today.
जनता में विश्वास होगा कि कर सरकार की इनकम बढ़ाने के लिए नहीं है, देश को चलाने के लिए है.
Home Minister Amit Shah, in an exclusive conversation with NDTV, hails the new GST structure and framework as a trust-based tax system, says it will boost production and consumption in the country.
If we feel that the reduced GST has not been passed over to the consumer, it will be treated as unfair trade practice under the Consumer Protection Act 2019.
Consumer Affairs Secretary Nidhi Khare warns that not passing on lower GST will be an unfair practice and class action will be planned against those that do not comply. Adani Group Chairman Gautam Adani says the group will now shift towards accelerating innovation. The company is at 1.8 lakh crore in market cap over the last 2 sessions after SEBI's clean chit in the Hindenburg case, taking the group's combined market cap to 15 lakh crore rupees. The market ends lower after US President Donald Trump announced a hike in H-1B visa fees. The Nifty managed to close above the 25,000 mark while the Sensex fell by more than 400 points. Most sectors finished in the red, with Nifty IT emerging as a top loser. Commerce Minister Piyush Goyal and External Affairs Minister S. Jaishankar will hold bilateral talks with US Secretary of State Marco Rubio to push for the first tranche of a bilateral trade agreement ahead of the October-November deadline. Hello and welcome. A very good evening, viewers. This is Profit 360 on NDTV Profit, and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news, so stay tuned. The biggest story that we're tracking today is the revised GST tax structure that takes effect as the festive season begins. Now, this is the biggest tax reform since GST was first launched in 2017. The government has slashed the old 4-slab system into just 2 main rates, 5 and 18%. Daily essentials like milk, paneer, medicines and many food items now attract little to no tax, which means lower bills for households. Vehicles, electronics and appliances will also become cheaper, offering relief to buyers and a festive boost to demand. For businesses, fewer slabs mean simpler compliance, smoother billing and lower costs in production and logistics. Manufacturers, retailers and the hospitality sector are expected to gain as reduced taxes encourage more spending. And now to an NDTV Profit exclusive, viewers. Home Minister Amit Shah has called GST 2.0 Prime Minister Modi's greatest reform. While speaking to NDTV Network's editor-in-chief Rahul Kanwal, he said that the new GST structure and framework is a trust-based tax system. He added that lower rates on essentials bring relief to the poor, farmers, MSMEs, women and the youth. Listen in.
नवरात्र का पहला दिन है, यही वो दिन है जब से जीएसटी टैक्स कट्स जो आपने किए हैं वो इम्प्लीमेंट हो रहे हैं. आपको लग रहा है कि इससे भारत की अर्थव्यवस्था में उछाल आएगा, एक कंजम्पशन स्प्री आएगा जिससे जीडीपी ग्रोथ रेट थोड़ी बढ़ेगी?
देखिए, सबसे पहले मैं जीएसटी के लिए कुछ बात करना चाहता हूँ. जीएसटी बना तब से कुछ नेता इसको डिस्क्रेडिट करने में लगे, बदनाम करने में लगे, गब्बर सिंह टैक्स फला ढिका बोलते रहे. फिर देखा कि ये सफल हो रहा है तो ये तो कहा हमारा विचार था. प्रणब मुखर्जी ने विचार किया था, चिदम्बरम ने भी हमारा विचार आपने चुरा लिया, जबकि वो 10 साल ही रहे थे. मोदी जी ने 4थे साल में डाल दिया था. वो इम्प्लीमेंट नहीं कर पाए थे, मोदी जी ने कर दिया था. मगर उस वक्त क्यों इम्प्लीमेंट नहीं हुआ? राज्यों ने क्यों विरोध किया था? क्योंकि स्वाभाविक रूप से 16 प्रकार के बिक्री कर को इकट्ठा कर कर एक सेल्स टैक्स बनाते हैं, अब जीएसटी बनाते हैं, एक बिक्री कर बनाते हैं जिसमें 16 टैक्स मर्ज हो जाएंगे. ऑक्ट्रोय भी हो जाएगी, एक्साइज भी हो जाएगी, सेल्स टैक्स भी हो जाएगा, सेंट्रल सेल्स टैक्स भी हो जाएगा, मनोरंजन कर भी, 16 प्रकार के टैक्स मर्ज करते हैं. तो राज्यों की इनकम पर असर पड़ने वाला था. जब कांग्रेस से विचार लेकर आई तब राज्यों ने कहा था कि भाई हमारे रिसीट पर जो असर पड़ेगा, विपरीत असर पड़ेगा शुरुआती सालों में, इसका भुगतान केंद्र ने करना चाहिए। इन्होंने कहा कर देंगे, तो राज्यों ने कहा इसकी संवैधानिक गारंटी दीजिए, तो गारंटी नहीं दी। अब कोई संवैधानिक गारंटी नहीं देगा तो कौन भरोसा करेगा। मोदी जी ने भी आकर फिर से चर्चाएं शुरू की। अरुण जी उस वक्त वित्त मंत्री थे, सभी राज्यों के वित्त मंत्रियों की वही समस्या फिर से आई। फिर जब इस सोच में आया, उस वक्त में पार्टी का अध्यक्ष था, तब मोदी जी ने कहा कि भाई हम ही कहते थे संवैधानिक गारंटी देना चाहिए, तो हम कैसे पीछे मुड़ सकते हो। तो इस वक्त वित्त मंत्रालय, ब्यूरोक्रेसी, वित्त मंत्री सभी का बहुत बड़ा जिम्मेदारी आता है कि 5 साल तक आप, लंबे समय तक आप एक 14% इंक्रीज का गारंटी लोगे और इसका भुगतान करोगे। फिर भी उसको मान गए और हमने इस नवंबर महीने तक इसको पूरा भी किया।
And catch the full conversation with Home Minister Amit Shah only on NDTV Profit at 8 p.m. sharp. And the feedback for today's rollout has been brilliant. At least that's the word coming in from Pankaj Chaudhary, the Minister of State for Finance. Listen into what he's been hearing about the new reforms and what the next step for Atmanirbhar Bharat is.
सुबह से जो पूरे देश से हम लोग के पास खबर आ रही है कि आम जनता काफ़ी इससे प्रसन्न है, खुश है। चाहे वो किसी भी क्षेत्र का हो, चाहे वो रोज़मर्रा के सामान खरीदने वाला हो, चाहे किसानों का भी फीडबैक आया है, विद्यार्थियों का भी फीडबैक आया है। कहना तो सभी लोग इस रिफॉर्म से बहुत प्रसन्न हैं।
सर, प्रधानमंत्री ने कल कहा कि स्वदेशी अपनाएं, इसको लेकर अब आगे चलकर क्या स्टेप्स अपनाएंगे और आपका क्या संदेश रहेगा कंज्यूमर्स को लेकर?
देखिए, स्वदेशी का अपनाने का बात प्रधानमंत्री जी ने कल ही नहीं किया, इससे पहले भी वो कहते रहे, मेक इन इंडिया की बात वो करते रहे और उन्होंने अपील किया है कि हमारे देश की आम जनता देश की तरक्की के लिए, देश की अर्थव्यवस्था के लिए स्वदेशी पे ज़्यादा फोकस करें, विदेशी चीज़ों से बचें।
And bringing your attention to another exclusive chat, Consumer Affairs Secretary Nidhi Khare told NDTV Profit that failure to pass on GST benefits to consumers will be treated as an unfair practice, viewers. She added that class action will be taken against violators. Let's listen in to her entire commentary.
If for some reason, if we feel that the reduced GST has not been passed over to the consumer, it will be treated as unfair trade practice under the Consumer Protection Act 2019. And the Central Consumer Protection Authority can take class action also if we find that a particular, say, company is actually making, these things too much, then we will also go for the class action. Otherwise, it will be escalated to the convergence partners, which we have about 1,100 and odd. And it would be expected that companies immediately redress any such wrongdoing if they witness through their retailers. So this is uniform for everybody, including the e-commerce entities, and e-commerce entities also know this fully well. For them it is in fact very, very easy because they do not have to go for the re-stickering. They can digitally announce and show what is the new MRP. So it should not take them very long, and I'm sure they would be adhering to the instructions of the government on this.
And the GST reforms promises to be beneficial for consumers, especially with the festive season upon us. In Kolkata, with Durga Puja festivities kicking off this weekend, confectionaries are expecting high footfall. Sweet shops like Balram Malik and Radha Raman Malik are now selling their products with a revised price tag. My colleague Ritik spoke to the owner about how the GST cut will be cost-effective for buyers during Durga Puja. Let's listen into that chat.
We are currently at a very famous street and confectionery shops of Kolkata that is known as Balaram Mullik, and they put a lot of efforts last night to reduce the prices of the products. As we know, currently Durga Puja and Navratri are on here in Kolkata, and which is the biggest festival in Bengal. We can see that the total entire shops has been decked up with sweets like Mishti Doi or Shandesh, but this time we do see people's beneficiary rates for namkeens. After this, GST 2.0, this reform has brought a lot of change to these prices. We have the owner of this confectionery, Shudip Mullik. We do understand that this busy hours of Durga Puja or Navratri, it was a tough task for you to come up with new price tags.
It is difficult to implement this at this point of juncture, and the whole night our whole team was working on it to make new stickering and to change the software so that the new prices shows. But after all, it is benefit. We are transferring the benefit to the customer. Customer is getting benefited. GST was always going to the government. The government has reduced the GST, so we should not profit by through it. Otherwise, the GST amount would have stayed with us, but we have reduced the price instantly. When the shop was opened, it was opened with a new GST price slabs, and now you can see that how we have done the stickering, and the reduced MRP has been written over here, and it has the previous GST and the previous MRP written, and also the reduced price written.
Looking to buy your next SUV? Well, it might just be a lot cheaper. The festive season means increased buying, and the GST reforms promise to benefit consumers beyond consumables too. The auto industry has seen significant cuts, with cars getting significantly cheaper. Has seen huge benefits for consumers with cars getting cheaper, as I said, and my colleague Sam Daniel now joins us with ground report on how the auto industry is viewing government's GST 2.0 move.
The price of cars have become cheaper with cut in GST from the earlier 28% to 18%. The industry is optimistic that this could encourage first-time car buyers to go for it this festive season. The GST on electric vehicles too has been brought down to 5%, triggering excitement that this could actually spur purchase of EV cars. With me, Niranjan, a health and fitness coach. Thank you very much for your time. What would this mean for first-time car buyers?
So this is definitely a very encouraging move for the first-time car buyers. I think car rates have come down, and it has put the cars in an accessible range for the first-time buyers.
You think this should have been done long time ago? The opposition says the Indian consumers have paid 50,000 crore as GST so far.
I mean, you would always be happy if the cars were cheaper even 5 years down the line, 5 years earlier. But better late than never. I would say this is a welcoming move. If it had been done earlier, yes, well and good, but still better late than never.
Is this eyeing elections?
Oh, I would say elections are still quite a time away, but looking at the roadmap, yes, I think elections are 4 years down the line, and especially with the BJP not getting a very strong mandate this time. Yes, they are at power in the center, but it was not a very strong mandate compared to the previous 2 terms. Right. So I think all these moves are more people-centric.
Right. Thank you very much. And car dealers say ever since the GST reforms were announced, they've been experiencing a slump in bookings, and now they hope there could be a revival of demand for cars. Thank you very much, Mr. Sankara Pandian, the team manager here. Yes. How are the bookings now, and how was it over the last 2 weeks?
Sir, customers are eagerly waited because of the GST. Now, yesterday night, they confirmed everything. So, from today onwards, the booking expected as more than the actual. We expected the best result from every dealerships.
What kind of price cut for your models, be it Sonnet, be it for Seltos?
Sir, in a category wise, government has decided 2 categories of GST. It is 18% and 40% for cars especially. But 18%, it is a highest margin to every end user or the customers. For example, if it is in a 10 lakh worth of car, they can save up to 1.3 lakh rupees straight away from GST, plus added benefits available for festival seasons. So customers are really happy with that. We expected more number of booking coming days.
So it's going to be bumper festive season for you now, and for electric